एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। आज है 7th ऑफ फरवरी 2025। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का इस सेशन। लास्ट ट्रेडिंग सेशन इस वीक का, सैटरडे संडे है, कल और परसों तो मार्केट रहेगा क्लोज। फिलहाल देखें नेचुरल गैस को तो फ्लैट ही ओपन हुआ था, थोड़ी बहुत मोमेंटम हुई है। एक सपोर्ट है नीचे मार्केट के पास 291 के अराउंड, 291 290, और ऊपर रेजिस्टेंस मिल जाएगा 312 के आसपास। देखते हैं लेवल्स पे आता है तो। कल सपोर्ट से बाइंग काफ़ी अच्छी आई थी, उसी को मार्केट अभी भी होल्ड किए हुए है। कल सपोर्ट एरिया से जो बाइंग आई थी, मार्केट स्टिल होल्डिंग दैट लेवल। बाकी कोई नए लेवल और क्रिएट होंगे तो विल सी। जहाँ तक बात करें डेटा की तो मुंबई सेशन अभी ओपन है, 9 AM पे ओपन हो जाता है। लंदन सेशन 1:30 पे ओपन होगा। सेशन 6:30 और यूएस मार्केट 8 PM पे, 7 PM पे आपका डेटा है गोल्ड और सिल्वर के लिए, और 8:30 पे गोल्ड और सिल्वर के लिए डेटा रहेगा। फेड की पॉलिसी मॉनेटरी पॉलिसी की रिपोर्ट आएगी, वो देखना पड़ेगा। बाकी आरबीआई ने रेट कट किया है 0.25 पॉइंट्स, विच है गुड न्यूज़। क्रूड ऑयल को देखोगे, कल का ये वो एक वीक सपोर्ट लेवल था, वहीं पर मार्केट एग्जैक्टली अराउंड ओपन हुआ था। वहां से फिर से एक बाइंग हुई है। ऊपर एक एफईजी है, अगर एफईजी के ऊपर निकला तो फिर और ऊपर जाने के चांसेस रहेंगे, नहीं तो फिर यहाँ पर रुकने के चांसेस हैं। अब बाय मत करना अगर एफईजी पर रुका तो। फिर नीचे कहीं अगर ये एफईजी नीचे वाले एफईजी पर रुकेगा या फिर सपोर्ट पे आएगा तो वहाँ देखेंगे। ऊपर अभी फिलहाल और कोई रेजिस्टेंस नहीं है, कल अच्छा रेजिस्टेंस था, टेस्ट हो चुका है। फिर से अगर बनेगा तो देखेंगे, अभी बना नहीं है तो ऊपर कोई रेजिस्टेंस मार्क नहीं किया हुआ है। जितने प्रीवियस रेजिस्टेंस थे वही अगर रिएक्ट करेंगे तो एक्ट लाइज रेजिस्टेंस। देखते हैं कुछ नया लेवल क्रिएट होता है इस पर्टिकुलर जोन पे अब। एफईजी के ऊपर निकलता है तो फिर कल का रेजिस्टेंस एरिया तक का एक टारगेट रहेगा। अगर एफईजी होल्ड कर गया तो फिर ब्रेक होने के चांसेस है नीचे सपोर्ट के, क्योंकि फिर उसके इसमें हायर हाई क्रिएट नहीं हो रहा होगा। सिंपल सा, एक बार हाई बनाया था, ये दूसरी बार लोअर हाई बनाया है, थर्ड टाइम आया है फिर से लोअर हाई। तो कुछ इस तरह का पैटर्न बन जाएगा अगर ये एफईजी होल्ड कर गया। लाइक भी करते रहो, डोंट फॉरगेट टू लाइक द स्ट्रीम गाइस एंड सब्सक्राइब द चैनल।
News when you want it with Bloomberg News Now. I'm Stephen Carroll.
And I'm Caroline Hepker.
The Bank of England has halved its UK growth forecast for this year and says the economy has a 40% chance of already being in recession. The BOE now expects the economy to grow by just 0.75% this year, while also calculating a shallow contraction at the end of last year. The forecasts illustrate the stark challenge facing Rachel Reeves as she attempts to repair Britain's finances and reverse a decline in sentiment. Despite the gloomy outlook, Bank of England Governor Andrew Bailey endorsed the Chancellor's approach to boosting GDP.
I mean, I'm a very, very strong supporter both of the growth agenda that this government had, and by the way, the growth agenda the previous government had as well. We've told the story quite a few times that the potential growth rate in the UK has been low since the financial crisis, and that obviously has an effect on our policy environment and has an effect on other policy environments as well. And addressing those questions is critical. So very strongly agree with the Chancellor on this point. Now, Now, what I will say is, of course, structural policies take time to come through. So when we're looking at obviously a 2 to 3 year horizon here, you wouldn't expect a lot of that to come through quickly.
Bailey's comments follow the bank's decision to lower rates by a quarter point to 4.5%. However, the BOE also warned it now sees inflation peaking at 3.7% later this year, a big jump from the 2.8% it predicted in November.
Worries that US President Donald Trump will impose tariffs affecting gold has led to weeks-long queues to withdraw the metal from the Bank of England's vault. Trump hasn't targeted precious metals specifically, but dealers are worried that they could be included in blanket tariffs that he is threatening. The Bank of England holds more than 400,000 gold bars worth over $450 billion at current prices, largely on behalf, though, of other central banks and also a few key gold dealers. Bars at the central bank's vaults have also been trading at a discount to the wider market this week as withdrawal delays make gold at the Bank of England less attractive than bullion held in more accessible commercial vaults.
The new US Treasury Secretary is aiming to project a sense of normalcy after facing turbulence during his first 2 weeks in office. Speaking to Bloomberg, Scott Bessent said his department are methodically pursuing its economic goals.
Look, I think with the president's policies of energy dominance, deregulation, and non-inflationary growth, I think that the 10-year is going to naturally come down.
Scott Bessent speaking there. Under his leadership, the Treasury is supporting Elon Musk's Department of Government Efficiency, which aims to identify wasteful spending and modernise federal technology. Bessent insisted the Treasury payment system is safe, despite Musk's team gaining access to it.
Senior intelligence officials in the United States are concerned that they could be hit by the Trump administration's cost-cutting efforts. National security agencies are supposed to be exempt from the so-called efficiency drive being led by Musk, but CIA Director John Ratcliffe has offered buyouts to his staff in what the agency said was an effort to sharpen its focus on priorities like China and help President Trump's overall efforts to shrink the federal workforce. The relationship between Trump and the intelligence agencies soured in his first term after they concluded that Russia had interfered in the 2016 presidential election to boost his candidacy.
Donald Trump has set out his tax priorities in a meeting with Republican lawmakers. The US president is seeking an end to the private equity carried interest tax break and an expansion to the state and local tax deduction, among other measures. According to the White House press secretary, Caroline Leavitt, Trump would like to see a sweeping tax bill passed this year. Details of a deal are expected to be announced as soon as today.
Amazon has warned investors on its results conference call that it might face capacity constraints in its cloud computing division, despite plans to invest $100 billion this year. CEO Andy Jassy says that growth will be lumpy due to delays in getting hardware and insufficient electricity, echoing concerns of rival Microsoft. Discussing the company's results, Dan Ives, global head of tech research at Wedbush Securities, told Bloomberg that the firm is still strong.
I think if you looked up sandbag special in the dictionary, you'd see Amazon's ticker. Because look, the actual quarter beat on AWS, strength on advertising. And I think on the retail side, they have massive momentum.
So that was Wedbush's Dan Ives speaking there. Amazon spent $26.3 billion in capital expenditures in the last 3 months of 2024, mostly on AI-related projects with Amazon Web Services. The stock has gained 8.9% so far this year after a 44% jump in 2024.
Those are our top stories on the markets. We're looking at shares in Hong Kong up 0.6%. The Hang Seng Tech Index up by over 1% today, lifting Asian stocks in general. Selling pressure in Japan, though, where the Nikkei in Tokyo is down 0.6%. European stock futures 0.4 weaker, and on Wall Street S&P E-mini futures are down by 0.1. The Bloomberg 0.1% higher. The pound at 124.22 against the dollar.
That's news when you want it with
everything you need to get the edge at the
lots of uncertainty. It's the risk-off trade. No one wants to lever up.
Right now, it is business as usual, but maybe a little bit of a bird on the shoulder of uncertainty.
The volatility is not just in the equity market. Now it's cross-asset.
You're going to get an environment that is attractive for investment.
There are areas where you can look at the valuations and go, this is completely reasonable. But it is definitely more of a nimbleness, and you have to be watching things much more closely.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Thursday on a two-day winning streak on the S&P 500 and looking to make it day three. On the S&P, we're positive by 0.1%. On the Nasdaq 100, we're up by a similar amount. On the Russell 2000, up by 0.25%. Your day ahead looks like this. A focus on both the data and the earnings as well. At 8:30 Eastern Time, we get jobless claims. Then later on, after the closing bell, we hear from Amazon. Amazon earnings coming up after the close. Before we get there, music to Bramo's ears from the Treasury Secretary, Scott Bessent, that me and the President of the United States are focused on, guess what? The 10-year Treasury yield.
I told you this is going to be the most important thing of this entire year. And look at that. Scott Bessent, you heard me. I'm with you. I think we all agree that is going to be the most important metric. The interesting aspect is it takes the pressure off the Fed to cut rates in the near term. He did, of course, go after the Fed on some level, saying, well, they were the ones that messed up in the first place by cutting 50 basis points, and that led the 10-year to rise. But it highlights how they are concerned about inflation and they're concerned about borrowing costs and how that's going to inform their decisions more than any kind of political interference.
This is an argument we've heard before. We've heard it before on Wall Street, that the reduction of interest rates from September through to the end of the year, 100 basis points, actually contributed to the high yields at the back end because there was a worry, a concern that maybe the Fed would be allowing this economy to run a little bit too hot.
He leaned into that idea. At the same time, on the flip side, how much does this affect his decision or not to lengthen the duration of some of the deficit, given the fact that we had the announcement yesterday of the Treasury refunding, and it didn't include lengthening the duration like Scott Bessent said that he previously would? How much is that going to be a limiting feature to some of their plans, just simply because they are very cognizant of what we all are, which is auctions and the 10-year Treasury yield?
So two-part story to that. How are they going to manage the average maturity over at the Treasury? One. The second point, and I think it's an important one, will they be constrained by this bond market as they start to develop just how big they want these tax cut plans to be?
Well, that's the problem. Trump 2.0, everyone is saying, is going to mean higher yields because you have a ballooning reconciliation bill. Potentially, we're waiting on whether that's going to be one path or two. And also, on top of that, the fact that whether or not it's pervasive or one-time hit, many economists will tell you tariffs are inflationary.
When you step back, it puts these two ideas against each other. The idea of more nationalist putting tariffs on types of policies that typically aren't as good for growth with the pro-growth aspects. And you think about the 10-year Treasury yield, and if that is their metric, do they like the fact that tariffs are being treated as maybe disinflationary? And down the line might be a damper on growth, even the uncertainty. At what point is the damper on growth a problem, even though you're getting the lower yields on the long end that some of these officials want?
I think we've all got some follow-up questions. The good news, you get round two of Scott Bessent a little bit later on, right here on Bloomberg TV and on Bloomberg Radio, sitting down with our print reporter, Saleha Mohsin. Look out for that later on this afternoon. That is going to be must-watch. Equity futures right now on the S&P 500, just about positive. The arrowhead looks like this on Bloomberg Surveillance. We'll catch up with Anwiti Bahaguna of Northern Trust with stocks on a two-day winning streak. Ed Mills of Raymond James with Bessent focused on 10-year Treasury yields, and Scott Devitt of Wedbush previewing earnings from Amazon. We begin this hour with stocks looking for a third straight day of gains as traders look ahead to a busy stretch of earnings. And Anwiti Bahaguna of Northern Trust expecting volatility ahead, writing political uncertainty is likely to remain high during the first few months of the new administration. We think investors should maintain a flexible investment strategy that can adapt to changing trade policies. And Anwiti joins us now for more. And Anwiti, good morning. Based on that, you've been busy. How busy have you been?
It's been a little hectic, yes.
Have you had to become super tactical?
Actually, quite the reverse, John. We really, over the weekend, published our capital market assumptions, which focuses on our 10-year outlook for asset classes. And, situation for equities looked decent. It's quite contrast then that Sunday night we were focused so much on what it means for the next day while we are publishing our 10-year view. We have to be super vigilant to what's happening every other day now in terms of are we on or are we not. And any kind of positioning you have, one morning you look great because you were defensing on Sunday night, and then in the afternoon of the day when those tariff issues are no longer relevant, then your positioning
and
looks
it could
weak.
change again in 5 minutes' time. I'm just picking up on the line that you wrote. We think investors should maintain a flexible investment strategy that can adapt to changing trade policies. What does that mean?
Yes. So what that means is that in the near term, so 3 to 6 months, while all these negotiations are underway, we expect volatility to be high. But if you look at the fundamentals of the economy, we're expecting pretty decent economic growth this year, around 2.5% or so. Inflation is the big question mark, and keep focusing on that. And company earnings first quarter so far coming out quite fantastic, really, I would say 9 to 10%. And for the full year, expected to be even more than that. So keep focusing on that. The rest is noise. We won't have clarity on that for a while. That clarity may appear sometime in the middle of the year. And if at that point we know what that looks like, because there are several outcome nodes for all these policies, then reassess, be flexible. Flexible also when the market overreacts to some of the near-term noise. Reposition yourself if there are opportunities at that time.
I love this. People talk about what's going on in Washington, D.C. Noise. It's just really confusing right now. Black box. How could we say anything? It's basically how many times can we say? How many different ways can we say? We have no clue. Don't make us comment on it. I am wondering about the uncertainty that we're seeing, even in the narrative around earnings, though. We saw some of the CapEx plans, in particular from Alphabet, and they were punished, even though it was a capacity issue that constrained their sales of some of their cloud computing offerings. I'm just wondering whether this narrative in the market of shifting away from some of the big tech drivers and the CapEx that really went into cloud computing and some of the AI adoption and the broadening out, whether you believe in that narrative having staying power or whether you think that the flipping and the flopping of that is noise.
Yeah, that's a great point, Lisa. We believe in the broadening of earnings this year. And we saw some of that actually in third quarter of last year also. But if you look back for the full year, it was still an AI concentration in tech, that kind of market behavior where everything else was participating, but not to quite the extent that the tech sector was. This year is likely to be noisy, likely to be volatile. Even before the tariff news, there was question mark around, the deep seek news. Our contention is, aside from flexibility, which Jonathan mentioned, another thing to do in the portfolios is to be diversified, to go away from just the tech-focused names and focus on companies with really great balance sheets, with good earnings potential, companies that have so far been sort of ignored by the market, but are really solid companies, such as companies which have quantitatively a low volatility score and a quality score.
Is it still the U.S. that's the focus, or does diversification increasingly mean outside of the U.S. at a time where we heard that in January, everyone was saying, all right, let's think about how low the bar is in Europe, and then Europe gained 8%, and then people are saying, wait a second, maybe let's come back here because tariffs are going back on. I mean, how much do you lean into the ex-U.S. story?
We're still saying buy America. Even our 10-year outlook has a higher number for U.S. returns than international developed, mainly because of the structure of the earnings component in all these economies. The earnings story for U.S. remains very strong. The buyback story remains very strong. And there are these structural issues in the rest of the world where, as opposed to the buyback story that we see in the U.S., we actually see dilution elsewhere in the markets. And that keeps us U.S. focused.
When it comes to the U.S., though, right now, all the bad news is being priced in, or the uncertainty about tariffs, and some of the good news when it comes to the tax cuts. But we don't have tax cuts just yet, but we do have an extra 10% put on Chinese goods. If you get no tax cuts at the end of the year, do you still want to be invested solely in the United States?
Absolutely. I think the consumer is super strong. The companies are doing very well. So the tax cut is not the only driver. It's not even cut, Anne-Marie. It's the fact that they won't go up. that still remains the driving factor in the market. That we're not really waiting for additional cuts, but the threat of increased corporate taxes is off the table.
We've had some heat come out of the US story over the past few days. You saw that in the ISM services yesterday. Prices paid a little bit lower. The overall headline read came in a little bit lower. We saw it with job openings as well, falling back just a little bit. Nothing to get too concerned about here. I'm not going to say that the Federal Reserve needs to come out and cut interest rates before the next meeting. There's nothing bad out there at the moment. But to Anwiti's point, there's nothing out there to suggest at the moment, based on the data that we've seen more recently, that they need to hike anytime soon.
Which is the reason why you saw a huge rally into duration yesterday and why you are seeing that rally in the bond market globally that's really feeding into that broadening out story and this idea that this is a positive disinflation, not necessarily something that's coming with cratering growth.
Speaking of the global story, did you see the headline coming from McKinsey?
Yes.
Being global is a choice. Frankly, it is more difficult now to make that choice. I know this is difficult and may become increasingly so. Speaking directly about China.
Maybe they are going to pull out of China. This is what we were talking about yesterday. How long before companies start signaling that the uncertainty is just too difficult? And frankly, it was a money-losing business for them, right? So it's not like they have that much on the line. But the head of McKinsey has wanted to be a global company. Is the idea of being a global company losing some of its flair because of some of the liabilities associated with being with places where the policies are changing so quickly?
The question is it worth the risk? And right now, you have to look at the long term. Is it worth the risk being in China? Jameson Greer will have his hearing today. And last time we heard from him on Capitol Hill, he talked about decoupling the United States from China.
This, by the way, works both ways. If you're Shein and Temu, you're probably thinking the same thing about having a presence in the United States at the moment, based on the headlines we've seen over the past few days. Plenty more still to come on the programme on the tension between the United States and China and what it means ultimately for your investments. Right now, equity futures just about positive by 0.1% on the S&P. With an update on stories elsewhere, let's cross over to Yahara Heckes for more. Hey, Yahara.
Hi, John. U.S. Treasury Secretary Scott Bessent says in order to lower borrowing costs, the administration's focus is on bringing down 10-year Treasury yields, not the Fed's benchmark rate. In an interview last night, Bessent said Trump is not calling for the Fed to lower rates. Bloomberg's Saleha Mohsin will have an interview with Secretary Bessent today at 1 p.m. Eastern. Google is the latest company announcing changes to its diversity hiring plans. According to an internal memo, it said it's reviewing its programs and would no longer have, quote, aspirational goals tied to representation. It joins Meta and Amazon in big tech's retreat from DEI initiatives, which have been rejected by President Trump's administration. Tesla sales in Germany plummeted 59% last month. Only 1,277 new cars were registered. It hasn't seen those levels since July 2021. Musk's intervention in Germany's upcoming election was likely a factor, with a poll taken last month showing he was viewed unfavorably and his political interventions were unwelcome. That's your Bloomberg Brief. John?
Yahara, thank you. We'll see more from Yahara in about 30 minutes' time. A special thank you, of course, to Anwiti Bahagun of Northern Trust as well. Anwiti, thank you. Up next on the programme, Trump focused on bond yields and not the Fed.
He wants lower rates. He is not calling for the Fed to lower rates. He and I are focused on the 10-year Treasury and what is the yield of that.
Ed Mills of Raymond James joins us next on the programme, live from New York City this morning. Good morning. Bond yields a little bit higher right now by 2 basis points on a 10-year, 4.44. The next stop for this market, jobless claims later on this morning. The estimate in our survey, 213. The previous week, 207. The number drops at 8:30 Eastern Time. Under surveillance this morning, Trump is focused on bond yields and not the Fed.
He wants lower rates. He is not calling for the Fed to lower rates. If we get this tax bill done, if we get energy down, then rates will take care of themselves and the dollar will take care of itself. He and I are focused on the 10-year Treasury and what is the yield of that. I believe the bond market is recognizing that, as you and I talked about, energy prices will be lower and we can have non-inflationary growth
So here's the latest this morning. Treasury Secretary Scott Bessent making clear that President Trump will not pressure the Federal Reserve to lower interest rates, saying the administration's focus instead is on bringing down the 10-year Treasury yield. Joining us now is Ed Mills of Raymond James. Now, Ed, welcome to the programme. I wonder what consequences this might have, if any, for the tax cut talks over the next few months.
Yeah, John, there's a lot to talk about here because, the first thought I have is as soon as the Treasury Secretary says Donald Trump is not focused on the Fed lowering rates, we're almost near guaranteed getting a headline from Donald Trump saying the Fed needs to lower the front end of the rates. I do think that when I hear these comments, it is going to be difficult to do as much of the tax cuts as Republicans want to do. Another thing in that interview, Treasury Secretary Bessent said that they should do a score that would allow Republicans to make the tax cuts permanent, extending out current baseline. If we are going to see a $4 or $5 trillion plus increase in the debt and the deficit over the next 10 years, that's more than what the bond market's been looking for. And finally, I guess the thing I would highlight here is that in Trump 1.0, everyone was focused on the equity market, and that was the barometer of Trump's success. Increasingly, clients at Raymond James have been asking me, is the bond market the new barometer? And last night, Treasury Secretary Bessent kind of made that official that we're going to be watching the 10-year to see how successful Trump policies are going to be.
And Ed, isn't that because the bond market has a seat at the table when it comes to what you're discussing, this huge tax bill and whether or not they can go as far as they'd like to go?
Yeah, and when I've talked to folks in and around kind of the Trump administration, one of the things that they want to highlight is tax cuts are only one part of the story. They want to talk about the deregulatory agenda. They want to talk about DOGE. They want to talk about the amount of money that's going to be collected, Anne-Marie, from all of the tariffs that are going into place. And so if you want to get what the Treasury Secretary is describing, I think the market has to be prepared that there's going to be other sources of tax revenue that's coming in and other cuts to the federal government spending. And so the aggressiveness that we are seeing right now by Elon Musk and DOGE is part and parcel giving political cover for the Hill to go a little bit further or a lot further than they thought they might be able to do.
Well, let's discuss how they're going to do that. Senators will sit down with Trump this weekend, and they're talking about this two-path bill. I caught up with Congressman Jason Smith yesterday, who still wants this one big, beautiful bill. But, Ed, that seems to be collapsing in real time. What's your take on the next steps for the Republicans in Congress?
Well, next steps, Anne-Marie, is getting a budget. You can't start the budget reconciliation process. You have nothing to reconcile until you pass the budget. And so this is where the fact that Republicans have as slim as possible of a majority. You lose one vote, you can't get this done. So Donald Trump is also going to be having a conversation later today with House Republicans. He's going to see if he can get them to pass something to start the process. They're still fighting over process. Until you figure out the process, you can't get a bill. I absolutely still think we're going to get the tax bill done. It could be permanent. They could add tax cuts to this if they use the score that they're talking about. But until there is leadership from the White House to instruct them on what to do, we don't know what we get from the Hill until that point.
Ed, I loved how he started this conversation about how important the 10-year is and how this might be the ultimate check on the market. I thought that the photograph that we showed really set it up perfectly, where you have Donald Trump in the middle and you have Scott Bessent on one side, bond representative, and then you have Howard Lutnick on the other side, who in some ways is stock representative, growth representative, trying to get some of these other things across. Who has the louder voice, the louder influence over the man in the middle, Donald Trump, at a time where there are a lot of competing egos, a lot of competing wishes, and it's not clear just how constrained some of those people are going to be by, say, the 10-year yield?
Yeah, Lisa, I guess my flippant answer to that would be the last person who spoke to him. That's what we have seen countless times in this. He has once again instilled what we'd call a team of rivals. And we've seen this in elsewhere, too, on trade, on tariffs. There is a huge match between Team Econ, which is Scott Bessent's world, versus Team Tariff. That is Lutnick. That's going to be Jamison Greer, as mentioned. He's having his hearing today for U.S. Trade Representative. That's Peter Navarro. So what I've been instructed to do when I'm listening to all these competing voices is find areas of commonality. and that's going to be the likely policy. And one of the things that I think the market has been missing is the most dovish view coming out of that kind of team of rivals on tariffs is only starting at 2.5% of a universal tariff and getting to somewhere to 10 to 20%. If that's the dovish view, I want to know what the hawkish view is.
At that point, Ed, how do you advise clients? How do you advise companies that want to make plans, want to understand what their footprint should look like, want to understand where they can expand in the world? Are you telling them to just hold off and that, frankly, they will not know just what that hawkish view is to how high it could go?
Yeah, I'm not telling them to hold off, but I am telling them to expect volatility. I was at a conference yesterday down at our headquarters in St. Pete at Raymond James talking about how volatility is back and that you have to kind of not react to everything to get some of the big conversation right. And so there are a number of things out of this administration that could be viewed as market positive. There are other things that could be viewed as market negative. The way in which they implement that, the timing and the degree, all are going to be the big conversations of 2025, but don't stay paralyzed because if we stay paralyzed, you miss out on a lot of opportunity. Been doing this job for a while. I can always tell you the risk, but that has not been the right strategy before, and I don't think it's the right strategy now, Lisa.
Sequencing matters, Ed. I think we've all been saying that over the last several months. We wanted to know what would come first. We found out the focus was on trade and pretty quickly. For this market at the moment, I wonder how quickly things could change again when we really start to see what's going to happen with the tax package. When do we start to get a better idea of the contours of that? Is it going to take weeks, months? How long?
I think we'll get some idea within the next couple of weeks. As I mentioned, you have to pass the budget first. And Republicans, if we can get a budget in the February, March time period, people will get optimistic on what can get done. And then I want to see what score they're using. It's a technical thing, but if they use a score that says extend out current policy, which is what the Treasury Secretary is expecting to say, that's where we have the conversation about these tax cuts being permanent. That's not priced into the market. If we are in March and April talking about permanent tax cuts as a high probability event, that's a market positive from where I sit. It might have an impact on the 10-year that the Treasury Secretary does not want, and that might be the binding constraint. But I do expect that we will have moments of clarity followed by everything falling apart before it ultimately gets done. And one thing I say about D.C. is that things appear impossible right up until the moment they're inevitable. But I do think it is inevitable this year we will get something done on tax cuts.
Ed, this was brilliant. Looking forward to being on the journey with you. Ed Mills there of Raymond James on a path forward for the year ahead and the next 4 years. I remember a quote that came from Marko Klanovic, formerly of JP Morgan, who made the case that the biggest challenge for the incoming Treasury Secretary, now Secretary Scott Bessent, wouldn't be enacting change. It would be managing the volatility and the market reaction that might undermine those changes. So when we think about Treasury, you said this yesterday, the complaints about what Treasury Secretary Janet Yellen did with the activist Treasury issuance at the front end of the curve, Rabini's and Miran's words, not my own. And then what do we see from them? A reluctance to term out the debt. And based on those comments that we heard from Scott Bessent, I'd love to know if there's still that reluctance to term out the debt or whether those complaints stick, those complaints to Secretary Yellen. Do they hold? And do they want to make a change?
Clearly, they didn't want to make a change that quickly. So clearly, the actions speak louder than the words. The words, we're already getting some sense of what the words will be like. We have to study it. We want to make sure we do it in a prudent way. We want to have a time. We're just in the door. We've only had 19 days. Come on. Why are you pushing us? The reality is, it clearly is their focus, and that definitely is going to be a constraining factor.
If you want lower 10-year yields, terming out the debt probably won't help. Pushing out the supply further along the curve, just logically, probably won't help.
Which is the reason why I am skeptical of that happening in the near term. However, if inflation comes down and there is some sort of disinflationary shock, and maybe that's the sort of bad angel that comes out and is like, we're putting on 40% tariffs. If you get a tanking 10-year, maybe they term out the debt in that moment.
Up next on the programme, we'll get you down to the earnings later on after the closing bell. Scott Devitt of Wedbush looking ahead to numbers from Amazon. That comes a little bit later. If you're just joining us, welcome to the programme. Equity futures on the S&P just about positive by 0.1% in the bond market. Bond yields higher. Good morning, Mr. President. The 10-year, 444. Bramo, it's your world.
I feel so seen.
They're coming around, aren't they?
Yeah, absolutely.
This is Bloomberg.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Equities on the S&P 500 just about positive by 0.05%. Looking for a three-day winning streak on the S&P. On the Nasdaq right now, negative by 0.1%. Shook off some of the tech jitters in yesterday's session more broadly. Not a great day for the likes of Alphabet through most of yesterday's session. But for Amazon's up next after the closing bell. Look out for cloud revenue. We'll talk about that a little bit more in just a moment. Turning
Lots of uncertainty. It's the risk-off trade. No one wants to lever up.
Right now, it is business as usual, but maybe a little bit of a bird on the shoulder of uncertainty.
The volatility is not just in the equity market. Now it's cross-asset.
You're going to get an environment that is attractive for investment.
There are areas where you can look at the valuations and go, this is completely reasonable. But it is definitely more of a nimbleness, and you have to be watching things much more closely.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday on a two-day winning streak on the S&P 500 and looking to make it day three. On the S&P, we're positive by 0.1%. On the Nasdaq 100, we're up by a similar amount. On the Russell 2000, up by 0.25%. Your day ahead looks like this, a focus on both the data and the earnings as well. At 8:30 Eastern Time, we get jobless claims. Then later on, after the closing bell, we hear from Amazon. Amazon earnings coming up after the close. Before we get there, music to Bramo's ears from the Treasury Secretary, Scott Bessent, that me and the President of the United States are focused on, guess what? The 10-year Treasury yield.
I told you this is going to be the most important thing of this entire year. And look at that. Scott Bessent, you heard me. I'm with you. I think we all agree that that is going to be the most important metric. The interesting aspect is it takes the pressure off the Fed to cut rates in the near term. He did, of course, go after the Fed on some level, saying, well, they were the ones that messed up in the first place by cutting 50 basis points, and that led the 10-year to rise. But it highlights how they are concerned about inflation and they're concerned about borrowing costs and how that's going to inform their decisions more than any kind of political interference.
This is an argument we've heard before. We've heard it before on Wall Street, that the reduction of interest rates from September through to the end of the year, 100 basis points, actually contributed to the high yields at the back end because there was a worry, a concern that maybe the Fed would be allowing this economy to run a little bit too hot.
He leaned into that idea. At the same time, on the flip side, how much does this affect his decision or not to lengthen the duration of some of the deficit, given the fact that we had the announcement yesterday of the Treasury refunding, and it didn't include lengthening the duration like Scott Bessent said that he previously would? How much is that going to be a limiting feature to some of their plans, just simply because they are very cognizant of what we all are, which is auctions and the 10-year Treasury yield?
So two-part story to that. How are they going to manage the average maturity over at the Treasury? One. The second point, and I think it's an important one, will they be constrained by this bond market as they start to develop just how big they want these tax cut plans to be?
Well, that's the problem. Trump 2.0, everyone is saying, is going to mean higher yields because you have a ballooning reconciliation bill. Potentially, we're waiting on whether that's going to be one path or two. And also, on top of that, the fact that whether or not it's pervasive or one-time hit, many economists will tell you tariffs are inflationary.
When you step back, it puts these two ideas against each other. The idea of more nationalist putting tariffs on types of policies that typically aren't as good for growth with the pro-growth aspects. When you think about the 10-year Treasury yield, and if that is their metric, do they like the fact that tariffs are being treated as maybe disinflationary? And down the line might be a damper on growth, even the uncertainty. At what point is the damper on growth a problem, even though you're getting the lower yields on the long end that some of these officials want?
I think we've all got some follow-up questions. The good news, you get round two of Scott Bessent a little bit later on, right here on Bloomberg TV and on Bloomberg Radio, sitting down with our print reporter, Saleha Mohsin. Look out for that later on this afternoon. That is going to be must-watch. Equity futures right now on the S&P 500, just about positive. The hour ahead looks like this on Bloomberg Surveillance. We'll catch up with Anwita Bahaguna of Northern Trust with stocks on a two-day winning streak. Ed Mills of Raymond James with Bessent focused on 10-year Treasury yields, and Scott Devitt of Wedbush previewing earnings from Amazon. We begin this hour with stocks looking for a third straight day of gains as traders look ahead to a busy stretch of earnings. And Witi Bahuguna of Northern Trust expecting volatility ahead, writing political uncertainty is likely to remain high during the first few months of the new administration. We think investors should maintain a flexible investment strategy that can adapt to changing trade policies. And Witi joins us now for more. And Witi, good morning. Based on that, you've been busy. How busy have you been?
It's been a little hectic, yes.
Have you had to become super tactical?
Actually, quite the reverse, John. We really, over the weekend, published our capital market assumptions, which focuses on our 10-year outlook for asset classes. And, situation for equities looked decent. It's quite contrast then that Sunday night we were focused so much on what it means for the next day while we are publishing our 10-year view. We have to be super vigilant to what's happening every other day now in terms of are we on or are we not. And any kind of positioning you have, one morning you look great because you were defensing on Sunday night, and then in the afternoon of the day when those tariff issues are no longer relevant, then your positioning
and
looks
it could
weak.
change again in 5 minutes' time. I'm just picking up on the line that you wrote. We think investors should maintain a flexible investment strategy that can adapt to changing trade policies. What does that mean?
Yes. So what that means is that in the near term, so 3 to 6 months, while all these negotiations are underway, we expect volatility to be high. But if you look at the fundamentals of the economy, we're expecting pretty decent economic growth this year, around 2.5% or so. Inflation is the big question mark, and keep focusing on that. And company earnings first quarter so far coming out quite fantastic, really, I would say 9 to 10%. And for the full year, expected to be even more than that. So keep focusing on that. The rest is noise. We won't have clarity on that for a while. That clarity may appear sometime in the middle of the year. And if at that point we know what that looks like, because there are several outcome nodes for all these policies, then reassess, be flexible. Flexible also when the market overreacts to some of the near-term noise. Reposition yourself if there are opportunities at that time.
I love this. People talk about what's going on in Washington, D.C. Noise. It's just really confusing right now. Black box. How could we say anything? It's basically how many times can we say? How many different ways can we say? We have no clue. Don't make us comment on it. I am wondering about the uncertainty that we're seeing, even in the narrative around earnings, though. We saw some of the CapEx plans, in particular from Alphabet, and they were punished, even though it was a capacity issue that constrained their sales of some of their cloud computing offerings. I'm just wondering whether this narrative in the market of shifting away from some of the big tech drivers and the CapEx that really went into cloud computing and some of the AI adoption and the broadening out, whether you believe in that narrative having staying power or whether you think that the flipping and the flopping of that is noise.
Yeah, that's a great point, Lisa. We believe in the broadening of earnings this year. And we saw some of that actually in third quarter of last year also. But if you look back for the full year, it was still an AI concentration in tech, that kind of market behavior where everything else was participating, but not to quite the extent that the tech sector was. This year is likely to be noisy, likely to be volatile. Even before the tariff news, there was question mark around, the deep seek news. Our contention is, aside from flexibility, which Jonathan mentioned, another thing to do in the portfolios is to be diversified, to go away from just the tech-focused names and focus on companies with really great balance sheets, with good earnings potential, companies that have so far been sort of ignored by the market, but are really solid companies, such as companies which have quantitatively a low volatility score and a quality score.
Is it still the U.S. that's the focus, or does diversification increasingly mean outside of the U.S. at a time where we heard that in January, everyone was saying, all right, let's think about how low the bar is in Europe, and then Europe gained 8%, and then people are saying, wait a second, maybe let's come back here because tariffs are going back on. I mean, how much do you lean into the ex-U.S. story?
We're still saying Buy America. Even our 10-year outlook has a higher number for U.S. returns than international developed, mainly because of the structure of the earnings component in all these economies. The earnings story for U.S. remains very strong. The buyback story remains very strong. And there are these structural issues in the rest of the world where, as opposed to the buyback story that we see in the U.S., we actually see dilution elsewhere in the markets. And that keeps us U.S. focused.
When it comes to the U.S., though, right now, all the bad news is being priced in, or the uncertainty about tariffs, and some of the good news when it comes to the tax cuts. But we don't have tax cuts just yet, but we do have an extra 10% put on Chinese goods. If you get no tax cuts at the end of the year, do you still want to be invested solely in the United States?
Absolutely. I think the consumer is super strong. The companies are doing very well. So the tax cut is not the only driver. It's not even cut, Anne-Marie. It's the fact that they won't go up. That still remains the driving factor in the market, that we're not really waiting for additional cuts, but the threat of increased corporate taxes is off the table.
We've had some heat come out of the US story over the past few days. You saw that in the ISM services yesterday. Prices paid a little bit lower. The overall headline read came in a little bit lower. We saw it with job openings as well, falling back just a little bit. Nothing to get too concerned about here. I'm not going to say that the Federal Reserve needs to come out and cut interest rates before the next meeting. There's nothing bad out there at the moment. But to Anwiti's point, there's nothing out there to suggest at the moment, based on the data that we've seen more recently, that they need to hike anytime soon.
Which is the reason why you saw a huge rally into duration yesterday, and why you are seeing that rally in the bond market globally that's really feeding into that broadening out story and this idea that this is a positive disinflation, not necessarily something that's coming with cratering growth.
Speaking of the global story, did you see the headline coming from McKinsey?
Yes.
Being global is a choice. Frankly, it is more difficult now to make that choice. I know this is difficult and may become increasingly so. Speaking directly about China.
Maybe they are going to pull out of China. This is what we were talking about yesterday. How long before companies start signaling that the uncertainty is just too difficult? And frankly, it was a money-losing business for them, right? So it's not like they have that much on the line. But the head of McKinsey has wanted to be a global company. Is the idea of being a global company losing some of its flair because of some of the liabilities associated with being with places where the policies are changing so quickly?
The question is it worth the risk? And right now, you have to look at the long term. Is it worth the risk being in China? Jameson Greer will have his hearing today. And last time we heard from him on Capitol Hill, he talked about decoupling the United States from China.
This, by the way, works both ways. If you're Shein and Temu, you're probably thinking the same thing about having a presence in the United States at the moment, based on the headlines we've seen over the past few days. Plenty more still to come on the programme on the tension between the United States and China and what it means ultimately for your investments. Right now, equity futures just about positive by 0.1% on the S&P. With an update on stories elsewhere, let's cross over to Yahara Heckes for more. Hey, Yahara.
Hi, John. U.S. Treasury Secretary Scott Bessent says in order to lower borrowing costs, the administration's focus is on bringing down 10-year Treasury yields, not the Fed's benchmark rate. In an interview last night, Bessent said Trump is not calling for the Fed to lower rates. Bloomberg's Saleha Mohsin will have an interview with Secretary Bessent today at 1 p.m. Eastern. Google is the latest company announcing changes to its diversity hiring plans. According to an internal memo, it said it's reviewing its programs and would no longer have, quote, aspirational goals tied to representation. It joins Meta and Amazon in big tech's retreat from DEI initiatives, which have been rejected by President Trump's administration. Tesla sales in Germany plummeted 59% last month. Only 1,277 new cars were registered. It hasn't seen those levels since July 2021. Musk's intervention in Germany's upcoming election was likely a factor, with a poll taken last month showing he was viewed unfavorably and his political interventions were unwelcome. That's your Bloomberg Brief. John?
Yahara, thank you. We'll see more from Yahara in about 30 minutes' time. A special thank you, of course, to Anwiti Bahagan of Northern Trust as well. Anwiti, thank you. Up next on the programme, Trump focused on bond yields and not the Fed.
He wants lower rates. He is not calling for the Fed to lower rates. He and I are focused on the 10-year Treasury and what is the yield of that.
Ed Mills of Raymond James joins us next on the programme, live from New York City this morning. Good morning. Bond yields a little bit higher right now by 2 basis points on a 10-year, 4.44. The next stop for this market, jobless claims later on this morning. The estimate in our survey, 213. The previous week, 207. The number drops at 8:30 Eastern Time. Under surveillance this morning, Trump is focused on bond yields and not the Fed.
He wants lower rates. He is not calling for the Fed to lower rates. If we get this tax bill done, if we get energy down, then rates will take care of themselves and the dollar will take care of itself. He and I are focused on the 10-year Treasury and what is the yield of that. I believe the bond market is recognizing that, as you and I talked about, energy prices will be lower and we can have non-inflationary growth.
So here's the latest this morning. Treasury Secretary Scott Bessent making clear that President Trump will not pressure the Federal Reserve to lower interest rates, saying the administration's focus instead is on bringing down the 10-year Treasury yield. Joining us now is Ed Mills of Raymond James. Now, Ed, welcome to the programme. I wonder what consequences this might have, if any, for the tax cut talks over the next few months.
Yeah, John, there's a lot to talk about here because, the first thought I have is as soon as the Treasury Secretary says Donald Trump is not focused on the Fed lowering rates, we're almost near guaranteed getting a headline from Donald Trump saying the Fed needs to lower the front end of the rates. I do think that when I hear these comments, it is going to be difficult to do as much of the tax cuts as Republicans want to do. Another thing in that interview, Treasury Secretary Bessent said that they should do a score that would allow Republicans to make the tax cuts permanent, extending out current baseline. If we are going to see a $4 or $5 trillion plus increase in the debt and the deficit over the next 10 years, that's more than what the bond market's been looking for. And finally, I guess the thing I would highlight here is that in Trump 1.0, everyone was focused on the equity market, and that was the barometer of Trump's success. Increasingly, clients at Raymond James have been asking me, is the bond market the new barometer? And last night, Treasury Secretary Bessent kind of made that official that we're going to be watching the 10-year to see how successful Trump policies are going to be.
And Ed, isn't that because the bond market has a seat at the table when it comes to what you're discussing, this huge tax bill and whether or not they can go as far as they'd like to go?
Yeah, and when I've talked to folks in and around kind of the Trump administration, one of the things that they want to highlight is tax cuts are only one part of the story. They want to talk about the deregulatory agenda. They want to talk about DOGE. They want to talk about the amount of money that's going to be collected, Anne-Marie, from all of the tariffs that are going into place. And so if you want to get what the Treasury Secretary is describing, I think the market has to be prepared that there's going to be other sources of tax revenue that's coming in and other cuts to the federal government spending. And so the aggressiveness that we are seeing right now by Elon Musk and DOGE is part and parcel giving political cover for the Hill to go a little bit further or a lot further than they thought they might be able to do.
Well, let's discuss how they're going to do that. Senators will sit down with Trump this weekend, and they're talking about this two-path bill. I caught up with Congressman Jason Smith yesterday, who still wants this one big, beautiful bill. But, Ed, that seems to be collapsing in real time. What's your take on the next steps for the Republicans in Congress?
Well, next steps, Anne-Marie, is getting a budget. You can't start the budget reconciliation process. You have nothing to reconcile until you pass the budget. And so this is where the fact that Republicans have as slim as possible of a majority. You lose one vote, you can't get this done. So Donald Trump is also going to be having a conversation later today with House Republicans. He's going to see if he can get them to pass something to start the process. They're still fighting over process. Until you figure out the process, you can't get a bill. I absolutely still think we're going to get the tax bill done. It could be permanent. They could add tax cuts to this if they use the score that they're talking about. But until there is leadership from the White House to instruct them on what to do, we don't know what we get from the Hill until that point.
Ed, I loved how he started this conversation about how important the 10-year is and how this might be the ultimate check on the market. I thought that the photograph that we showed really set it up perfectly, where you have Donald Trump in the middle and you have Scott Bessent on one side, bond representative, and then you have Howard Lutnick on the other side, who in some ways is stock representative, growth representative, trying to get some of these other things across. Who has the louder voice, the louder influence over the man in the middle, Donald Trump, at a time where there are a lot of competing egos, a lot of competing wishes, and it's not clear just how constrained some of those people are going to be by, say, the 10-year yield?
Yeah, Lisa, I guess my flippant answer to that would be the last person who spoke to him. That's what we have seen countless times in this. he has once again instilled what we'd call a team of rivals. And we've seen this in elsewhere too. On trade, on tariffs, there is a huge match between Team Econ, which is Scott Bessent's world, versus Team Tariff. That is Lutnick. That's going to be Jameson Greer, as mentioned. He's having his hearing today for U.S. Trade Representative. That's Peter Navarro. So what I've been instructed to do when I'm listening to all these competing voices is find areas of commonality. And that's going to be the likely policy. And one of the things that I think the market has been missing is the most dovish view coming out of that kind of team of rivals on tariffs is only starting at 2.5% of a universal tariff and getting to somewhere to 10 to 20%. If that's the dovish view, I want to know what the hawkish view is.
At that point, Ed, how do you advise clients? How do you advise companies that want to make plans, want to understand what their footprint should look like, want to understand where they can expand in the world? Are you telling them to just hold off and that, frankly, they will not know just what that hawkish view is and how high it could go?
Yeah, I'm not telling them to hold off, but I am telling them to expect volatility. I was at a conference yesterday down at our headquarters in St. Pete at Raymond James talking about how volatility is back and that you have to kind of not react to everything to get some of the big conversation right. And so there are a number of things out of this administration that could be viewed as market positive. There are other things that could be viewed as market negative. The way in which they implement that, the timing and the degree, all are going to be the big conversations of 2025, but don't stay paralyzed because if we stay paralyzed, you miss out on a lot of opportunity. Been doing this job for a while. I can always tell you the risk, but that has not been the right strategy before, and I don't think it's the right strategy now, Lisa.
Sequencing matters, Ed. I think we've all been saying that over the last several months. We wanted to know what would come first. We found out the focus was on trade and pretty quickly. For this market at the moment, I wonder how quickly things could change again when we really start to see what's going to happen with the tax package. When do we start to get a better idea of the contours of that? Is it going to take weeks, months? How long?
I think we'll get some idea within the next couple of weeks. As I mentioned, you have to pass the budget first. And Republicans, if we can get a budget in the February, March time period, people will get optimistic on what can get done. And then I want to see what score they're using. It's a technical thing. But if they use a score that says extend out current policy, which is what the Treasury Secretary is expecting to say, that's where we have the conversation about these tax cuts being permanent. That's not priced into the market. If we are in March and April talking about permanent tax cuts as a high probability event, that's a market positive from where I sit. It might have an impact on the 10-year that the Treasury Secretary does not want, and that might be the binding constraint. But I do expect that we will have moments of clarity followed by everything falling apart before it ultimately gets done. And one thing I say about D.C. is that things appear impossible right up until the moment they're inevitable. But I do think it is inevitable this year we will get something done on tax cuts.
Ed, this was brilliant. Looking forward to being on the journey with you. Ed Mills there of Raymond James on a path forward for the year ahead and the next 4 years. I remember a quote that came from Marko Klanovic, formerly of JP Morgan, who made the case that the biggest challenge for the incoming Treasury Secretary, now Secretary Scott Bessent, wouldn't be enacting change. It would be managing the volatility and the market reaction that might undermine those changes. So when we think about Treasury, you said this yesterday, the complaints about what Treasury Secretary Janet Yellen did with the activist Treasury issuance at the front end of the curve, Rabini's and Miran's words, not my own. And then what do we see from them? A reluctance to term out the debt. And based on those comments that we heard from Scott Bessent, I'd love to know if there's still that reluctance to term out the debt or whether those complaints stick, those complaints to Secretary Yellen. Do they hold? And do they want to make a change?
Clearly, they didn't want to make a change that quickly. So clearly, the actions speak louder than the words. The words, we're already getting some sense of what the words will be like. We have to study it. We want to make sure we do it in a prudent way. We want to have a time. We're just in the door. We've only had 19 days. Come on. Why are you pushing us? The reality is, it clearly is their focus, and that definitely is going to be a constraining factor.
If you want lower 10-year yields, terming out the debt probably won't help. Pushing out the supply further along the curve, just logically, probably won't help.
Which is the reason why I am skeptical of that happening in the near term. However, if inflation comes down and there is some sort of disinflationary shock And maybe that's the sort of bad angel that comes out and is like, we're putting on 40% tariffs. If you get a tanking 10-year, maybe they term out the debt in that moment.
Up next on the programme, we'll count you down to the earnings later on after the closing bell. Scott Devitt of Wedbush looking ahead to numbers from Amazon. That comes a little bit later. If you're just joining us, welcome to the programme. Equity futures on the S&P just about positive by 1/10% in the bond market. Bond yields higher. Good morning, Mr. President. The 10-year, 444. Bramo, it's your world.
I feel so seen.
They're coming around, aren't they?
Yeah, absolutely.
This is Bloomberg. Equities on the S&P 500 just about positive by 0.05%. Looking for a 3-day winning streak on the S&P. On the Nasdaq right now, negative by 1/10%. Shook off some of the tech jitters in yesterday's session more broadly. Not a great day for the likes of Alphabet through most of yesterday's session. But for Amazon, Amazon's up next after the closing bell. Look out for cloud revenue. We'll talk about that a little bit more in just a moment. Turning to
Lots of uncertainty. It's the risk-off trade. No one wants to lever up.
Right now, it is business as usual, but maybe a little bit of a bird on the shoulder of uncertainty.
The volatility is not just in the equity market. Now it's cross-asset.
You're going to get an environment that is attractive for investment.
There are areas where you can look at the valuations and go, this is completely reasonable. But it is definitely more of a nimbleness, and you have to be watching things much more closely.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday on a 2-day winning streak on the S&P 500 and looking to make it day 3. On the S&P, we're positive by 1/10%. On the Nasdaq 100, we're up by a similar amount. On the Russell 2000, up by 1/4%. Your day ahead looks like this, a focus on both the data and the earnings as well. At 8:30 Eastern Time, we get jobless claims. Then later on, after the closing bell, we hear from Amazon. Amazon earnings coming up after the close. Before we get there, music to Bramo's ears from the Treasury Secretary, Scott Bessent, that me and the President of the United States are focused on, guess what? The 10-year Treasury yield.
I told you this is going to be the most important thing of this entire year. And look at that. Scott Bessent, you heard me. I'm with you. I think we all agree that that is going to be the most important metric. The interesting aspect is it takes the pressure off the Fed to cut rates in the near term. He did, of course, go after the Fed on some level, saying, well, they were the ones that messed up in the first place by cutting 50 basis points, and that led the 10-year to rise. But it highlights how they are concerned about inflation and they're concerned about borrowing costs and how that's going to inform the decisions more than any kind of political interference.
This is an argument we've heard before. We've heard it before on Wall Street, that the reduction of interest rates from September through to the end of the year, 100 basis points, actually contributed to the high yields at the back end because there was a worry, a concern that maybe the Fed would be allowing this economy to run a little bit too hot.
He leaned into that idea. At the same time, on the flip side, how much does this affect his decision or not to lengthen the duration of some of the deficit, given the fact that we had the announcement yesterday of the Treasury refunding, and it didn't include lengthening the duration like Scott Bessent said that he previously would? How much is that going to be a limiting feature to some of their plans, just simply because they are very cognizant of what we all are, which is auctions and the 10-year Treasury yield?
So two-part story to that. How are they going to manage the average maturity over at the Treasury? One. The second point, I think is an important one. Will they be constrained by this bond market as they start to develop just how big they want these tax cut plans to be?
Well, that's the problem. Trump 2.0, everyone is saying, is going to mean higher yields because you have a ballooning reconciliation bill. Potentially, we're waiting on whether that's going to be one path or two. And also, on top of that, the fact that whether or not it's pervasive or one-time hit, many economists will tell you tariffs are inflationary.
When you step back, it puts these two ideas against each other. The idea of more nationalist putting tariffs on types of policies that typically aren't as good for growth with the pro-growth aspects. And you think about the 10-year Treasury yield, and if that is their metric, do they like the fact that tariffs are being treated as maybe disinflationary? And down the line might be a damper on growth, even the uncertainty. At what point is the damper on growth a problem even though you're getting the lower yields on the long end that some of these officials want.
I think we've all got some follow-up questions. The good news, you get round two of Scott Besson a little bit later on, right here on Bloomberg TV and on Bloomberg Radio, sitting down with our print reporter, Saleha Mohsin. Look out for that later on this afternoon. That is going to be must-watch. Equity futures right now on the S&P 500, just about positive. The hour ahead looks like this on Bloomberg Surveillance. We'll catch up with Anwiti Bahaguna of Northern Trust with stocks on a two-day winning streak. Ed Mills of Raymond James with Besson focused on 10-year Treasury yields, and Scott Devitt of Wedbush previewing earnings from Amazon. We begin this hour with stocks looking for a third straight day of gains as traders look ahead to a busy stretch of earnings. And Anwiti Bahaguna of Northern Trust expecting volatility ahead, writing political uncertainty is likely to remain high during the first few months of the new administration. We think investors should maintain a flexible investment strategy that can adapt to changing trade policies. And Anwiti joins us now for more. And Anwiti, good morning. Based on that, you've been busy. How busy have you been?
It's been a little hectic, yes.
Have you had to become super tactical?
Actually, quite the reverse, John. We really, over the weekend, published our capital market assumptions, which focuses on our 10-year outlook for asset classes. And, situation for equities looked decent. It's quite contrast then that Sunday night we were focused so much on what it means for the next day while we are publishing our 10-year view. We have to be super vigilant to what's happening every other day now in terms of are we on or are we not. And any kind of positioning you have, one morning you look great because you were defensing on Sunday night, and then in the afternoon of the day when those tariff issues are no longer relevant, then your positioning
and
looks
it could
weak.
change again in 5 minutes' time. I'm just picking up on the line that you wrote. We think investors should maintain a flexible investment strategy that can adapt to changing trade policies. What does that mean?
Yes. So what that means is that in the near term, so 3 to 6 months, while all these negotiations are underway, we expect volatility to be high. But if you look at the fundamentals of the economy, we're expecting pretty decent economic growth this year, around 2.5% or so. Inflation is the big question mark, and keep focusing on that. And company earnings first quarter so far coming out quite fantastic, really, I would say 9 to 10%. And for the full year, expected to be even more than that. So keep focusing on that. The rest is noise. We won't have clarity on that for a while. That clarity may appear sometime in the middle of the year. And if at that point we know what that looks like, because there are several outcome nodes for all these policies, then reassess, be flexible. Flexible also when the market overreacts to some of the near-term noise. Reposition yourself if there are opportunities at that time.
I love this. People talk about what's going on in Washington, D.C. Noise. It's just really confusing right now. Black box. How could we say anything? It's basically how many times can we say? How many different ways can we say? We have no clue. Don't make us comment on it. I am wondering about the uncertainty that we're seeing, even in the narrative around earnings, though. We saw some of the CapEx plans, in particular from Alphabet, and they were punished, even though it was a capacity issue that constrained their sales of some of their cloud computing offerings. I'm just wondering whether this narrative in the market of shifting away from some of the big tech drivers and the CapEx that really went into cloud computing and some of the AI adoption and the broadening out, whether you believe in that narrative having staying power or whether you think that the flipping and the flopping of that is noise.
Yeah, that's a great point, Lisa. We believe in the broadening of earnings this year. And we saw some of that actually in third quarter of last year also. But if you look back for the full year, it was still an AI concentration in tech, that kind of market behavior where everything else was participating, but not to quite the extent that the tech sector was. This year is likely to be noisy, likely to be volatile. Even before the tariff news, there was question mark around, the deep seek news. Our contention is, aside from flexibility, which Jonathan mentioned, another thing to do in the portfolios is to be diversified, to go away from just the tech-focused names and focus on companies with really great balance sheets, with good earnings potential, companies that have so far been sort of ignored by the market, but are really solid companies, such as companies which have quantitatively a low volatility score, and a quality score.
Is it still the U.S. that's the focus, or does diversification increasingly mean outside of the U.S. at a time where we heard that in January, everyone was saying, all right, let's think about how low the bar is in Europe, and then Europe gained 8%, and then people are saying, wait a second, maybe let's come back here because tariffs are going back on. I mean, how much do you lean into the ex-U.S. story?
We're still saying Buy America. Even our 10-year outlook has a higher number for U.S. returns than international developed. Mainly because of the structure of the earnings component in all these economies. The earnings story for U.S. remains very strong. The buyback story remains very strong. And there are these structural issues in the rest of the world where, as opposed to the buyback story that we see in the U.S., we actually see dilution elsewhere in the markets. And that keeps us U.S. focused.
When it comes to the U.S., though, right now, all the bad news is being priced in, or the uncertainty about tariffs, and some of the good news when it comes to the tax cuts. But we don't have tax cuts just yet, but we do have an extra 10% put on Chinese goods. If you get no tax cuts at the end of the year, do you still want to be invested solely in the United States?
Absolutely. I think the consumer is super strong. The companies are doing very well. So the tax cut is not the only driver. It's not even cut, Anne-Marie. It's the fact that they won't go up. That still remains the driving factor in the market, that we're not really waiting for additional cuts, but the threat of increased corporate taxes is off the table.
We've had some heat come out of the US story over the past few days. You saw that in the ISM services yesterday. Prices paid a little bit lower. The overall headline read came in a little bit lower. We saw it with job openings as well, falling back just a little bit. Nothing to get too concerned about here. I'm not going to say that the Federal Reserve needs to come out and cut interest rates before the next meeting. There's nothing bad out there at the moment. But to Anwiti's point, there's nothing out there to suggest at the moment, based on the data that we've seen more recently, that they need to hike anytime soon.
Which is the reason why you saw a huge rally into duration yesterday, and why you are seeing that rally in the bond market globally that's really feeding into that broadening out story and this idea that this is a positive disinflation, not necessarily something that's coming with cratering growth.
Speaking of the global story, did you see the headline coming from McKinsey?
Yes.
Being global is a choice. Frankly, it is more difficult now to make that choice. I know this is difficult and may become increasingly so. Speaking directly about China.
Maybe they are going to pull out of China. This is what we were talking about yesterday. How long before companies start signaling that the uncertainty is just too difficult? And frankly, it was a money-losing business for them, right? So it's not like they have that much on the line. But the head of McKinsey has wanted to be a global company. Is the idea of being a global company losing some of its flair because of some of the liabilities associated with being with places where the policies are changing so quickly?
The question is it worth the risk? And right now, you have to look at the long term. Is it worth the risk being in China? Jameson Greer will have his hearing today. And last time we heard from him on Capitol Hill, he talked about decoupling the United States from China.
This, by the way, works both ways. If you're Shein and Temu, you're probably thinking the same thing about having a presence in the United States at the moment, based on the headlines we've seen over the past few days. Plenty more still to come on the programme on a tension between the United States and China and what it means ultimately for your investments. Right now, equity futures just about positive by 0.1% on the S&P. With an update on stories elsewhere, let's cross over to Yahara Heckes for more. Hey, Yahara.
Hi, John. U.S. Treasury Secretary Scott Bessent says in order to lower borrowing costs, the administration's focus is on bringing down 10-year Treasury yields, not the Fed's benchmark rate. In an interview last night, Bessent said Trump is not calling for the Fed to lower rates. Bloomberg's Saleha Mohsin will have an interview with Secretary Bessent today at 1 p.m. Eastern. Google is the latest company announcing changes to its diversity hiring plans. According to an internal memo, it said it's reviewing its programs and would no longer have, quote, aspirational goals tied to representation. It joins Meta and Amazon in big tech's retreat from DEI initiatives, which have been rejected by President Trump's administration. Tesla sales in Germany plummeted 59% last month. Only 1,277 new cars were registered. It hasn't seen those levels since July 2021. Musk's intervention in Germany's upcoming election was likely a factor, with a poll taken last month showing he was viewed unfavorably and his political interventions were unwelcome. That's your Bloomberg Brief. John?
Yahara, thank you. We'll see more from Yahara in about 30 minutes' time. A special thank you, of course, to Anwiti Bahagun of Northern Trust as well. Anwiti, thank you. Up next on the programme, Trump focused on bond yields and not the Fed.
He wants lower rates. is not calling for the Fed to lower rates. He and I are focused on the 10-year Treasury and what is the yield of that.
Ed Mills of Raymond James joins us next on the program, live from New York City this morning. Good morning.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Bond yields a little bit higher right now by 2 basis points on a 10-year, 4.44. The next stop for this market, jobless claims later on this morning. The estimate in our survey, 213. The previous week, 207. The number drops at 8:30 Eastern Time. Under surveillance this morning, Trump is focused on bond yields and not the Fed.
He wants lower rates. He is not calling for the Fed to lower rates. If we get this tax bill done, if we get energy down, then rates will take care of themselves and the dollar will take care of itself. He and I are focused on the 10-year Treasury and what is the yield of that. I believe the bond market is recognizing that, as you and I talked about, energy prices will be lower and we can have non-inflationary growth.
So here's the latest this morning. Treasury Secretary Scott Bessent making clear that President Trump will not pressure the Federal Reserve to lower interest rates, saying the administration's focus instead is on bringing down the 10-year Treasury yield. Joining us now is Ed Mills of Raymond James. Now, Ed, welcome to the program. I wonder what consequences this might have, if any, for the tax cut talks over the next few months.
Yeah, John, there's a lot to talk about here because, the first thought I have is as soon as the Treasury Secretary says Donald Trump is not focused on the Fed lowering rates, we're almost near guaranteed getting a headline from Donald Trump saying the Fed needs to lower the front end of the rates. I do think that when I hear these comments, it is going to be difficult to do as much of the tax cuts as Republicans want to do. Another thing in that interview, Treasury Secretary Bessent said that they should do a score that would allow Republicans to make the tax cuts permanent, extending out current baseline. If we are going to see a $4-5 trillion plus increase in the debt and the deficit over the next 10 years, that's more than what the bond market's been looking for. And finally, I guess the thing I would highlight here is that in Trump 1.0, everyone was focused on the equity market, and that was the barometer of Trump's success. Increasingly, clients at Raymond James have been asking me, is the bond market the new barometer? And last night, Treasury Secretary Bessent kind of made that official that we're going to be watching the 10-year to see how successful Trump policies are going to be.
And Ed, isn't that because the bond market has a seat at the table when it comes to what you're discussing, this huge tax bill and whether or not they can go as far as they'd like to go?
Yeah, and when I've talked to folks in and around kind of the Trump administration, one of the things that they want to highlight is tax cuts are only one part of the story. They want to talk about the deregulatory agenda. They want to talk about DOGE. They want to talk about the amount of money that's going to be collected, Anne-Marie, from all of the tariffs that are going into place. And so if you want to get what the Treasury Secretary is describing, I think the market has to be prepared that there's going to be other sources of tax revenue that's coming in and other cuts to the federal government spending. And so the aggressiveness that we are seeing right now by Elon Musk and DOGE is part and parcel giving political cover for the Hill to go a little bit further or a lot further than they thought they might be able to do.
Well, let's discuss how they're going to do that. Senators will sit down with Trump this weekend, and they're talking about this two-path bill. I caught up with Congressman Jason Smith yesterday, who still wants this one big, beautiful bill. But, Ed, that seems to be collapsing in real time. What's your take on the next steps for the Republicans in Congress?
Well, next steps, Anne-Marie, is getting a budget. You can't start the budget reconciliation process. You have nothing to reconcile until you pass the budget. And so this is where the fact that Republicans have as slim as possible of a majority You lose one vote, you can't get this done. So Donald Trump is also going to be having a conversation later today with House Republicans. He's going to see if he can get them to pass something to start the process. They're still fighting over process. Until you figure out the process, you can't get a bill. I absolutely still think we're going to get the tax bill done. It could be permanent. They could add tax cuts to this if they use the score that they're talking about. But until there is leadership from the White House to instruct them on what to do, we don't know what we get from the Hill until that point.
And I loved how he started this conversation about how important the 10-year is and how this might be the ultimate check on the market. I thought that the photograph that we showed really set it up perfectly, where you have Donald Trump in the middle and you have Scott Bessent on one side, bond representative, and then you have Howard Lutnick on the other side, who in some ways is stock representative, growth representative, trying to get some of these other things across. Who has the louder voice, the louder influence over the man in the middle, Donald Trump, at a time where there are a lot of competing egos, a lot of competing wishes, and it's not clear just how constrained some of those people are going to be by, say, the 10-year yield?
Yeah, Lisa, I guess my flippant answer to that would be the last person who spoke to him. That's what we have seen countless times in this. He has once again instilled what we'd call a team of rivals. And we've seen this in elsewhere, too. On trade, on tariffs, there is a huge match between Team Econ, which is Scott Bessent's world, versus Team Tariff. That is Lutnick. That's going to be Jamison Greer, as mentioned. He's having his hearing today for U.S. Trade Representative. That's Peter Navarro. So what I've been instructed to do when I'm listening to all these competing voices is find areas of commonality. And that's going to be the likely policy. And one of the things that I think the market has been missing is the most dovish view coming out of that kind of team of rivals on tariffs is only starting at 2.5% of a universal tariff and getting to somewhere to 10 to 20%. If that's the dovish view, I want to know what the hawkish view is.
At that point, Ed, how do you advise clients? How do you advise companies that want to make plans, want to understand what their footprint should look like, want to understand where they can expand in the world? Are you telling them to just hold off and that, frankly, they will not know just what that hawkish view is and how high it could go?
Yeah, I'm not telling them to hold off, but I am telling them to expect volatility. I was at a conference yesterday down at our headquarters in St. Pete at Raymond James talking about how volatility is back. In that you have to kind of not react to everything to get some of the big conversation right. And so there are a number of things out of this administration that could be viewed as market positive. There are other things that could be viewed as market negative. The way in which they implement that, the timing and the degree, all are going to be the big conversations of 2025. But don't stay paralyzed, because if we stay paralyzed, you miss out on a lot of opportunity. Been doing this job for a while. I can always tell you the risk, but that has not been the right strategy before, and I don't think it's the right strategy now, Lisa.
Sequencing matters, Ed. I think we've all been saying that over the last several months. We wanted to know what would come first. We found out the focus was on trade, and pretty quickly. For this market at the moment, I wonder how quickly things could change again when we really start to see what's going to happen with the tax package. When do we start to get a better idea of the contours of that? Is it going to take weeks, months? How long?
I think we'll get some idea within the next couple of weeks. As I mentioned, you have to pass the budget first. And Republicans, if we can get a budget in the February, March time period, people will get optimistic on what can get done. And then I want to see what score they're using. It's a technical thing, but if they use a score that says extend out current policy, which is what the Treasury Secretary is expecting to say, that's where we have the conversation about these tax cuts being permanent. That's not priced into the market. If we are in March and April talking about permanent tax cuts as a high probability event, that's a market positive from where I sit. It might have an impact on the 10-year that the Treasury Secretary does not want, and that might be the binding constraint. But I do expect that we will have moments of clarity followed by everything falling apart before it ultimately gets done. And one thing I say about D.C. is that things appear impossible right up until the moment they're inevitable. But I do think it is inevitable this year we will get something done on tax cuts.
Ed, this was brilliant. Looking forward to being
Today, Israel's defense minister orders the army to prepare for Gaza residents' departure, as some Arab American voters say they're standing by Trump after his shock proposal. South Africa's president prepares his State of a Nation in the face of US opposition to a land ownership law.
And Trump seeks to ban transgender athletes from women's sports. It's Thursday, February 6th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Jonah Green in New York.
And I'm Tara Oakes in London. Israel's Defense Minister Israel Katz has ordered the army to prepare a plan to allow for the voluntary departure of residents from the Gaza Strip. Israel's Channel 12 quoting him as saying countries who opposed Israel's military operations in Gaza should take in the Palestinians. US President Donald Trump's proposal to take over Gaza and resettle Palestinians has drawn global condemnation.
His plan also got pushback from some Republicans in Congress, including Senator Rand Paul, who tweeted, "I thought we voted for America first." The fiercest comments were perhaps from United Nations Secretary General Antonio Guterres.
It is vital to stay true to the bedrock of international law. It is essential to avoid any form of ethnic cleansing.
Trump's top aides staunchly defended his proposal, but backed away from some elements of the plan. Here's White House Press Secretary Caroline Leavitt.
The president has not committed to putting boots on the ground in Gaza. He has also said that the United States is not going to pay for the rebuilding of Gaza.
While Arab American leaders are criticizing Trump's proposal, some voters in the community still think he's the best option for peace. Reporter Andrea Shalal has been talking to them to find out why.
A lot of Arab Americans and Muslims that voted for Donald Trump credit President Trump for helping to bring about the ceasefire. After months and months and months of less than stellar results by the Biden administration, it was really on the eve of the inauguration that this ceasefire was reached. And people also said to me, look, we know this is how this guy operates, right? He says things that are provocative, like buying Greenland. We know it's a negotiating position. I spoke with someone earlier today, Yahya Basha, who's a medical doctor and founder of Muslims for American Progress, who said he wasn't surprised.
I don't regret anything I did to get Trump elected, and I hope we see positive signs in the future.
There have been proposals like this before, so some people remain skeptical that those plans will actually be executed.
A second federal judge has issued an order blocking Donald Trump's plan to curtail birthright citizenship, saying no court in the United States has ever endorsed the Republican president's interpretation of the Constitution.
The Panama Canal Authority says it has not made any changes to charges or rights to cross the canal. The announcement comes after the State Department said that US government ships could make the crossing without paying any fees. The Trump administration has been toying with a plan for reform at the World Health Organization, including putting an American in charge of it as a condition for the US remaining a member. That's according to two sources familiar with the plan and a document reviewed by Reuters. And Argentina says it will also pull out of the WHO, its President Javier Milei citing deep differences over health management, particularly the COVID-19 pandemic. Over on markets, China is challenging Donald Trump's tariffs at the World Trade Organization, and shippers are warning of chaos. Kamal Crimmins is here with more.
So Beijing's move is the first stage of a dispute process, but its ability to get a ruling at the WTO is going to be stymied because the panel that settles trade disputes doesn't really function after the Trump administration blocked appointments to it during his first term. Meanwhile, there's still a lot of confusion over what Trump's cancellation of a duty-free exemption means for low-value packages from China and Hong Kong. The cancellation affects Chinese retailers like Shein and Temu, and shippers are trying to navigate it all. The US Postal Service did say it will now accept parcels from China and Hong Kong, reversing a 12-hour suspension that had added to the confusion. And if you want to hear more about tariffs, trade, and what Trump wants from it all, check out this week's episode of Reuters Econ World. It's out today on Reuters.com, the Reuters app, or wherever you get your podcasts.
South African President Cyril Ramaphosa is set to give his State of the Nation address later today. His speech coming a few weeks after signing into law a bill aimed at addressing racial disparities in land ownership. President Trump and his advisor Elon Musk aren't fans. Trump posted, without citing evidence, that South Africa is confiscating land and certain classes of people were being treated very badly, saying he would suspend aid to the country over the policy. Musk, who is South African-born, accuses his home country of having openly racist ownership laws. Tim Cox is our chief correspondent for Southern Africa.
So land ownership in South Africa is about 80% privately held. It's mostly in white hands. So of the sort of freehold farmland that's out there, about 75% of it is owned by white farmers, and white people make up about 8% of the population compared to 80% of black people, and black farmers own only about 4%. So you can see from those figures how skewed the ownership is. This is a product of the apartheid history of South Africa. The bill seeks to redress these very stark disparities by giving the government the power to effectively force landowners to give up their land, in some rare cases even without any compensation. So far, what we've had is a willing buyer, willing seller model, whereby the government tries to get hold of land and then redistribute it to black farmers by paying for it, and on a voluntary basis. The trouble is this just has done almost nothing to redress the situation.
And so what are Trump and Musk's complaints here?
So Trump's claim was that there has already been land seizures going on under this law, but there's not been even a single acre yet because they've only just passed it last month. Musk has been talking up this idea of a genocide against white farmers. This is an idea that tries to connect robberies on remote farms in which a farmer gets killed with the land reform, and saying that actually they're connected. The problem with this is that there's about 20,000 murders in South Africa every year, and only 50 of them are of white farmers. So it doesn't really stack up. It's often not really clear what their complaint is. But certainly the white farmers that they're speaking to, their complaint is that this nil compensation is going to violate property rights and scare off investment.
The war on women's sports is over.
President Trump has signed an executive order attempting to exclude transgender girls and women from female sports in schools. Schools that don't comply immediately can be cut off from federal funding. Supporters of the new order say it will restore fairness in sports, but critics and activists say it infringes on the rights of a tiny minority of athletes.
For a lot of trans youth out there, it just means, once again, their country's declaring war on them.
Kristen Worley is a transgender former professional cyclist. This is Trump's fourth executive order since taking office that restricts transgender rights. Reporter Dan Trotta has been looking at why this measure may go over differently than some of the others.
In general terms, the trans issue has been very partisan. That is, Democrats have supported trans rights and Republicans have sought to restrict them. In this case, there may be a little bit more of an overlap. This issue, when Trump spoke about it at his rallies during the campaign, got huge applause. He spent millions and millions of dollars on an advertisement that spoke to this issue. So it seems to have found an audience beyond the other trans issues.
The order is a novel interpretation of Title IX. Can you explain how?
Title IX is a federal law that bans discrimination in education on the basis of sex. Obama and Biden both had interpreted that to mean a ban on discrimination against transgender people. Trump now is trying to reverse that and say that what Title IX really does is protects non-transgender women and girls from competing against trans women and girls in sports. It will be interesting to see what the courts say.
And for today's recommended read, a Reuters exclusive on how Ukraine has seen a marked improvement in the accuracy of Russia's North Korean missiles. There's a link to the story in the pod description.
And for more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. We'll be back tomorrow with our daily headline show.
Visa Direct helps to make all of it possible.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Live from Studio 2 at Bloomberg headquarters in New York, I am Alex Steele.
And I'm Scarlett Fu. We're kicking off to the closing bell here in the U.S. Things feel a little bit oddly quiet, like the calm before the storm.
Well, yeah, but is the job market going to really have the storm tomorrow? So we're seeing absolutely nothing happening within the market, guys. I hate to break it to you. The S&P did have a little dip down by about half an hour ago, and now we recouped, and we are pretty much unched on the day. The Mag 7 did have a nice rally underway. That has now lost some steam as we look forward to Amazon after the bell. That's flat. The VIX also very calm at 15. And then you have the Bloomberg Dollar Index also very flat, despite Treasury Secretary Scott Bessent talking very positively about wanting that strong dollar. So, guys, there's nothing happening on an index level. That's all I got for you.
But another Mag 7 name reports exactly 1 minute after the closing bell. This time it is Amazon, expected to report 10% revenue growth, fueled by cloud computing, advertising, and, of course, online sales. We'll also keep an eye on the consumer through the lens of travel, video games, and cosmetics when Expedia, Take-Two, Elf Beauty, and Affirm publish their results as soon as they hit the tape. But for now, caution prevails with stocks pretty much unchanged as investors await those earnings and the first jobs report under President Trump tomorrow. Now, the wrinkle with that jobs report is that the data will include an entire year's worth of revisions, though economists are expecting the markdowns to provide more relief than concern. In the meantime, Alex, you mentioned Trump's new Treasury Secretary, Scott Bessent. He is making the media rounds this week, clarifying that the president wants lower Treasury yields and not necessarily a Fed rate cut. Today, he told Bloomberg that Trump favors a strong dollar policy. Take a listen.
First of all, the strong dollar policy is completely intact with President Trump. And I was very happy at his Economic Club of New York speech in August when he reemphasized the importance of maintaining the dollar reserve currency status.
In that way, Bessent sounds like every other U.S. Treasury Secretary talking about that strong dollar policy.
Right. And can you have that stronger dollar and lower yields? Of course, that is the eternal question when it comes to the bond market. All right, Scarlett, you were talking about earnings. Let's take a broader view here. So this is using the EA function. It's really fun to play around with. This looks at sales growth and earnings growth. This is earnings growth, and this is average sales growth. Now, the orange line is for all industries that we've seen so far, and the gray line is for consumer discretionary, where the likes of Tesla and Amazon live. Now, you take a look at the current quarter that's reporting right now, and you can see average sales growth for consumer discretionary just not really catching up to the broader S&P, and same for earnings growth. Now, throughout the year, though, earnings growth actually in the sector for consumer discretionary could really support the overall sector, and that really comes down to the likes of Amazon, Scarlett, which is what makes Amazon's number so important since it's such a huge driver of earnings for that particular sector in the S&P.
All right. And Alex, of course, we will break those numbers for you as soon as they cross after 4 p.m. For this hour, let's kick things off with Savita Subramanian. Savita is head of U.S. equity and quantitative strategy with BofA Securities. Savita, it's great to see you. I want to get your take on earnings so far. Aside from the numbers, and of course it's a game, right? Because the executives make sure that the numbers are low enough that they can beat them, and then they get a positive reception in the markets. I'm trying to get a sense of what you've learned from the company executives, especially when it relates to policy uncertainty and how they're navigating through that. What's the biggest takeaway for you?
Yeah, I think the biggest takeaway that we're seeing in the numbers and the stats is that guidance is actually tracking a little bit weaker than where it's been over the last few years. So management is actually guiding down more aggressively than above consensus expectations. This isn't anything cataclysmic. In fact, it's very typical early in the year. But for the last few years, I think where we were was an environment where companies were actually guiding above more aggressively. And now perhaps this is just a sign that analyst expectations are back to normal. They're not depressed, coming out of COVID or coming out of the rate hike cycle of 2022. So here we are. Guidance is tracking the normal seasonal low levels. Earnings beats, as you point out, are very healthy. We're tracking a pretty healthy, I think, a 5% beat for the S&P 500 from companies that have reported so far. Financials are leading the beat. Commentary has been relatively positive. What's surprising to us is that when you sort of put all of the transcripts into our NLP or natural language processing sausage grinder, it spits out that corporate optimism is at all-time highs, which is unusual, I know, not necessarily what one would expect. But I do think that from a numbers basis, what we're seeing is more cautious guidance, maybe even more cautious than one would normally be given the policy uncertainty out there.
That's super interesting, the contrast between what the numbers are showing and what the commentary sounds like. I mean, ultimately, ultimately nobody knows what's going to happen, including the president himself. Given the full spectrum of possibilities out there, do you think there perhaps is too much focus on tariffs at the expense of immigration and, the effects on the labor market in certain industries?
Yeah, absolutely. I think the tariffs are really capturing mind share. And obviously, it's a much more kind of dramatic scenario. And we've heard a lot of news and lots of changes to policy in the last week or two. Look, I think that there is also, the bullish side of things, which is potential for deregulation. And then immigration reform, which would be negative from a margin perspective, higher labor costs, but it could be positive for real wage growth for for the average worker in the U.S. So I think there are puts and takes on everything. I think what we haven't really focused on also is just the change in the mix of the S&P since 2018. So tariffs, while the numbers sound very high, what the good news is that companies have already been, kind of experiencing this learning curve of how to deal with tariffs in China. They've managed to move a lot of activity out of China closer to home. Unfortunately, a lot of that activity was shifted to Mexico and Canada, which are also in the crosshairs today. But I think the idea that we're going to see this massive swoon in earnings from tariffs isn't necessarily part of the story. And even the inflationary impact might not be as aggressive.
Yeah, and also you brought up the positive parts, right, which means sequencing is also important. So how's sentiment, Savita?
Sentiment has caught up with this bull market. So, unfortunately, it's not one of those scenarios where you can say this market is so hated, you still want to buy it. We're at a point where our sell side indicator is almost at a sell signal. So what that means is the sell side has grown that much more positive. They're recommending much higher allocations to stocks. That said, they're only, the average sell-side strategist's recommendation to equities is just around 57%, which isn't super high relative to, the benchmark allocations that we've seen of 60% equities. So, it's been higher in prior cycles. During the tech bubble, there were, strategists were recommending a 70% allocation. So today's numbers are definitely higher than where they've been over the last few years, but they're not necessarily at super stretch levels. And where I think the real optimism across Wall Street is on these Magnificent Seven companies. If you look at growth expectations for the Magnificent Seven analysts, the consensus analyst is forecasting the strongest growth ever for these 7 companies, which is hard to really see happening given that they're bigger, they're not going to grow as fast, and they're also spending a lot more on CapEx. So I think that's where we're seeing absolute euphoria.
So then based on that, where's your pain trade?
I think the pain trade is really what we've seen so far, which is, kind of financials outperforming. We're seeing some value areas outperform. January was an interesting month because the only sector that was down was tech. Every other sector was in the black. And you had large cap value outperform all the other size and style segments. So I think that's where we want to focus, is just potentially a change in style, not necessarily buy all the small caps, but maybe get a little bit more valuation sensitive and, kind of look at expectations for these tech companies versus what they're actually going to achieve.
All right, good stuff. Savita, always appreciate your joining us here on The Close. Savita Subramanian, head of U.S. equity and quantitative strategy over at BofA Securities. We've got a lot coming up on The Close. President Trump is scheduled to meet the CEO of U.S. Steel today. Could that possibly resurrect that block deal with Nippon Steel now that a new president is in the White House?
Plus, a conversation about real estate with Lauren Hochfelder, co-CEO of Morgan Stanley Real Estate Investing, why she sees a bottom forming in private real estate.
And from real estate to a mortgage and commercial lender, a sit-down with with Steve Steinauer, Chairman, President, and CEO of Huntington Bancshares on the heels of the company's Investor Day. This is The Close on Bloomberg. It's time now for our top calls and look at some of the big movers on the back of analyst recommendations. And let's start with Reddit. Seaport Global starting coverage of the social media company with a neutral rating and no price target. The analyst says he is positive on Reddit's long-term fundamentals and views it as an attractive platform for advertisers, but says the stock's valuation is what's keeping him from a buy rating. Shares currently down about 3%.
All right, Scarlett, I'm taking a look at Skyworks Solutions, with supplies chips for use in mobile devices like Apple's iPhone. Skyworks warned about content losses in the upcoming quarters, prompting multiple downgrades, including one from Stifel. The analyst described the loss as a, quote, new and unexpected headwind that fundamentally reverses our 12 to 18-month growth thesis. Yikes, the shares are up by 24%.
And finally, CarMax, the used car retailer, upgraded to outperform from inline at Evercore ISI. The analyst says if Trump's proposed tariffs go into effect, it could accelerate a consumer shift to used vehicles. He also expects a solid growth forecast from CarMax when it reports quarterly results on Monday. The share's up almost 3%. And those are some of our top calls. Now, President Trump is also meeting with executives from U.S. Steel later today as questions swirl about the fate of the company and the takeover bid from Japan's Nippon Steel. This comes just one day before Trump is due to meet with Japan's Prime Minister Ishiba. Joining us now for more on this development is Timna Tanners, Managing Director and Equity Research Analyst over at Wolfe Research. Timna has an outperform rating on U.S. Steel. Timna, do you think this meeting between President Trump and U.S. Steel CEO Dave Burritt will result in any change on that deal to consolidate Nippon Steel and U.S. Steel?
I think that you've got to believe that if they're meeting that something could be brewing. So I think that the odds of a possible Nippon takeover went up a little bit. And it does, doesn't jibe with the past, which is that Trump was adamant that he was not going to approve the deal. He said so quite vigorously several times during the campaign. But since he's been elected, he did not follow through yet, at least, with squashing the deal. So there is, I think, still a little hope, obviously still meeting with the Prime Minister of Japan tomorrow that could prove some positive move. But at the end of the day, we still believe it's probably a standalone entity after these meetings.
Interesting. I guess also the other thing is that Nippon Steel reported earnings overnight, and they were talking about President Trump playing a role here, saying that if he understands this appeal from Japan correctly, he will support this matter, which makes it feel like the Prime Minister of Japan is going to make a more pointed argument here for this deal to go through.
Yeah, a lot rests on these meetings. I thought the Nippon Steel communication was very candid. It just said, we can't guarantee that anything will happen, but a lot rests on what the politics decide, which, as you know, is unusual, but this has been an unusual deal since the beginning, very politicized.
Hey, Timna, you've been an ardent supporter of U.S. Steel in that you think it can go it alone without the Nippon Steel deal. You still believe that?
Absolutely. In fact, in our recent publication, we pointed out that as of the 2025 forecasts that we have with consistent steel prices across the board, U.S. Steel is best positioned of our coverage to have the highest free cash flow yield.
Then what happens if we get tariffs from Mexico and Canadian imports and even Chinese imports on metals like steel and aluminum? Is that like a good thing for U.S. Steel or a bad thing? Like, how do you put that into a model?
Sure. So broadly speaking, the U.S. steel industry should benefit from tariffs, right? Canada and Mexico, especially Canada, brings steel into the U.S. They're one of the largest importers of steel. Mexico, not so obvious, but if you have, less imports, that helps the price go up, and U.S. Steel is particularly well positioned, we would say, to benefit there.
What are your thoughts here on Ankara, the activist investor here, which has nominated 9 candidates for U.S. Steel's board, and trying to be much more influential in this company? Is there anything to this? Is there anything more to this?
We don't see any teeth as it stands. It's kind of unusual to see a company with 0.18% holdings, as we last saw at least, to try to make an influence on the company. We don't think the recommendations broadly to have different management or focus on their operations are bad recommendations. I don't think it makes sense for the company to abandon the Nippon bid, because it would be positive for shareholders if it could go through. But at the end of the day, it is kind of unusual that activists come in and the shares don't go up. So I think it puts a floor under the stock stock perhaps, but we don't see anything to it for now.
Does that maybe scare off other potential activist investors from coming in?
I don't think so. I think an activist investor that really had, shares in the company perhaps could have more of an influence. If you had a different management team, I don't think that would be a bad thing. But at the end of the day, I don't think U.S. Steel, needs a lot of changes. I think it can go it alone. I think its strategy of, looking to have both blast furnace, electric arc furnace operations and investing in their new electric arc furnaces, I think are good strategies.
Hey, Timna, you've been covering this industry for a really long time. What's your favorite pick right now in the midst of all this uncertainty?
Yeah, U.S. Steel is our top pick. We think you have a combination of benefit from some of the recent price hikes that we think can stick for the near term, and also the benefit of new capacity ramping up, and a sliver of a chance still that the Nippon deal goes through. So U.S. Steel is our top pick. We also are a bit cautious into the second half of the year because of quite a bit of new steel capacity coming on. But, U.S. Steel is one of them adding capacity, so they're still best positioned, we think, in light of that concern we have.
All right, Timna, really appreciate that. The stock is up over 20% so far just in the last month and a half or so. Timna Tanners over at Wolfe Research, always great to get your perspective. All right, coming up, we're going to speak to Macquarie Asset Management's Ben Way about their investment strategy where they all see opportunity in the current market from real estate to credit and to equities. This is The Close on Bloomberg.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Markets moving absolutely nowhere. We get the jobs data tomorrow at 8:30, looking for about 0.9% move in the options market, according to Piper Sandler. So I want to broaden out and take a look at how you manage all the difficulty and risk. Macquarie Asset Management's outlook for 2025 report is out, saying that we have transitioned to a new normal where neutral rates are likely to remain elevated relative to the past decade. And the key risk to their outlook for the year is more stubborn inflation, particularly if we see an escalation in trade conflicts between countries. Joining us now is Ben Way, Group Head at Macquarie Asset Management. There's a lot to unpack with that because a new normal where rates aren't so low very much is difficult when it comes to it's in contrast to then strong growth in the U.S. exceptionalism trade. What's your biggest call?
Look, our biggest call is the fact that, there's huge opportunities still in the private market sector right around the world being driven by, the big global thematics, whether it's digitalization, decarbonisation or deglobalisation. So, we think within the private market sector, whether it's real estate or infrastructure, there are huge opportunities to go out and create capacity to meet unmet needs, and those remain very strong. If you look at something like the US here, if you look at self-storage, if you look at manufactured housing, if you look at logistics, those are all deep opportunities that require more investment and more capacity to, if you like, respond to and put in the building blocks for the economies as they continue to evolve. So, we're excited about that. We think global growth has been very resilient. We've seen today central banks in certain markets starting to reduce rates, which we think will really help markets bounce back and give markets more confidence. But we think those big thematics really underline the key thematics and the key investment opportunities.
Well, what if central banks can't lower it as much as everybody thinks because of policy and tariffs, et cetera? Does that disrupt your love of real assets and infrastructure?
I think no, because in a high or low interest rate world, generally the infrastructure, for example, has delivered very good returns. And you often have some sort of inflation hedge built into infrastructure assets anyway. I think what we do need to be prepared for is many of us have been forecasting how many rate cuts there would be last year, how many rate cuts there will be this year. Do we really know? I think the answer is probably not. What we do know is that there's going to be ongoing volatility. And, volatility is not necessarily a bad thing. Obviously, for the public side of investing, that creates opportunities all the time. But that volatility, I think, is more a manifestation of that we are transitioning from a post sort of World War II Pax Americana world to a newer international arrangement. And so things that we've got used to investing in the last 70 years may pivot, but that creates opportunities. It creates opportunities in terms of deglobalization and the need for more capacity around onshoring and nearshoring. So just as opportunities move away from private markets, new opportunities arise. And if you think about data centers, right, no one was really investing in data centers 10 years in a material way. No one was really doing it in the material way we see it today 5 years ago. But because of the digitalization, the move to cloud, and now the injection we've got from AI, that has become a much more focused sector with great returns for investors.
How far along the process are we in that build out of data centers? I mean, are we, to use a baseball analogy, in the second inning or are we in the eighth inning?
I think we're in the second inning. It has a long way to go. I mean, often we talk about data centers and they're going to use all the world's electricity, but they actually only account for 2% of the world's electricity consumption today. We all know that AI has a long, long way to go. We're really just at the beginning of what this means in terms of investment opportunities, applications to the world. Just as the digitalization of the world and the move to cloud and the move to an app economy has really only taken place from a convergent point of view over the last 20 years. And that has a long way to go, just as data centers do. So, we're excited about that opportunity, and you can see that right around the world, there is not enough hyperscale capacity today. There's a huge demand from all the big tech companies, and even allowing for perhaps some moderation in terms of AI demand, that still has a long way to go.
I like how we went from physical infrastructure to digital infrastructure. And when you look at data centers, is it through publicly traded companies, REITs, for instance, or is it through private companies?
Well, the way we're making our investments is really through private companies. There's an array of investment opportunities out there for both wealth and institutional investors. But what we've done is built, a digital infrastructure base of, some sort of, 30 companies over the last 25 years. That's about $60 billion of assets, and that's primarily done by really spotting great management teams that have identified the right powered land, have the right relation with customers, and then really bringing capital and expertise to scale them up. And, we've done that here in the US with Aligned. We did that with AirTrunk that we exited at the end of last year, which is the largest ever exit from a data center business globally. But there is an opportunity for investors to continue to find those opportunities. But of course, like everything, it's about finding the best management teams with the best client bases.
30 seconds, real estate. You like it?
I think
we bottomed. It's going to get better?
I think it will get way better.
Okay.
Not all parts of real estate, but I do think where you're creating capacity to meet things like unmet needs, particularly around build to rent, self-storage, those sorts of things, I think those are great opportunities and a long way to go.
All right, Ben Wei, really appreciate your joining us.
Pleasure.
Ben Wei is group head.
ओए गाइस, क्रूड ऑयल में देखो जो लोग बाइंग में थे वो अपना प्रॉफिट बुक कर लेना, या ट्रेल कर रहे हो तो ट्रेलिंग एसएल यूज़ कर लेना। अगर ये एफईजी के ऊपर कैंडल क्लोजिंग बेसिस पे आती है तो फिर टारगेट को थोड़ा सा और एक्सटेंड कर देंगे अपर साइड पे, जब तक इस एफईजी के ऊपर जाता नहीं है और ऊपर टारगेट नहीं रहेगा। ठीक है, तो इतना ही टारगेट था वो मिल चुका है। एफईजी के ऊपर निकलता है तो फिर कल का जो रेजिस्टेंस था 6287 वाला, वहाँ तक देखते हैं। तो बुक कर लो या फिर ट्रेलिंग एसएल का यूज़ कर सकते हो। बाकी नेचुरल गैस देखो, सपोर्ट रेजिस्टेंस दूर है, रेजिस्टेंस यहाँ पर पड़ा हुआ है, सपोर्ट नीचे है, बीच में एक एफईजी है। यहाँ पर अगर ट्राई करना चाह रहे हो रिस्की रहेगा, बट इफ़ यू वांट टू ट्राई यहाँ थोड़ा बहुत ट्राई कर सकते हो। ठीक है, बाइंग के लिए, सेलिंग नहीं अभी एक्सपेक्टेड है यहाँ पर। इसको चाहो तो नीचे भी रख लो। ठीक है, रिस्की रहेगा ऑब्वियसली, एफईजी से थोड़ा सा 50-50% चांसेस होते हैं, कभी बाइंग आती है, कभी सेलिंग आती है, कभी नहीं आती है। So kind of a risky trade, but if you want to try it, go with a small quantity या फिर मिनी वगैरह ट्राई कर सकते हो। इतना ही कह सकता हूँ फिलहाल के लिए। ये बाइंग सपोर्ट से नहीं है, एफईजी से है। शुभम अरोड़ा जी 23 के बुक कर लिया, 10 लॉस, स्टिल ट्रेल कर रहे हो क्रूड ऑयल में। ओके, ट्रेलिंग ऐसे जाए तो ऐसे निकल जाना, एक सेलिंग का भी ट्रेड शायद क्रूड ऑयल में बन जाए यहीं पर, नहीं तो में भी काफी फाइट चल रही है इस लेवल पे। अगर ये ब्रेक कर देता है एफईजी के ऊपर तो अच्छा खासा टारगेट मिल जाएगा। गुड मॉर्निंग। नेचुरल गैस में लेवल का वेट करें, लेवल का ही वेट कर सकते हो। बाकी अगर यहाँ से लोगे तो थोड़ा सा एफईजी से रिस्की ट्रेड बनते हैं, लोगे तो क्वांटिटी कम ही रखना, नहीं तो या लेवल का वेट करना चाह रहे हो तो लेवल ऊपर लगे हुए हैं 312 और फिर नीचे 290 92। देखते हैं कब आता है। वैसे लंदन सेशन तो ऑलरेडी ओपन है। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। नहीं ट्राई कर सकते हो, 1 पॉइंट का ही एसएल है, ज़्यादा नहीं है, उसमें थीटा डीके भी नहीं होगा। ठीक है, ये नेचुरल गैस का ध्यान रखना एफईजी से अगर बाइंग का प्लान कर रहे हो। दिस इज एफईजी नॉट अ सपोर्ट राइट नाउ। सपोर्ट रेजिस्टेंस थोड़ा सा ऊपर नीचे बने हुए हैं। टारगेट बड़ा रख लेना ऊपर 301 के आसपास तक का, सो दैट रिस्क रिवॉर्ड ठीक बन जाए इन 15 मिनट। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। भी थोड़ा सा डाउन हो गया लग रहा है क्रूड का। लंदन सेशन अभी फिलहाल ओपन है, न्यूयॉर्क सेशन शाम को ओपन होगा। देखते हैं क्रूड में अगर एक कैंडल थोड़ा सा नीचे क्लोज होती है तो क्रूड में भी एक सेलिंग का प्लान रखेंगे कुछ देर में। खैर जी नैस्डैक में ओवरऑल प्रॉफिट हो गया, बढ़िया है, ग्रेट। 7-2
merchant activities flows through largely, and particularly the regional banks. We do most of the small business lending in the country. So that will be very beneficial, I think, to the economy and our society as a whole. That's where job formation occurs.
Has the regional banking industry completely recovered from Silicon Valley Bank, from First Republic, from all the turmoil from a couple years back?
I think largely they have. Now, for us, we saw that as an opportunity. We had best-in-class liquidity. Our liquidity was better than any bank, $50 billion or more. That includes the largest banks. Our capital was strong. Our credit was great, top quartile performance, and our earnings were consistent. So that's when we chose to invest, when others were maybe concerned or had to pull back.
That was your opportunity.
That's right. We didn't have too much commercial real estate or anything else. That was our opportunity. That was our window. We took a contrarian play. It's working very, very well for us.
Before we let you go, you also talked about the opportunity in payments.
Yes.
What are you going to do to differentiate yourself from like Block or Stripe, for example?
Well, we have a lot of different products. And so we've got hundreds and hundreds of thousands of business customers, and we make loans to them. We handle their treasury management, perhaps their risk management, foreign exchange, derivatives, or other things. So we put that all together now in terms of a merchant offering that's in-house, and we can bundle it, things that we didn't have the ability to do because we had outsourced that. So we changed that. When you talk about Stripe and some others, that's where we're in that payment flow. We've got a great partner there, Fiserv, that does the back end, and they put us in a very competitive position with their capabilities.
Oh, so you're not a competitor of theirs. You work together in some ways, like you use their stuff.
With Fiserv, but not Stripe, yes.
Okay, great. Hey, Steve, thanks a lot. Really appreciate it. The stock was up today as well, so thank you so much for stopping by. I know it's been a busy day for you. Steve Steinauer, Chairman, President, and CEO of Huntington Bancshares. All right, coming up, we're 15 minutes away from the closing bell. We're going to take you through that with Amanda Agati, Chief Investment Officer with PNC Asset Management Group. I'm not going to lie, market's doing nothing, but we do get Amazon after the bell, 4:01. Stay tuned for that. This is The Close on Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
I think the biggest takeaway that we're seeing in the numbers and the stats is the guidance is actually tracking a little bit weaker than where it's been over the last few years. So management is actually guiding down more aggressively than above consensus expectations.
That was Savita Subramanian, head of U.S. equity and quantitative strategy at BofA Securities, kicking off the show, talking about how guidance is tracking lower, some nervousness in the market, even with the recent gains that we've seen. I mean, we are still up for the year.
Yes, but we're losing steam here today. I mean, the S&P is up 0.2%. We had a little dip at around 2, and then we rebounded from that. But it feels like not a lot of conviction right now. The Mag 7 now able to get into positive territory. We also have the consumer staples index up by about 0.7% as well. And then you have the Russell a little bit weaker. But, from the moves we've seen this week, this feels like a very calm, idiosyncratic day. I just wonder what happens in 10 minutes' time after we get Amazon.
Although you mentioned consumer staples, they're the best performing group so far in February, up about 7.5%. It feels like investors definitely continuing that rotation away from big tech to some of the defensive sectors.
That's a great point. And also sort of then how much risk do you take on versus where is the safety trade? And like yesterday, for example, it was real estate, it was utility, it was the traditional like lower yields, go for those safety trades that were doing really well.
All right. For more market analysis, let's welcome Amanda Agati. She is Chief Investment Officer. And of course, we want to bring her in now. Amanda joining us from her location. Amanda, let's talk a little bit about this idea that investors are rotating away from big tech to some of those more defensive sectors. You heard Savita earlier talking about guidance perhaps tracking a little bit weaker than what we normally see at the start of the year. And seasonally, guidance does tend to track a little bit weaker. Is there something more under the surface that we're not taking quite into account?
Well, it's great to be with both of you, and it's a perfect question to start on. I think really this is a little bit more of the natural evolution of the innovation cycle we're seeing for the biggest AI leading companies. They've just been on a tear these last few years. And so is it natural to start to see some of the guidance slow down just a little bit, that rate of change or that trajectory slow? Yes, I think it's reasonable. I don't think that it's a cause for concern. The challenge is when you have a market that's priced to near perfection from a valuation multiple perspective, it just doesn't leave a lot of headroom. So even though results have come in pretty solid, I would say, maybe a little bit weaker on the guidance front, but pretty solid overall, it's been a punishing backdrop for some that haven't quite met that high bar for expectation. So I think investors are naturally starting to think about, is there life, is there growth in other parts of the market, which is healthy in terms of the rotation.
It is healthy, but it speaks to how extended maybe some of the optimism is. According to JP Morgan, retail investor sentiment is at a record high, topping even the 2021 meme stock mania excitement. And according to Barclays, individual investor exposure to stocks are near the high since 1997. So people are very long this market right now.
Absolutely. And I mean, why not? We've been on a tear here for these last couple of years. And when you look at the underlying fundamentals, that is earnings growth for the S&P 500 still looks really strong for this year in the neighborhood of 13 to 15% year over year growth. That's really solid. And so that speaks volumes about the potential for the market continuing to rally forward here in 2025. And we're not talking about recession.
तो क्रूड ऑयल में भी अब पुल बैक में एक सेलिंग का प्लान किया जा सकता है. बायर्स अगर निकलना चाहो तो निकल सकते हो सारी क्वांटिटी के साथ इन क्रूड ऑयल. रेंज के अंदर फंस गया मार्केट वैसे तो. ठीक है, एक हल्का सा ही पुल बैक आ जाता है तो यहाँ पर एक सेलिंग का प्लान कर लो क्रूड ऑयल में. बाकी देखो नीचे ये सपोर्ट है, अगर ये ब्रेक हो गया तो फिर थोड़ा बड़ा फॉल कर जाएगा. अगर नहीं ब्रेक करता है तो फिर बड़ा फॉल नहीं करेगा. तो फिलहाल ये एक रेंज मान सकते हो मार्केट के लिए. अगर ये नीचे सपोर्ट ब्रेक हो जाता है तो फिर ये यहाँ तक जा सकता है, इस एरिया तक, इस एफईजी के एरिया तक. बट फिलहाल हम इतना बड़ा टारगेट नहीं रख सकते जब तक ये ब्रेक नहीं होगा. ब्रेक होना बहुत ज़रूरी है इसका. राज पटेल जी, नेचुरल गैस नो मूवमेंट, थोड़ा वॉल्यूम कम हो गया, अब 330 होने वाला है ना। क्रूड ऑयल इफ ब्रेकडाउन गोज डाउन, हाँ अगर ब्रेकडाउन हो गया नीचे सपोर्ट का तो फिर नीचे वाले एफईजी तक आ जाएगा अगर हुआ तो, क्योंकि फिलहाल के लिए वो एफईजी टू सपोर्ट के बीच में फंसा हुआ है, सेम लाइक नेचुरल गैस। फॉरेक्स में भी एक बार लेवल चेक करो किसके, क्रूड ऑयल के फॉरेक्स में लेवल काफ़ी अलग हैं, देख लेते हैं फॉरेक्स के लेवल भी। बाकी फिलहाल अभी एमसीएक्स ही चल रहे हैं, हम फॉरेक्स से नहीं चल रहे हैं। ये अलग नहीं है, सेम ही है, वो हमारा मार्केट क्लोज हो जाता है उसके बाद भी फॉरेक्स मार्केट चलता रहता है, तो इसलिए वहाँ पर शो कर रहा है लेवल्स, नथिंग एल्स। ठीक है, वो लेवल सेम ही आ जाते हैं, ज़्यादा कोई डिफरेंस नहीं पड़ता है। ये सपोर्ट बना रखा है, वही सपोर्ट है वहाँ पर भी क्रूड ऑयल में, एंड ऊपर रेजिस्टेंस एफईजी का। ये सपोर्ट बना हुआ है, ये सपोर्ट अभी भी है, ऐसा नहीं कि ब्रेक हो गया, दिस सपोर्ट इज स्टिल एक्टिव इन फॉरेक्स just like in MCX. ओपन का चार्ट देखोगे तो वहाँ पर भी 71.10 एंड 70.69 एक सपोर्ट रेजिस्टेंस के तौर पे काम कर रहा है, सेम लाइक ये एक सपोर्ट और ये एक रेजिस्टेंस बना हुआ है वहाँ पर भी इन 15 मिनट चार्ट।
Net sales will be 151 to 155, and the market wanted 158. So if we're going to say any fly in the ointment, it is the forecast. But the anxiety levels about AWS growth are going to be dialed down a little bit when you're actually looking at their numbers. We're seeing that they are managing to still bring in that 19% growth if you extract some of the FX headwinds more broadly. That is better than we saw with perhaps the Microsofts of this world. Alphabet both saw growth slow down compared to where the market had wanted it. Overall, net sales coming in 10% higher where we'd wanted to see with North America, 10% higher on $115. But overall, we want to really see about what the capital expenditure means. The holiday shopping season, so says Andy Jassy, is the most successful yet for Amazon. Remember, if they're managing to be bringing in substantial amount of net sales that are meeting expectations, that means their net sales were bigger than that of Walmart for the first time here in the United States. We're also talking about appreciating the support of our customers, selling partners, interesting selling partners. Some of them are Chinese. We'll see what that means in terms of the
मार्केट भी क्लोज होने वाला है, ध्यान रखना थोड़ा सा वॉल्यूम फिर मेरे को लगता है बढ़ जाना चाहिए कमोडिटी मार्केट में। क्रूड ऑयल पुल बैक के लिए आ रहा है 6238 के अराउंड। यहाँ पर एक सेलिंग का प्लान है एफईजी से इन क्रूड 6238 अप्रॉक्सीमेटली एरिया है। इसको चाहो तो थोड़ा सा रेगुलेट कर लो, सेम ही बनेगा ना। सेम 15 पॉइंट का काफी है। काफी बड़ा हो जाएगा नहीं तो। $1,238। अब फिलहाल के लिए रेंज कह सकते हो क्रूड की। मॉर्निंग्स पे देखोगे अराउंड वही 6225 पे ओपन हुआ था, वहीं पर चल रहा है। थोड़ा बहुत सेलिंग आई, फिर बाइंग आई, फिर सेलिंग आ गई है। फिलहाल रुका हुआ है उसी जोन के अराउंड। नेचुरल गैस का वॉल्यूम अपने एवरेज से भी डाउन है, इसलिए ज़्यादा मूव नहीं हो रहा। लुक एट द वॉल्यूम, अपने एवरेज से भी डाउन चला गया।
This is the Asia Trade. I'm Sherian in Tokyo. I'm Heidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set for a subdued open. Traders sifting through mixed earnings reports ahead of US jobs numbers. Amazon sliding after the bell on a weak profit outlook. US Treasury Secretary Scott Bessent defends President Trump's tariff plan, telling Bloomberg that China's economy is the most unbalanced in the history of the world. Plus, the Bank of Korea governor says a rate cut this month is not a done deal, telling us exclusively that more fiscal stimulus is needed.
Yeah, we'll be watching the Korean won when markets trading starts. Of course, we have seen significant pressure already for the South Korean currency at a time when the Japanese yen continues to strengthen. Take a look at that, 151 against the U.S. dollar. And this, of course, coming at a time when we're really watching the Bank of Japan for more tightening from here. A board member now saying that they could see hiking rates to 1% by March of next year. Nikkei futures not doing much right now. We do have the RBI rate decision today. They're expected to start their easing cycle. Take a look at what's happening on the other side of Asian currencies, the U.S. dollar and U.S. assets, because we heard also from the Treasury Secretary that the U.S. continues to have a strong dollar policy. Take a look at how futures are trading, because we're seeing a little bit of downside pressure. I mean, we had seen a mixed finish for benchmarks in the U.S. trading session, mixed earnings results, not to mention that this is coming ahead of jobs data. Of course, that is expected to be a bit messy, given that it will also factor in the impact of the California wildfires. We already had initial jobless claims, a little bit of a dip or a little bit of a rise, but still sort of subdued. We had labor productivity coming in solid. We're watching Amazon in the after-hour session really under pressure after their profit guidance fell short of expectations, Heidi.
Well, U.S. Treasury Secretary Scott Bessent says he will refrain from criticizing the head of the U.S. Central Bank and that the Trump administration is not fixated on lower interest rates. Bessent told us that he's already had a constructive meeting with the Fed Chair, Jay Powell.
We did. I did an away game over at the Fed. We had a very nice breakfast. Chair Powell and I don't know each other well, so it was very constructive. Everything I'm going to talk about is things Fed done in the past. Prospectively, monetary policy, I will not comment on, and I'm sure he's going to do the right thing, so there'll be no criticism.
Let's bring in our political news director, Jody Schneider. And Jody, this is sort of really notable because it's perhaps one of the maybe rare instances where the campaign rhetoric has not translated to what we're now hearing in the early days of the administration, right? We had so much criticism, even kind of threatening by President Trump to fire Jay Powell, but it seems like that has been walked back.
Yeah, it certainly does seem that way. And among the interesting things that came up from the Treasury Secretary's interview with Bloomberg Television earlier today, he basically said he wasn't going to criticize Jay Powell and that right now they are not going to push them on rates. A little different than the president himself when the rates were not changed 2 weeks ago, basically came out and said the Fed was too into DEI and they spent too much time on that and they should focus more on things like cutting rates. But the Treasury Secretary, very measured, really stepped away from sort of any sort of involvement of the White House.
Punit Kumar ji, why sudden movement in Nifty? Closing के टाइम पे ऐसा ही होता है सर. 3 PM की कैंडल होगी. Look at that candle. लास्ट कैंडल देखोगे ओपन इक्वल टू लो बना के बैठा हुआ है निफ्टी फ्यूचर 3 PM की जो कैंडल थी. नॉर्मली या तो प्रॉफिट बुकिंग आ रही होती है या फिर नई पोजीशन बनती है, तभी इस तरह की कैंडल बनाई जाती है, स्पेशली 3 PM. मॉर्निंग पे तो ठीक ठाक ही मार्केट ऊपर हुआ था, उसके बाद फिर वॉलेटिलिटी आ गई बिकॉज ऑफ फेड मीटिंग, सॉरी नॉट फेड मीटिंग बट RBI रेट कट के वजह से 5 साल में पहली बार किया है, उसी का एक कंबाइंड इम्पैक्ट देखने के लिए मिला. सेम बैंक निफ्टी के साथ भी यही हुआ था मॉर्निंग पे ओपनिंग के बाद. जरूर करी थी बट वापस सेलिंग में चला गया प्राइस. रेजिस्टेंस अभी भी इंटैक्ट ही है 50,690 वाला, उसके ऊपर ही कैंडल क्लोज नहीं हो रही अभी तक. आता है तो वापस सेलिंग बन जाएगी यहीं पर 50,670 से 690 के बीच में। निफ्टी फ्यूचर की बात कर रहा हूँ मैं, ठीक है। बाकी नीचे आता है प्राइस तो फिर 50,000 जो आज का लो है वो 50,100 वो सपोर्ट। थोड़ा सा लोअर लो बनाने की कोशिश में। कल की ओपनिंग इंपॉर्टेंट रहेगी। ओपनिंग कहाँ होती है? बैंक निफ्टी फ्यूचर, क्योंकि सपोर्ट और रेजिस्टेंस सेट हो गए हैं इसमें बिल्कुल। लाइक करो गाइस, लाइक करो, लाइक भी करते रहो सभी लोग। Don't forget to like the stream.
But he did nod toward that in terms of the tariffs. Of course, China, the U.S. imposed 10% tariffs on some Chinese goods this week, while stepping back, at least for now, on imposing threatened 25% tariffs on Mexico and Canada.
Bloomberg's political news director Jody Schneider there in Washington. Let's take a look at how markets have been reacting. Let's bring up Bloomberg MLive strategist Mark Cranfield. Mark, it has been an exhausting week for traders, no matter what sort of asset class you're looking at the moment. What did we see in terms of the reaction to what Scott Bessent had to say? And of course, there's also a lot of sort of, treading water on the sidelines ahead of the US jobs numbers.
A lot of what Bessent has to say is not really relevant to bond traders on a day-to-day basis. They're much more interested in what he did with the quarterly refunding this week, which was largely to keep the long-end funding pretty similar to what it has been and to suggest that the funding situation there will remain stable for at least the rest of this year. That's pretty good news if you're an investor in long-term Treasury bonds. And you can see the curve has been flattening over the past few days, and it's continuing to do so. So that's what fixed income traders really care about, is the issuance coming out of the US government, especially considering that before the Treasury Bessent actually took his seat, people were concerned there would actually be a big increase in bond sales and that it may be skewed towards longer term debt. That doesn't appear to be the case. But of course, some of the policies look as though they could be inflationary in the short term. And really now it's all a question of looking back to the key data that we get. It starts with the jobs data today. We expect the unemployment rate to stay around 4.1%, which is still pretty strong. Doesn't give the Fed much leeway to lower interest rates on that basis. But even more importantly, next week there's a CPI number. It looks as though the core data will again come in above 3%, which all of the Fed speakers have been suggesting for now that a pause is fully justified. And if we get data which shows that the jobs market is strong and inflation is pretty sticky, it certainly feeds into the fact that short-term yields can't come down very much. And if anything, the curve can flatten a little bit further.
Mark, Scott Bessent also talking about maintaining the strong dollar policy under the Trump administration. It's not like they have a choice, right? I mean, we have seen all of these other central banks cut rates. The Bank of England, for example, just cut rates, and we have pressure on sterling.
You've got, as you say, I mean, interest rate differentials play a key part in this. The US is still running with relatively high interest rates compared to, particularly against the G10 space. So there's very few people that can compete with the US dollar, whether it's the pound, the euro, Canadian dollar, even the Japanese yen. In short-term interest rates are way below the US, and that obviously gives the US dollar an advantage. The other part of the equation is also this story about US exceptionalism. We've seen the US equity market especially has been a fantastic performer for the past couple of years, better than most other major markets in the world. Now, this is the point at which global investors at some stage will question this. They will question whether there is justification for the US equities to have such a premium over the rest of the world. And when that story begins to change, that will be reflected in a weaker US dollar as well. Also, the question of whether foreign holders of things like treasury bonds will continue to have faith in the quality of the US Treasury as well. Those are questions for further down the road. But clearly, the idea that US exceptionalism can continue indefinitely is something that investors are already considering. And when they decide in large numbers that it's no longer the case, then the US dollar will be the safety valve and it will decline.
And life strategist Mark Cranfield there with the latest. As we continue to watch all of this central bank action, it's the RBI's turn to decide on rates later today. New central bank governor Sanjay Malhotra is expected to cut rates by at least 25 basis points in his first policy meeting to boost growth. We also spoke exclusively with Bank of Korea Governor Lee Chang-yong about the central bank's rate path. Of course, there's been a lot of speculation of a rate cut later this month.
We are definitely also interest rate reduction cycle. So when and how much, we will look at all other elements. But definitely we think that monetary policy and fiscal policy both have a room to have a more accommodative policies.
Coming up in the Asia trade, Wilson Asset Management will be along with us to dive into Aussie earnings season. Pendal Group also joining us in the next hour to give us their fixed income strategy. We'll also be talking all about Japanese Prime Minister's trip to the US with the Japan Institute of International Affairs. That and much more ahead. This is Bloomberg.
Amazon shares under pressure in late trade after we got a weaker than expected outlook in its latest results. The e-commerce giant is still spending heavily on AI. Let's bring in our tech reporter Annabelle Drewlers for more. Belle, so what stood out in the numbers?
Yeah, well, I think it was pretty much as you said there, Sherry, coming down to that guidance in particular for the first quarter, because the company
सेक्स एंड फॉरेक्स क्रूड में लेवल काफ़ी अलग है. फॉरेक्स में ये एफईजी के काफ़ी ऊपर है. क्रूड पीजे एक बार चेक मैंने चेक कर लिया. क्रूड ऑयल बताया अभी. फॉरेक्स वाला अगर चेकआउट करोगे तो वो लेवल आपको अलग दिख रहे हैं बिकॉज वो ओपनिंग और हमारे मार्केट की क्लोजिंग में थोड़ा डिफरेंस आता है इस वजह से. ये नेचुरल गैस का ध्यान रखना गाइस. नेचुरल गैस भी एफईजी पर ही रुका हुआ है. ठीक है. ये थोड़ा सा रिस्की ट्रेड है एफईजी वाला. एग्जैक्ट सपोर्ट पे नहीं आया है प्राइस अभी तक. काफ़ी देर लग जाएगी. ये तो फिर इवनिंग पे ही आएगा 6:30 के बाद. तो यहाँ से अगर ट्राई करोगे थोड़ा क्वांटिटी कम ही रखना फ्रॉम द एफईजी जोन. नेचुरल गैस भी वहीं पर है. क्रूड भी वहीं पर है. ठीक है. ये सेम ही ट्रेड मान के चलो इसको. चाहो तो इसका एसएल थोड़ा सा और नीचे रख सकते हो बट थोड़ा सा रिस्की साइड पे रहेगा. एफईजी से बाइंग करके रखा हुआ है. एग्जैक्टली सपोर्ट पे या रेजिस्टेंस पे आ जाता तो और बेटर रहता. वो पता नहीं हिट करेगा नहीं लेवल को. ठीक. उतना ही बनेगा 1 to 1.5 आई थिंक. 1 to 1.5 नीचे अगर थोड़ा सा और ड्रैग करना चाह रहे हो तो. ठीक है. Sure.
back more to the e-commerce side of the business, saying that they'd managed to grow in North America, other markets as well. Speed of delivery continued to accelerate. They added more prime customers as well. Overall, delivering 9 billion units the same or next day around the world, and also other things like streaming services, for instance. They're continuing to add more offerings into that. But the focus of the results very much today on that first quarter guidance and undershooting expectations from analysts.
Our tech reporter Annabelle Jewell is there. Let's take a look at how Australian assets are trading just about 18 minutes into the start of the staggered open. We're seeing a pretty muted session Friday so far. We're expecting that sort of muted mood to continue as we get into, of course, US jobs coming a little bit later on today. We're seeing some of the losers being led by energy with that dip in crude prices again overnight. Some of the leadership, though, coming from real estate and materials names. Some of the miners still seeing gains early in this part of the session. The Aussie dollar largely unmoved at this point, despite some of the comments when it comes to a stronger US dollar from Scott Bessent in our Bloomberg interview overnight. And also taking a look at one significant mover that we're seeing, Domino's Pizza Enterprises gaining 18% so far in the session, flagging some pretty significant store closures to be expected. 205 unprofitable stores, most of them are in Japan, where it has 944 outlets, and pretty much 1 in 5 of those Japanese stores will be closed, with sort of an acknowledgement of those losses coming from perhaps overreach and COVID-era expansion there. So that's one company that we're watching. But of course, broadly here in Australia, earnings season is starting to get underway. Investors focused on potential rate cuts from the RBA and these ongoing trade war jitters. Let's get more from Anna Milne, who's a senior investment analyst at Wilson Asset Management. Anna, really great to have you with us. And it is unavoidable, despite, of course, a lot of idiosyncratic stories within the Australian market. What do you see as being the broad impact of geopolitical elements and the sort of, I guess, proxy effect of the trade war?
I'd say firstly, when thinking about key global themes, momentum still reigns supreme. And what we're really looking for this reporting season is those names that have seen significant value.
हाँ, अगर थोड़ा ट्रेड मैंने बताया उसमें अगर नेचुरल गैस में थोड़ा सा ना एसएल को और नीचे रख सकते हो, क्योंकि ये भी एफईजी के सपोर्ट पर है. बाइंग बनी है इसमें भी 294.7 से 293.5 के अराउंड रख सकते हो. इतना काफ़ी रहेगा. 1 to 1.5 टारगेट बड़ा रख लेना, सो दैट रिस्क रिवॉर्ड मैनेज हो जाए. अभी भी देखोगे तो 1:1 तो हो ही गया है, बट टारगेट वैसे 1:5 का है ओवरऑल. लेट्स सी वॉल्यूम जनरेट होता है या नहीं. सुखबीर जी, थैंक फॉर द लेवल्स ऑफ मॉर्निंग लाइव इन निफ्टी 50. निफ्टी 50 सर वो फिर हो नहीं पाता एक्चुअली मॉर्निंग से इवनिंग तक, रात तक. उसकी अलग स्क्रीन बना रखी है, उसकी अलग स्क्रीन, उसका अलग सेटअप है, तो वो वहाँ पर ट्रेड होता है. यहाँ पर फिलहाल के लिए मैं सिर्फ कमोडिटी ही मार्क कर सकता हूँ. दैट्स द रीजन. नहीं तो मैं मॉर्निंग से निफ्टी बैंक निफ्टी भी शुरू कर देता. चित्रा जी 3900 डन. ग्रेट ग्रेट. क्रूड ऑयल में बाइंग वाले आई होप निकल गए होंगे, पहले ही वहाँ पर टारगेट हिट हो गया था हमारा. गौतम राठौर जी 22 के बुक कर लिया आपने बाइंग साइड पे. चलो बढ़िया है, ग्रेट. अब तो अवॉइड भी कर सकते हो अगर प्रॉफिट ऑलरेडी हो गया है तो. नीचे से बाई किया था 5 के प्रॉफिट बुक कर लिया. ग्रेट. सडन मोमेंट अच्छा ले तो ले लिया. क्वेश्चन से
Does that meaningfully change the outlook, the profit outlook for the Big Four?
We don't believe this changes the profit outlook for the Big Four if there is a rate cut, but it is important to realise that the rally that the banks have seen hasn't been fundamental, so any changes in the fundamental environment probably aren't going to be what changes the sentiment for the banks. Really, when thinking about the direction for banks over the medium term, it's a matter of fire and ice of the ASX 20. It's the miners versus the banks. The miners have been so out of favour, we think that should they see somewhat of a recovery, this might see pressure on the banks.
What do you see sort of, Australian stocks have for a very long time been almost a source of safety. We've seen, of course, a record year last year. But I think from an international holder's perspective, they often seem sort of quite boring and domestically focused. Do you see that view changing? Is it something that you would see as more as part of a global portfolio, given a lot of the other risks that we're seeing around the world?
Definitely. I think Australia is viewed quite idiosyncratic to the rest of the world. I'd say that the strength in earnings in the US has certainly outpaced Australia, but When appetite for China is so low, Australia is not a bad proxy if you're wanting some exposure to maybe a really out of favour trend, such as China, through a safer means with the Australian market.
Tell us about some of the more compelling names that you're watching specifically.
We like the insurers. They have done well over the last couple of months, but we see support from both an earnings and a valuation side to come, particularly IAG and QBE. Both of them are below their weather and cat allowances. Premium rates are softening, but they are holding, and claims is really reducing. So we like insurance. We also like infrastructure. I would say, given the bond yield complex we're seeing over the last month, they've been kind of unloved and unnoticed, and compared to the likes of tech. So in our universe, that is Transurban and that is Atlas Arteria. We think their traffic up.
AG Gaming YT, hello. Chancellor you king of commodity market. अरे ऐसा कुछ नहीं है. SL भी जाते हैं, ऐसा कुछ नहीं है. All is the part of trading. SL भी जाते हैं, you know, टारगेट वेट होता है, रिस्क रिवॉर्ड भी ठीक रहता है. मिस्टेक्स भी होती हैं, फॉर्मो ट्रेडिंग भी हो जाती है कभी कभी. इंतजार ही नहीं होता लेवल का. मॉर्निंग से नाइट तक थक जाएंगे. अब मॉर्निंग से नाइट तक बोला नहीं जा सकता ना. लगाने को तो मैं सिस्टम पर लगा के बैठ जाऊँ, बट मॉर्निंग से रात तक एक ही जगह पे ना तो बैठ सकते हैं ना बोल सकते हैं. वो हेल्थ के लिए सही नहीं है. सो दैट्स वाई. नहीं तो मैं पहले करता था, फिर हेल्थ पे इम्पैक्ट आना स्टार्ट हो गया तो आई जस्ट स्टॉप्ड. जितना पॉसिबल है उतना जरूर कर देता हूँ. लाइक भी करते रहो गाइस. डोंट फॉरगेट टू लाइक द स्ट्रीम. डेटा की अगर बात करें तो अभी लंदन सेशन चल रहा है. 3:30 के बाद थोड़ा वॉल्यूम कम हो जाएगा लंदन सेशन का. न्यूयॉर्क सेशन ओपन होगा 6:30, यूएस मार्केट 8 PM और 7 PM का डेटा इंपॉर्टेंट है.
Have seen the Japanese yen set for the strongest week since November. It's right now the most traded currency against the US dollar, holding at that 151 level against the greenback, as the offshore yuan is also sitting a touch below 730. This is Bloomberg. We're getting breaking news out of Japan. Household
जाते हैं बट स्मॉल एसएल. एसएल टारगेट दोनों ही जाते हैं. क्रूड ऑयल सेलिंग का स्टॉप लॉस लगाया है ऊपर, उतना ही लगाओ, उससे ज़्यादा मत लेना. दोनों ही ट्रेड एक क्रूड ऑयल का और नेचुरल गैस का एफईजी से बने हुए हैं, तो थोड़ा ध्यान रखियो. ठीक है. सपोर्ट रेजिस्टेंस काफ़ी दूर है. रेजिस्टेंस तो दिख ही नहीं रहा है मुझे क्रूड में अब. यहाँ पर कल वाला था वो ऑलरेडी हिट कर चुका है 2-3 बार, तो अब उस पर लग नहीं सकते. कोई नया रेजिस्टेंस बनेगा तो विल सी दैट. तो अब बाकी नीचे सपोर्ट वो है, वो काफ़ी दूर है. यहाँ पर देखोगे तो नीचे आपको 6120 मिलेगा. तो बोथ बाइंग एंड सेलिंग इन क्रूड ऑयल एंड नेचुरल गैस फ्रॉम द एफईजी. थोड़ा सा क्वांटिटी का ध्यान रखना. मेरे अकॉर्डिंग तो वॉल्यूम 3:30 के 6 PM के बाद ही आना चाहिए अब लॉजिकली. बाकी नेचुरल गैस का वॉल्यूम अपने मूविंग एवरेज से भी डाउन है, इस चीज़ का ध्यान रखियो. न्यूज है ना 7 PM पर और 8:30 पर. पीछे सपोर्ट जी मैंने मार्क किया था बिफोर 1 ईयर. अरे व्यूज़ का क्या करना सर. जिसको देखना होगा देखेगा, नहीं देखना होगा मत देखे, मुझे क्या. अब 1 पर्सन देखे, 1 देखे, 10 लोग देखें, 100 लोग देखें, 1000 लोग देखें, उससे क्या हो जाएगा. अब मैं हर किसी को सेटिस्फाई करने के लिए थोड़ी ना बैठा हूँ यहाँ पर कि भाई देख लो चैनल मेरा, और भी है उनको देखो. मिस्टेक करोगे तभी तो सीखोगे. विदाउट मिस्टेक कैसे सीखा जा सकता है, राइट. तो व्यू के पीछे मत भागो। चार शेर वाली सब अच्छी कोई नहीं, थोड़ा अपना दिमाग भी लगाना होता है फिर वहां पे। नहीं, इस हैरी जी ऐसी कोई स्ट्रेटजी नहीं है। अपना एक एसएल रखो, रिस्क रिवॉर्ड प्रॉपर रखो। एग्जांपल के लिए अगर 10 पॉइंट का एसएल ले रहे हो, 20 या 30 पॉइंट का टारगेट ले रहे हो, तो उसमें आप क्या ही ट्रेल करोगे। बाकी अगर 1:2 हो जाए तो एसएल कॉस्ट पे रख लो, या हाफ क्वांटिटी बुक करके ट्रेल कर लो, यही कर सकते हैं। बाकी हर किसी की अलग अलग स्ट्रेटजी होती है, डिपेंड अपॉन यूर स्ट्रेटजी, व्हाट सूट्स यू। कुछ लोगों को सूट कुछ होता है, कुछ लोगों को कुछ होता है, तो उस पर ज़्यादा कमेंट नहीं कर सकते।
Topic.
Bloomberg News senior editor Brian Fowler here with a preview of that very interesting and high-profile conversation between Trump and Ishiba. Coming up, we'll have more on that meeting as we speak with the Japan Institute of International Affairs. That's happening at 8:30 a.m. Hong Kong time. Bank of Korea Governor Lee Chang-yong is pushing back against mounting speculation of a rate cut later this month. The BOK is widely expected to resume its easing cycle in February as concerns deepen over slowing economic growth and the impact of Trump's tariff war. Speaking with us exclusively here in Tokyo, he says the central bank's indication of openness to more easing in the next 3 months was conditional and not a commitment.
We are definitely also interest rate reduction cycle. So when and how much, we will look at all other elements. But definitely we think that monetary policy and fiscal policy both have a room to have a more accommodative accommodative policies.
Especially now that you have seen a few weeks of the Trump presidency and all of these tariff threats coming into place.
Right. So that is why I'm emphasizing more fiscal stimulus is necessary. First of all, we in the last 2 years, when we have a very high inflation period, unlike other countries' government, our Ministry of Finance maintained a very conservative fiscal policy.
It seems to be that right now the won is stabilizing at that mid 1400 levels. Is that sort of the new normal now?
I wouldn't say new normal, because if I say new normal, it means that I have a certain level in mind. I think we have to look at what drives our exchange rate. And if I phrase this way, I think
पीजे सपोर्ट जी सर, आपका पर्सनल इंस्टाग्राम नहीं देते आप मुझे, आपको उधर फॉलो करना है। यू आर टू गुड सर। मैं सोशल मीडिया पे नहीं हूँ सर। हैरी जी, ऐसा क्यों होता है जहाँ भी हम एंट्री पंच करते हैं देन मार्केट क्यों रुक जाता है? आपके साथ ऐसा होता है? रुक जाता है मतलब मैं समझा नहीं। अगेंस्ट मूव करता है ये कह रहे हो क्या? रुक जाता है तो फिर मुझे आई थिंक अगर आप कह रहे हो कि वहीं पर कंसोलिडेशन होना स्टार्ट हो जाता है, तो मेनली वो तभी होता होगा जब मार्केट में जो एंट्री बनाई गई है, चाहे वो बाइंग की हो या सेलिंग की हो, ऐसे टाइम पर हो रही है जब वॉल्यूम थोड़ा कम है मार्केट में। नहीं तो जब वॉल्यूम है, हाँ वही कंसोलिडेशन ना, ठीक है, वही मतलब समझ गया मैं। तो वो उसी टाइम पर होगा जब मार्केट में वॉल्यूम कम होता है। फॉरेक्स चार्ट के अकॉर्डिंग अगर आप फॉरेक्स को ट्रेड कर रहे हो तो वहां पर वॉल्यूम का टाइम रहता है, ऐसा नहीं कि 24 घंटे पूरा वॉल्यूम है, राइट? यू नो दैट एक स्पेसिफिक टाइम पर ही वॉल्यूम जनरेट होता है और उसकी उसी का फॉलो अप मिलता है। लाइक अगर मैं बात करूं लंदन सेशन की, तो 130 पे ओपन होता है, 130 की कैंडल पे वॉल्यूम आएगा, फिर वो थोड़ा फॉलो अप होगा 330 तक, उसका थोड़ा कम हो जाएगा, फिर वही 630 के अराउंड वापस वॉल्यूम जनरेट होना स्टार्ट होगा न्यूयॉर्क सेशन पे, वो थोड़ा फॉलो अप होगा 930 तक, और उसके बाद फिर धीरे धीरे कम होना स्टार्ट हो जाएगा, राइट? कि कोई न्यूज आने वाली है उससे पहले साइड हो जाता है मार्केट कभी कभी, तो ये भी देखना पड़ता है। जब आप एंट्री कर रहे हो तो पहली बात तो आप कर क्या रहे हो एंट्री में, ऑप्शन ट्रेड कर रहे हो, फ्यूचर ट्रेड कर रहे हो, फॉरेक्स या इक्विटी, एंड वो टाइमिंग क्या है वहाँ पर। कोई न्यूज़ वगैरह जैसे इन्वेंट्री आने वाली है तो इन्वेंट्री से आने से आधा घंटा पहले मार्केट मूव नहीं करता है, क्रूड ऑयल नेचुरल गैस नॉर्मली ये देखा जाता है। नॉट ऑलवेज 100% कुछ नहीं होता, बट मैक्सिमम टाइम। तो वहाँ पर एंट्री करके क्या फ़ायदा, वो तुक्का लगाना ऐसा हो जाएगा ना फिर कि चला गया तो चला गया हमारी डायरेक्शन पे। तो उससे एक घंटा पहले, आधा घंटा पहले तो फिर अवॉइड ही करनी चाहिए। फ्रेश एंट्री की मैं बात कर रहा हूँ, ऑलरेडी ले रखी है, चल रहे हो प्रॉफिट में, इन्वेंट्री आने वाली है तो फिर ट्रेल करा सकता है, दैट इज़ अ डिफरेंट टॉपिक। बाकी उसके लिए आप चाहो तो थोड़ा टाइम फ्रेम कम कर सकते हो, 1 मिनट टाइम फ्रेम पे जा सकते हो। स्कैल्पिंग करने की जरूरत नहीं है 1 मिनट टाइम फ्रेम पे, बट 1 मिनट टाइम फ्रेम पे भी आप क्या कर सकते हो, बड़े रिस्क रिवॉर्ड के ट्रेड प्लान कर सकते हो। लाइक 1 मिनट में आपने कोई 10 पॉइंट का एसएल रखा, 30 या 40 पॉइंट का टारगेट रख लिया, सो देयर इज अ वेरी हाई प्रोबेबिलिटी कि वो टारगेट हिट हो जाएगा। का मेन रीजन क्या रहता है, 1 मिनट टाइम फ्रेम पे मोमेंटम थोड़ा फास्ट आ जाता है। ठीक है, कोई 5 मिनट की कैंडल है, 1 मिनट में एंट्री बनी, 5 मिनट तक तो टारगेट बीट हो जाएगा। अब वही 15 मिनट का चार्ट है तो ऑब्वियसली वहाँ पर डायरेक्टली टारगेट हिट हो इसके चांसेस इतने जल्दी रहते नहीं, कोई न्यूज़ है तो बात अलग है। पीजे सपोर्ट जी, थैंक यू सो मच फॉर सुपर चैट।
There's a room that the exchange rate move in both sides. And at the same time, in our calculation, about 31 is increase of exchange rate was due to this martial law declaration. It's political reason. So there's a room that once our political situation become much more stabilized, there's room that portion can go down. So it's very hard to predict which direction the exchange rate will go.
You have experience as the IMF Director of Asia Pacific during the first term of President Trump. Can you get any lessons from how the economy, rates, and FX moved back then because of the trade policies, and do they apply now?
Actually, there was a kind of benchmark that when I think about Trump 2 policies, I thought that my experience will help very much, but now I believe that the second term of Trump administration is quite different from the first term. So I don't want to say.
What's so different?
It's not just a tariff policy. I think it's very hard to, at this moment, I have to look at it more. But this may change a lot of international order. So we'll see how it goes.
Especially those comments around taking over Gaza, the Middle East tensions.
I think I won't comment on it. But at this moment, I think what I'm feeling at this moment, it can be much more broader than tariffs.
External shocks coming from the likes of oil prices. Professor Nina, you're sticking around. We want to bring in Tim Arndt. He's a CFO at Real Estate Investment Trust Prologis. Tim, good to have you with us. As Nina was just telling us, especially when it comes
of power.
This afternoon.
No tax on tips, which is obviously a very public campaign promise that the president made. No tax on seniors' Social Security. No tax on overtime pay. Renewing President Trump's 2017 middle-class tax cuts. Again, these are the president's priorities. Adjusting the SALT cap, eliminate all the special tax breaks for billionaire sports team owners, close the carried interest tax deduction loophole, tax cuts for Made in America products. This will be the largest tax cut in history for middle-class working Americans. The president is committed to working with Congress to get this done.
And House Speaker Mike Johnson just told reporters at the Capitol that they
Perigi volume footprint, people are saying in this chart we can see volume and make profit with more accurate. I don't want to comment on this sir. क्या कह सकता हूँ मैं मैंने यूज ही नहीं किया उस चीज़ को तो मैं क्या कहूँ इस पे बाकी अच्छा है मैंने सुना है वॉल्यूम फुटप्रिंट के बारे में और जैसे वो एक मैंने मॉर्निंग पे बहुत टाइम पहले एक बार एक सॉफ्टवेयर बताया था बुक मैप जैसे वहाँ पर दिखता है ना वॉल्यूम का फुटप्रिंट उनके सॉफ्टवेयर में सो उससे भी कर सकते हो अच्छा है बट मैंने यूज़ नहीं किया तो मैं उसके बारे में कमेंट नहीं कर सकता सिर्फ लाइक कोई पूछो लाइक ये इंडिकेटर के बारे में बता दो मैंने यूज ही नहीं किया होगा तो मैं कैसे बता सकता हूँ उसके बारे में कोई अच्छा सॉफ्टवेयर नहीं मिल रहा है सॉफ्टवेयर की ज़रूरत नहीं है चार्ट से ही कर सकते हो चार्ट से ही हो जाता है ट्रेडिंग व्यू का चार्ट लगाओ या फिर अपने ब्रोकर में जो आप कर रहे हो उसका चार्ट लगाओ चार्ट में सब कुछ दिख जाता है कल दिल्ली इलेक्शन के रिजल्ट्स भी आ रहे हैं इफ़ आई एम नॉट रॉन्ग कल हमारा मार्केट भी क्लोज है पीयर सपोर्ट दिल्ली के इलेक्शन के रिजल्ट का इम्पैक्ट आएगा मंडे को अपने मार्केट पे मंडे का वही मेरे को पता नहीं मंडे को पता नहीं होगा नहीं होगा कल मार्केट ओपन होता तो ज़रूर आता मुझे लग रहा है बड़ी स्टेट है इंपॉर्टेंट स्टेट है एग्जिट पोल में तो सारे लोग बीजेपी को ही दिखा रहे हैं ऐसा ना हो जाए गेम जैसा लास्ट टाइम हुआ था 2024 के इलेक्शन में आज भी एक पोल आया था लोक नीति CSDS का, उन्होंने भी प्रेडिक्ट किया है कि बीजेपी जीत सकती है। तो अब साइडवेज चला गया है, आप चाहे नाश्ता करके आओ। नाश्ता अब तो लग रहा है डिनर ही करना पड़ेगा। पार्टिसिपेट कर सकते हो तब तक पोल में। व्हाट डू यू थिंक हु विल विन दिल्ली इलेक्शन, असेंबली इलेक्शन 2025? बीजेपी, आप, कांग्रेस, और डू यू थिंक इट इज अ हंग असेंबली दिस टाइम अगेन एज 2013? पार्टिसिपेट इन द पोल। क्या लगता है आपको कौन जीतेगा 2025 का दिल्ली इलेक्शन? भारतीय जनता पार्टी, आम आदमी पार्टी, भारतीय राष्ट्रीय कांग्रेस, और कोई नहीं जीतने वाला? सबको आधी आधी सीटें आएंगी, फिर ये लोग एक दूसरे से मिल जाएंगे। 3 वोट आए, तीनों के तीनों अलग आ गए, बताओ। न्यूयॉर्क सेशन तो 6:30 पे ओपन होगा इंडियन टाइम के अकॉर्डिंग। 2.5 घंटा है उसमें अभी। गेट द नेचुरल गैस कैसा साइडवेज हो गया, क्रूड से भी खतरनाक साइडवेज है। प्राइम पैटर्न बनेगा तो प्राइस एक्शन कंफर्म करेगा तो मोर लॉट ऐड करेंगे। ओके मैंने तो पूछा है मैंने तो पूछा हुआ है। हर किसी का एक एक वोट काउंट करता है ना, एवरी वोट मैटर। कांग्रेस वाले कौन है भाई? कांग्रेस वाले भी हैं क्या कोई? 12% कांग्रेस को भी कह रहे हैं। आपका व्यू क्या है? फाइट है, इतना ही कह सकता हूँ। बीजेपी और आम आदमी पार्टी के बीच फाइट ही है। कांग्रेस का तो मुझे कोई चांस लग नहीं रहा। बाकी इतना ही कह सकता हूँ कि विनर और लूजर के बीच में वो डिफरेंस होता है वोट्स का, वो बहुत कम रहने वाला है, तो एग्जैक्टली सीट प्रिडिक्ट कर पाना बहुत मुश्किल हो जाता है। क्योंकि अगर डिफरेंस कम हुआ, थोड़ी सी भी वोटिंग इधर की उधर हो गई, तो सीट का रिजल्ट पूरा ही बदल जाता है। लाइक 1000, 2000, 5000, 10,000 इतने वोटों से सीट पलट जाएगी। क्योंकि आपने बहुत किया है दिल्ली में, सर लोग इतने जल्दी नहीं भूलेंगे। फिर भी काफ़ी टाइम से है। 2000 कब से आई थी? 2013 से चल रही है गवर्नमेंट। 13, उसके बाद फिर शायद 14 में 15 में भी इलेक्शन हुए थे, फिर 20 में हो गए, अब 24। एंटी इनकम्बेंसी भी तो थोड़ी बहुत आनी चाहिए। लास्ट 2 इलेक्शन देखोगे तो बिल्कुल स्वीप किया था। ऐसा तो नहीं लग रहा मुझे कि बिल्कुल स्वीप हो जाएगा लास्ट 2 टाइम्स की तरह, कि अपोजिशन में कोई बैठ ही नहीं रहा है। उसके चांसेस कम लग रहे हैं। या नहीं है, दिया है फ्री का तो बहुत दे दिया, विच इज़ नॉट गुड एज पर माई व्यू। हमारी हालत भी कहीं वो जिम्बाब्वे या फिर अर्जेंटीना वाली ना हो जाए, जहाँ पर इंटरेस्ट रेट बहुत ज़्यादा बढ़ाना पड़ जाए बिकॉज ऑफ द इन्फ्लेशन। कम मार्जिन से आएगी, बट आप ही आएगी सर, एज पर माई एनालिसिस। फाइट तो है, देखो वही मैं कह रहा हूँ, लाइक सीट्स में ना फाइट बहुत स्ट्रांग है। तो कुछ थोड़े बहुत भी 1000-2000 वोट भी इधर उधर हुए तो सीट पड़ जाएगी, इतना कंफर्म है। तो ऐसा सिनेरियो चल रहा है मैक्सिमम सीटों पे। कुछ सीटें तो फिक्स हैं जो इनको जानी है उनको जानी है, बट कुछ सीटें ऐसी हैं जहाँ पे गेम पलट सकता है, हरियाणा की तरह।
To change the system, would you grant that?
No, again, they have no ability to change the system. I have no ability to grant that change. That they can make suggestions, then it would go to the Federal Reserve, and just like any large ERP system, there would be tests, there would be this, there would be that, and then the Fed will determine whether these changes are robust or not.
As the Secretary of Treasury, you also oversee.
नेचुरल गैस में ध्यान रखना गाइस, मैं बार बार रिपीट कर रहा हूँ, ये एफईजी से बाइंग का ट्रेड है। थोड़ा सा रिस्की रहते हैं एफईजी से, तो क्वांटिटी का ध्यान रख लेना, इसलिए टारगेट बड़ा रखा हुआ है। इसी तरह घूमता रहा तो फिर थोड़ी प्रॉब्लम हो जाएगी लेवल पे। बाकी इसके सपोर्ट रेजिस्टेंस थोड़ा दूर ही है, यहाँ एक रेजिस्टेंस है, नीचे एक सपोर्ट है। ये जो करंट बाइंग है एफईजी से है, इसमें एसएल चाहो थोड़ा सा डाउन साइड पे भी रख सकते हैं 293.5 के अराउंड, बाइंग फ्रॉम 294.7, सॉरी 294, 295। हाँ ये कुछ समझो लाइक ये इस तरह का ट्रेड है। नेचुरल गैस का भी सेम वैसे जैसे क्रूड में बना रखा है, प्रीवियस भी लगा रखा है, वो वही चल रहा है। ठीक है, इसको चाहो तो यहाँ रख सकते हो, इतना तो रखना ही पड़ेगा एसएल एटलीस्ट एफईजी के अकॉर्डिंग। वोट करो गाइस, वोट करो, क्वेश्चन पूछा है वोट करो उसमें। 50% बीजेपी, 29% आम आदमी पार्टी, हंग असेंबली 14%। वैसे क्या लगता है अगर हंग असेंबली बनी तो क्या आम आदमी पार्टी और कांग्रेस फिर से साथ में आ जाएंगे? हाई चांसेस है। ढाई घंटे हो गए नेचुरल गैस को मूव ही नहीं कर रहा है। कम ऑन भाई, नेचुरल गैस मूव कर जाए अब थोड़ा सा। मुझे लगता है 297 के ऊपर अगर कहीं क्लोजिंग आती है, 297 के ऊपर कहीं, तो मुझे लगता है थोड़ा मोमेंटम हो जाना चाहिए इसमें। 297 298 के ऊपर अगर क्लोजिंग कर देता है 15 मिनट की, एक कैंडल भी कर दे, तो निकल जाना चाहिए ऊपर को फिर। थ्री 301 इस साल भी इलेक्शन है क्या? इस ईयर कौन कहाँ इलेक्शन है? हर साल इलेक्शन ही होते रहते हैं इंडिया में भी। कि नवंबर में है बिहार में इलेक्शन। हाँ, बिहार में इलेक्शन नवंबर में होंगे, इम्पोर्टेंट स्टेट है। फिर अगले साल 2026 में असम में है, फिर केरला में भी है और तमिलनाडु में भी है। अरे वाह, इलेक्शन ही इलेक्शन है तो असम, केरला, तमिलनाडु, वेस्ट बंगाल, पुडुचेरी, गोवा, मणिपुर, सॉरी मणिपुर में 2017, 3 4 5 6 स्टेट में इलेक्शन है 2026। तो कि बिहार में इलेक्शन है बस। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। टू 97 क्या लग रहा है? 297।
The president knows how to shepherd the economy. He knows how to balance these things. And I think that we need to stay the course when it comes to fentanyl, when it comes to redoing trade policy, so we can all grow together.
Many Democrats used the confirmation hearing to say they'd work with Greer on issues such as addressing trade imbalances, but criticized President Trump's rhetoric around tariffs and risks to inflation. While the threats against Mexico and Canada is on hold for a month, a 10% tariff across the board went into place against China this week. According to China customs data, Beijing's retaliatory list targets about $14 billion in imported U.S. goods. That is a sliver of the exports that the U.S. has tariffed. Now, as you were talking about in the last block with Saleha, she sat down with the
इलेक्शन के रिजल्ट के बाद अमित शाह की रणनीति पता चलेगी। बहुत सारे लोग तो कह रहे हैं हरियाणा मॉडल हो जाएगा। यहाँ भी सब सोच रहे थे आम आदमी पार्टी जीतेगी, जीत जाएगी बीजेपी। ओके देखो, नेचुरल गैस भी निकलना शुरू कर रहा है। क्लोजिंग देखते हैं 297 के ऊपर अगर आ जाती है, 297 के अराउंड ना, ऊपर अराउंड क्या ऊपर 297 के ऊपर अगर क्लोजिंग आती है तो मेरे अकॉर्डिंग ये निकल जाना चाहिए फिर फाइनल टारगेट के लिए ऊपर तक। 1:1 तो बन गया है फिलहाल के लिए। क्लोजिंग आती नहीं आती देखते हैं। 1:1.8 ऑलरेडी मूव्ड। पूरा टारगेट देखें तो 1:5 के अराउंड है। Come on. जिनको हो गया प्रॉफिट, अननेसेसरी रिस्क मत लेना, ठीक है। अभी 6:30 के बाद देखेंगे फिर। बाकी नेचुरल गैस देखते हैं क्लोजिंग आती नहीं आती। 297 के ऊपर आती है तो फिर ये मेरे अकॉर्डिंग टारगेट दे देना चाहिए। जब तक 297 के ऊपर क्लोजिंग नहीं आती तब तक ये थोड़ा सा सपोर्ट पे कह सकते हो एफईजी के पड़ा हुआ है, बट स्टिल 50-50 चांसेस रहेंगे। $96.5 तक तो चला गया है। नेक्स्ट कैंडल ओपन नाउ। 297 के ऊपर चाहिए क्लोजिंग, 97 के ऊपर 15 मिनट की। ये कैंडल बड़ी इंपॉर्टेंट हो जाएगी अब नेचुरल गैस में। ये दोनों चीज़ कर सकती है, ऊपर भी क्लोज हो सकती है और ऊपर विक बना के नीचे भी आ सकती है। दोनों ही केसेस बड़े इंपॉर्टेंट हो जाएंगे। क्लोजिंग अगर प्रॉपरली आ गई 297 तो मेरे अकॉर्डिंग पॉजिटिव ही है। फिर अगर ऊपर विक बना के या फिर नीचे यहीं से सेलिंग आ जाती है वापस कैंडल पे, तो इन द सेंस ऑफ अभी भी 50-50 ही चांसेस हैं प्राइस के लिए। करना चाहो तो ट्रेल भी कर सकते हो वैसे नेचुरल गैस का एसएल कॉस्ट पर डाल के। देखते हैं क्लोजिंग कहाँ आती है इस कैंडल की। 295 के अराउंड अपना एसएल ट्रेल कर लो। नेचुरल गैस में ट्रेल करना है तो ट्रेल कर लो एसएल बायर्स। एक कैंडल देखते हैं, आती नहीं है क्लोजिंग 297 के ऊपर। लास्ट कैंडल रह गई थोड़ा सा। कैंडल ओपन इक्वल टू हाई है नेचुरल, हाँ बिल्कुल कैंडल भी ओपन इक्वल टू हाई बनी है। बट जैसा मैंने बताया 297 के ऊपर क्लोजिंग आती है तो ये पॉजिटिव हो जाना चाहिए प्रॉपरली, वॉल्यूम के साथ वो भी। लास्ट कैंडल रह गई 296.5 तक ही गई थी। देखते हैं इसकी क्लोजिंग आती है फिर नहीं। Buyers trying very hard in natural gas. रिपीट कर रहा हूँ, नेचुरल गैस का चाहो तो एसएल ट्रेल भी कर सकते हो कॉस्ट पे, ठीक है। इफ़ यू वांट टू ट्रेल द एसएल ऑफ नेचुरल गैस, ट्रेल एट कॉस्ट जब तक 297 के ऊपर क्लोज नहीं आएगी, 50% चांसेस है। कॉस्ट पे भी रख सकते हो 295 के अराउंड। इसमें भी यहीं से बाइंग हुई है इस लेवल से। 297 के ऊपर आती है क्लोजिंग तो मेरे अकॉर्डिंग बुलिश होना चाहिए, नहीं आती है तो 50% चांसेस। एक चीज़ और इम्पॉर्टेंट है क्रूड में याद रखना, ये जो अभी सेलिंग आ रही है बड़ी इंपॉर्टेंट है। अगर ये बड़ी सेलिंग नहीं कन्वर्ट होती है तो फिर ब्रेकआउट बड़ा अच्छा हो जाएगा, क्योंकि फिर एक मार्केट अभी देखोगे, पहले एक जो सेलिंग आई थी, फिर अभी रिसेंटली जो सेलिंग आई थी, मार्केट ने लोअर लो नहीं बनाया था। ये थर्ड टाइम सेलिंग है यहाँ पर, ये ऐसा नहीं कि पहली बार सेलिंग आ रही है, थर्ड टाइम सेलिंग है। तो अगर मार्केट लोअर लो नहीं क्रिएट कर पाता है तो ब्रेकआउट पे एक आइडेंटिकल रेजिस्टेंस बना हुआ है, ब्रेकआउट हुआ तो फिर मोमेंटम बड़ा स्ट्रांग हो जाएगा अपर साइड पे। बाकी मार्केट को थोड़ा सा बेरिश होना है तो एटलीस्ट लास्ट स्विंग के नीचे क्लोजिंग जरूरी है। ऑयल फॉरेक्स, आई थिंक आप ब्रांड क्रूड ऑयल ट्रेड कर रहे हो। फॉरेक्स में 79.28 कहाँ से आ गया? अगर मुझे लगता है 297 के ऊपर क्लोजिंग आती है तो मोमेंटम होना चाहिए नेचुरल गैस में अपर साइड पे। 297 के नीचे जब तक है 50-50 चांसेस ही हैं एफईजी पर, इसलिए एसएल ट्रेल कर लो। वैसे वॉल्यूम भी नहीं है अब, बिल्कुल डंप हो गया वॉल्यूम।
that you can expect any Democrats to come on board with the tax bill. The debt ceiling is a whole other question, but all of a sudden Trump's got religion and maybe he thinks we shouldn't have the debt limit at all. So
market fell today and how recovered end of the day. फॉलिंग का जो न्यूज़ था वो तो मेनली आरबीआई ने जो रेट कट किया था उसकी वजह से आया था बैंक निफ्टी में, बट वो रिकवर कर गया था लास्ट मोमेंटम में। फिर से गिरा जरूर था निफ्टी और बैंक निफ्टी भी लोअर एंड से, बट फिर से रिकवरी आई। वो 3 PM की कैंडल देखोगे फ्यूचर चार्ट में, ओपन इक्वल टू लो बनाई है दोनों ने। तो या तो प्रॉफिट बुकिंग हुई होगी या फिर कोई नई पोजीशन बनाई होगी 3 PM पे। तो 3 बजे के बाद का इतना वो कंसर्न नहीं है। मॉर्निंग पे जो फॉल आया था वो मेनली उसका जो रीजन था वो वही था। आरबीआई का रेट कट का डिसीजन 25 बेसिस पॉइंट कम कर दिए। ऑलमोस्ट 3 घंटे होने वाले हैं नेचुरल गैस को। यूएस नेचुरल गैस स्पॉट प्राइस फॉल ऑन वीकेंड एज पर रिपोर्ट।
And we're just trying to work together in a sincere fashion to find waste, fraud, abuse, and mismanagement in the federal government to root out.
Republican Congressman and chair of the House Oversight Committee, James Comer, earlier this hour, talking about Doge and the influence and access.
Margin on good 1.5 के प्रॉफिट इन निफ्टी कॉल साइड एज वेल डे टाइम। क्लोजिंग के टाइम की बात कर रहे हो? ओके देखो नेचुरल गैस ये कैंडल भी क्लोज नहीं हुई। वी नीड 290 अबव 297। 297 के ऊपर क्लोजिंग चाहिए। उसके ऊपर जब तक क्लोजिंग नहीं आएगी ये या तो साइडवेज या फिर ब्रेकडाउन होने का 50-50 चांसेस वाला लेवल है। वहीं अटक गई कैंडल। ये कैंडल भी ओपन इक्वल टू हाई बनी है। काफी ट्राई कर चुके हैं बायर नेचुरल गैस में भी। 297
Some of that conversation and be joined by Republican Congressman James Comer, chair of the House Oversight Committee, on the work.
Booked at 11:20 AM, then again market fell down. वैसे जो आज का हाई बना था ना, मैंने परसों ही बताया था शायद, आई थिंक मंडे या ट्यूसडे को, मुझे याद आ रहा है। फ्यूचर चार्ट में बैंक निफ्टी में वो रेजिस्टेंस ही था। वो रेजिस्टेंस अभी भी ब्रेक नहीं हुआ है, इतना स्ट्रांग बना हुआ है वो। दैट इज अ इनक्रेडिबल थिंग्स। 15 मिनट अगर बैंक निफ्टी फ्यूचर का चार्ट देखोगे तो जो ऊपर 50,700 था या फिर ऐसे कुछ था। फ्यूचर का चार्ट ना थोड़ा अलग अलग चार्ट हो सकता है फ्यूचर और स्पॉट का। तो 50,600 टू 800 के बीच में वो रेजिस्टेंस बना हुआ था। वो मार्केट ने 4th ऑफ फरवरी को भी होल्ड किया, उसके बाद 5th ऑफ फरवरी को भी होल्ड किया, फिर 7th ऑफ फरवरी को भी होल्ड कर दिया आज। ब्रेक नहीं हो रहा है लेवल 15 मिनट में। ओके नेचुरल गैस एक बार और ट्राई करने की सोच रहा है 297 के ऊपर क्लोजिंग। देखते हैं आती नहीं आती है। द लास्ट डांस फॉर नेचुरल गैस। इफ कैंडल क्लोज्ड अबाउट 297, वेरी हाई चांसेस कि फिर प्राइस जाना चाहिए ऊपर। जब तक 297 के नीचे 50-50% चांसेस है, इसलिए ट्रेल कर लो। जिन लोगों ने बाई किया, फिर रिपीट कर रहा हूँ, 295 पे ही अपना एसएल डाल के ट्रेल कर लो। इसमें भी बाइंग यहीं से आई है, ध्यान रखना, ये इस लेवल से 295 एंड इसका एसएल 293.5 बन रहा है। साइडवे जरूर है। ऑयल भी बिल्कुल ही साइड में चला गया, 1 2 3 4 5 6, ऑलमोस्ट 1.5 घंटा हो गया इसको भी वहीं का वहीं रुका हुआ है प्राइस। इंपॉर्टेंट लेवल है अब ये, अगर लोअर लो नहीं बनाता है तो फिर ब्रेकआउट में बहुत अच्छा चला जाएगा ऊपर। अगर मार्केट को थोड़ा सा बेयरिश होना है तो लोअर लो बनाना जरूरी है, लास्ट स्विंग के नीचे कैंडल क्लोज करना बहुत जरूरी है। ओके, नेचुरल गैस ट्राई तो कर रहा है, 296.5 के ऊपर निकल ही नहीं रहा है प्राइस। फाइनली 297 के अराउंड है, क्लोजिंग आ जाती है ना 297, मजा आ जाएगा। ऐसे जरूर ट्रेल कर लेना, फिर रिपीट कर रहा हूँ नेचुरल गैस में बार बार। ओवरऑल देखें तो टारगेट बड़ा ही है, 297 298। ठीक है, देखते हैं क्लोजिंग आती है तो 297 के ऊपर वो क्या हो जाएगा, थोड़ा सा बुलिश साइड पे चला जाएगा। तो 297 के ऊपर क्लोजिंग बड़ी इंपॉर्टेंट उस वजह से हम कंसीडर कर सकते हैं। तो ट्रेल कर लेना नेचुरल गैस में, अभी भी क्लोजिंग नहीं आ रही है 297 98 के ऊपर। प्राइस ने हिट जरूर किया है बट क्लोजिंग चाहिए हमें, नहीं आई क्लोजिंग तो प्रॉब्लम हो जाएगी प्राइस के लिए। ठीक है, फिर 50-50 चांसेस मान के चलो, यहाँ पर 50-50 चांसेस रहेंगे उस केस में। फिर ऑल डिपेंड अपॉन द यूएस मार्केट एंड न्यूयॉर्क सेशन एज वेल। गोल्ड का व्यू तो सर बुलिश ही चल रहा है कंप्लीटली, गोल्ड ओवरऑल व्यू इज सुपर बुलिश। बाकी कल वाले लेवल है वहीं पर थोड़ा बहुत मार्केट रेजिस्टेंस ले रहा है। कल वो रिवर्सल काफ़ी अच्छा आ गया प्राइस का डाउन साइड से 2835 36। तो व्यू बुलिश ही है, ऊपर रेजिस्टेंस पर है मार्केट, अगर ब्रेकआउट होता है 2877 के ऊपर तो और बुलिश होगा। नीचे देखोगे तो अभी रेजिस्टेंस पे है बाय द वे, जो ऑल टाइम हाई का जो रेजिस्टेंस बना हुआ है पिछले 3 दिनों से। नीचे देखोगे तो एक सपोर्ट आपको मिल जाएगा वही 2853 के अराउंड। ठीक है, 2853 2852 के अराउंड 15 मिनट टाइम फ्रेम की मैं बात कर रहा हूँ। तो ओवरऑल व्यू बुलिश ही है। बाकी ये डेटा इंपॉर्टेंट है 7 PM वाला, इसका ध्यान रखना, ये काफ़ी इंपॉर्टेंट डेटा रहेगा 7 PM और 8:30। 7 PM वाला थोड़ा ज़्यादा इंपॉर्टेंट है। वाह, लोअर लो भी नहीं बना रहा है क्रूड ऑयल। नेचुरल गैस 297 को टच किया, नीचे आ गया टच करके। क्रूड ऑयल में ऊपर रेजिस्टेंस है नहीं सर, फिलहाल के लिए कोई रेजिस्टेंस नहीं है ऊपर। नीचे एक सपोर्ट जरूर है ये ऊपर, कल वाला रेजिस्टेंस है बट बहुत बार टेस्ट हो गया, तो अभी कोई और नया रेजिस्टेंस बना नहीं है। ये एक एफईजी का रेजिस्टेंस है, थोड़ा बहुत ऊपर निकला तो फिर देखना पड़ेगा रुकता कहाँ पर है। अभी कोई नया रेजिस्टेंस ऊपर पहले से क्रिएट हुआ नहीं है, बनाना पड़ेगा मार्केट को नया रेजिस्टेंस अगर और ऊपर निकलता है इस एफईजी के ऊपर और कहीं। ठीक है, 4 मिनट बचे हैं, क्या लग रहा है नेचुरल गैस जाएगा 297 के ऊपर क्लोजिंग पे? नहीं गया तो 440 हो गया।
Attacking me for having the audacity to ask for something. I think that as long as Musk continues to be transparent, I think that's the most important thing. But Byron Donalds is right. He doesn't have the authority to do anything. It's either the President of the United States or Congress. And, with respect to Musk, he's not operating, behind closed doors in a smoke-filled room. He is being very transparent. He's in communication with my committee. He's in communication with, I know, Senator Ernst in the Senate. And we're just trying to work together in a sincere fashion to find waste, fraud, abuse, and mismanagement in the federal government to root out. There are worthy government programs. There are tremendous federal employees, but there are a lot of, employees that I think the taxpayers could do without. And there are a lot of programs that are obsolete or unneeded. So we're just trying to figure out what we need and what we don't. This is playing out in the public role. The media should be, pretty happy that there's transparency and open debate and discussion and dialogue, and politicians and the president are available for press conferences and things like that. So as long as we keep doing that, I think most people on the Oversight Committee are going to be pretty happy.
So do you, sir, have access and transparency into the information of, say, through the Treasury payment system, what exact details Musk and the Doge team have been able to access, whose specific Social Security numbers, for example? Do you have transparency that far?
I think what Musk is trying, I don't think Musk is trying to, create a fake account to draw a $600 a month Social Security check. I think what he's trying to do is figure out where the kinks are in the system that are allowing for improper payments and fraud. There are a lot of fraudulent Social Security accounts all across America where, and this is a known fact, that this thing called improper payments, where our software is susceptible to being hacked, and people are getting unemployment payments that aren't real people. People are in fake businesses are getting SBA loans. People are drawing Social Security that don't exist. It's part of a international scam that's costing Americans a fortune. And I think that's what the objective of Musk with Treasury and Social Security is, to try to get a handle on how much of these improper payments are going out, and is there a way to fix the software system to prevent cyber fraud.
All right, Mr. Chairman, appreciate your time this evening, sir. That's the House Oversight Committee Chair, James Comer. And still ahead, we'll bring you Bloomberg's interview with the new Treasury Secretary, Scott Bessent. Yes, they too discussed Treasury payment system access in Doge. And we'll have more next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. Earlier today, Bloomberg's Saleha Mohsin, host of the Big Take DC podcast, sat down for a wide-ranging conversation with the new Treasury Secretary, Scott Bessent. And they started by discussing the Department of Government Efficiency and access that the organization has to Treasury payment systems.
employees. It is 2 Treasury employees, one of whom I personally interviewed in his final round. There is no tinkering with the system. They are on read-only. They are looking. They can make no changes. It is an operational program to suggest improvement. So we make 1.3 billion payments a year, and this is 2 employees who are working with a group of long-standing employees.
The letter that the Treasury Department sent earlier this week talked about how the team currently does not have access to change the system. Have they at any point this year had the ability to make changes?
Absolutely not. This is no different than you would have at a private company. And by the way, the ability to change the system sits over at the Federal Reserve. So it doesn't even lie in this building. So they could make suggestions on how to change the system, but we don't even run the system.
And if they ask for, if they request the ability to change the system, would you grant that?
No, again, they have no ability to change the system. I have no ability to grant that change. That they can make suggestions, then it would go to the Federal Reserve, and just like any large ERP system, there would be tests, there would be this, there would be that, and then the Fed will determine whether these changes are robust or not.
As the Secretary of Treasury, you also oversee the IRS. Do you know what kind of access the team has to IRS data or individual taxpayer data?
Well, I'm glad you asked that too, because look, the IRS, the privacy issue is one of the biggest issues. And over the past 4 years, we've seen a lot of leaks out of there. The IRS systems are quite poor. When I started in college in 1980, I learned the program in COBOL. I think there are 12 different systems at the IRS that still run on COBOL. But as of now, there is no engagement at the IRS.
And if they request that access, would you sign off on that request?
They haven't, so we'll take that when it comes.
देखो गाइस नेचुरल गैस नहीं आई कैंडल क्लोजिंग लास्ट वाली भी लास्ट कैंडल भी देखोगे तो नहीं क्लोज कर पाई 297 के ऊपर क्लोजिंग चाहिए नहीं तो 50-50 चांसेस हैं यहाँ पर ऊपर जाने के और नीचे जाने के दोनों की एफईजी पर ही है एफईजी के सपोर्ट पे जो लोग बाइंग में अगर रुके हुए हैं काफ़ी देर हो गई है 1 2 3 4 5 6 7 8 9 10 11 12 3 घंटे हो चुके हैं यहीं का वहीं रुका हुआ है अपना एसएल कॉस्ट पे रख लो ठीक है जिन लोगों ने बाई किया हुआ है क्लोजिंग आती है तो फिर ऊपर जाएगा नहीं आती है तो फिर कॉस्ट टू कॉस्ट निकल जाना 297 इम्पोर्टेंट लेवल है बाकी क्रूड भी अटक गया वहीं पे ना ऊपर ना नीचे बाकी अगर इसने भी लोअर लो नहीं बनाया तो ब्रेकआउट अगर हो गया तो बड़ी मोमेंटम अच्छा हो जाएगा फिलहाल ये एफईजी की रेजिस्टेंस पर है जस्ट लाइक नेचुरल गैस देखते हैं अब 5 PM होने वाला है थोड़ा वॉल्यूम एक्सपेक्ट करना चाहिए आ जाना चाहिए वॉल्यूम अब हैरिज ऑयल के बारे में क्या बताना है ये लेट ट्रेड लगा रखा है और कोई ट्रेड अभी फिलहाल है नहीं बाकी अगर ये लोअर लो बना दिया इसने यहाँ कहीं तो सेलिंग का प्रेशर बहुत ज़्यादा बढ़ जाएगा अगर ये लोअर लो नहीं बना पाता मान लो यहीं तक गया यहीं से कहीं लौट जाता है तो जैसा दिख रहा है लास्ट टाइम यहाँ से बाइंग आई थी एक हाई बनाया था दोबारा बाइंग आई एक हाई यहाँ बनाया और लास्ट टाइम का जो हाई था वो काफ़ी हाई लेवल पे था यहाँ तक ये कुछ इस तरह का फॉर्मेशन हो रहा है तो फिर पैटर्न के ब्रेकआउट का वेट करना पड़ सकता है उस केस में सेम नेचुरल गैस का भी है 297 के ऊपर क्लोजिंग आती है तो मिल जाना चाहिए ऊपर नहीं आती है तो फिर ये कभी भी किसी भी साइड जा सकता है इसलिए नेचुरल गैस को तो ट्रेल ही कर लेना एटलीस्ट Let's see 6:30 के बाद कुछ
for federal workers accepting buyouts. And President Trump says the administration is making progress to stop the war in Ukraine. We'll get reaction from the region with Lithuania's new Minister of Foreign Affairs this hour. Thanks for joining us on this Thursday evening. We begin with President Trump's extended meeting at the White House with House Republicans today to discuss their plans for getting his tax agenda through Congress. White House Press Secretary Caroline Leavitt confirming the president's priorities this afternoon.
No tax on tips, which is obviously a very public campaign promise that the president made. No tax on seniors' Social Security. No tax on overtime pay. Renewing President Trump's 2017 middle-class tax cuts. Again, these are the president's priorities. Adjusting the SALT cap, eliminate all the special tax breaks for billionaire sports team owners, close the carried interest tax deduction loophole, tax cuts for Made in America products. This will be the largest tax cut in history for middle-class working Americans. The president is committed to working with Congress to get this done.
And House Speaker Mike Johnson just told reporters at the Capitol that they have a framework on reconciliation and are hoping to make some announcements by tomorrow. So joining me now for more is Bloomberg's Megan Scully. Megan, maybe a framework, yes. We don't necessarily have the details on that, though.
Yes, we have perhaps the broad contours, or they have the broad contours, and they're not sharing,
नेचुरल गैस का एसएल रख लेना गाइस, नहीं आ रही है क्लोजिंग, अटक गया ये बिल्कुल. हायर लोज इन इन्वेस्टमेंट अकाउंट. इसके लिए एक बुक ले सकते हो अगर थ्योरी पढ़नी है आपको. टेक्निकल एनालिसिस पे एक बहुत अच्छी बुक है, उसको आप रीड कर सकते हो. दैट बुक इज़ वेरी गुड इफ़ यू नो पर्टिकुलरली टेक्निकल एनालिसिस के बारे में और ज़्यादा आप ट्रेंड सीखना चाह रहे हो तो बुक ले सकते हो. उसकी ई बुक और बाकी भी अवेलेबल है. बुक का नाम क्या था? टेक्निकल एनालिसिस ऑफ द फाइनेंशियल मार्केट बाय जॉन जे मर्फी. अच्छी बुक है, उसमें आपको मिल जाएगी डिटेल.
Republicans are starting to make some noise about that. They're concerned that that could end up on the chopping block. Interestingly to me, what was mentioned at the White House today was the carried interest loophole and ending that, which was something that Democrats actually tried to do. And this is something that benefits hedge fund managers, and Democrats tried to end it during their own reconciliation process, only to have to drop it at the last minute because of Kirsten Sinema, who opposed doing so.
Okay, so obviously there's a lot to keep track of here. There's also the question of the Senate, because the Senate Budget Chair, Lindsey Graham, said, I'm moving ahead next week with a two-bill strategy, essentially. Is there still a chance that the upper chamber moves first?
They certainly could, or they could move in tandem, perhaps. The Republican Party wants to show a united front on this. It's becoming increasingly hard because of all the factions that I laid out. In the Senate, they're eager to get a win on the board, and they want to move ahead with an immigration bill that would have some $300 billion over the next 4 years for border enforcement and for defense programs. That was the plan that Lindsey Graham laid out.
ओके गाइस, ट्रेलिंग एसएल जाता है नेचुरल गैस का तो निकल जाना कॉस्ट टू कॉस्ट पे यार. परेशान कर दिया नेचुरल गैस ने. 3 4 5 6 7 8 9 10 11 12 13. वैसे अगर मैं इसको पूरा देखूं तो इसी लेवल पे प्राइस सुबह से ही है 11 बजे से. ओपनिंग ही यहीं पर हुई थी, तो लॉजिकली देखा जाए तो इसको पूरा ही मानना पड़ेगा. चॉपीनेस है पूरी. तो फाइट होगी 297 के ऊपर क्लोज या फिर 295 के नीचे क्लोज। 97 के 98 के ऊपर क्लोज हुई तो बुलिस, 95 के नीचे क्लोज हुई तो बेरिस। नेचुरल गैस।
And say, this is my bill, this is my agenda, and this is what the people gave me a mandate to pass.
Well, so for those hardline fiscal conservatives within the conference, sir, what actually is realistically possible to achieve in terms of spending cuts? Is it going to have to reach entitlements to get to the kind of levels that they are pushing for?
Well, the reconciliation is mandatory spending. It's not discretionary spending. A lot of the stuff that a lot of conservatives go on TV and talk about, like foreign aid, that's discretionary. That's not mandatory spending. So when you talk about mandatory spending, you're talking about more difficult pots of money in the budget, which are ironically the bigger pot. Now, Social Security is the biggest one. The president's made very clear he doesn't want to touch Social Security, and Congress would never do that in this session. So Social Security is off the table. Medicare and Medicaid, what he's talked about and what members of Congress have talked about are reforms, not cutting the total budget, but making reforms for payments to try to eliminate fraud and improper payments and things like that. So obviously a lot of people in the healthcare industry are nervous about that. We've been hearing from them today on Capitol Hill. So it's very difficult to make this type of change that I think needs to be made. But again, my advice is that President Trump's going to have to say, this is my specific bill. And I think he would get there a lot quicker than waiting for Congress. Because if you ask 217 of my colleagues what their opinion is, you're going to get 217 different opinions. And I think the most important opinion in Washington is Trump's opinion. And I think that would speed this process up a lot if he would come out and endorse a specific plan.
Well, and then there's the opinion of Elon Musk and the Department of Government Efficiency, Mr. Chairman. Last night I spoke with someone who sits on the Oversight Committee with you, Republican Congressman Byron Donalds of Florida, and this is what he had to say about Elon Musk and the Doge and the access to information they are getting.
There is nothing he can do without approval from either the President of the United States or with respect to members of Congress voting for it in legislation. But let's also be very clear. Let's not act like the United States has been able to pass audits every single year. That is not the case. So you got to have somebody who understands how to reorganize organizations and get them to be lean and efficient. And that's what Elon is doing.
But as Elon Musk does this work, Mr. Chairman, he's doing so as someone who is not an elected representative like you yourself are. He wasn't confirmed by the Senate through the advise and consent process. Is there an oversight role for your committee specifically to play here? Why not have him testify before you?
Well, I think Elon Musk is being very transparent. He's tweeting out multiple tweets every hour about every thought that goes through his mind on Doge. I think that's where he tests a lot of his ideas on Twitter, for better or worse. But the most important thing for me as chairman of the Oversight Committee, he's being very transparent. I don't think there's anything that Musk or Trump have talked about with respect to Doge that they didn't talk about during the campaign. So when you talk about unelected people making decisions, I think in the Biden administration, we had a lot of unelected bureaucrats that no one, including myself, ever knew who they were, that were making a lot of decisions in a lot of the different cabinets and agencies.
But you did, in the Oversight Committee, go to great lengths to try to at least hold those people accountable. Isn't there a difference between transparency and accountability?
Well, everything that I've asked from Doge, they've responded. When I would ask for information in the previous administration, we would hear nothing but crickets, or a media story would come out, attacking me for having the audacity to ask for something. I think that as long as Musk continues to be transparent, I think that's the most important thing. But Byron Donalds is right. He doesn't have the authority to do anything. It's either the President of the United States or Congress. And, with respect to Musk, he's not operating, behind closed doors in a smoke-filled room. He is being very transparent. He's in communication with my committee. He's in communication with, I know, Senator Ernst in the Senate. And we're just trying to work together in a sincere fashion to find waste, fraud, abuse, and mismanagement in the federal government to root out. There are worthy government programs. There are tremendous federal employees, but there are a lot of, employees that I think the taxpayers could do without. And there are a lot of programs that are obsolete or unneeded. So we're just trying to figure out what we need and what we don't. This is playing out in the public role. The media should be, pretty happy that there's transparency and open debate and discussion and dialogue, and politicians and the president are available for press conferences and things like that. So as long as we keep doing that, I think most people on the Oversight Committee are going to be pretty happy.
So do you, sir, have access and transparency into the information of, say, through the Treasury payment system? What exact details Musk and the Doge team have been able to access? Whose specific Social Security numbers, for example? Do you have transparency that far?
I think what Musk is trying, I don't think Musk is trying to, create a fake account to draw a $600 a month Social Security check. I think what he's trying to do is figure out where the kinks are in the system that are allowing for improper payments and fraud. There are a lot of fraudulent Social Security accounts all across America where, and this is a known fact, that this thing called improper payments, where our software is susceptible to being hacked, and people are getting unemployment payments that aren't real people. People are in fake businesses, are getting SBA loans. People are drawing Social Security that don't exist. It's part of a international scam that's costing Americans a fortune. And I think that's what the objective of Musk with Treasury and Social Security is, to try to get a handle on how much of these improper payments are going out, and is there a way to fix the software system to prevent cyber fraud.
All right, Mr. Chairman, appreciate your time this evening, sir. That's the House Oversight Committee Chair, James Comer. And still ahead, we'll bring you Bloomberg's interview with the new Treasury Secretary, Scott Bessent. Yes, they too discussed Treasury payment system access in Doge. And we'll have more next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. Earlier today, Bloomberg's Saleha Mohsin, host of the Big Take DC podcast, sat down for a wide-ranging conversation with the new Treasury Secretary, Scott Bessent. And they started by discussing the Department of Government Efficiency and access that the organization has to Treasury payment systems.
Employees. Two Treasury employees, one of whom I personally interviewed in his final round. There is no tinkering with the system. They are on read-only. They are looking. They can make no changes. It is an operational program to suggest improvement. So we make 1.3 billion payments a year, and this is two employees who are working with a group of long-standing employees.
The letter that the Treasury Department sent earlier this week talked about how the team currently does not have access to change the system. Have they at any point this year had the ability to make changes?
Absolutely not. This is no different than you would have at a private company. And by the way, the ability to change the system sits over at the Federal Reserve. So it doesn't even lie in this building. So they could make suggestions on how to change the system, but we don't even run the system.
And if they ask for, if they request the ability to change the system, would you grant that?
No, again, they have no ability to change the system. I have no ability to grant that change. That they can make suggestions, then it would go to the Federal Reserve, and just like any large ERP system, there would be tests, there would be this, there would be that, and then the Fed will determine whether these changes are robust or not.
As the Secretary of Treasury, you also oversee the IRS. Do you know what kind of access the team has to IRS data or individual taxpayer data?
Well, I'm glad you asked that, too, because, look, the IRS, the privacy issue is one of the biggest issues. And over the past 4 years, we've seen a lot of leaks out of there. The IRS systems are quite poor. When I started in college in 1980, I learned the program in COBOL. I think there are 12 different systems at the IRS that still run on COBOL. But as of now, there is no engagement at the IRS.
And if they request that access, would you sign off on that request?
They haven't, so we'll take that when it comes to it. I think there is a lot to do there, but the president was elected with a big agenda, and to the extent that getting the IRS in better shape is part of that, sure. Because, look, with the IRS, what am I concerned about? I am concerned about collections, I'm concerned about privacy, and I'm concerned that the system is robust, and customer service.
But do you think that if they ask for access, that is something you would consider signing off on?
There are a lot of things I would consider, but look, we're in the middle of the tax filing season right now. We even, with the government buyouts that expire at midnight tonight, we have mandated that the IRS customer-facing employees, that they're not eligible for that until May 15th. So I don't imagine anything's going to go on at the IRS until then or beyond.
Elon Musk, just half an hour ago, tweeted out that Treasury needs to stop approving certain payments. Has your staff tried to block any payments here at Treasury?
We have not, and I'm glad you asked that too. And just to put it in perspective, Elon and I are completely aligned in terms of cutting waste and increasing accountability and transparency for the American people. I believe that this DOGE program in my adult life is one of the most important audits of government or changes to government structure we have seen. That when I was in my 20s, we had the Grace Report, and there's some great suggestions that came out of that, never implemented. Under Clinton and Gore, I think it was to government efficiency or reduce government. Nothing happened. So President Trump came in, there's a big agenda, and I think that there are gigantic cost savings for the American people here. And I think it's unfortunate the way the media wants to lampoon what is going on.
Now, news in this administration is flying fast, and we should note that since that interview was recorded earlier today, a federal judge temporarily delayed the deadline for the administration's buyout program that Secretary Bessent mentioned until Monday. But joining me now for more on the conversation is the wonderful colleague of mine who conducted that interview. Bloomberg's Saleha Mohsen is here with me in studio. And Saleha, as you talked about DOGE and the kind of efforts to rein in fiscal spending of the U.S., what access they're getting to do that, he also talked about this notion that they are going to try to use fiscal efforts to bring rates down so that they don't have to worry about what the Fed is going to do if they're cutting or hiking or what have you.
And Kayleigh, if this is true, this is how things play out, where this administration, this Treasury Secretary, and now this president is going to focus on the 10-year yield, not on what the Fed is doing. This is going to be the first time that we're going to be hearing this kind of commentary since the 1990s. It was Treasury Secretary Bob Rubin under the Clinton administration that decided or was forced to by bond vigilantes to focus on the 10-year yield and what that was doing to the economy and what they could channel through into the economy through fiscal policy.
We're almost out of time, but what was the most surprising thing he said to you today?
That DOGE is not made up of people who are running rampant.
Okay, fair enough. Of course, you can get full coverage of Bloomberg and Saleha specifically's interview with Scott Bessent on the terminal and online. Plenty of stories you can check out as well. And still ahead, Trump's pick for the U.S. Trade Representative Jamieson Greer faced his Senate confirmation hearing today, and we'll take a look at some of the key moments next on Balance of Power on Bloomberg TV and radio.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers.
All right, futures trying to push higher right now despite some disappointment on the earnings front. 30 minutes until the start of trading. I'm Katie Greifeld.
And I'm Vonnie Quinn. Matt Miller and Shonali Basak are off. Bloomberg Open Interest starts right now.
Coming up, disappointing outlooks from industry heavyweights. Ford sees a sharp drop in profit as Qualcomm faces slowing smartphone growth. Meanwhile, Honeywell announcing it's splitting into 3 independent companies, following pressure, of course, from activist investor Elliott. And its yields, not the Fed. Treasury Secretary Scott Bessent says that the administration's focus is on that 10-year Treasury rate. Bessent joins Bloomberg today at 1 p.m. Eastern. All of that and more coming up, but let's take a look at where these markets are trading. We actually saw a bit of a rally into the close yesterday, and you can see that we're trying to maintain that momentum right now, even though, as we mentioned, some disappointment when it comes to Ford, when it comes to Qualcomm. But nevertheless, you can see the S&P 500 currently higher by about 0.3% if you round up. The NASDAQ 100 a little bit less than that, but still green. And then you take a look at the 10-year Treasury yield. It's pretty much unchanged right now, but at a relatively low level relative to where we've been over the past few weeks at least. The 10-year Treasury currently trading at 4.42%. And Vonnie, apparently this is what we should be watching because this is what Trump and Bessent are watching.
And there was a 10 basis point move yesterday, so you know the market is watching everything Bessent has to say as well. He's on Bloomberg TV, by the way, at 1 p.m. Eastern. We'll speak more about that. But let's get into some of the details of some of these stocks that are moving pre-market. Qualcomm down 5.3%. It sees the smartphone market relatively flat this year, as we've been saying, weighing on its forecast and raising concerns around sales growth. Ford out with a warning that profit may fall by $2 billion or more this year, citing lower car prices, also costly newer models, and also the threat of tariffs, of course. And then Tapestry shares, they are popping after it raised its guidance for the year, thanks to stronger than expected sales for Coach. So one great news story this morning, at least, Katie.
Yeah, there is some green on the screen, at least when it comes to Tapestry. I want to go back to the bond market, which we don't usually do at 9 a.m., but those comments from Scott Bessent yesterday on Fox Business, he'll be joining Bloomberg TV later today, really interesting when it comes to the focus on the 10-year Treasury yield. It's not the pressure on the Fed that they're piling on right now. It's this 10-year Treasury yield, which is a hard beast to tame, Vonnie. You take a look at just what we've seen since the Fed actually cut rates by 50 basis points in September. We've gone straight up, give or take. And you have to wonder, I mean, beyond watching, is there anything that they can possibly do? It doesn't feel like it.
I mean, if you look into the details of what he's saying a little bit, he talks about expanding energy supply, bringing the cost of heating oil and diesel down, thereby impacting somehow the deficit. But it's a very, very difficult thing to do. John Authors of Bloomberg Opinion pointing out today that Alan Greenspan tried to do this in the years before the great financial crisis and didn't get anywhere with it. Now, he wanted yields to go up, not down. But again, didn't go anywhere. And you can buy industrial quantities of bonds, right, to try and impact the yield yield curve. But really, that's quantitative easing. Do we really want to go back there?
Yeah, and that, of course, requires a discussion with Jerome Powell as well. So interesting to sort of thread the needle there. Let's try to do that with Ritholtz Wealth Chief Market Strategist Callie Cox. And Callie, I'm curious to hear your opinion, your thoughts on what we heard from Treasury Secretary Scott Bessent last night, because it feels like you could build a case that this administration cares much more about the bond market than they do about the stock market, which is what we saw in the first administration.
We know that Trump cares a lot about the stock market, too. But I think the bond market is the point to watch right now for investors, even for the everyday investors who think that interest rates may not matter to them because it affects how we all think about money. But the 10-year yield is a complex beast. And look, Scott Bessent came out with the QRA. He basically said status quo for supply and issuance for the next few months, which is great. Status quo is something that markets crave these days. It's certainty in a world of uncertainty. But at the same time, the 10-year yield has been whipped around by all these unusual forces. Worries about the deficit, worries about inflation and where that's going, worries about Fed and fiscal policy. So it might be harder to tame than Bessent is leading on. And, bond investors might have more agency than they think they do here.
Well, and just to tease that out a little further, Callie, the more you temper and tamper with the 10-year yield, the more that starts to impact stocks, right? Via corporate debt and so forth.
Yeah, exactly. I mean, I think people forget, too, that, again, going back to interest rates affect how we all think about money. This is a big deal for corporate America, and it's a big deal for the housing market as well. Mortgage rates are based off of the 10-year and longer term rates. And, a lot of corporates do borrow further out down the curve. I'm a little worried about that because, we have the Fed keeping the short end of the curve up. And now the long end of the curve is, increasing and showing that it could have a higher base. That, combined with all the policy uncertainty we're struggling with these days, could mean that it's a rougher environment than most expect for corporate America this year.
Yeah, absolutely. Those fears, you've seen them on and off in the stock market. So let's talk a little bit more about that relationship. When it comes to the long end of the Treasury curve, every now and again, every time we get meaningfully above 4.5%, it feels like those jitters come out. How do you see that dynamic evolving?
Yeah, there's something about 4.5%, and I'm not a technical analyst. Maybe it's just a round number thing. But whenever we cross that threshold, it seems like the stock market is a little more attached to the 10-year yield and where it's going. I think the base for the 10-year is much higher than it was 6 months ago. I think it's because the economy is stronger, and the risks for inflation are higher inflation are still a little bit higher as well. But I'm not so sure that 4.5 is where the 10-year yield evens out here. It's so hard to tell, Katie, because a lot of this pricing has to do with that uncertainty around policy, uncertainty around the deficit, really things that a ball that sits in the administration's court. So, I don't envy somebody solely focused on the bond market right now, but I think at the moment it might be more important to focus on the 10-year yield as this generator of yield than this economic hedge that many investors use it for.
Just a moment, Callie, if you would, on this market. Jim Chanos yesterday said something very pithy to Bloomberg. He said, bull markets place a premium on promises. Is this a market trading on promises?
I think in some parts it is. And I would never go as far as Chanos here. I would never invoke the B word. I don't think we're in a bubble at the moment. But, tech is trading on high expectations. It's trading on this AI story that we've learned in recent weeks, could be evolving a lot quicker than some think. So, we still like value here. We still like looking at stocks that trade closer to their earnings. We think cheaper cyclical sectors could be interesting in this moment. But on the whole, I think it makes sense to get your portfolio back in balance, especially if you're one of those investors who has benefited from a pretty stunning tech run over the past few years.
Callie, we have more than 50% of the S&P now reported, and really we've done well. Howard Silverblatt pointing out that we have almost 80% of companies beating estimates. What do you foresee for the other half of the S&P?
Well, we're in the middle of earnings season from a count perspective, but much of the S&P's market cap has reported. So in some ways, we're in the later innings of the earnings season, Vani. I like the beat rate. Of course, you want to see 80% of companies beating their earnings expectations. That's much higher than the 5-year average of around 70%. But this has been the story of corporate America the past few quarters. Wall Street almost underestimates them every single quarter, and they come out with stronger earnings than everybody expects. That doesn't mean it's smooth sailing, though. I mean, of course, we saw some mixed results out of big tech, and that was obviously a stumbling block for the market. I'm listening to, again, CapEx concerns, mentions of tariffs, and, setting the bar as we move into later in the year, because Wall Street has raised the bar for the coming quarters.
All right, Callie, always wonderful to speak with you. Thank you so much. That is Callie Hawkes of Rittles Wealth Management. Honeywell will split into 3 publicly traded companies, separating its aerospace division from its automation business and proceeding with the spin-off of its advanced materials arm. Its earnings forecast missed estimates this morning, sending the stock lower. Let's discuss now this big change for Honeywell with Bloomberg's Brooke Sutherland, who covers industrials. So, Brooke, is this simple enough now? It's broken into 3. Bloomberg Intelligence suggesting that it could be broken up even further were management to go further.
I think that's the big question, because if you look at what's going to remain in the automation business, yes, there is a very sizable, what we think of traditionally as automation, but there's also building controls, there's warehouse robotics, there's fuel processing technologies. And what we've seen with other conglomerates that have done these big breakups is it usually takes a couple of them to get to the final simplified structure that these companies end up settling on. We've seen that with Danaher, we've seen that with GE, we saw that with Trane Technologies, with Fortive, which was itself a Danaher spinoff. And so I think that's just going to be the question of, do you have a coherent enough narrative for this business that's going to remain that it's attractive to investors? But on the other hand, the aerospace part of Honeywell will be a lot more focused. We've seen, really great performance in a lot of pure play aerospace stocks, GE being one of those that did its own big breakup. And so I think this is something that investors are going to be excited about, to be able to own that Honeywell aerospace business by itself.
Well, when you think about spinoffs in general, they've been so popular in the stock market. You think about General Electric, for example, that was well received. You take a look at Bloomberg's index of spinoffs over the past 5 years or so. We're right near record highs, even though it's been a pretty rocky market, Brooke. I mean, talk a little bit more about how investors are receiving this news.
Sure. I mean, I think what we've seen over time is that you have to have a really good reason for having a diversified business model. And I think, companies have to sort of constantly be proving why their various pieces fit together. And in the case of Honeywell, I think they have very good businesses, but what happened is they were often trying to tell too many stories at the same time. And you had sort of, a downshift in one business at a time when another was performing well. And that's what you see with a lot of these conglomerates, is it's just too much going on at one time. What I will say, though, is that, for all sort of the last rites pronounced over conglomerates, there are still quite a lot of very diversified business models. If you look at Amazon, they have an e-commerce platform, they sell groceries, they have cloud services. You look at Microsoft, they have LinkedIn, they have also cloud services, they have Xbox video games. I mean, and, these examples really do persist. And so I don't think the model is entirely dead. It's more a question of, how can you make it work in a way that, doesn't turn off investors ultimately?
It's a great point. We're not entirely past the age of conglomerates. Brooke, always great to speak with you. That is Bloomberg's Brooke Sutherland. Meanwhile, some other movers we're keeping an eye on, and let's talk about Peloton. Cost cuts have bolstered profit more than anticipated, revenue continuing to shrink, but even still the stock up 18% right now. Definitely needed some good news. Take a look at Roblox, though. Roblox daily active users missed expectations. It also lowered its 2025 booking forecast, shares down almost 18%. And to Under Armour, it raised its annual profit guidance in a promising move for its turnaround strategy, shares up about 5%. Meanwhile, coming up, Eli Lilly sees growth from its Mounjaro and Zepbound diabetes drugs. Details on the latest earnings and the outlook next. This is Bloomberg.
Now to high interest, to look at what's making headlines around the world. Aides to President Trump are trying to tone down his idea of taking over Gaza after he suggested the U.S. would, quote, own the war-ravaged territory. Trump's proposal was made at a news conference alongside Israeli Prime Minister Benjamin Netanyahu. The idea was welcomed in Israel, though widely condemned elsewhere in the Middle East and among Washington's top European allies. U.S. Treasury Secretary Scott Bessent says the Trump administration's focus on bringing down borrowing costs is on 10-year Treasury yields rather than on the Fed's benchmark short-term interest rate. Bessent also repeated his view that expanding energy supply will help lower inflation. Bloomberg's Saleha Mohsen will have an interview with Secretary Bessent today at 1 p.m. Eastern. Around 40,000 federal employees have taken up the U.S. government's buyout offer. That's about 2% of the federal workforce. The White House earlier estimated that between 5 and 10% of the federal workforce could take the offer.
All right, switching gears here, let's go back to earnings season because Eli Lilly out with earnings today that were mostly in line with estimates. The drug maker is working to fix inventory problems with its new blockbuster obesity drug that weighed on sales in recent quarters. Bloomberg's Madison Muller covers Lilly and joins us now. Madison, great to see you. So for better or worse, it feels like when it comes to the GLP-1 market, there's this duopoly. You have Eli Lilly and you have Novo Nordisk, both of which have reported in the last couple days. How did they two shape up against each other?
Yeah, so I think that there was some concern given the last two consecutive misses from Lilly's obesity drugs that maybe something was going on with demand. Like, is this market that seems insatiable, is it actually slowing down? And so there was definitely some concern, I think, going into both companies reporting this quarter. And Novo is looking pretty good. I think that relieved some of those concerns. Lilly is also saying that, a lot of this, the last two misses have had to do with inventory problems. And they're still forecasting I think it's like up to 35% revenue growth for 2025, which is huge. So that's like at least $12 billion in added revenue this year. So clearly there isn't a demand problem. And what Lilly's explanation, at least, is of what's happening is that there's some inventory problems in the channel of wholesalers and pharmacies. Basically, at the end of the year, they typically see a ramp up in wholesalers having more stock on hand, and they just didn't see that for whatever reason this quarter or the last two quarters. And so they're not going to try to forecast seasonality going forward and just really look more at the demand dynamics.
Madison, what comments are we hearing from management about the potential confirmation, which looks very likely now, of RFK Jr. as HHS Secretary?
Yeah, so I was just talking to Lilly's CFO about that earlier this morning, and they said that their agenda isn't really changing. I mean, for one, a huge thing for drug makers has been the Inflation Reduction Act. And so that's something that when we were at JP Morgan last month, Eli Lilly's CEO said that Lilly and other drug makers are looking to try to revise some of the provisions of the IRA this year. They're asking the Trump administration to pause those negotiations going forward so that they can revise some of these policies, one of them being what they call the pill penalty, which allows pills to be negotiated for lower drug prices sooner than biologic drugs. So that's something they're really focused on. They're going to continue focusing on that with the Trump administration. And when it comes to RFK, again, they say, they do have more common ground, I guess, than differences, because RFK does have this focus on chronic disease, and obesity is a chronic disease. So they're trying to make it work there. I think it was a couple months ago, Eli Lilly's CEO was at Mar-a-Lago with Trump, and even before inauguration. So these conversations, they've gotten the ball rolling, and I think that they're getting their agenda out there to the Trump administration.
Yeah, it's going to be really interesting to see how those relationships develop and evolve here. I am curious, though, talk about the pipeline when it comes to Eli Lilly, when it comes to Novo Nordisk. It feels like both of them are trying to basically develop and get out their next generation obesity drugs. What does that timeline and story look like? Yeah, so both of them are taking slightly different approaches. I think in the near term, at least, Lilly's biggest thing, and from what I've heard from a lot of the conversations at JP Morgan, people were saying the biggest pharma readout this year is going to be Lilly's oral weight loss drug. So that's expected around mid-year, and Lilly is really far ahead of everyone else with developing a pill that is, potentially easier for people to take who don't want to have an injection. And so that's something people are really looking for this year. That's going to be pretty important. Novo is focusing more on
next generation shots. They do have an obesity pill as well, but because they've had such a struggle with supply problems, they really haven't had enough supply to actually make these pills because it uses the same ingredient as Wegovy and Ozempic. So they've been focused on this next generation drug, CagriSema, which was a little bit disappointing to investors at the end of last year, but we'll see what happens with that.
Madison, thank you so much. That is Bloomberg's Madison Muller joining us there. We're also, by the way, speaking about Bristol Myers Squibb ahead of the opening bell, down about 3.5% now. 2025 sales and profit forecasts were below Wall Street expectations. Declining sales of older drugs will likely slow the company's return to growth. It plans to eliminate $2 billion of spending by the end of 2027, and that's on top of the $1.5 billion already planned through the end of this year. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
All right, welcome back to Open Interest. You're taking a look at futures right now. With minutes to go until the opening bells ring, you can see the S&P 500 up about 0.3%. The NASDAQ 100, it's in the green, but just so, barely 0.1% higher. The small caps making a run for it. The Russell 2000 currently up about 0.4%. Of course, maybe that focus that Scott Bessent and Donald Trump have on the long end, maybe giving a little bit of relief to the small caps. Of course, they would certainly like to see lower rates, and it seems like the administration would like to see that as well. I was just taking a look at the year-to-date figures, Vonnie, and it's interesting because you take a look at the NASDAQ 100, the S&P 500, both up about 3% year-to-date, which is pretty good, especially relative to all the volatility we've had. The small caps actually outperforming, up 3.9% on a total return basis, which was definitely surprising when you think about all the volatility that we've seen in the smaller caps.
Yeah, and we are holding up, as you say, Katie. Even this week, it's been 2 up days and 1 down day. Bloomberg Intelligence has this market pulse index. I don't know if you've been watching it, but now it's suggesting that sentiment is manic. Yeah. And that is actually a little bit concerning because when that happens, it's a warning sign of a vulnerable market. So just putting that caveat in there.
Yeah, yeah. Manic, but not a word you love to hear applied to pretty much anything, but we'll see. We definitely have a
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Good morning. Happy Friday morning from the Asia Pacific, just half an hour away from the opening bell in Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Rebecca Chung-Wilkins.
Our top stories today. Asian stocks are under pressure as traders sift through mixed earning reports ahead of the US jobs numbers. The dollar is steady as Treasury Secretary Scott Bessent says he favors a strong currency.
Now, Bessent also defended President Trump's tariff plan, telling Bloomberg that China's economy is the most unbalanced in the history of the world.
I think especially that China now, given all their excess capacity, will, no matter the level of the tariffs, will end up eating quite a bit.
And we have more on the trade war just ahead, with Chinese retailers now getting hit by duties and Hong Kong's status as a global financial hub facing fresh threats.
Good morning. Welcome to the show. Hope you're all well. Final trading session is just a couple of minutes away, and we are headed into the weekend. Well, in terms of just a longer-term view and momentum, certainly some upside when you look at some of the moving averages. 4 weeks of gains, as we point out, bottom of your screens. Although the price action for today going into the open, do expect this to permeate in the first few minutes or so, is really one of weakness across the region here. Asia Pacific, we're down about, give or take about, well, let's call it flat right now. Let's wait for this to really get warmed up, because this might really have some bearing on what happens in Hong Kong, depending on which way we open. It's worth pointing out as well, so, yep, we are in the thick of earnings season in the U.S. Europe had a substantially good day yesterday. Up 1 to 3% depending on where you look right now. So we're down about a third of 1%. So we're just coming off on futures right now. We did hit a record, though, on the benchmark overnight. Okay, very quickly, let's have a look at FX markets right now. So the dollar is actually softer, all things equal, for about a fourth straight day. Rate decision, of course, coming out of the Bank of England yesterday. Certainly markets are, in terms of positioning, certainly on the more dovish side of things right now. We're also looking at dollar yen. Yep, you're reading that correctly, 151.28. So we're now at about the strongest level there in close to 2 months, so about early December levels here on dollar yen specifically. Nothing much to tell you about as far as the Chinese currency is concerned. In fact, as I just mentioned, that flipped the boards in commodity markets. The renminbi fix has almost been like watching paint dry this week, almost at a similar level for 2 or 3 straight sessions as well. Brent, this is really a tariff story as well. A third week of losses and weakness in the oil price. We're putting this down to 2 things, right? One, certainly would be the stockpile conversation. Second would be the tariff weighing on the growth outlook as well. Now, this is one specific commodity we don't normally look at, manganese, over in China. We're up 2.5%. Massive day yesterday. And a lot of that might have to do with the fact that, again, it might be a tariff conversation. Well, we'll talk about this a bit later on. Wheat is at about a 3.5 month high. And, of course, we're looking at rubber futures also seeing some substantial upside of late. So, yeah, a lot of idiosyncratic stories here to tell you. But yeah, Rebecca, it's really all about tariffs, what it means for the growth outlook, particularly with these, the news we were just talking about earlier on, right? These shipments from Hong Kong, Puma, limiting some of the sneakers that they now are shifting, are exporting from mainland China to the U.S. It's really part of this broader geopolitical tussle.
Yeah, that's right, Dave. And we are sticking with this theme of tariffs coming up next. U.S. Treasury Secretary Scott Bessent has defended President Trump's new tariffs on China. He says they're only designed to ensure fair trade. Bessent also dismissed these concerns that the levies will be inflationary for the U.S., telling Bloomberg that China will pay the higher price. Just take a listen.
China is the most unbalanced economy in the history of the world. And they are in a deep recession right now. They're experiencing deflation, and they're trying to export their way out of that. And we can't allow that. We want fair trade. And part of that is taking a strong position on the currency and the terms of trade.
But what about the inflation concerns that are stemming from the tariffs and tariff threats?
Look, I'm not sure that where this narrative that tariffs for the country putting on the tariffs is inflationary, that we could have a small one-time price adjustment, that as we saw in Trump 1.0, that the deregulation and the other policies, we stayed right around the Fed's target level. So I'm unconcerned about that. I think especially that China now, given all their excess capacity, will, no matter the level of the tariffs, will end up eating quite a bit.
There's a lot of uncertainty around tariffs. We see them threatened or signaled, and then they're taken back. It appears as if this administration might be unfriendly to businesses. Is that right?
Really? I think it's just the opposite. I think this is the most pro-business administration in history. And everything we are doing is going to increase the after-tax return on capital. And as a result, working Americans will have very high real wage growth. That what we've seen over the past 4 years is the government and government-adjacent sectors providing the employment growth. And why have we experienced this affordability crisis? First, there was a massive spending met by increased regulation, which caused inflation. And then government and government-adjacent jobs do not cause real wage growth because they move up at CPI. So, I think that we are going to not only be business friendly, but very, very friendly for working Americans.
Yeah, there we go. That was Scott Bessent, of course, speaking with our colleague Saleha Mushin. And really, on the back of the tariff conversation, it's also markets were attuned to his comments on the relationship that we will likely see. That's an open question between the U.S. Treasury and the Fed. You look at the Treasury curve right now. I should also mention we're going into the jobs report later today in the U.S. Plus, of course, not on your screens, but I can tell you the break evens, for example, on the 2-year, we're still about 3%. So that's at about 21, 22-month high. Maybe goes into the conversation coming out of Lori Logan talking about how maybe the Fed might not even need to cut interest rates. We also asked, in fact, the Treasury Secretary about their relations with the Fed. Have a look.
One of the things I wanted to emphasize is that we are not focused on whether the Fed is going to cut, not cut. What we are focused on is lowering rates. So we are less focused on the specific of rate cuts and how do we get the whole curve down. I mentioned that the 10-year, I believe, is the important price to focus on. It's mortgages, it's long-term capital formation. So, and look, I think with the president's policies of energy dominance, deregulation, and non-inflationary growth, I think that the 10-year is going to naturally come down.
Christopher Condon, who leads our Fed coverage, joins us from Washington today. Chris, thank you for joining us so late in your time as well. We heard from the Treasury Secretary there. There's certainly a nuance that markets need to be aware of between the influence of the Fed on the short end and perhaps what they can do as far as the long end is concerned. Help us understand what those comments there coming out of the U.S. Treasury Secretary.
Sure. Well, I'm happy to be here, David. Well, first of all, the first thing I want to say is that this is a bit of a switch. There was something unexpected from this administration. In the first Trump administration, we saw a lot of basically hammering the Fed, calling on Jay Powell and the Fed to lower interest rates. So it's a bit of a pivot to hear Scott Bessent absolutely saying, we're not going to put any pressure on the Fed. I'm not going to talk about monetary policy. Rather, this administration is focused on real interest rate or market interest rates. Of course, he's thinking of the impact that, say, the 5- and 10-year treasuries have on consumer markets, on the housing market. And if you were able to bring those rates down, then certainly that would provide fuel to the economy. Of course, the Fed has been lowering interest rates. It has not been feeding through until the past couple of weeks to the long end of the curve. It is now a bit. My reaction in the end is, in terms of the administration seeking to bring, the mid and the longer end of the curve down, that's easier said than done. It's not a very easy prescription to follow.
Chris, tell us also what Bessent said about the Treasury employees working on Elon Musk's government efficiency team and whether he's done enough to assuage some of the concerns there.
Sure. Yeah, that was right at the top of the interview. This has obviously drawn a lot of criticism, a lot of controversy over the access that's been given at Treasury to the government payment systems to these DOGE personnel. So Bessent started off by saying, look, first of all, these two people that are involved are now Treasury employees, and they're involved in what he called sort of a procedural, or he called it operational review, not an ideological review. He stressed that they have read-only access to the systems, meaning that they can't change the code, they can't tinker with the system, he said. And he also, interestingly, got himself into a bit of trouble, I have to say. He kind of personally vouched for these folks. He said they're highly trained professionals. They're not a roving band, sort of messing around with government systems, and that he had personally been part of vetting these folks. Well, within hours, actually, one of them has resigned. The Wall Street Journal has reported that one of these individuals who was at Treasury has been linked to a social media account that's been posting blatantly racist and hateful things, and that person has now resigned, at least from Doge. So that's a bit of a self-inflicted embarrassment, I would have to say, for the Treasury Secretary. Of course, there's no suggestion that he knew about that, but it is a bit of an embarrassment.
Bloomberg's Christopher Condon there, who leads Bloomberg's Fed coverage in Washington. And still ahead, Societe Generale's Wei Yao joins us to look at the tariff impact on Asian economies and what Trump aims to achieve from the trade war. And we're counting down to the open of trade in Shanghai, Shenzhen and Hong Kong. This is The China Show. Well, a busy end to the week here, Dave. It started as we came back for onshore trading, things were a little bit more muted, a little bit more downbeat, but now we are seeing a rally coming back into Hong Kong stock markets. There was a little bit of whiplash through the week, but now looks like we may be heading for our fourth week higher. On the HSI, we're nearing that 2100 level. That's the level that just on your screen there, 21,000, excuse me, that you can watch there. And again, this very high mainland turnover that we're seeing in stocks. Elsewhere, a little bit of corporate news. We had Yum China gaining as much as 10% in the US trading overnight. That's off the back of some strong earnings results, stronger than expected comparable sales, stronger restaurant margins. And China Renaissance, this is a story actually coming out of Taixin reporting, citing sources here, gosh, what a tongue twister, about Baofan. So this is the founder and chairman of China Renaissance. He may face prosecution for suspected bribery. A lot of folks really watching that case. We haven't heard much about Baofan or really much clarity about his whereabouts for the last couple of years. And then finally, this big CGB sale. These are coming back, of course, after this extended break that we've been having. We are now also entering the window for quite a bit of data, and that includes foreign reserves data. We also might see sort of CPI numbers coming through on Sunday as well, I believe it is.
Yeah, so don't call it a weekend unless you cover this economy. CGB sale, just to break that down, it's 137. There's a 1-year bond sale. There's also a 30-year bond sale. I think it's 30-year bonds of 30 billion yuan, tongue twister, of 30-year bonds.
Yeah.
It's Friday. We're going to get there.
This Friday, obviously.
There's also tariffs, which we haven't talked about just yet. Wei Yao is with us, head of research, chief economist for APAC at SocGen. Good morning and nice to see you. I guess we got to start with the Donald Trump's favorite word in the dictionary here. What scenarios have you guys gamed out on tariffs and how that impacts the various scenarios on growth for China?
It's, I think this week showed, there is a wider range of possible scenarios here, given, what has happened. But to us, the central scenario remains that by the end of the year, we're going to have 10 to 20% tariff on China, meaning that the current 10 could go down because if China, is willing to cooperate on fentanyl, but eventually it will be still a focus on the trade relationship. So it would be hard to see that the U.S. wouldn't put any extra tariff on China. So we still think there's something going to be there. But it's not going to be the 60% threatened because that would be just too much a shock even for the U.S.
How is the PBOC going to balance here defending the yuan versus providing sufficient monetary policy support?
Yeah, I think, what has happened this week is a little bit good news for the PBOC, as in, yes, we have the 10%. Okay, I understand, the market may expect this to go away. That's why the yuan hasn't really responded much. But it does show, maybe it's not too difficult for the PBOC to manage the currency. However, we need to see, of course. In the extreme case, if the U.S. really willing to go very far on tariff, of course, that would be much more challenging. But if it's 10 to 20%, maybe it's quite okay. Then given this, I think the PBOC may still have the scope to cut interest rates. But the more important thing is actually the fiscal side. Right? I think the PBOC pretty much has done a lot of the job. But we are still waiting for March 5th to see how big the fiscal budget will be this year. And I do think Beijing will deliver to a certain extent.
We do want to ask you about the fiscal policy. Yeah. Just one more on the monetary policy. Sure. Do you think that the PBOC monetary policy is being hijacked by U.S. tariffs, or is it at risk of being hijacked by U.S. tariffs?
Yeah, it's possible. I mean, if we have very serious tariff, it will be very difficult for the PBOC to ease. That's a reality. But given dollar is so strong already, right? You look at the pattern in the rest of the region. More and more central banks just like, okay, we're going to ease, we will ease. I think the PBOC will have some scope this year.
Now, I guess on the fiscal front, I mean, let me borrow also the analogy that Rebecca just used, being hijacked by things that are beyond the control of China. Typically they come out with a budget deficit target and that's it. Do you think there might be scope actually to come out with a higher number just in case of the different scenarios we don't know at the moment?
I think it's quite possible. Actually, our view is that, yes, the deficit will be bigger first. It could be close to 4% or even higher, but let's see. And equally importantly, what's going to be the quota for the special CGB, right? Last year, already, this started to become a new tool in terms of topping up on the fiscal punch. Right. This year, I think it will be even more, that's going to be announced. So we're looking for 2 trillion RMB special CGB to be announced this year. So that's 1 trillion additional. Then the special LGB is another component. But putting everything together, including, last November, they announced, how they're going to help the local government to ease their debt burden. This year, the fiscal budget is going to be more meaningful, more material, because the local governments can worry less about deleveraging. So that would make actually a lot of difference.
I want to pick up there and ask about the deflation story. I mean, how worried are you about deflation? And is your base case for that additional fiscal stimulus, is that enough to start combating and changing the narrative here?
Yeah, actually, we do think so. We do expect China's inflation to gradually pick up. We do think actually nominal growth will be better this year, despite the tariff. I think, right now we're focusing on, the unpleasant side of the tariff. But to me, there is a silver lining here, which is you finally push the Chinese government to do the right thing, which is to support the domestic demand. Because when you face it, there is no other country in the world can absorb China's supply other than China itself.
Well, that takes us to potential green shoots, right? So supporting the consumer. Are you seeing any green shoots, whether that's in first-tier cities, for example, on the property side, or any high-frequency data that we managed to get a glimpse of from the Lunar New Year holidays?
Right. So the New Year spending is okay to decent. And it seems that the housing sales momentum, the positive momentum in the top-tier city has sustained. So that's definitely going to be very good for the consumption if it could continue this way. I think there are small things compared to the macro, but actually, DeepSeek, right? That news. Okay, yeah. It might sound like something unrelated, but I wonder if it's actually also quite positive to the confidence onshore. And you can see, stock market somewhat responding in that way.
That's right.
Yeah. So I think this is all going to play out, putting everything together. Then with a bit more fiscal. Yes, China can do better this year.
Quickly here, just to end, thinking about the rest of the Asia-Pacific, clearly during the first trade war, many Asian countries were beneficiaries. Right. That looks very different this time, not least sort of countries like Vietnam, where high trade deficits are really putting them in target. What are you expecting? And to what extent, actually, can we really game this out? I know a big part of what your note is and what many economists have talked about is the uncertainty element here.
This is actually, to me, a more important question, tariff question this time around. Actually, not just the narrow scope on what's going to happen to China. The more important question is what's going to happen to Southeast Asia economy. As you mentioned, Vietnam is really top there in terms of their reliance on the U.S. demand, their reliance on China's supply, right? So to this, it goes down to this question that increasingly people looking at is what does the U.S. government really want? Or what does the Trump administration really want? do they really want to narrow the deficit? Then they need to levy tariff on everybody, essentially. Or do they want to push for further decoupling with China? Then they need to focus on the countries that rely on China. So whichever goal between these two they're going to take, it seems that the rest of Asia will get some tariff too.
Yeah, those are important questions.
Yes.
You can't have your cake and eat it too at some point.
Right.
There we go. Wei Yang, thank you so much. Happy Friday. Have a good weekend ahead. Head of Research, Chief Economist for the Asia Pacific at SocGen. Right, going into the open today, not as bad actually as futures had suggested. Still some downside across your screens, although we are still on track, broadly speaking, to end the week higher for a fourth straight week as far as Hong Kong goes. Plenty more ahead. This is Bloomberg.
Yeah, a few handful of names here that we are watching for movement today. We'll kick off with China Renaissance. That's really off the back of a Tyson report citing sources saying that Baofan could be facing potential prosecution for bribery. Of course, a very high-profile banker in mainland China. Young China also in focus, up 4.45%, sort of catching up with some of the gains we saw in the US for that name overnight off this very strong, robust earnings beat coming in, particularly on expected comparable sales and margin restaurants. Again, Li Auto had an upgrade there for Macquarie, Dave?
Yeah, on the Hong Kong listing to outperform, ADR is also getting a bump up, and SMIC has done exceptionally well, which put everything together is really a market that's done well. Momentum's behind this market. The Hang Seng Tech Index is on the verge of a bull market that's 20% from a low. And turnover, as you can see on your screens, has come back in a big way in mainland China. First time in several weeks, we've seen $1.5 trillion in traded value. The open is next. This is Bloomberg.
Welcome back. You're watching The China Show. Good morning and happy Friday. We are counting down to the open of markets, Dave. And it was we've had a bit of whiplash this week, but it does look now, particularly in Hong Kong at least, we're turning a little bit more to the upside.
Yeah, the market's got a scare going into, from the, I think you have to look further back, U.S. elections, and then you had the downdraft going into Christmas and the New Year. And then this recent momentum we've seen over the last, 4 weeks or so has actually now taken the one specific benchmark to tell you about. The Hang Seng Tech Index is now on the verge of a bull market, so very, very close to that as well. There's an AI robotics team that has really emerged as something of an offset to some of the weakness out there. Just in case you're just learning about the SMIC rally, and in case you missed that, sorry. A lot of people missed it, though. I mean, the stock has effectively, tripled, I think, since the low of last year. So going into the open today, flip the boards, please. We are looking at some weakness. Although I think when you look underneath the hood on the CSI 300 itself, turnover, as we were pointing out, topping 1.5 trillion RMB on Thursday, which was effectively the highest going back, I think, to about early December, if not mid-November. That being said, of course, the market has been shut, so maybe there is a lot of sort of pent-up buying taking place. Bond auctions today, as we told you about, 1- and 30-year bonds on deck today. The story across the Hong Kong markets, flip the boards, please, if we can. The level to watch is 50.5066 on the Hang Seng Tech Index. In fact, right now, we are at these levels, at about flirting with that exact level right now, should put us very much on track, assuming the market closes right now, to enter a bull market by the close today. We are getting a weakness coming through across Hong Kong markets, across some of the big tech names, bottom of your screens. Change the page, please. So we have a couple of things that we were tracking earlier on. Rebecca was telling you about this. So China Renaissance, two stories here, right? One is based on some of the reports out of Caixin concerning Baofan might be, the bribery charges might be on deck. That's number one. Number two is we do understand that there are some potential buyers here for the business also out of Caixin there. Young China is an earnings story. Sales beating estimates. They also boosted a dividend by 50%. So that's going to happen with the stock. I think it was up as much as 10% overnight. Li Auto is an upgrade story from Macquarie. And SMIC, we just talked about that, so I don't need to spend a lot of time on that. Very, very quickly, robotic stocks or robotics-tied stocks did very, very well this week, pairing some of the gains. Limit up in some cases yesterday. And speaking of momentum, the Hong Kong benchmarks. Let's look at that, please, if we can. With the Hang Seng Tech Index now up 20% from the January 13 low. So momentum has returned to Hong Kong market. 3 benchmarks and the 14-day RSI for all three at about the 70 level,
yes.
which is a good line in the sand in this case.
Well, we've got someone perfect to discuss all of this and more. Let's bring in Wendy Liu, Chief China Equity Strategist at JP Morgan. Just want to pick off and stay on that theme of tech that Dave was just talking about. Let's talk about AI first. How much of this is truly a fundamental sort of offset to some of the tariff weakness that we're seeing? I'm thinking not just of necessarily of AI, but all of the sort of AI adjacent industries and sectors.
Yeah, some of the AI adjacent sectors are also more in scope for potential sanctions. And I think at this point, people are just quite excited about the development that there are more companies and sectors that could be invested beyond computing. And you're seeing these innovations and vertical applications in humanoid robots. And according to analysts, this will help biotech in terms of diagnosis and drug discovery. So I think you're going to see a broader range of companies in the edge area, semiconductor, electronics, and then also device. I think this is sort of cheap valuation vis-a-vis, what's available elsewhere, and then a new source of growth.
Yeah, do we know enough about the AI story to figure out which specific sectors or group of names might benefit? Because people seem to be buying first and asking questions later.
Yeah, I think it was computing and, the computing sort of ecosystem like cooling, optical components, because the initial drive is really about building infra. And I think building infra that continues because you have apps coming here, making it easier for people to use. The like of, better LLMs are really the data infrastructure that enable broader adoption. And so on top of that, you'll have retail, you have enterprises, increasing usage. So that's good for cloud. That's good for software application. That's good for edge. Replacement cycles are probably going to get better, and you'll have more part of the network, the Internet of Things, network of things, having to deploy more semiconductors. And then vertical category killers. So just like the Internet, broadband, over time that move into mobile internet, there's just a lot more companies for us to invest in.
Yeah. Wendy, there's maybe an argument to be made, partly from what we've seen this week with the uneven trading and sort of whiplash around, for example, the USPS suspension, the ban, will they, won't they? Some of the AI news that is still coming through, offsetting the tariffs. Are they going to come? Are they not? The back and forth on Canada. I want to ask about whether or not it's still possible to sort of trade indices. Do you actually have to be a stock picker to do well in 2025?
I would agree. I think thematic will outperform because there's so much noise. When the U.S. election result came out, I think the market had an escalation phase with regard to trade tensions. That ended on January 13th, and people had a relief rally. Now I think the market is trying to assess, is this a re-escalation, which a lot of people think it is? Is this a standoff? Standoff would mean consolidation. Re-escalation is going to be a correction. But then the safer ground appears to be AI, where there is structural growth.
And even within thematics, do you have to shift your strategy? I'm thinking about, for example, the alumina was added to the entities. That took some by surprise. It wasn't like PVF, which had been already flagged as being investigated. There are names that are being caught up somewhat unexpectedly, even when the sectors or the themes themselves are doing quite well.
I can't comment on single stocks, but I go back to your earlier point. It requires a little bit more fundamental study into the single stocks to understand where the risks are. And I think to the degree that a lot of the stocks have been oversold, we do see some interest coming back to the investors, and they say it's priced in already. But then we also see caution because, 2.0, we learned from 1.0 that there could be a lot of surprises. And then China is different from Mexico and Canada. The deal will be more complex, so it's going to take more time. So we do think this, uneven phase will last at least into March, where we get a little bit more visibility from the MPC. Yeah.
Yeah, and I guess to your point, the fundamental question, the intersection between tariffs and thematics is really what the earnings exposure is. So what scenarios have you guys gamed out? So for every unit of growth that gets taken away because of the tariff uncertainty, what happens? What are the benchmarks that are most exposed from an earnings perspective, for example?
We did some sensitivity study. So, 1.5% of the GDP get hit due to tariffs. Then we're going to see about low single-digit impact on MSCI China and CSI 300 earnings in 2025. It's not a high number. It's, 1 to 2%, because these two indices on a first order of impact basis don't have a huge exposure to export. MSCI China is about 4% overseas revenue, CSI 300, 14, general economy 19. But small mid-caps, they have higher exposure, 15, 16, 18%, depending on the index. So they would be hit a little bit harder. But in these kind of markets, it's thematics among small mid-caps.
Okay.
Surprisingly, yeah.
You just mentioned March meetings, of course, MPC. It's going to be a very important moment for investors. What do you think? I mean, assuming that Beijing delivers enough support to offset whatever the cost is of tariffs, which so far are relatively low, what is it that investors need to see in order to see sustained momentum, particularly when it comes to both the onshore, I guess onshore and offshore China stocks?
Right. And I think to finish out David's earlier question, in these markets, it's the multiple. It's less about the earnings. In the re-escalation phase, multiples will compress more than the earnings impact. And coming back to your question, Rebecca, I think people do want to have a sense on where the trade tension will end up being, because that is the biggest overhang. The preference is to see more consumption stimulus, which we see in small pieces, but not in a big one. And then what will help on the single stock basis is earnings coming through, like you described just now. So consensus earnings on MSCI China for 2024 was originally 14 and change. Now it's 16 and change. So if it could actually hit that number, I think there will be more confidence in terms of the single stock investability. Yeah. And we'll know by end of March, early April.
Right. It's also worth pointing out we've rarely hit that number from the start of the year, that consensus growth number, by the time we get to the end of the year. But so tell me this then. Where are we seeing where are we likely to see the biggest earnings revisions higher from this point in time? In which sectors?
There are two sectors that have been very depressed. If we look at how much the subsectors have fallen since their peak in 2020, 2021, there are two sectors, property and healthcare. We put them on neutral at this point in time. The best performing sector has been energy.
Yeah.
So I think we had a 3-year down cycle in terms of earnings for China from 21 to 23, and 23 eventually turned, and 24 is picking up. On the macro data, since September, we're seeing growth momentum improving, not exactly to the growth stage, but in the recovery stage. And generally, there's a spring spurt. So we're kind of waiting to see if this is the same this year. I would think growth and cyclicals is where the earnings are going to be coming through a little bit more. So we started to overweight industrial and materials, and we've been overweight IT, and utilities and energy are neutral. So I think the barbell strategy is the way to go during these choppy times. And thematic will help.
What about the other side that's become, well, at least that's rewarded investors, which is the dividend or the income strategies? What happens to that trade?
I think...
Or the SLE trade, let's call it the SLE trade.
If we look at the best performing sectors since 21, they've been the value income sectors, utility, energy, financial, utilities, and these are big dividend payers. And they have ready buyers from the lifers and the income funds. And the lifers tend to put more money into these stocks in Q1. So I think from a seasonality perspective, that is pretty favorable, and particularly for the offshore, the yield's also higher than onshore. So I think for the different investors, there are different buyers, and therefore part of the barbell continues to be the dividend-paying, quality value.
Okay, Wendy, thank you so much. It's nice to see you. Have a great rest of your year ahead. Wendy Liu there, Chief China Equity Strategist at JP Morgan. So if I remember correctly, that's industrials, materials, some of the IT plays that are sort of leading that sort of sector. Listen, speaking of IT, yep, we are on track to enter a bull market. On the Hang Seng Tech Index, we're still above that threshold right now. Coming up here on shows, Chinese retailers on Shein and Temu are feeling the impact of tariffs already. We get you the details on that story just ahead. Happy Friday. This is The China Show.
Time now for a look at what's trending in China. That's a look at what is making the headlines in national newspapers. Now, after USPS walked back on an earlier decision to halt some shipments from China and Hong Kong, an editorial in the Global Times says the U-turn not only reveals contradictions from Washington, but also highlights the resilience of US-China trade relations.
Now, the piece points out small parcels can contain daily necessities for, well, American households and businesses, and say that they are actually the ones bearing the brunt of these tariff policies, and that's something officials are actually echoing.
The United States recently imposed a 10% tariff on Chinese products exported to the United States and adjusted the tax-free policy on small value parcels. This will undoubtedly increase the consumption costs of American consumers and undermine the shopping experience.
Yeah, and that was the Chinese Ministry of Commerce just there reacting to the tariffs in China. Now, retailers on Shein and Temu are actually already feeling the pinch here. Logistics agents have asked them to pay an additional 30% levy on goods heading to the U.S. from China and Hong Kong. For more on this, let's bring in Min Min Lo, our China correspondent, to talk us through what exactly we're seeing. And yeah, they're getting squeezed already.
Yeah, and actually these retail platforms, they are being asked by their logistics agents to pay that additional levy as a deposit, which then they have to top up or have the deposit returned, depending on the actual charges from the U.S.
Let me just, I think we just have some issues there with Min Min's mic. Well, she's not bluffing. She is in fact talking. So we're going to get that sorted right now. And as we, let's head to the break first as we sort out these tech gremlins right now. Leave you with a look at these markets, and we are on track still to enter a bull market here in Hong Kong. A beautiful morning this Friday. This is Bloomberg.
Here are some of the top corporate stories that we are following today. Now, Tyson is reporting that Bao Fan, the ex-chairman of China Renaissance, may face prosecution for suspected bribery. The outlet quotes sources saying the investigation links to a former executive at ICBC who was paid a sign-on bonus of $2.9 million when he was hired by Bao. Bao Fan was taken away by authorities 2 years ago, and Tyson also says China Renaissance is currently seeing interest from potential buyers. Republican attorney generals from more than a dozen U.S. states are looking at the Chinese investments of large asset managers. So the institutions include BlackRock, JP Morgan, Goldman Sachs, and Morgan Stanley. In a letter, state officials spell out the risks of tariff and investment restrictions on China, as well as the potential invasion of Taiwan. And Puma says it plans to ship fewer Chinese-made sneakers to the US. It's relying instead on suppliers in Vietnam and Indonesia as the trade war with China heats up. The German company says it's now sourcing only about 10% of its US shoe imports from China, down from 30%. And Chinese retailers on Shein and Temu are already feeling the pain of tariffs.
Okay, actually, here we go.
Yeah, here we go.
Oh, wait, who's on camera? Min Min Lo is on camera to tell us about this story that these retailers on these platforms are being asked about how much deposit?
30%.
Okay, for what?
So they're being asked by the logistics agent to pay 30% deposit, which they will have to top up or have it returned to them depending on the actual tax charges from the U.S. Customs. And this is after the U.S. Postal Service had flip-flopped on their policy about whether to accept parcels from China and Hong Kong. They have reversed that now, saying that they will find a more efficient way to collect those tariffs. But then you have the Hong Kong Post now saying that they are not accepting parcels that are being sent to the U.S. because they are in talks with the U.S. Postal Service. They're still clarifying certain issues. So either way, there is going to be some disruption to the post. The question is how long, and that is what retailers are most worried about, especially small businesses that are working very hard to protect their reputation with consumers, and also the factories. They could be at risk of closure if there is any halt to these deliveries because they're already operating on very razor-thin margins. They don't have a lot of room to lower prices further, which means that U.S. consumers will likely have to bear the brunt of any price increases. And especially this is going to be acute for those low-value goods like socks, fashion accessories that are being sold. And Nomura, for example, is estimating that China had sent about $46 billion worth of these goods, small parcels, each valued at less than $800 last year. And of course, these parcels used to be exempted from any customs duty because of the de minimis rule, but then now that is being revoked by Trump. And Nomura is saying it could cost China about 1.3% of its exports growth and about 0.2% of its GDP. So pretty significant, given that China sends about, that these small parcels make up about 11% of China's exports to the U.S.
And you mentioned the Hong Kong Postal Service is there as well, but it's not the only way that Hong Kong is really being caught in the crosshairs between US, China here. The anxiety that a lot of businesses here have always felt, which is that Hong Kong increasingly appears to be getting lumped in with China when it comes to policy making. Just tell us how, that's sort of risking Hong Kong's status as a financial hub.
Yeah, and I'm sure you know very much about that because you co-wrote that story as well. And
pretending to ask the question, Rebecca.
Please tell me about the story that I wrote earlier today.
Yes, so President Trump, if you recall, in his first term in office back in 2020, he signed that executive order to end preferential treatment for Hong Kong when it comes to economic and trade matters. So what this means is that those 10% tariffs imposed on Chinese goods, for the first time, they also apply to Hong Kong goods as well. But for now, economists are saying don't panic because the tariffs apply to goods manufactured in the city, and that applies to about just 1.3% of Hong Kong's exports to the U.S. Things like jewelry, metals, gold, because the bulk of Hong Kong's exports consist of these re-exports from other countries. So that's the good thing. But there is a psychological impact here because you look at companies like Hutchinson's, which operates that 2 of the 5 ports in the Panama Canal that is now being targeted by the U.S. Companies looking at that case are going to think twice about investing overseas, especially in strategic sectors that could potentially come under fire from the U.S. administration as well. So all of these adding together, you mentioned the Postal Service disruption, they really threaten to ruin Hong Kong's reputation as that stable business hub, that international connector between mainland China and the rest of the world, especially when these policy differences between mainland China and Hong Kong starts to erode over time.
Yeah, Min, thank you so much. Min, Laura China, correspondent there. Yeah, Rebecca, and we're talking, when we covered some of these conferences, and it was a very busy conference month in January, the notion that Hong Kong might need to do more just to give out the message that while it is one country, 2 systems, it is an international hub that they also want to put forward there. They might need to delineate a little bit further there in terms of the policy messaging.
Look, it's interesting. So I spoke to Regina Ip. She was at Davos, actually, and we talked precisely about this. She says that Hong Kong needs to do more, it ought to do more to differentiate itself from mainland China. And her point also is that actually this is something that President Xi has stressed previously during his speeches visiting Hong Kong, visiting Macau. It's these differences that really attract foreign investors. But you know, I don't know whether there is an argument to be made that Hong Kong perhaps hasn't done a good enough job about promoting the differences.
Yeah, when you do get, I wouldn't say confusion, but it's almost a deliberate policies and, you know, for certain companies, for example, that just maybe loop Hong Kong into that same basket as Min was pointing out. So yeah, it's an ongoing conversation. Of course, you can check out, by the way, Rebecca's story. It's on the terminal right now as well for everyone, and certainly underscores the very point, this Hong Kong as an international finance center and sort of the stresses given the states of geopolitics out there. Plenty more ahead. You're watching The China Show. Good morning and happy Friday. Welcome back to the show. We're just entering the second hour of the China Show, 30 minutes into cash market session, and we're on the up as far as price goes. We're also on the up as far as turnover and volumes, and who would have thought, you know, just what, almost barely 6 weeks into 2025 and we'd be talking about a bull market. And that is in fact where we are right now as far as Hang Seng Tech Index goes, 5,100 on the HS Tech Index, which gives us enough about 30-point buffer for that bull market level that we're tracking here at about 30, 50, 77 thereabouts here. But yeah, it's been a good 4 weeks or so. The gains today are really led by, I think, this group of stocks coming up on your screens right now. So EV stocks, right? So the Xiaomi's of the world, XPeng. The latest news here is Li Auto getting an upgrade out of the folks at Macquarie here. So both the 8 shares to outperform and the ADR is also getting an upgrade. Xiaomi, of course, coming through as well with this announcement and the dates for the release really of both the handphone and also the car. Asia ex-China is looking like this. So we are looking at mostly declines. And I think which underscores really that this Chinese market has really divorced itself of late from the broader gyrations, broadly speaking as well, and certainly the AI, robotics, tech theme has really given this market new life. The story across S&P futures right now is one that is flat, not on your screens. Our European futures, I can tell you about that, also seeing some declines after just massive session over in Europe yesterday. The 2- and 10-year yield, we'll talk more about Scott Bessent's comments. We spoke to him a couple of hours back that they will let the Fed do what they do as far as monetary policy is concerned. They will focus on the Treasury side and the government, what they can do as far as government measures to lower market interest rates like the 10-year yield, for example. In fact, just on that very note, as you look at the Treasury curve right now, ahead of the jobs report later today, we did hear from Scott Bessent talking about the Fed. Have a look.
One of the things I wanted to emphasize is that we are not focused on whether the Fed is going to cut, not cut. What we are focused on is lowering rates. So we are less focused on the specific of rate cuts and how do we get the whole curve down. I mentioned that the 10-year, I believe, is the important price to focus on. It's mortgages, it's long-term capital formation. So, and look, I think with the president's policies of energy dominance, deregulation, and non-inflationary growth, I think that the 10-year is going to naturally come down.
Mark Cranfield joins us right now, our MLive strategist. Mark, you know, we were talking about this yesterday following, of course, the Secretary's interview with Fox. And now that we at least know specifically what they want to do and market interest rates as it affects consumer finance, for example, how do markets approach this right now?
So far, the bond investors in particular are fairly relieved what they've heard from Mr. Bessent. He doesn't want to tamper too much with the quarterly funding, which is good news, particularly in terms of issuing long-term debt. He seems to be keeping it on pretty much the same level as it was before. So that's reassuring. He also still believes in a strong US dollar, which again is great. International investors will be happy to hear that as well. What he hasn't addressed is the trade deficit or the fiscal deficit. Now, they will be, over the medium term, they will be major concerns to people that want to invest in US Treasuries. It will need a bit more time to see how new policies from the White House play out in that respect. But certainly, everything he's been saying so far is not having a major impact on the market, a bit more curve flattening than anything. So from here, traders will be looking more at the data coming up. Non-farm payrolls today, of course, is a big one. More importantly, you've got the CPI report next week. Maybe gives us the first indication of whether there's any inflation changes since Donald Trump came in the White House. Maybe a bit too early to tell, though. But so far, Mr. Bessent is choosing his words very carefully, and that's pretty reassuring to investors.
Mark, I want to ask you something actually. Viewers were sort of chatting with me about, and I want to put it to someone much more qualified than I am. The long end of US Treasury still seems relatively high. Do you think that is pricing in risks for the Asia Pacific, particularly, I guess, thinking about trade wars, tariffs?
I think where the long end of the Treasury curve, it's really more a domestic focus. So investors want to see whether or not US inflation can get well below 2%, or is it going to get sticky around there? They need to have some sort of cushion to justify yields going much lower on inflation before they can do that. Then, of course, you have to take into account the US is still running very big deficits. Until they get their current account deficit tighter, it's going to be hard to justify US yields, for example, coming down to the level of some European yields. European yields are way lower than they are. Now, that partly reflects the changes in the economy. US economy is much stronger in general than what's happening in Europe. But it also shows that investors fear that the US isn't getting it under control. The rating agencies at some stage may say that this is an unsustainable situation for the United States. They may need to downgrade them. It's not something that's going to happen immediately, but it's been on the radar for a while, and there's been no sign of improvement. What Mr. Bessent is saying doesn't address it yet, but clearly global investors will be watching very carefully to see if America retains a strong economy and a wide current account deficit, then ultimately that is not going to be good for the rating of the US bonds.
Mark, yeah, that's a good point. So Scott Bessent told us to, if we want to find out what the Fed wants to do, ask the Fed. So I look at the Fed, and Lori Logan says, hey, to Rebecca's question on the long end, why that remains high, it's probably because the economy is doing well and that the Fed might not need to even cut interest rates. Is that still a tail risk for markets, that the Fed doesn't move, or is it something to consider right now?
I think there's already some people suggesting that is a possibility. Miss Logan is hawkish by nature, so you can slightly pass her words there. She would normally come out in that direction. But clearly, there are more people from the Fed suggesting that we need a longer pause, and they want more time to assess how potential trade friction will work out, in how it will affect the US economy, how will it affect the outlook for growth and inflation. Put all those things together, and a central bank in general will prefer to do nothing while it assesses data. It will not rush to do one thing or the other. So certainly the way things are playing out, it is giving the Fed more reason to sit on its hands, absorb the incoming data, see if there's any changes in White House policy, see how the reaction comes from other countries overseas. In the meantime, they're probably quite happy with the situation. They've already lowered interest rates by a reasonable amount. They have a slight cushion over the current CPI level, but they're quite unsure where the data is going to go over the next few months. That's a very good reason for just sitting on your hands.
Mark, quick thoughts on China. Why is this market doing so well?
Tech. What these and the good thing here is that people are beginning to understand. If you look at the performance of the HEI Tech Index, compare it to the CSI 300, for example, over the past few months, the Hang Seng Tech Index is almost back to where it was in October, and the CSI 300 is nowhere near it. And if you look at the underlying stories, it's all about specific things related to AI, related to other parts of the tech universe. And people are beginning to believe that China can isolate itself to an extent and promote its own tech companies. They can make good profits with the domestic economy, regardless of whether they can filter into the rest of the world or not. And that's beginning to get some traction, and people seem to like that story.
Bloomberg's MLive strategist Mark Cranfield there. Meanwhile, the US Treasury Secretary also defended President Trump's new tariffs on China, saying they're only designed to ensure fair trade. Bessent dismissed concerns the levies will be inflationary for the US, telling Bloomberg that China will pay the higher price.
China is the most unbalanced economy in the history of the world, and they are in a deep recession right now. They're experiencing deflation, and they're trying to export their way out of that. And we can't allow that. We want fair trade, and part of that is taking a strong position on the currency and the terms of trade.
But what about the inflation concerns that are stemming from the tariffs and tariff threats?
Look, I'm not sure that where this narrative that tariffs for the country putting on the tariffs is inflationary, that we could have a small one-time price adjustment, that as we saw in Trump 1.0, that the deregulation and the other policies, we stayed right around the Fed's target level. So I'm unconcerned about that. I think especially that China now, given all their excess capacity, will, no matter the level of the tariffs, will end up eating quite a bit.
There's a lot of uncertainty around tariffs. We see them threatened or signaled, and then they're taken back. It appears as if this administration might be unfriendly to businesses. Is that right? Really?
I think it's just the opposite. I think this is the most pro-business administration in history. And everything we are doing is going to increase the after-tax return on capital. And as a result, working Americans will have very high real wage growth. That what we've seen over the past 4 years is the government and government-adjacent sectors providing the employment growth. And why have we experienced this affordability crisis? First, there was a massive spending met by increased regulation, which caused inflation. And then government and government-adjacent jobs do not cause real wage growth because they move up at CPI. So, I think that we are going to not only be business friendly, but very, very friendly for working Americans.
US Treasury Secretary Scott Bessent there speaking to Bloomberg's Salet Motion. Still ahead on the China show, we speak to the CEO of Hong Kong e-commerce firm Yes Asia about how they're riding the K-beauty wave while managing the trade war and a slowdown in China.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Japanese Prime Minister Shigeru Ishiba will meet President Trump on Friday in Washington. As he left Tokyo, Ishiba told reporters he wants to build a relationship of trust and confirm cooperation over economic and security issues. Bloomberg opinion columnist Garode Reddy says the Japanese leader will be playing for a tie during the talks. He joins us now from Tokyo. I mean, do you think the expectations are too high for Japanese-US ties, in part because, of course, of the relationship that Trump had with former President Abe?
Yeah, certainly. I mean, I'm not sure if the expectations, at least on this side of the equation, are particularly high. I think everyone here mostly sees that this trip largely involves downside risk, the idea that something's going to go wrong, that, you know, Trump is going to pull out some tariffs on Japan that nobody is expecting. And there isn't really that much upside. Japan doesn't really want anything other than the status quo. There's nothing that Ishiba is going to try and get out of this arrangement. There is going to be a lot of talk, apparently, according to reports in the joint statement that they're going to issue, about forging a new golden age for Japan-US ties. But I think that's largely just talk.
Garode, David here. Lots to unpack here because, I mean, we saw what happened with Canada and Mexico, right, as far as the U.S. allies are concerned. And Japan is arguably the biggest one in Asia. But before we get to that, can I just ask you, too, about where are interests aligned for both parties, just so we can look at our potential wins here?
Well, certainly it depends, obviously, on any day of the week what the Trump administration actually wants. If the Trump administration does want to, crack down on China and exert influence and control over China, Japan is an absolutely crucial partner that is required in order to, for example, we saw how the Biden administration tied up with Japan in order to increase its exports of semiconductor materials, its export controls of semiconductor materials. So that's obviously going to be one. From the Japanese side, Japan is looking at the security situation, obviously, in Asia. They're going to be looking to one of the big things the Japanese side, I think, want to get out of this is confirmation once again that the U.S. obligation to defend Japan in the case of an attack also applies to the Senkaku Islands, which China also claims for its own. So I think both sides they're not really going to be looking to get much out of it. In fact, when Trump was asked about this meeting last week by reporters, he really struggled to come up with anything that he wanted to get out of the Japan side. So, and you saw in the election campaign, he spoke about Canada, he spoke about Mexico, he spoke about China, but to the best of my knowledge, he almost never mentioned Japan at all. And I think that goes back just to the earlier point. That does go back to Trump's affinity for and friendship with Shinzo Abe.
So if he's playing for a tie here, and hopefully this goes to borrow a basketball analogy, this goes into overtime, what are the downside risks that he needs to be paying attention to?
Well, obviously we've seen, so many occasions, even in the last week alone, where you think the Trump administration is going to do one thing and something just comes completely out of left field. So, I don't think anyone was expecting, for example, Trump's comments on Gaza that came out, just earlier this week. So I think Japan will be very careful to try and play it safe and to try and make sure that there aren't any surprises. Now, obviously, there's in terms of an investment partner, Japan is, the largest investor in the U.S. and has been for 5 years running. But the U.S. also has a substantial trade deficit with Japan. I think it's the fifth largest. It's nowhere near as large as it is with China or with other countries, but it is substantial. We saw in the first Trump administration that Trump was prepared to put pressure to put tariffs. There was tariffs applied to steel that included Japanese steel at one point in the first Trump administration. Something like that could absolutely come out of the Trump administration, even though I think at this point in time we don't expect it to.
Garode, thank you so much, Garode Reedy there, our Bloomberg opinion columnist over in Tokyo. Coming up here, the Bank of Korea Governor Lee Chang-yong tells us exclusively where he's seeing the biggest impacts of the Trump tariffs outside of China. That conversation is just ahead.
The Bank of Korea governor thinks while the Trump tariffs will affect the country's economy, it's still better positioned compared with other U.S. trading partners. Speaking exclusively to Bloomberg, Ri Chang-yong told us how he sees the trade tensions playing out.
Definitely, I would say this is negative news. The U.S. tariff policy will definitely have a negative impact on Korean economy, as I mentioned, since Korean economy heavily depends on export sector. And we will have a definitely direct as well as indirect impact from U.S. policy. Direct, what I mean is that our export exposure to the United States is around between 6 to 9% of our GDP, depending on the year, which is significant. At the same time, our connection to Mexico, Canada, through global supply chain is quite significant too. So tariff on Korea directly, yes, at this moment, Japan and Korea is a little bit off the radar at this moment, but that can change any moment. So direct tariff on Korea can have a negative impact, as well as the tariff on other countries, which are our major trading partners, will have an indirect impact. But having said that, I think I want to mention also positive note. Yes, impact will be negative, but compared with other major trade partners of the United States, we are better positioned and we are vaccinated earlier. What I mean is that, after the shutdown of our trade with China, after our deployment of THAAD missiles, as you know, a couple of years ago, and also the U.S. strong restriction of tech transport to China, especially semiconductor, in last couple of years, actually make us, our businessmen, to expedite the deployment of the production base from China, outside of China to other areas. So China Plus One policy has started quite earlier, and then after that we proactively diversified our production base across the world.
Are we less exposed to the slowdown in China then?
Compared with a couple of years ago, for example, China was number one, our trade partner, if you look at 5-6 years ago. But now U.S. and China is neck to neck in terms of our exposure. So, and then also another factor is that we have, if you look at our traditional sector, definitely we are exposed on tariff and China dependency is very high. On the other hand, we have many industries that can have a strategic cooperation with the United States. For example, shipbuilding industry is one thing. The other one is semiconductor, especially AI sectors. We have a lot of room for the close strategic cooperation with the United States. So in that sense, I think we are in a bit better position to having a kind of give and take negotiation with the United States.
Semiconductor exports drive a huge part of the South Korean economy. We're seeing now the potential of cheaper, more cost-efficient AI models from the likes of DeepSeek, for example. If that depresses prices, demand, is that going to be an immediate concern for the broader economy?
We are currently looking at and analyzing what DeepSeek means for Korean semiconductor industry. So it's a little bit premature. I probably need a little more study. But in general, as for the semiconductor industries, I think there is some kind of heterogeneity in the two different impact. One is if you focus on the legacy semiconductor, which is like a low-end products, I think we already have lost the price competitiveness to China, even for a couple of years ago. So that business is no longer will be our businesses. On the other hand, for the high-end products such as HBM and the AI products, Korea's two, Samsung and Hynix, are the leading producer. So depending on the prospect of AI industry, we can have an opportunity. And on the other hand, as you mentioned, if the DeepSeek and other AI development will reduce the it will make the demand for these high-end products not as great as expected. Still, I think there is the other impact. DeepSeek's availability of DeepSeek and other AI technology means that there will be a more high-tech, low-priced, cheap demand. Because, this AI technology can be used for the semiconductor mobile product. So far, most of the AI semiconductor focus on the semiconductor for the server, very high, expensive one. But if you can produce a little more cheaper, semiconductor for more wider use, I think who can produce it? It's clear. So I think in that sense, I think I'm very optimistic. And I think the AI industry is definitely, Korea is better positioned than any other country.
And that was the Bank of Korea Governor Lee Chang-yong speaking with, of course, Sherry there over in Tokyo. The reason I'm looking to my left is I'm looking at this market in Hong Kong about an hour into the session, and we are on track to enter a bull market. There we go. Hang Seng Tech Index is now up 22% from that low back in January. Plenty more ahead. This is Bloomberg. Welcome back. You're watching The China Show. We are just under a minute away from the lunch break over in Tokyo. And really the story here, and I would say ignore the equity markets for now. Yeah, I know there's earnings coming through. Yes, they're important. But really from a macro perspective, it's really where you are with the Japanese currency. We're actually at session highs right now. Yes, we are. On 150, at 151 and change. If you just tuning into the Japan story today, there was a point not too long ago, about, I would say 2 hours back, when this one had a 150 handle. In fact, I'm looking at my screens, 150.96. We did touch that, which takes you back to about 2-month lows here on dollar yen. Flip the boards, please. Asia is looking like this, and also a cross-section of the sectors we're tracking. S&P futures are flat. The Bloomberg Dollar Index effectively sideways for a second day, softer for 4 days on aggregate. Asia is flat, and really the lift we're getting is really out of Hong Kong. But as you can see on the screens, we're going into the weekend, and a crucial jobs report, I should also mention, of course, out of the U.S., of course, we're on fairly decent footing. Right, just to set the markets aside for now, let's talk about feeling confident and beautiful. You have beauty exports out of South Korea topping $10 billion for the first time last year, even outpacing traditional leader France in some major markets. Our tech reporter Bell looks at how e-commerce firms are moving to benefit from this rapid change.
Medicube and Beauty of Joseon. They're not exactly household names for some, but for a younger generation of consumers, these upstart K-beauty brands are becoming the #1 choice. It's symbolic of a bigger trend that's taking place in the global cosmetics industry, where Korea's small and medium-sized companies are getting wider recognition and outselling more established and much bigger rivals. That shift has come about even as K-beauty grapples with a slowdown in sales to China, with firms now targeting new markets further afield. Hong Kong-based e-commerce company Yes Asia is one that's riding this K-beauty wave. Through its YesStyle platform, it sells Korean cosmetics into more than 200 territories, with business booming in recent years. Still, there are risks on the horizon, including the uncertainty over TikTok's fate in the US. It's a favourite platform for beauty influencers, including YesStyle's 300,000-plus network. UOB also says the group could face margin erosion as it rapidly expands its B2B unit. But for now, Yes Asia says the outlook is bright, signalling record annual profit growth. Annabelle Drewlers, Bloomberg News, Hong Kong.
And Annabelle is with us now, along with Joshua Lau, founder and CEO of Yes Asia, joining us exclusively here on The China Show.
Well, Joshua, thanks very much for joining us this morning in studio. And I think what really stands out about the business in particular is that you've been now operating for
25 years.
25 years. And over that time, the business growth has really just exploded in, say, the past 2 years.
3 years?
Yeah,
because
exactly.
of K-beauty, Korean beauty.
And so what exactly is it about K-Beauty, though? Because we know that K-Beauty has been around for a long time now, but why is it exactly in the last 2 to 3 years something changed for you?
Right. So actually we have introduced K-Beauty, Korean beauty, to many countries in the world since about 10 years ago. And we have seen the popularity actually rising, increasing in the past 2 years, starting with US, and also the popularity spreading to Europe, and lately into many Latin countries as well.
And you have this window into, I guess, really what's happening at the forefront of K-Beauty. And it's not necessarily the big name brands that are breaking through here. Just explain to us the sort of makeup of the landscape there.
Well, for the past 10 years, we have developed the relationship with over 400 Korean beauty brands. They are our business partners, and we're very fortunate that we have the authorized distributorship from those brands to many parts in the world. So this authorization is for both B2C online channels as well as the offline B2B channels.
And the focus, though, because we've spoken, of course, before about how the top 5 brands that you're selling in your site are not ones that are more established. It's actually ones that have been around in, say, the last 5 to 7 years. So these smaller and medium-sized names.
That's right.
What are they doing that's different?
So I think compared to the traditional, more established brand, I think the independent brands from Korea nowadays, they're more using the online marketing and strategy first, rather than open up like offline stores or going after country by country. And the online marketing, especially the influence marketing, is actually very powerful and impactful to help the independent brands to reach out to many young and also female consumers in many parts of the world very fast. So I think also YesStyle has been assisting many brands in the influence marketing. I think this is a very powerful strategy.
Why do you think it is that K-Beauty, rather than, say, I don't know, Japanese beauty, Chinese cosmetic makers, why is it that K-Beauty has been such a winner for your business?
Well, I think for a few things. I think they're early to introduce the Asian beauty products to the rest of the world. And of course, nowadays, the Chinese beauty and also the J-beauties are catching up. And number 2, I think the K-beauties, they're more innovative in terms of their product development, and they're able to develop their product in a very much shorter product cycle. So compared to like J-Beauty, it may take like 6 months, 1 year to develop products. We are seeing new products coming from Korea almost on a monthly or even weekly basis. I think consumers find that very exciting.
Yeah, so that speed that they're getting these products to market and that innovation cycle is also making Korean cosmetics companies a very active...
It's an ecosystem that very well established and has been for many years. So I think for new companies, actually it's very helpful for them to develop the beauty products in Korea in this environment.
What about M&A, though? Because that's another area. This is a really hot area that we see in Korea.
Yes, we have been seeing many capital going into the Korean beauty market in terms of like the conglomerates acquiring the independent brands, as well as also the private equity fund also putting investment into growing the K-beauty companies. I think more investment actually is helping to grow the K-beauty in the coming years.
And you've actually also made your first investment into a K-beauty brand.
Yes, recently we made a small investment into a new brand called TTVV. So we're about to launch the brand, and hopefully it can also do well as the other K-beauty brands as well.
I want to shift gears a little bit here and think about how Hong Kong is sort of being caught in the crosshairs between US-China tensions now. I mean, the anxiety for a long time has been that Hong Kong is going to be lumped in with mainland China when it comes to policies. We saw this flip-flop with the US Postal Service suspension, for example. Is that suspension of accepting parcels, of course it's been reversed, is that something that would have affected your business and your supply chains? And how are you adapting your delivery services to try and accommodate for these types of challenges?
Yes, so the recent tariff policy certainly have some impact on our business because we are also shipping packages, quite many of them from Hong Kong to US. So now we are now required to pay tariff. So that means that our cost of doing business is higher. So either we absorb the cost ourselves or we pass on the cost to the US consumer by raising the prices. So moving onwards, actually we have an option because many of the products we are selling, actually 90% are from Korea. So actually we have the option to ship the products from Korea directly to the US so that we are not required to pay the tariff anymore. So in addition, we also have been diversifying our business from US to many other countries. As I mentioned before, actually K-beauty is also getting very popular in Europe. So our website actually offers French, German, Spanish, Dutch, and Italian. So I think those European countries as well as the LATAM also provide a growth opportunity for us to divert our business from just focusing on the US.
Yeah, I mean, I see in your report, the EU overtook your US in revenue growth, I think for the first time, 3-digit growth rate. But you know, the US is still making up a big chunk of your buys. It's still 41%. How, you know, what is the aspiration? How much do you want to bring that down? How high do you want to raise the other? How are you sort of going to redistribute?
I think US will continue to grow. I think more people, I think it's K-beauty is going mainstream in US. Many retailers like Costco, Walmart, TJ Maxx are carrying K-beauty. So I think K-beauty will continue to grow in US. So I think for us, while we continue to do a lot of marketing in US, we also need to diversify into other markets like Europe and also LATAM. So recently we also have launched an Arabic language website. So Middle East also present a very good new market for us as well.
You mentioned sort of the couple of options that you have, and one of those, of course, as you said, is just starting to ship directly from Korea, but you don't have the warehouse facilities.
Actually, we have already a warehouse facility in U.S. near Los Angeles for the B2B business. So we already have been shipping product from Korea to the U.S. since 2023, May, about 2 years already for the B2B business, because we are also growing our B2B business in U.S. So there's an option how we can convert that warehouse. Also, we can do the fulfillment for the B2C customers in U.S. as well. So we are still evaluating this option.
I guess the question, though, is really what's the business cost and how much does this say dent your margins moving forward?
So I think that's the reason why we want to expand the B2B business so that we can increase the scale of business so that our purchase volume from our suppliers will be greater so that we can negotiate a better product cost, and then that will also help our margin as well.
I just want to ask, I mean, this issue of who takes on the cost of a tariff while you're still paying tariffs and you haven't fully managed to kind of get around them. I mean, what percentage are you thinking of? How much are you absorbing? How much are you putting onto your consumers? And how does that, I guess, vary with what you're hearing is the industry standard for your sector?
So the current tariff is 10%, so probably we'll pass like half of them to the U.S. consumer. I think that's reasonable. I think that also helps to reduce our cost of business.
What about TikTok in particular? Because part of the success story for you has been really leveraging that influencer strategy, and you've got a network now, as we just said there, but around 300,000.
Yes.
Yeah, so it's big. But TikTok is one of the favorite platforms. So how are you advising your influencers essentially to navigate what is a very challenging outlook?
So actually, influencer marketing is a spectrum of mega influencers to micro and nano influencers. So TikTok, we're working with mostly the nano and micro influencers. We have about 300 influencers in our program already. So in addition to TikTok, actually many of them also they're creating content for other platforms like Instagram and also Facebook and also YouTube as well. So I think depending on the US situation, we are also working with the influencers, how we can adopt the new environment, the landscape changes.
Okay, and expansion plans. What is your anticipated CapEx spend? Where are you trying to expand? Of course, you have this new investment in a Korean, directly into a Korean beauty brand. Are we going to see more of that?
So actually, we have set up warehouses, not just in Hong Kong. We are about to launch our second robotics warehouse in Hong Kong. But in addition, as I mentioned, we already have an overseas warehouse in Los Angeles. Recently, we also have set up a warehouse in Germany as well as UK to prepare us to further expand the B2B business into Europe and UK as well, because we find that not just online, actually K-beauty for the offline market is much bigger. We think that the offline market for K-beauty is at least 3 times bigger than online. So since our authorization for brands is both for B2C and offline B2B, so I think this is a very good opportunity for this year also. How we can expand our service to many B2B customers.
Joshua, thank you so much for joining us. Joshua Lau, founder and CEO of Yes Asia, and our tech reporter, Annabelle Jewellers there. And you can get an insider's guide to the money and people shaking up the finance hub in our Hong Kong edition newsletter out every Thursday. You can sign up via Bloomberg.com.
Hey guys, 7 p.m. data आने वाला है, ध्यान रखना. There's a data schedule at 7 p.m. Important for gold and for silver. सिस्टम पे हूँ मोहित श्रीवास्तव जी. डेटा आने वाला है अभी 7 पीएम का, देखते हैं क्या आता है. बाकी क्रूड ऑयल को देखोगे, क्या कहें, लाइक लक्ष्मण रेखा बना दी है इसने, ना ऊपर ना नीचे, वहीं का वहीं अटक गया. ऊपर ब्लास्ट हुआ तो बड़ा मूव जरूर आएगा. बाकी नेचुरल गैस यहाँ पर याद होगा 297 के ऊपर कैंडल क्लोज हुई, मोमेंटम मिल गया हो, बाइंग में निकल गए होंगे. सेलिंग की एंट्री मैं कहूँगा नहीं, यहाँ से एक्टिवेट हुई है. मुझे तो ऐसा लग रहा है कोई देखा है हमारी स्ट्रीम को, आने से पहले ही सेल कर दिया. थोड़ा इस लेवल के आसपास कहीं आता तो सेल करते, अगर किसने किया होगा तो फिर थोड़ा ट्रेल कर लेना, नहीं तो यहाँ ऊपर के लेवल के आसपास कहीं मिलेगा तो वो सेल करेंगे. ठीक है, बाइंग में निकल गए हो तो वेल एंड गुड. लाइक भी करते रहो एंड पार्टिसिपेट इन द पोल. 100 लोगों ने वोट कर दिया. व्हाट डू यू थिंक, कौन जीतने वाला है 2025 के दिल्ली इलेक्शन, असेंबली इलेक्शन? 69% सिंह बीजेपी, 23% आप कांग्रेस, 4% हंग असेंबली, 3%. कर दो जिन लोगों ने नहीं किया है, और लाइक भी कर दो गाइस, कम ऑन. डेटा देख लेते हैं एक बार फटाफट से. लास्ट ट्रेडिंग सेशन है, अगर नहीं मूव हो रहा है तो अननेसेसरी रिस्क मत लेना. ठीक है, मैं पहले ही बता चुका हूँ. ओके, डेटा देखोगे आ चुका अनएम्प्लॉयमेंट क्लेम्स का डेटा आपका नेगेटिव है डॉलर के लिए, पॉजिटिव फॉर गोल्ड एंड सिल्वर. माफ करना, ये आज का नहीं कल का डेटा था, आज का डेटा अब आया है. 3 डेटा हैं, 3 में से एक आ चुका है, 2 और आने दो. कम ऑन. ठीक है, एक डेटा गोल्ड के लिए पॉजिटिव है, एक नेगेटिव है, और ये थर्ड वाला भी देख लेते हैं. ओके, 2 डेटा नेगेटिव हैं, एक डेटा पॉजिटिव है गोल्ड और सिल्वर के लिए. ठीक है, नेगेटिव आपका डॉलर के लिए हो गया, मतलब पॉजिटिव गोल्ड और सिल्वर के लिए, और ये दोनों पॉजिटिव आपके डॉलर के लिए, तो नेगेटिव गोल्ड और सिल्वर के लिए. तो 3 डेटा में से 3 के 3 इंपॉर्टेंट थे. 2 नेगेटिव हैं गोल्ड और सिल्वर के लिए, एक पॉजिटिव है. तो मिक्स डेटा आया है, 2 नेगेटिव 1 पॉजिटिव फॉर गोल्ड एंड सिल्वर. अब सीधा 8:30 पर है नेक्स्ट डेटा, उसको फोकस में रखना. And missile attacks force Ukraine to buy gas from European Union. ठीक है, डेटा मैंने बता दिया, 2 नेगेटिव 1 पॉजिटिव फॉर गोल्ड एंड सिल्वर. इंपॉर्टेंट डेटा है इसलिए बड़ा मूव आ रहा है, देख पा रहे होगे. Let's move on to the crude oil. करो गाइस, कम ऑन, 50 लाइक्स, 100 लाइक्स का टारगेट है. यूएस मार्केट के बाद ही शायद कुछ मूव होगा लग रहा है क्रूड का तो। जी ऑयल व्हाट आई सेड, जब भी मैं ट्रेड लेता हूँ तो मार्केट कंसोलिडेशन हो जाता है, नैस्डैक से अच्छा है। ट्रेल कर लो, फाइट चल रही है किसी ना किसी से।
News when you want it with Bloomberg News Now. I'm Karen Moscow. A federal judge has blocked President Trump's plan to eliminate 10% of the federal workforce through a so-called buyout. Bloomberg's Amy Morris has more from Washington.
It isn't really a buyout. It's called a deferred resignation. But hours before the midnight deadline for workers to apply, the judge sided with several labor unions that had requested a temporary restraining order until Monday. Democratic Senator Mark Warner of Virginia applauds the delay.
I don't believe it's been funded. I don't believe Donald Trump has any history of ever paying his bills. And I fear that federal employees may be marked for riffing potentially without any compensation.
The administration says as many as 60,000 government workers have accepted the offer to resign with the promise of being paid their regular salary through September. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. A federal judge in Boston will consider a request from 18 states to block President Trump's executive order ending birthright citizenship for the children of parents who are in the U.S. illegally. The hearing today comes after a federal judge in Seattle blocked the effort and decried what he described as the administration's treatment of the Constitution, saying Trump was trying to change it with an executive order. Treasury Secretary Scott Bessent says he personally vetted the Treasury employees on Elon Musk's government efficiency team who have read-only access to federal payment data. And he added there has been no tinkering with the department's payment system. We spoke exclusively with Bessent.
We are doing a complete review, and I want to emphasize to you and everyone watching that it is an operational review. It is not an ideological review. We want to make sure that the American people are getting the best practices, and I don't think that's happening right now.
And that's Treasury Secretary Scott Bessent speaking with Bloomberg's Saleha Mohsen. You can catch the full interview on the Bloomberg Big Take podcast. Get it on Apple, Spotify, and always on the Bloomberg terminal. Well, President Trump is laying out more of his tax priorities. The president met with congressional Republicans at the White House to discuss what he wants to see in a tax bill this year. White House Press Secretary Caroline Leavitt says the president wants to make good on his promises from the campaign.
No tax on tips, which is obviously a very public campaign promise that the president made. No tax on seniors' Social Security. No tax on overtime pay. Renewing President Trump's 2017 middle-class tax cuts.
White House spokeswoman Caroline Leavitt also highlighted two items that were not discussed during the campaign: ending the carried interest tax break that lets private equity managers pay lower rates on their investments, and ending tax breaks for sports team owners. The White House says the president also wants to expand the deduction for state and local taxes. That's a priority for Republicans from high-tax states. One of the president's latest efforts to reshape the federal government is facing high-profile resistance. The head of the Federal Election Commission, Ellen Weintraub, says she was fired in a letter from the president, but she's not leaving. Weintraub posted a copy of the letter on X and wrote, quote, "There is a legal way to replace FEC commissioners. This isn't it." Weintraub was appointed to a 6-year term more than 20 years ago. Under federal law, commissioners are allowed to stay past their terms until a replacement is named. The International Criminal Court today called on its member states to stand up against sanctions imposed by President Donald Trump, saying that the move was an attempt to harm its independent and impartial judicial work. And the embattled court got plenty of support from traditional U.S. allies in Europe who stood up against the Trump measure. Authorities are searching part of Alaska's western coast for a plane that went missing while carrying 10 people. The Bering Air caravan was headed to Nome with 9 passengers and a pilot on board. Turning to corporate news now, shares of Amazon lower. The e-commerce giant did post better than expected earnings, but it disappointed investors for its guidance for the current quarter. We get more with Bloomberg technology reporter Caroline Hyde.
The fact that they're saying the fiscal first quarter net sales will be 151 to 155, and the market wanted 158. So if we're going to say any fly in the ointment, it is the forecast. But the anxiety levels about AWS growth are going to be dialed down a little bit when you're actually looking at their numbers.
And Bloomberg technology reporter Caroline Hyde reports that Amazon says growth will be, quote, lumpy due to delays in getting hardware and insufficient electricity. That echoes concerns of rival Microsoft. Ahead of the jobs report, futures are little changed, and the 10-year Treasury yield at 4.43%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
There are two kinds of people in the world. People who think about climate change and people who are doing something about it. On the Zero podcast, we talk to both kinds of people. People you've heard of, like Bill Gates.
I'm looking at what the world has to do to get to zero, not using climate as a moral crusade.
And Justin Trudeau.
There are still people who are hell-bent on reversing our approach on fighting climate change.
And the creative minds you haven't heard of yet.
Really don't need to have a tomato in December. It's gonna taste like nothing anyway. Just don't do it.
What we've made here is inspired by shark skin. Yeah. It is much more simplified than actual shark skin.
Drilling industry has come up with some of the most creative job titles.
Yeah. Tell me more.
You could imagine tool pusher,
no,
driller, motorman, mudlogger.
It is serious stuff, but never doom and gloom. I am Akshat Rati. Listen to Zero every Thursday from Bloomberg Podcast.
The numbers, and of course it's a game, right? Because the executives make sure that the numbers are low enough that they can beat them, and then they get a positive reception in the markets. I'm trying to get a sense of what you've learned from the company executives, especially when it relates to policy uncertainty and how they're navigating through that. What's the biggest takeaway for you?
Yeah, I think the biggest takeaway that we're seeing in the numbers and the stats is the guidance is actually tracking a little bit weaker than where it's been over the last few years. So management is actually guiding down more aggressively than above consensus expectations. This isn't anything cataclysmic. In fact, it's very typical early in the year. But for the last few years, I think where we were was an environment where companies were actually guiding above more aggressively. And now perhaps this is just a sign that analyst expectations are back to normal. They're not depressed, coming out of COVID or coming out of the rate hike cycle of 2022. So here we are. Guidance is tracking the normal seasonal low levels. Earnings beats, as you point out, are very healthy. We're tracking a pretty healthy, I think, on a 5% beat for the S&P 500 from companies that have reported so far. Financials are leading the beat. Commentary has been relatively positive. What's surprising to us is that when you sort of put all of the transcripts into our NLP or natural language processing sausage grinder, it spits out that corporate optimism is at all-time highs, which is unusual, I know, not necessarily what one would expect, but I do think that from a numbers basis, what we're seeing is more cautious guidance, maybe even more cautious than one would normally be given the policy uncertainty out there.
That's super interesting, the contrast between what the numbers are showing and what the commentary sounds like. I mean, ultimately, ultimately nobody knows what's going to happen, including the president himself. Given the full spectrum of possibilities out there, do you think there perhaps is too much focus on tariffs at the expense of immigration and, the effects on the labor market in certain industries?
Yeah, absolutely. I think the tariffs are really capturing mind share. And obviously, it's a much more kind of dramatic scenario. And we've heard a lot of news and lots of changes to policy in the last week or two. Look, I think that there is also, the bullish side of things, which is potential for deregulation. And then immigration reform, which would be negative from a margin perspective, higher labor costs, but it could be positive for real wage growth for, for the average worker in the U.S. So I think there are puts and takes on everything. I think what we haven't really focused on also is just the change in the mix of the S&P since 2018. So tariffs, while the numbers sound very high, what the good news is that companies have already been, kind of experiencing this learning curve of how to deal with tariffs in China. They've managed to move a lot of activity out of China closer to home. Unfortunately, a lot of that activity was shifted to Mexico and Canada, which are also in the crosshairs today. But I think the idea that we're going to see this massive swoon in earnings from tariffs isn't necessarily part of the story. And even the inflationary impact might not be as aggressive.
Yeah, and also you brought up the positive parts, right, which means sequencing is also important. So how's sentiment, Savita?
Sentiment has caught up with this bull market. So, unfortunately, it's not one of those scenarios where you can say this market is so hated, you still want to buy it. We're at a point where our sell side indicator is almost at a sell signal. So what that means is the sell side has grown that much more positive. They're recommending much higher allocations to stocks. That said, they're only, the average sell-side strategist's recommendation to equities is just around 57%, which isn't super high relative to, the benchmark allocations that we've seen of 60% equities. So, it's been higher in prior cycles. During the tech bubble, there were, strategists were recommending a 70% allocation. So today's numbers are definitely higher than where they've been over the last few years, but they're not necessarily at super stretch levels. And where I think the real optimism across Wall Street is on these Magnificent Seven companies. If you look at growth expectations for the Magnificent Seven analysts, the consensus analyst is forecasting the strongest growth ever for these 7 companies, which is hard to really see happening given that they're bigger, they're not going to grow as fast, and they're also spending a lot more on CapEx. So I think that's where we're seeing absolute euphoria.
So then based on that, where's your pain trade?
I think the pain trade is really what we've seen so far, which is, kind of financials outperforming. We're seeing some value areas outperform. January was an interesting month because the only sector that was down was tech. Every other sector was in the black. And you had large cap value outperform all the other size and style segments. So I think that's where we want to focus, is just potentially a change in style, not necessarily buy all the small caps, but maybe get a little bit more valuation sensitive and, kind of look at expectations for these tech companies versus what they're actually going to achieve.
On disinflation. That's kind of the summation of the change that has really pushed us away from the Fed is going to push us into recession, the big increases in interest rates, much more towards what I keep saying on this program. The Fed's ignoring the role of financial conditions, an incredible wealth creation coming out of that Mag 7, AI wealth creation, wealth effect that is leading to much looser financial conditions than you would expect given the interest rate structure. And that's really, I think, the issue here, is that financial conditions haven't been transmitting into the real economy as tight of policy as the rate piece. And the Fed and comparisons to the Taylor rule and interest rates are just missing the boat here, that in a modern economy, really the post-GFC economy, it's financial conditions through which monetary policy transmits, not so much the interest rate. We're much less interest rate sensitive. We're much more confidence and spending sensitive, and that's driven by financial conditions.
So, Jeff, all of that said, when you put it together, would you fade the rally that we've seen over the past 4 weeks in the 10-year Treasury yield?
Well, you know, it's interesting. You talk about the 10-year Treasury yield rally, and here we're talking about kind of before Fed and Fed policy. And obviously there's a disconnect here between talking about the rates on the short end, what the Fed is going to control, what the markets are going to react to with respect to the Fed, and what's going on the long end. And what's going on the long end is going to be much more affected by things like term premium, inflation uncertainty and inflation risk premium, and the fiscal policy outlook. So I think that we've gotten to a level of term premium that is normalized part way. You've gotten a lot better in terms of the term premium, and that's raised the attractiveness in terms of the 10-year relative to the 2-year. I think that fading it is not really the outlook right here. I think what you're going to be looking for is the debate around the next policy. You know, a lot of focus on trade and tariffs. We're going to turn that focus into taxes and fiscal, and that's going to weigh a lot on where that 10-year and that term premium settles.
And that's how you dance around a pointed question. Jeff Rosenberg there of BlackRock. Jeff, appreciate it, sir. Thank you very much. Following the payrolls report about 20 minutes ago, downside surprise on the headlines number, but a much hotter than expected wage print. Tease us up for next week. CPI on Wednesday, also on Wednesday. You'll hear from the chairman of the Federal Reserve testifying in front of the House.
That could be more important than the number that we just discredited for the better part of the morning, and that actually is causing people to rethink exactly where we were. If you see an upside surprise, does that become a real move that unwinds some of what we've seen over the past month?
Reaction from the White House first, right here on Bloomberg, just moments away, about 15 minutes away. We'll hear from the National Economic Council Director, Kevin Hassett, so look out for that conversation in just a moment. Before we get there, let's get you an update on stories elsewhere. With your Bloomberg brief, here's Yahara Heke. Say, Yahara.
Hi, John. Recapping the payrolls report, the U.S. economy added 143,000 jobs in January. The median average in our survey had been calling for 175,000. Meanwhile, unemployment fell to 4%, and average hourly earnings, they rose 0.2% from a month ago to 0.5%. President Donald Trump has tasked his Vice President, J.D. Vance, with overseeing the future of TikTok in the U.S. Punchbowl reporting Vance will work with National Security Advisor Michael Waltz. On his first day in office, Trump issued an executive order giving TikTok a 75-day extension to find a buyer in the U.S. or face a ban. And the Kansas City Chiefs are looking for their third straight Super Bowl title. The Chiefs will take on the Philadelphia Eagles in Super Bowl 59 on Sunday. President Trump is set to become the first sitting president to attend the game in person. He posted on Truth Social this morning saying, "Two great quarterbacks in this game, also an unbelievable running back, and the absolute best tight end in football ever." He sounds excited. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next on the programme, we'll set you up for the day ahead. Sneak peek of next week as well. And we'll count you down to our interview with the National Economic Council Director, Kevin Hassett. Kevin joining us in about 10 minutes' time.
You missed it from Bloomberg's coverage at Davos.
The issue of ending the war in Ukraine must be, I believe, the victory for Trump and not for Putin. Putin is nobody for him. America is way stronger and Europe is way stronger. China is way stronger than Russia. They are all players.
We are exploring ways for Argentina to be able to open up to international trade. And why? Because the division of labor brings prosperity. Adam Smith said so. And 250 years later, that holds true. Adam Smith is still right.
I would like taxes to be lower on people and on businesses, but I'm not going to play fast and loose with the public finances, because in the end, you actually don't result in anyone being better off, because it sends interest rates soaring.
I think everybody has welcomed the ceasefire in Gaza, but it's only first step. We hope that it will be a starting point for solving genuinely the Palestinian problem.
Nobody covers Davos like Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
The equity market is totally unchanged on the S&P 500. Your trading diary for today and into next week looks a little something like this. This afternoon, President Donald Trump meeting with the Japanese Prime Minister. Look out for that on Tuesday. You'll hear from the Fed Chair Jay Powell testifying before the Senate. You'll hear him testifying before the House as well next week. The Wednesday morning will be dominated by the CPI report. On Thursday, another round of jobless claims. And on Friday, a retail sales report. Coming out in about 5 minutes' time, walking out of the White House, you'll see Kevin Hassett, the National Economic Council Director, joining this program first, right here on Bloomberg Surveillance. And I think we've all got the same question, Bremo. What would you ask Kevin Hassett in 5 minutes' time, Torsten Slog?
Well, ask what the view is on the economy going forward, ask on the view on what fiscal policy is going to do and what tariffs might do and what that might mean for the outlook. And how complicated life might become if we can't get those tax cuts from this Congress.
At a time when a lot of people are baking that into their projections, at the same time, does this administration have more room to take their time if this is an economy with plenty of heat behind it, so it isn't necessarily at risk of cracking?
I like what Chris Verone said at the top of the show. What is the pain threshold for these policies? That 10-year yield that Scott Bessent, he said Donald Trump is so focused on this time around, how high can that get where it's going to push back on all your fiscal policy plans?
You think we'll get a yield target out of Kevin?
Most likely.
525.
525? Are you kidding?
525.
You think that that's what he's going to say?
525.
Yeah, all of a sudden, I'm sorry, Kevin Hassett cannot join us. Absolutely not. It'll be 3.5%.
We're getting a yield target from Kevin. Kevin Hassett just around the corner.
Zero.
If you're just joining us, the jobs report came out about 25 minutes ago. Came in at 143. That's the headline number. The estimate was 175. Headline number a bit softer than expected, but the details hotter than expected, particularly earnings. Wage growth coming in at 0.5%. The estimate was 0.3. The equity market pretty much unchanged. The opening bell 34 minutes away. Kevin Hassett, the National Economic Council Director, live from the White House, up next.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing
digital robotic capabilities where it's not just the robot doing a surgical procedure. It's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. Right? It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
AI, how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
Yeah, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea, but ultimately you still have to do a lot with it. It just give you very superficial ideas, and but at the end you still have to customize and have to really make it and do that. I do not think that AI and the technology can replace the human mind at this moment.
Yeah. Are you concerned one day we won't be able to differentiate designs by AI and designs by an actual designer?
I don't know. For me, I feel that when the designer is doing, it's the spirit, it's the heart that the computer don't have.
Live from New York City for our audience worldwide, welcome back to the program. The opening about 30 minutes away. Equity futures on the S&P 500 just about unchanged. On the Nasdaq, a similar move. The jobs report out moments ago. Downside surprise on a headline number 143. The estimate was 175. Wages come in just a little bit hotter at 0.5% against an estimate of 0.3. With some more details, let's cross over to Mike McKee. Morning, Mike.
Good morning, John. Well, as you mentioned, the unemployment rate comes in at 4%, and that's one of the key numbers here. However, it's sort of impossible to tell exactly why it went down, because these are based on the change in the population numbers that the BLS incorporated this month. So you sort of have to take it as this is what the revisions to the hiring and firing numbers gave us, and it doesn't tell us much about the direction of the economy or where we'll go from here. One other note, the BLS says there was no impact from the California wildfires or from bad winter weather during the month of January. So those are two dogs that don't bark. Probably the biggest news in this for the markets, average hourly earnings, you can see there up 0.5 percentage point, significantly stronger than anticipated, although weekly hours went down a tick. So there is still some strength in the labor market that feeds into perhaps wages. And we'll keep the Fed at least watching what's going on in terms of the inflationary impact.
Mike McKee, appreciate it, sir. Thank you. Let's extend this conversation. I'm very pleased to say that joining us from the White House is the National Economic Council Director, Kevin Hassett. Kevin, welcome to the program, sir. It's good to catch up with you once again.
Sure. It's great to be back.
I want to say, first of all, Kevin, congratulations on the new seat. You know the NEC has a storied history going back to the 90s, including Bob Rubin and Glenn Hubbard. I know you know all of that. I just want to take a step back, get away from the numbers we've got in front of us just now, and think about the last few years. What kind of labour market are you and the team inheriting?
Oh, I first also want to say thank you. It's great to be back at Bloomberg, and thank you for the congratulations. And you're right. If you look at the people who've been, in the office I am in now, like even Lael Brainerd before, I'm kind of humbled to be there. I also want to say thanks for leading off with Mike McKee. I've been watching him do jobs stuff for like 20 years, and I always want to hear what he has to say. And sure, he had a couple things in there that I hadn't noticed in the release, and so that's great too to be back. I would say that the big headline for me is something that you guys haven't talked about out yet, but I'd encourage you to, is that we've got this thing going on where the professionals at the BLS keep revising down the data. And so the headline for me when I'm looking at this is that it was the biggest downward revision. You know, the benchmark goes through last March, the biggest downward revision since 2009. And we're still sifting through the numbers, but, you know, it's really, really big. Could be as much as, if you go a little bit beyond the month, the last month, it could be as much as 1 million jobs fewer than we thought after this benchmark revision. And so the thing is that why is it that we keep seeing sort of positive jobs numbers, and then when we look back a year later, it's way worse than we thought? And so I say that what we learned with all these downward revisions is that the Biden economy, the Biden jobs market, was way worse than markets thought. And that's sort of consistent with the rest of our views that their policies were unwise, and there's a lot of cleaning up to do. And I think that if you look at ISM that just came out, that market participants believe that President Trump is going to be able to turn things around. And with these big downward revisions, we can see that there's actually a lot of work to do.
So, Kevin, that's your opinion on the state of affairs. I want your view on the policy matter. And I want to get a bigger picture view as well, because I think your approach is getting lost in the trade headlines. The fuller approach is getting lost in the trade headlines of the last week or so. Can I ask you how your tax plan might complement the trade effort, how these two things might gel?
Well, it's obviously, you know, President Trump's tax plan working together with congressional leaders. You know, we had the A-team meeting together in the White House yesterday, including meeting with the president and the vice president to talk with the top House members about exactly what they want to see in the reconciliation package and finally the bill. And, you know, in politics, there's always going to be a work in progress. But I can tell you that President Trump has assembled the very best possible team to negotiate with Congress and make sure that they can be successful. And you've seen some of the news from that. And I think the headline news is the president has stated, as he always does, exactly what he wants. And that's not like just negotiation, that's what he wants. And the people in the House were able to work with it, and now it looks like there's a lot of positive momentum after they met with the president.
So, Kevin, just going through the list of things that the president wants, and of course you know them well, but for the benefit of our audience that might just be joining us.
Sure.
Ending taxes on tips and overtime, new cuts for Made in America products, extend TCJA from 2017, expand the state and local tax deduction. There's a lot there. One of the offsets was to end the carried interest loophole, which was a little bit of a surprise. There's another offset as well, potentially, in the mix. And this is where the trade story fits in. And I'd love your view on things, Kevin. What is the objective of the trade approach? Because in the first term, it was about reciprocity. And the administration at the time, and Larry Kudlow was in your position, made a pretty forceful argument to say, we're doing X and China's not following up. They need to do more. That all made sense. Now it's about national security, the southern border. It's about drugs. It's about potential revenue raising as well. Which one is it, Kevin? Can it be all of the above?
Oh, you know, the bottom line is the first time I ever met the president, right at the beginning of 2017, that one of our first discussions about trade policy was about reciprocity. And so 100% that's going to be a key factor in President Trump's thinking and his team's workouts from his thinking as we work forward. And when you think about, well, what is reciprocity? How should we think about it? Then a lot of people focus on tariffs, tariffs, tariffs. And if we look at just tariffs, then you'll see that our trading partners tend to have tariffs that are 2 or 3 times higher than our tariffs. And so, like, if we were going to be reciprocal, then they could come down or we could go up, but it would be a lot different trade policy. But the way I like to think about it is just think about the fact that we have a tax system in the U.S. that's fundamentally different than the tax systems everywhere else in the world. And so I had my guys a couple days ago just update the numbers I always look at, and we found that U.S. multinationals had paid foreign governments $370 billion in taxes because of value-added taxes and income taxes in 2023, and foreign multinationals operating in the U.S. paid the U.S. government only $57 billion in taxes. And so they have 3 times the GDP we do, you know, globally. We're about a quarter of GDP, and we're paying $370 billion, and they're paying $57 billion, and that's not reciprocal. That's something fundamentally different. And what President Trump wants us to do is to come up with a really smart program that includes trade policy, tariffs, and revisions to the tax code. And he wants us to make it work so that America's on a level playing field again. And the reason he wants to do that is not because of the numbers, it's because of the people. The people in America who don't have jobs because we're paying $370 billion a year in taxes to foreign governments in order to incent our companies to not create jobs here but create jobs overseas.
Kevin, you didn't mention Europe, but it sounds like you're talking about Europe. What's the ask of the Europeans?
The president is going to negotiate with the Europeans. He's going to negotiate with everybody. And at the time when he does that, you'll find out what his asks are specifically.
Are some situations more negotiable than others? We've seen already you put the threat on the likes of Canada and Mexico. Mexico provided some concessions. We saw the same thing from Colombia. Is the approach to Europe going to be any different?
I mean, 100% what happened over the last week wasn't a trade war. Why would you have a trade war with your neighbors that you trade with so much? It was a drug war because 90,000 people died of fentanyl because of the fentanyl coming across the borders in Canada and in Mexico. A lot of times the drug from Canada was coming across from the Mexican drug cartels, by the way. And so the Canadians and the Mexicans made a deal with us to make progress on this because it's absolutely unacceptable that more people die from that poison than from the Vietnam War in 1 year. And so we just had, a discussion about how are we going to win the drug war, and that's what happened then. I'm not aware of, nor have I been informed of, massive fentanyl shipments from Europe. And so the discussions we have with Europe will be about other things.
So it sounds like you want to do revenue raising on more tariffs, potentially when it comes to Europe. Does that need to happen before the tax bill, or is the president willing to expand the deficit, Kevin?
The president is negotiating the parameters of the tax bill as we speak with members of Congress, and he's, asked the Treasury Secretary and me, the Director of the National Economic Council, to meet regularly with leaders of the House and the Senate and to see what's possible and what's right and good and should happen, and to get them as close to exactly the same thing as possible. And that's what we're going to do. It's,
Kevin, as you know,
bow to you guys.
Republicans in Congress are not on the same page. He spent a lot of time with members of Congress yesterday, but he's going to have dinner this evening with senators. Do you have a sense of what the president prefers at this moment, one or two bills, when it comes to Congress enacting his legislative agenda?
The president is going to work that out with them, and he's talking to everybody. I know that there are different opinions on the Hill, and we'll see what happens.
You also know, Kevin, that confidence coming into 2025 from corporate America is sky high. Sentiment is really robust, is strong. You know that. The president does. We all know that here on Wall Street. Is there a risk that you squander that confidence? That confidence doesn't translate into action, into hiring, into CapEx, without clarity on a trade story?
I think that we're a couple weeks in, and we've made an enormous amount of progress. And everywhere I look, people are saying, how could you guys possibly get so much done in such little time? And the thing that I can promise markets and you guys, and you'll probably be back next week with you to talk about more things, that this pace of progress is not going to slow. It's not going to slow at all.
Kevin, stay in touch. Looking forward to covering the next 4 years with you. Thank you, sir. Appreciate your time.
Say hi to Mike.
I will do. Kevin Hassett there, the National Economic Council Director, on the latest jobs report, and a little bit of an outlook there on the policy changes you might expect from the incoming administration, the new administration under the President, Donald Trump. Torsten Slock of Apollo is still with us around the table. Torsten, just wanted some thoughts from you about what you heard there and what you're expecting going forward from here.
Well, I think a very important point that Kevin made is, of course, this issue that the trade war, of course, we went through the last week. There are some chances that this could continue. But as Anne-Marie was saying, if this uncertainty hangs over the business sector, if this uncertainty hangs over financial markets, it could potentially be something that could have some implications, especially if we don't get clarity over some time horizon. So I think that, very importantly, there's a number of things going on the tax front. There's a number of things going on the tariff front and trade front. But we still need to see more details in terms of the specifics, in particular on the tax front, and what the implications are for the outlook.
I got more clarity from that conversation about tariffs. Our trading partners tend to have tariffs that are 2 or 3 times higher. He's talking about Europe. What are you expecting when it comes to the EU?
Well, he has said that he absolutely wants to impose tariffs on Europe. So that's probably why Europeans are probably a bit worried at the moment about that they might go through either something similar to what we did here over the weekend, or they might be going through something that's a lot worse. So if something is coming in one form or another, then a good guess is that the Europeans are probably somewhat anxious about this situation where they have been pointed out already as someone who is maybe next in line.
Do you think tariffs on Europe, tariffs on China are enough to quell the bond market in terms of the pay-fors for this massive tax bill that the president added to that list last night?
Well, if you look at some of the simulations from the Committee for Responsible Federal Budget, from the Tax Foundation, from the Peters Institute, also from Cato, they do show that the drag on GDP growth of a trade war could be as much as 0.5%, and it could be boosting inflation by as much as 0.5%. So in terms of tax revenue, of course, there are still a lot of things that remain unclear in terms of what will the overall tariff implementation look like across countries. But given some of these things we're talking about, the extension of the TCJA is poised to cost about $5 trillion. None of the estimates are pointing in the direction of being enough to pay for that.
Torsten, they want non-inflationary growth. That's difficult to achieve. The former president achieved that with a liberal, some might say reckless immigration policy. How achievable is it for this administration, and how likely is it we'll be talking about your rate hikes pretty soon?
Well, one challenge is that deglobalization is almost by definition inflationary, because that means that we have tariffs, which is by definition, of course, putting restrictions on goods coming from the outside, and deglobalization also on labor is also meaning that we have restrictions even on labor coming into the economy. So that means that by definition, combined with tax cuts, all that means that restrictions on immigration, also higher tariffs, and lower corporate taxes for domestic manufacturers, which is talked about to lower to 15%, that would all be putting some upward risk to inflation.
Torsten Slok of Apollo, with still, I would say, a contrarian view on interest rate hikes later this year. We'll see how popular that view becomes in the months to come. Torsten, appreciate it, sir. Up next on Bloomberg TV, Open Interest, Manus Cranny and Vonnie Quinn will guide you towards the opening bell. The opening bell about 17 minutes away. Equity futures at the moment just about positive on the S&P 500. Coming up on Monday after the weekend, we'll be catching up with Marvin Lowe of State Street, Victoria Fernandez of Crossmark, Liz Ann Saunders of Charles Schwab, and Jonathan Pingle of UPS. Look out for that on Monday. For those of you joining us this morning, good morning to you all. Have a wonderful weekend. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
In case you missed it, on Bloomberg Technology.
It's incredibly aggressive, the timeline to manufacture
Today,
the first phase of...
a federal judge pauses Trump's buyout offer as Musk continues his Doge takeover.
India says it's engaging with the US to ensure deportees are not mistreated.
Plus, the politics of the Super Bowl.
It's Friday, February 7th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Tara Oakes in Liverpool.
And I'm Sharon Reich Garson in New Jersey.
President Donald Trump has authorized economic and travel sanctions targeting people who work on International Criminal Court investigations of US citizens or allies like Israel. The move coincides with Israeli Prime Minister Benjamin Netanyahu's visit to Washington. He's wanted by the ICC over the war in Gaza. And during his visit with Trump, Netanyahu gave him a gift, a golden pager mounted on a wooden stand. It's an apparent reference to Israel's September 2024 operation in Lebanon, when handheld radios and pagers used by Hezbollah were detonated by Israel. And Israel has told the United Nations Human Rights Council that it will stop engaging with the body, alleging that it's biased. Council members have frequently raised allegations of Israeli human rights violations in the Gaza war. Less than 24 hours after Trump's executive order, the NCAA has fallen in line with his new policy. The governing body for collegiate sports has banned transgender women from competing in women's sports, effective immediately. Panama has pulled out of China's Belt and Road Initiative in a win for Washington. Panama has given the required 90-day notice of its decision not to renew its participation in Chinese President Xi Jinping's signature infrastructure program. A US judge has given federal workers more time to consider a buyout offer from the Trump administration. The ruling pushes the deadline until at least Monday. The buyout effort is part of a far-reaching plan by Trump and his allies to rein in the size of federal bureaucracy.
Reporter Tim Reed is in Washington.
It's an across-the-board attempt to cut the number of workers. The unions have been telling them not to take the offer, that it's very suspect. It's not clear that the offer is even legal because Congress, for example, has not appropriated money to pay off government workers.
And the backdrop of this effort to slim down government is Elon Musk's Department of Government Efficiency.
So far, Musk and his aides, and a lot of them are very, very young, early 20-something software engineers, they have taken over the Office of Personnel Management, which is an obscure-sounding agency, but it's the human resources arm of the entire federal government, and they have taken over a computer system there that has personal data. They have taken over the computer system at the US Treasury Department, which pays out nearly every payment that the US government makes every year. It's over $6 trillion a year. They've taken over the General Services Administration, which oversees government contracts and all the government buildings and government infrastructure. So governance experts I've spoken to have said that Musk is basically now in charge of what they call the fundamental plumbing of the US government. He's kind of been given the keys to the kingdom, and he is totally unaccountable, and no one yet knows exactly what he and his software engineers are actually doing inside these computer systems.
When the Bureau of Labor Statistics releases its jobs report for January today, it's expected to show growth and a steady employment picture. Econ and Markets editor Dan Burns has been looking at Joe Biden's last report card and what it means for Donald Trump.
On balance, we're expecting another month of pretty solid job gains to have occurred in January. Our estimate is around 170,000. Oh, that's a little shy of the run rate we'd seen through most of the Biden years. It's really kind of in line with what we've seen in the last year or so, where job gains have moderated, but they've still been pretty healthy. So as far as what we expect for the month of January, it looks like all indicators are that it was a pretty solid month of gains. The survey taken for this month's figures was taken in the week just before Trump took office. So this offers the perch on which Trump takes the job market and the economy from this point forward.
And in this week's Econ World, listen to a deep dive into what Trump wants, as economists and policymakers around the world try to get their head around a new era of diplomacy done through trade. It's available now wherever you get your podcasts. Harvinder Singh was one of 104 Indians deported by US authorities this week in a much-publicized transfer by a military plane. He says their hands and feet were cuffed during the 40-hour journey and were unshackled after reaching India. US Border Patrol Chief Michael W. Banks posted a video showing some men being led into a military plane in handcuffs and legs in chains. adding that they had successfully returned illegal aliens to India. The transfer fulfills one of Trump's key election pledges, but is an embarrassment for India, a close partner, whose Prime Minister Narendra Modi is due to visit Washington next week. It's given the country's opposition parties a chance to hit back at Modi's government, demanding a discussion in Parliament over how the deportees were treated. India's Foreign Minister, Subramanyam Jaishankar, had this to say.
We are, of course, engaging the US government to ensure that the returning deportees are not mistreated in any manner during the flight.
He says that it's standard practice for US immigration and customs enforcement authorities to restrain deportees, but that it was not done with the women and children on the plane to India. A spokesperson for the US Embassy in Delhi has said that enforcing immigration laws is critically important to the security and public safety of the United States.
As you probably know, Sunday is the Super Bowl. So we caught up with our sports reporter Amy Tenery, who's in New Orleans, to talk politics and pigskin. Amy, what are the big threads that I need to know about going into the game?
Right now, what we have going on is the Kansas City Chiefs chasing history. They want to become the first team to win 3 Super Bowls in a row. They have their superstar quarterback, Patrick Mahomes, and obviously Andy Reid, who is one of the winningest coaches in all of the league's history. They are favorited against the Philadelphia Eagles, whom they actually beat 2 years ago. So while they do have a lot of advantages on their side, Philadelphia is out for revenge, and they don't want to have that happen again this time in New Orleans.
This is obviously a huge cultural moment in the US, and right now the culture is dominated by political debate, especially over diversity. And this game isn't immune to this debate either, it seems.
Yeah, it's been a fascinating week here in New Orleans. It started out with the commissioner's press conference in which he was asked very pointedly whether the league was going to go along with some of what the Trump administration is calling for with regard to diversity, equity, and inclusion. The NFL for decades now has been the subject of criticism for its overwhelmingly white coaching and ownership ranks, and even just personnel within the team and the league level. And here was Roger Goodell saying diversity makes the NFL better and that they're not going to abandon these programs. And then, of course, it was only a day or two later, we found out that President Trump himself was going to come to attend the game.
There's also been a lot of attention on the end zone slogan. The last few years, it was end racism, but this year they've selected choose love instead.
Which they said was to honor the victims of a New Year's Day attack here in New Orleans that left 14 dead. There are a lot of people who are skeptical about the timing of that decision. You know, now you have Donald Trump coming to town and you're not using that slogan anymore. But the NFL told us bluntly that the president's plan to attend the Super Bowl had nothing to do with the slogan that they selected.
And finally, the halftime show. Kendrick Lamar is going to be performing, and he's known to be political, and he'll have the president in the audience.
Yeah, I think Kendrick Lamar was a fascinating choice. His work touches on racial and social justice, poverty, and he's very left-leaning politically. And I think that it would be reasonable to expect that he will take every advantage of having that audience with the Republican president of the United States.
And before we leave you, a recommended listen for your weekend. In this week's special episode of Reuters World News, we take a look at arms shipments to Ukraine and how they were stalled during Joe Biden's final year in the White House, right up until his term was nearly over. That pod drops on Saturday morning.
For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. We'll be back on Monday with our daily headline show.
गोल्ड 15 मिनट टाइम फ्रेम देख लेते हैं। फिलहाल के लिए क्रूड ऑयल देखो एफई से ऊपर निकल रहा है, देखते हैं कुछ ट्रेड बनेगा। अभी इसमें कुछ ट्रेड नहीं है, यही सेलिंग का ट्रेड था बस। ठीक ठाक सेलिंग आई थी, फिर मार्केट चला गया साइडवे पिछले 4 घंटों से यूएस मार्केट ओपन होने वाला है, 4 मिनट में थोड़ा सा वेट कर लेना उसका। एक 8:30 पर डेटा भी है, दैट इज ऑल्सो इम्पोर्टेंट। बाकी किसी ने अगर नेचुरल गैस में ऊपर से सेल किया था, दे कैन ट्रेल इट। एग्जैक्ट लेवल पे आया नहीं जहाँ तक देखने के लिए मिल रहा है, एग्जैक्ट लेवल पे नहीं आया है। ये भी बुलिश ही है, अपना ऑल टाइम हाई ब्रेक करता है तो और ऊपर जाएगा अगर 2877 के ऊपर ब्रेकआउट होता है तो। फिलहाल सपोर्ट एरिया था 2857 का राउंड, वहां से सपोर्ट ले लिया इसने। डेटा भी था, उसमें थोड़ी बहुत वॉलेटिलिटी देखने के लिए मिली थी। ट्रेडिंग सेशन है, ज़्यादा रिस्क मत उठाना। ओके, ऑलरेडी अभी तक देखें तो टोटल प्रॉपरली 3 ही ट्रेड बने, 3 में से 2 तो निकल गए प्रॉपरली, एक क्रूड ऑयल का ही रह गया वहाँ पे। इसके ऊपर कोई लेवल नहीं है, मार्केट ऑल टाइम हाई पे चला जाएगा इसके ऊपर सीधा 2877 के ऊपर। बाई किया हुआ है तो ट्रेल कर लो, अगर ब्रेकआउट हुआ तो और ऊपर जाने के चांसेस हैं, कोई नया सपोर्ट नहीं बना है। देखिए मॉर्निंग पे एक बाइंग का रेट ठीक था, फिर सेलिंग थोड़ी बहुत ही आई, ज़्यादा नहीं कह सकते। मैंने फॉरेक्स का चार्ट देखा, फॉरेक्स के चार्ट में देखोगे तो ये जो वाली कैंडल है, लास्ट कैंडल है, इसने इस लेवल को टच किया है, उसके बाद ऊपर गई है। फॉरेक्स चार्ट में देखोगे ना, इसने टच किया है, एमसीएक्स में नहीं किया है। सो ये थोड़ा सा डिफरेंस है चार्ट्स में। ये एफएक्स ओपन ब्रोकर का चार्ट देखोगे अगर, तो इसने एग्जैक्टली लास्ट कैंडल एग्जैक्टली वो सपोर्ट को नीचे होल्ड हिट किया, जहां तक हम टारगेट देख रहे थे एमसीएक्स नहीं कर पाया। ऊपर से सेल किया, नेचुरल गैस को ट्रेल कर सकते हो, कर दिया था। अगर थोड़ा सा रह गया था, अगर टच भी कर देता तो हम मान लेते हो, बट लुक्स लाइक नहीं किया है। एमसीएक्स में तो नहीं किया, फॉरेक्स का मुझे नहीं पता। में कुछ और अपॉर्चुनिटी मिलती है तो बड़े टारगेट के लिए। चेक किया, अभी गोल्ड का लेवल बताया था वही सेम ही है, ऑल टाइम हाई को ब्रेक करने की कोशिश पे जा रहा है शायद। नीचे सपोर्ट था, वहाँ से सपोर्ट लिया, डेटा आया था, उसमें थोड़ी बहुत वॉलिटिलिटी हुई। फिलहाल ये रेजिस्टेंस ही है, मल्टीपल टाइम ले चुका है रेजिस्टेंस, ब्रेकआउट करता है 2877 तो और ऊपर जाएगा, कोई नया सपोर्ट बनता है तो देखते हैं। क्रूड ऑयल सेल अगेन विद शॉर्ट एसएल। मेरे साइड से कोई ट्रेड नहीं है सर, अगर लिया है तो ऐसा लगा के चलना। कहाँ जाएगा ये गोल्ड? लाइक करते रहो गाइस। यूएस मार्केट ओपन हो चुका है, यूएस मार्केट की कैंडल ओपन। वी कैन एक्सपेक्ट सम वॉलेटिलिटी इन मार्केट, लेट्स सी। अभी भी है तो रेजिस्टेंस के अंदर, ये भी 8:30 पर है नेक्स्ट डेटा, 8:30। जी क्रूड ऑयल बुक्ड 5K इन बाइंग साइड, 2K इन सेलिंग साइड, एग्जिट आफ्टर कंसोलिडेशन। चलो निकल गए थे, ठीक है। काफ़ी देर से रुका था यहाँ पर, एंट्री देखोगे तो हमारी बनी थी वही 315 के अराउंड। 315 से ये अभी 1915 मतलब 715, 4 घंटे तक साइडवेज रहा, तब कहीं गया है। तो किसी ने अगर बुक कर लिया था थोड़ा सा प्रॉफिट बुक करके, वेल एंड गुड, नहीं तो ये M6 के अकॉर्डिंग उतना कुछ खास मूव आया नहीं। यहाँ तक देखोगे तो 1:3 ही दिखा रहा है, 1:1.3। थोड़ा एटलीस्ट 1:3 1:4 देता तो मज़ा आता। बुक 12 के ऑन सेलिंग साइड ले लिया था, ट्रेड सेलिंग साइड पे। जिन लोगों ने ले लिया था तो बढ़िया है भाई, थोड़ा सा रह गया ये कुछ पॉइंट से, चीटिंग कर दी इसने। Surrender too early. I thought I will add more quantities when hit the level, but it fail. It falls. चलो बढ़िया, समझ गया मैं। आपने नीचे थोड़ी एंट्री कर ली होगी, सो दैट ऊपर और एंट्री करने के लिए, बट वो नीचे ही आ गया। कोई नहीं, बढ़िया है। भी करते रहो गाइस। लगभग 150 पीपल आर वोटेड। कल दिल्ली इलेक्शन का रिजल्ट आने वाला है। 73% सेइंग बीजेपी, 21% आप, 3% कांग्रेस, 3% हंग असेंबली। कोई चाह नहीं रहा लग रहा है कि आप आम आदमी पार्टी की गवर्नमेंट है। ओनली बीजेपी लगी रहा है इस बार। बाकी वीकली एनालिसिस कल करेंगे। डोंट फॉरगेट टू ज्वाइन टुमारो 2 PM। डेटा और है गोल्ड और सिल्वर में, ध्यान रखना। एक और डेटा है शेड्यूल अभी, 8:30 वाला। नेचुरल गैस अपर एनी रेजिस्टेंस इन MCX? हाँ रेजिस्टेंस है ना ऊपर, ये 301 और 2 के अराउंड लगाया हुआ एरो, जो उसी एरिया पर है। इसलिए बोल रहा हूँ टच नहीं करा, थोड़ा सा रह गया, नहीं तो सेलिंग का ट्रेड बन जाता यू नो। तो लग रहा है सुपर बुलिस हो जाएगा आज। 50 लाइक्स हो चुके हैं। कम ऑन गाइस, लाइक करते रहो। 100 लाइक्स इज द टारगेट। एंड पार्टिसिपेट इन द पोल। देखते हैं कुछ नई एंट्री फिर से बनती है अगर क्रूड में। 8 PM। 9 PM के अराउंड पे अगर एक एंट्री बन जाए तो मेरे को लगता है बेटर ही रहेगा। उसके बाद बनेगी तो फिर थोड़ा सा मोमेंटम होना मुश्किल है। ऑयल फ्यूचर हेड फॉर थर्ड स्ट्रेट वीकली लॉस कहाँ पर है? अच्छा वो does you have to control emotions are in trading. इमोशन देखो दो ही चीज से ट्रिगर होते हैं, प्रॉफिट और लॉस, दोनों से ट्रिगर होते हैं। ऐसा नहीं कि सिर्फ लॉस से होंगे या प्रॉफिट से होंगे। एंड इमोशन का मतलब क्या है, लाइक आपको ये लग रहा होगा कि यार ये ट्रेड निकल गया या फिर यार ये इसमें लॉस हो गया। तो दोनों ही चीज़ें थोड़ी सी खराब हैं। उसको ओवरकम करने के लिए क्या कर सकते हो? नंबर मैंने कल भी पूछा था किसी ने, सेम चीज़ कहूँगा। पहली बात तो अपने रिस्क रिवॉर्ड थोड़े बड़े रखो ट्रेडिंग में। जो भी आपका सेटअप है, जो भी है, ठीक है, अपना है किसी और का वटेवर, उस सेटअप के अकॉर्डिंग अगर एंट्री बन रही है तभी जाओ, अदरवाइज अवॉइड करो। ये दो चीज़ कर लोगे इमोशन ऑटोमेटिकली कंट्रोल जाएंगे, क्योंकि फिर ये दो चीज़ कंट्रोल कर लोगे तो फालतू ट्रेड ही नहीं करोगे। फालतू ट्रेड ही नहीं करोगे तो लॉस फालतू का नहीं होगा, और प्रॉफिट होगा तो ज़्यादा होगा, लॉस कभी होगा भी तो वो कम होगा, रिस्क रिवॉर्ड मैनेज हो जाएगा। सो इमोशंस वहीं पर कंट्रोल हो जाते हैं। सो जस्ट डू टू थिंग्स, मेक हायर रिस्क रिवॉर्ड ट्रेड इन एनी टाइम फ्रेम। मैं ये नहीं कह रहा हूँ कि 15 मिनट में ही करना है, आप 1 मिनट में करो, बट थोड़े ठीक ठाक रिस्क रिवॉर्ड के ट्रेड रखो। एंड द सेकेंड वन, सेटअप के अकॉर्डिंग जब ट्रेड इमर्ज हो रहा है चार्ट में तभी ट्रेड करो, नहीं तो मत करो। ट्रेड के पीछे नहीं भागना होता है। क्रूड व्यू सर फिलहाल के लिए तो थोड़ा सा वॉलेटिलिटी टू साइडवेज लग रहा था। निकलता है इसके ऊपर तो कहीं पे थोड़ा बुलिश होने के चांसेस रहेंगे। अभी तो पूरा वॉलेटाइल है, साइडवेज टू वॉलेटाइल। प्राइस एक्शन देखोगे, मॉर्निंग पे ओपनिंग थी, नीचे आया सपोर्ट एरिया पे, अपसाइड गया, काफ़ी देर कंसोलिडेशन किया, ब्रेकआउट करने की कोशिश कर रहा है। वी डोंट नो ये एक्चुअल ब्रेकआउट है या नहीं है, तो अभी ये बुलिश तो नहीं मान सकते कम्प्लीटली, तो एक तरह से वॉलेटाइल ही कहेंगे टिल नाउ। अगर सस्टेन करता है इस लेवल के ऊपर, इस एरिया के अराउंड कहीं अपर साइड पे, तब थोड़ा सा फिर एक हायर हाई फॉर्मेशन पे जा सकता है प्राइस, लाइक इस तरीके से।
Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
Friday morning trading is underway on the first Jobs Friday of 2025. That is the sound of the opening bell from the floor of the New York Stock Exchange, and at the open, stocks are little changed, with the S&P 500 trading just shy of the 6,100 level. The Dow Jones Industrial Average little changed as well at about 44,700, and the Nasdaq Composite opens just a little bit lower by 0.1%. The 10-year Treasury yield is up 5 basis points to 4.48% as investors sort through January jobs. The Labor Department says 143,000 non-farm payrolls were created in January, less than expected, but
In Samiji, it is not a streaming live streaming. This is a news actually, Bloomberg News. It gives the latest news or data or any events time to time. So I just listen over here in Bloomberg column. Yes, you can also watch it. Just type www.bloomberg.com. It is free of course. You can easily you watch from their website or from their YouTube channel. India ramps up stimulus to spur filtering economy. आज फेड की मॉनेटरी पॉलिसी की रिपोर्ट भी आने वाली है, देखना पड़ेगा, टाइम कुछ फिक्स नहीं है, इस समय आती है। वैसे फेड के एक मेंबर हैं खास कारी, he says rates to decline modestly in 2025. उनका एक स्टेटमेंट आया कुछ देर पहले, फेड रेट कट की बात हो रही है।
sort through January jobs. The Dow Jones Industrial Day of 2025. That is the sound of the opening bell from the floor of the New York Stock Exchange, and at the open, stocks are little changed, with the S&P 500 trading just shy of the 6,100 level. The Dow Jones Industrial Average little changed as well at about 44,700, and the Nasdaq Composite opens just a little bit lower by 0.1%. The 10-year Treasury yield is up 5 basis points to 4.48% as investors sort through January jobs. The Labor Department says 143,000 non-farm payrolls were created in January, less than expected, but the unemployment rate fell to 4%. Bloomberg's Michael McKee has more.
The BLS says there was no impact from the California wildfires or from bad winter weather during the month of January. So those are two dogs that don't bark. Probably the biggest news in this for the markets, average hourly earnings are up 0.5 percentage point, significantly stronger than anticipated, although weekly hours went down a tick. So there is still some strength in the labor market that feeds into perhaps wages. And we'll keep the Fed at least watching what's going on in terms of the inflationary impact.
It's Bloomberg's Mike McKee. The report also included an update to last year's numbers. They show 589,000 fewer jobs than previously reported in the 12 months through last March. We got reaction from the new White House National Economic Council Director Kevin Hassett.
Why is it that we keep seeing sort of positive jobs numbers, and then when we look back a year later, it's way worse than we thought? And so I say that what we learned with all these downward revisions is that the Biden economy, the Biden jobs market, was way worse than markets thought. And that's sort of consistent with the rest of our views that their policies were unwise. And
चलो जी, अभी क्रूड ऑयल सेलिंग ट्रेड में कॉस्ट टू कॉस्ट निकालना पड़ा, टारगेट नहीं दिया उसने, ऐसे ट्रेड कैसे मैनेज करें? ये अब क्या कर सकते हैं सर इसमें? ये वैसे मैंने अभी बताया, चार्ट दिखाया अभी आप लोगों को। फॉरेक्स चार्ट में देखोगे ना, वहाँ पर थोड़ा सिस्टम अलग चल रहा है। वहाँ पर फॉरेक्स चार्ट में एग्जैक्टली लेवल को हिट किया है उसने, जो ये टारगेट लगा रखा है ना, वो हिट किया है। फॉरेक्स में एमसीएक्स में आया ही नहीं। ये देख रहे हो, ये कैंडल अभी मैं दिखाऊंगा एमसीएक्स में, ये एग्जैक्टली नीचे हिट करी, यहाँ से सपोर्ट लेके चलेगी। यहाँ से जो ये हमने सेलिंग करी थी, ये एग्जैक्टली नीचे तक आई है। फॉरेक्स का चार्ट है। एमसीएक्स में देखो, यहाँ से सेलिंग हुई, ये कैंडल थी वो ये। बाकी इतनी देर तो नहीं लगाता है प्राइस। देखो, प्राइस मोमेंटम करना होता है, थोड़ी जल्दी आ जाता है। ज़्यादा देर लगा रहा है तो फिर कहीं ना कहीं फाइट चल रही है, इन द सेंस ऑफ, क्योंकि ये भी एक सपोर्ट ही है नीचे। अभी ऐसा नहीं है कि ब्रेक हो गया है, तो अभी भी सपोर्ट ही है। और एफईजी से पता ही है आप लोगों को, कभी बाइंग आ जाए, सेलिंग आती है, कभी नहीं आती। एफईजी का थोड़ा सा, क्योंकि वो कोई लेवल नहीं है, तो वहाँ पर 50-50% जैसे चांसेस रहते हैं नॉर्मली। फिर से एक ट्रेड मिलता है अगर 9 पीएम से पहले, तो बेटर रहेगा। क्रूड में एक ट्राई करेंगे। फिर मेजर डेटा आने वाला हो, या फिर उस दिन ऐसा देखने के लिए मिल जाता है, जैसे 7 पीएम का डेटा था ना, इम्पोर्टेंट था काफ़ी। जी को रिमूव कर सकते हो यहाँ से, अब ज़रूरत नहीं है, ऊपर कैंडल क्लोज हो चुकी है। ब्रेक हो चुका है, कैंडल क्लोज हो चुकी है। और गोल्ड हवा में चले गए थे 7 पीएम डेटा पे, और फिर सडनली नीचे आ गए। नहीं, वो डेटा 7 पीएम का मिक्स था एक्चुअली। 7 पीएम का डेटा देखोगे ना, जो 3 डेटा आए थे 7 पीएम पे, उनमें से 2 डेटा नेगेटिव थे गोल्ड और सिल्वर के लिए, एक डेटा पॉजिटिव था गोल्ड और सिल्वर के लिए। इसलिए वो कैंडल उतनी ज़्यादा वॉलेटाइल हुई है गोल्ड में। ये वो कैंडल थी 7 PM वाली, नीचे सपोर्ट था, सपोर्ट ले लिया प्राइस ने ऑलरेडी। एक 830 पर अपडेट है, वो एक इम्पैक्ट डालेगा प्राइस पर।
Plans to invest $100 billion this year. Plus, investors raise bets on more UK rate cuts after the Bank of England downgrades its growth forecast. We bring you our interview with the Governor, Andrew Bailey. We have the earnings crossing from the Spanish lender Sabadell, and it's a beat on net income coming in the fourth quarter at 532 million euros. The estimates had been for 428 million, so a solid beat in terms of net income for the fourth quarter. A key line on return on tangible equity and the projection around 2025 seeing an increase of 14%. An increase of 14% above the estimates of an increase of 13%. This stock, by the way, up around 130% just in the last 12 months. So again, a solid beat when it comes to the net income. The forecast also raised in terms of return on tangible equity above the estimates. They see 2025 cost of risk at about 0.4%. That is a stock to watch at the open, 8 a.m. UK time, given the performance over the last 12 months, a Spanish lender that has performed very well and the earnings coming through with a beat. Let's get to the market story then again, because it was the earnings story that powered European stocks to fresh record highs yesterday, notching gains of more than 1% across the Stock 600. The story today seems to be a bit of wait and hold before you get that key jobless data out of the US, of course. European futures pointing to losses of 0.3%. But again, after the solid gains that came through yesterday, FTSE 100 futures currently pointed by 0.3%. The rate cut from the BOE and the adjustments around the growth forecasts and inflation being digested by these markets. S&P futures pointing lower by 0.1% after gains of around 0.4 yesterday, about 0.5 for the Nasdaq 100 futures. Pointing lower there by 0.1%, with the focus, of course, on Amazon and the forecast around the current quarter disappointing. Let's flip the board and have a look cross asset. Yields currently up around 1 basis points on the benchmark 10-year. That is the focus for the Treasury Secretary of the US. It's not about pressuring the Fed. It's focused on the 10-year and moving that yield lower with increased energy costs, increased energy production, lowering costs around the energy story. That is his focus. And again, saying he wants to see a strong dollar. The pound at 124 so far in the session, just down 0.1% after the weakness of yesterday, given the mixed results that came through from the BOE, at least the mixed messaging, it seems, for some out there, given the changes from the hawks to a dovish position from Catherine Mann. $74 a barrel right now on Brent, currently up 0.4% on oil, gold at 2,861. Let's have a look at the Asian markets, where the tech story is front and centre. Deutsche Bank putting out a note saying that investors will have to move pretty aggressively into Chinese stocks, given the innovation that's happening in AI, the innovation that's happening in electric vehicles. And the HS Tech Index is close to a bull market. In fact, it's added about 50% since September. That gauge currently up 1.2% so far in the session. Mainland stocks also gaining 1.2% on the CSI 300. The benchmark across Asia up, as you can see, about 0.3%. The Nikkei, though, feeling a little bit of pressure. Over in Japan, losses currently of 209 points. Let's get to our conversation then with the US Treasury Secretary, Scott Bessent, saying he favours a strong dollar. He has no plans to alter the government's debt issuance plans. Bessent showing a cautious approach then towards financial markets from an administration that is elsewhere rapidly upending the status quo?
First of all, the strong dollar policy is completely intact with President Trump. And I was very happy at his Economic Club of New York speech in August when he reemphasized the importance of maintaining the dollar reserve currency status.
OK, let's get more with Bloomberg's Mark Cranfield from our MLive team. Mark, how are bond traders then reacting to Besant's comments on the dollar and yields? He seems to be walking back some of his previous criticism around the issuance at the front end.
Generally speaking, there's quite a bit of relief about what we've heard so far from Mr. Besant. They're particularly happy to hear that he's got no big plans to change the quarterly refunding issue for now. There was some concern once the new president came in that there will be higher issuance of long-term bonds, that generally the US Treasury will be looking for ways to fund the expansion, particularly some of the lost revenue they may get from taxation or other measures they're trying to do. They'd need to issue more bonds. That doesn't appear to be the case for now. He's saying that there's no need, especially to do anything with the long end. That's music to the ears of the bond market. They're happy to hear that. There will still be plenty of issuance in the short end. So what we are seeing is a flattening of the yield curve. That's been the major theme for the past few days. That's continuing to happen. We've seen a revival in interest in the 30-year sector, for example, in the Treasury curve. Now, there's not so much that he can actually do about pushing. He would like 10-year yields down lower. Most presidents and most Treasury secretaries would. But actually, a lot of it is out of their hands unless they're able to conjure up a fiscal surplus, which doesn't appear to be on the cards for now. In fact, that's the one thing that investors would like to hear more from Mr. Besant, is how is he going to address the current deficit in the US on the fiscal side and the current account side. Those are problems for the medium term. For now, though, investors are relatively reassured that he's not playing around with the quarterly refunding.
Mark, when it comes to the jobs data out later today, it's the big print of the day, of course. Markets currently pricing in about 42 basis points of additional cuts by the Fed by the end of this year. What are you going to be scrutinising when it comes to the jobs data and how that informs our understanding of the next steps for the Fed?
This is a complex one today because there's going to be a lot of revisions. So people may be spending so much time going through the revisions to previous data that the net effect on the market may actually not be that great because it'd be hard to get a substantial picture. Bloomberg Economics thinks that overall, once you digest all of the changes, there'll be fewer people employed, that in general, the revisions will be to the downside. Probably at the end of the day, that the thing that really matters the most is the unemployment rate itself. It's expected to stay at 4.1%, which is still a very strong situation for the jobs market. Probably soon after the data comes out, people already will be looking ahead to next week's CPI inflation report. That one is probably more significant because overall, that's what the Fed is concerned about. That's where people are thinking there could be an uptick in inflation again as the new policies from the White House come through. So that probably carries more weight. In the meantime, we've got a lot to digest from the payrolls today.
OK, Bloomberg's Mark Cranfield from our MLive team with the setup there as we lead up to the job sprint out of the US today. And then, of course, inflation data, as he says, arguably more important next week. Meanwhile, Besant says he, the Treasury Secretary, of course, personally vetted the Treasury employees on Elon Musk's government efficiency team. The US Treasury Secretary says those members will have limited access to federal payment data.
There is no tinkering with the system. They are on read-only. They are looking. They can make no changes. It is an operational program to suggest improvement. So we make 1.3 billion payments a year. And this is two employees who are working with a group of long-standing employees.
OK, from the US Treasury Secretary to the Bank of England right now, which, of course, has warned that inflation will rise sharply this year and has downgraded its UK growth forecast. The bank cut rates by another 25 basis points, as expected, of course, yesterday, with two MPC members voting for a bumper cut. That was not expected. It also added the word careful to describe its approach to future cuts. But Governor Andrew Bailey warned against reading too much into that.
It's meant to say, look, there is more uncertainty. Don't take from that a particular directional message, other than I still think the path is down.
Yep.
But the world is more uncertain.
Let's bring our UK correspondent Lizzie Burden, of course, was outside the Bank of England yesterday and assessing and reporting on all of this for us. Was it mixed messages from the Bank of England? How have traders been reacting to what we've been hearing and that decision around the vote?
Yeah, mixed signals is definitely how I would summarise this. The decision itself was what we expected, but the vote split was not. You actually had two members wanting to do things by halves. Swati Dhingra, we know, is the archdove of the committee, but Catherine Mann, to go from the archhawk to joining Swati Dhingra, that was a shock to many. Except, I will say, the Markets Today Live blog, the eagle-eyed watchers there know that Catherine Mann is an activist at heart. But look, markets initially took this as a dovish cut, and then we heard Guy Johnson talking to the governor, asking whether that was the right interpretation, and notably the governor kind of saying that this is not a signal, the vote split in itself. Notably, where previously they had used the word gradual, as you say, they've added the word careful to that. So the question now is whether March is going to be a live meeting for a cut, if they're going to speed up past this quarterly cadence of cuts. Markets were, as you say, confused by the signals. At first they added to easing bets, then they came back to just over 2 cuts this year. You had long-term government borrowing costs actually up by the end of the day. So perhaps you could say that Bailey got the market right where he wanted it by the end.
Meanwhile, not so much of a gift for the Chancellor. In fact, some pretty dire warnings around both growth and inflation. You put the two together and this looks like a stagflationary forecast from the Bank of England. This is bad news for the UK Chancellor.
Yeah, kind words, but cruel forecasts for Rachel Reeves, this. The governor saying that he's very supportive, he strongly agrees with her plans to boost growth. And indeed, the cut itself is a boon to the Chancellor. But the bank, as you say, also halving its growth forecast and raising its inflation forecast, which they now see peaking at 3.7% later this year. So it's difficult for Reeves because growth, of course, is the government's top priority. She announced this raft of measures last week to boost the economy, but they won't take effect for decades. And in fact, this rise in the payroll tax in her October budget has, it seems, weighed on the growth outlook in part. It's not just that, but it is a part. And the BOE kind of pointed the finger at the public sector because money's been injected into the NHS, but the plan to overhaul it has been delayed, and they're saying that perhaps that could be part of the productivity problem. Now, Reeves herself said she isn't satisfied with these forecasts. But it's important because, yes, it's up to the Office for Budget Responsibility to decide her headroom, but it suggests if growth is like the BOE says it is when the OBR comes to its decision, she's going to have to make that difficult choice between spending cuts, tax rises or breaking her fiscal rules.
UK correspondent Lizzie Burden, thank you very much indeed. Let's get to the tech sector right now, because the major corporate right now, in terms of how we think about the spending, the demand and potentially a drag on US tech stocks today, is Amazon. Shares falling in late trade after a weak outlook in its latest results. The e-commerce giant warning investors that it could face capacity constraints in its cloud computing division. That's despite plans to invest some $100 billion this year in AI. Here's Amazon CEO Andy Jassy on the AI outlook for the business.
AI represents for sure the biggest opportunity since cloud and probably the biggest technology shift and opportunity in business since the internet. And so I think that both our business, our customers, and shareholders will be happy medium to long term that we're pursuing the capital opportunity and the business opportunity in AI.
OK, join me now is Matt Bloxham from Bloomberg Intelligence. Matt, what did investors not like? Because on one level, this is a nice problem to have. They have so much demand, yet they can't meet it.
Yeah, it is. And I think it's a little bit of the fickle nature of the markets at the moment. And they've got used to Amazon and all these big tech companies beating and raising. And now we have a beat and or just about in line with expectations for the next quarter. But as you say, I think it's a good balance of problems. It's not a demand problem. It's a supply problem. But it's one that they don't expect to change until the second half of 2025. So we may have another couple of quarters of good growth. Their cloud business is growing at 19% year on year, and it's the biggest cloud business out there. So it's not too shabby. But there may be some lumpiness in that number until we hit the second half, when perhaps that's going to unleash a wave of new supply across the markets and boost revenue again.
OK, so we look to the second half to see maybe some clarity on that front. How does Amazon's strategy around AI differ from its rivals?
Yeah, I mean, I think if you kind of line Amazon up against any of the rivals, there's some similarity there, but Amazon's kind of all-encompassing. They described it, Ali Jassy described it yesterday as he wants to be the AI supermarket. So whatever your flavour of AI is as a company, whether you want to build your own models and you just need the chips and the technology, they can provide that. If you want to use other people's models, you can add that on top, and they've even got DeepSeek into that portfolio now. Or if you want the kind of whole thing wrapped up and you want to just pick agents off the shelf, Amazon's got its own agents. They've got other agents there, so you can kind of get a full end-to-end service. And I think that's quite unique compared to what all of the other players are doing. So, and that's always been their kind of philosophy, I think, on the cloud business. So that's what sets them apart. And I think they're going to be in a really good position to continue to be the kind of the dominant force in that cloud and AI market into the future.
OK, Matt Bloxham of Bloomberg Intelligence with an excellent breakdown, of course, of the earnings coming through from Amazon and their slightly differentiated strategy when it comes to AI. Coming up, President Trump doubles down on his controversial Gaza proposal, as well as his opposition to the International Criminal Court. We have the details next. This is Bloomberg. Welcome back. Now, President Trump has authorized sanctions on International Criminal Court officials who investigate the US and its allies. That's after the court issued arrest warrants against Israel's Benjamin Netanyahu late last year over the campaign in Gaza. Meanwhile, the president has doubled down on his vision for the Strip, reaffirming he wants the US to take control of Gaza. Horizon's Middle East and Africa anchor Jemana Pasechi joins me now for the latest. Jemana, this is a president who is not backing down from possibly one of the most controversial geopolitical policies that he has in his armory.
Yeah, that's right. And you say it, Tom. In the past couple of days, even his aides tried to dial back some of the language that came through from Trump at that press conference a couple of days ago. But last night, he put out a post on Truth Social where he did double down on those comments vis-a-vis taking ownership of Gaza. He said, and this was in the Truth Social post, the Gaza Strip will be turned over to the United States by Israel at the conclusion of fighting once Palestinians had already been resettled. He said that the U.S. would then work with development teams from all around the world to slowly begin the reconstruction of what would become, in his language, one of the greatest developments of its kind. But he also added no soldiers by the U.S. would be needed. And of course, this is echoing some of the comments that came through from the Secretary of State, Marco Rubio, who said that any transfer of Gazans would be temporary. The press secretary also saying that there was no plan to actually send U.S. troops to the ground. Now, of course, the initial announcement was somewhat of a diplomatic earthquake throughout the region and throughout the international community on several grounds. Number one, it undermines the notion of a two-state solution between Israel and Palestine. A forcible displacement of Palestinians contravenes international law, and in fact, it is a crime under the ICC's governing Rome Statute. And then the third point is that it also undermines and doesn't take into consideration what many Arab nations have been saying and repeating, which is that they do not want to take on more Palestinian refugees. So, yes, it has set off a domino effect in the region, and many of the big names from Egypt to Jordan are saying that this is a proposal that is essentially dead on arrival. Alternatively, in Israel, it has actually been met by several members of the Israeli cabinet, including those on the far right, who have welcomed this announcement. And in fact, the Israeli Defense Minister, Israel Katz, said he has now instructed the military to formulate a plan for Palestinians to leave Gaza, which, of course, has been ravaged by more than 14 months of war. So, yes, the plan doesn't appear to be going anywhere from Trump's perspective.
Okay, and you mentioned the ICC, the International Criminal Court. It doesn't seem like President Trump has much affiliation with the ICC. The US is not a signatory, of course, but now he comes through with an executive order. What is the consequence? What is the impact, potentially, of that decision?
Yeah, it's important to emphasize here that the U.S. isn't technically part of the ICC. It doesn't recognize the ICC. But the announcement yesterday from President Trump is also significant. It's symbolic because he is now issuing sanctions against the key officials involved in issuing that arrest warrant against the Prime Minister Benjamin Netanyahu. Now, you remember back in November, the ICC ruled that not just the Israeli Prime Minister, but also the former Defense Minister, Yoav Gallant, had been involved in what they said were crimes against humanity over their military response in Gaza. And Netanyahu subsequently accused the court of anti-Semitism. But Trump has now struck back with this executive order, applying sanctions on some of those key officials, which bars them from entry into the United States and from purchasing property and assets. And I should also just mention that the U.S. has somewhat of a checkered past with the ICC to begin with. In Trump's first term, he labeled them a, quote, kangaroo court once they launched an investigation into U.S. practices in Afghanistan. So there's a whole lot of history behind this, but ultimately it just reinforces the fact that U.S. and Israel's strategic priorities seem to be allied in the region.
Okay, an important update then on that front from our Horizons Middle East and Africa anchor, Jumana Pasechi. Jumana, thank you. Switching focus, in the next couple of minutes, we are going to be focused on European companies that are struggling to access proper funding to grow. Many are choosing to list in the US. That is the subject of your big take today. We bring you the details later this hour. This is Bloomberg.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Yes, impact will be negative, but compared with other major trade partners of the United States, we are better positioned and we are vaccinated earlier. The U.S. strong restriction of tech transport to China, especially semiconductor, in last couple of years, actually make us, our businessmen, to expedite the deployment of the production base from China, outside of China to other areas. So China Plus One policy has started quite earlier.
Vaccinated against tariffs. The governor of the Bank of Korea speaking to us exclusively about how that country is thinking about potential tariff impacts from the Trump administration. Welcome back to Bloomberg Daybreak Europe. Other stories now to bring your attention. Donald Trump has outlined plans for sweeping tax changes, including, interestingly, ending the carried interest tax break used by private equity and expanding the state and local tax deduction, also known as SALT. The carried interest tax break allows private equity managers to pay lower rates on their earnings from investments. The tax change was not one mentioned on the campaign trail. President Trump, meanwhile, has also held a meeting with the CEO of US Steel at the White House amid growing questions over the company's future. The meeting comes before Trump is due to welcome Japanese Prime Minister Shigeru Ishiba. Former President Joe Biden blocked Nippon Steel's takeover bid, and Trump has also said he's opposed to a deal. South African President Cyril Ramaphosa says his nation will not be bullied, using his State of the Nation address to decry the rise of nationalism and protectionism. Ramaphosa spoke after US Secretary of State Marco Rubio said he would not attend the G20 summit in Johannesburg this month. Earlier this week, President Trump falsely accused South African authorities of seizing private land.
We will not be deterred. We are, as South Africans, a resilient people, and we will not be bullied.
Coming up, European companies struggling to access proper funding to grow, with many choosing to take their listings across the Atlantic. That is the subject of our big take today. That story coming up next. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Good morning. This is Bloomberg Daybreak Europe. Happy Friday, everyone. I'm Tom McKenzie in London. These are the stories that set your agenda. Treasury Secretary Scott Bessent tells us he backs a strong dollar as he looks to project a sense of stability in US economic policy. Investors watch today's key jobs data from the world's largest economy. Amazon falls post-market after sales forecasts fail to deliver. The CEO warns its cloud computing business can't keep up with AI demand, despite plans to invest $100 billion this year. Plus, investors raise bets on more UK rate cuts after the Bank of England downgrades its growth forecast. So we keep an eye on gilts when they start trading at 8 a.m. UK time. In the meantime, earnings coming through from Denmark's largest lender, Danske Bank, seeing and forecasting 2025 in terms of net income 21 to 23 billion Danish kroner. At the high end, that is well above the estimates of 20 billion kroner. So in terms of the forecast and the outlook for 2025, which we know is crucial for investors, coming in above estimates. We know the share buyback plan is going to be scrutinised as well. They see share buyback plan of around 5 billion Danish kroner. The stock, by the way, is up about 26% over the last 12 months. I want to get the line on net interest income. Net income, by the way, in terms of the fourth quarter, coming in with a beat. It's a beat on net income for the fourth quarter for Danske Bank, 6 billion Danish kroner. And on net interest income, also a beat, 9.2 billion Danish kroner. The estimates have been for 9 billion. So atop the line in terms of net income, net interest income, and the outlook for 2025, pretty decent numbers coming through from Danske Bank. Again, a stock that's also performed relatively decently in the last 12 months, up about 26%. We're going to speak with Danske Bank's CEO at 8:45 a.m. UK time. And it was the earnings story in Europe that powered fresh record highs yesterday. As we check the markets, you're seeing a bit of a pause, a bit of a wait and hold as we await, of course, the jobs data out of the US. But reflecting on the fact that you got gains of more than 1%, 1.2% yesterday across European stocks, and a lot of that was down to the earnings story. Today, futures are pointing lower in Europe by 0.3%. The FTSE 100 here in the UK down 0.3 as well, looking to lose 27 points. S&P futures softer by 0.2% after the gains of around 0.4 yesterday. NASDAQ 100 futures down by 34 points, and the drag could come through from Amazon given the disappointment around the current outlook for the current quarter. Let's flip the board and have a look cross-asset. We had Scott Bessent telling Bloomberg that he's focused, of course, on the 10-year yield, and he wants to see strong dollar. 4.44 right now on the 10-year. Relative stability across the Treasury curve as we wait for the jobs data, with a print expected of around 175,000 for the month of January. The pound, softer again today after dropping yesterday, down 0.1%. The Bank of England sending some mixed signals after that cut yesterday. 124 on the pound, $74 a barrel on Brent, up 0.6%. Oil prices higher. Gold also eking out further gains, up 0.2%. We check the Asian markets as well for you. The gains that have come through on the HS Tech Index, which was closing in bull market territory, have eased in the session as we get closer to the close this Friday in Hong Kong. Currently, the HS Tech Index up 1.2%. You had seen gains of more than 2% prior. Deutsche Bank analysts, though, say money will move in to Chinese stocks on EVs and AI innovation. CSI 300 on the mainland currently posting gains of 0.7% across the benchmark on the region, gains of 0.1%. The Nikkei, though, down in Japan by 0.7%. The Japanese Prime Minister meeting with President Trump later today. Time now for your Bloomberg Big Take. UK payments firm Zilch is weighing listing in the US instead of here in its hometown of London. That would put it in the growing ranks, of course, of European companies chasing higher valuations in New York, attracted by its deep financial pools. Joining me now is Bloomberg's J.P. Barnett. JP, this isn't just about zilch. This is about a number of companies across Europe, startups, looking for deeper capital markets outside of Europe. It's not just a London story. It's a Frankfurt story. It's a Paris story. This is an issue for European regulators. What is so different right now, JP?
Good morning. And I would say it goes even beyond the startups and goes into European bellwethers and established companies. The big difference is that the crisis of European capital markets and its decline has become kind of an existential threat. That we don't have a Google and we don't have an Amazon is well known for the past decade. But there's a trend emerging over the last couple of years, not only that we are losing 300 billion in money that has been invested in Europe before, but also more and more companies, new ones and established ones, that have the strong feeling that they can't grow in Europe as much as they can grow in the US. And there's some good evidence to it. If you just look at the rare chip startups or companies that we have in Europe, like ASML, where you see the US depository receipts are traded much, much more than their original shares here in Europe. And it speaks to a market that is really struggling to provide that liquidity and that valuation. You have companies like Germany's Linde, who moved its listing, or even last year when the software maker SAP gained to a record. The headlines were not hey, this is great, we have a tech company that is doing well. The headlines in Germany were oh, when will the time come that SAP thinks about leaving Germany and leaving the DAX and go to New York? So overall, it has become a topic that goes beyond mega cap and goes beyond just IPOs and innovation. It goes very deep into the markets. It has become a threat to Europe. The companies have the feeling this is not the place to grow, that's not the place to be, and they move elsewhere.
Yeah, so look, as you say, partly it's a sentiment story as well as the mechanics of these markets. So what is the fix, JP? What are regulators looking at to change that dynamic?
Well, there are a couple of things that need to be done, and preferably yesterday and not tomorrow. The first thing is that regulators are working on what's called a consolidated tape. So that means that we have a bigger market, bigger overview of liquidity. Because if you look at Europe, you have 30 exchanges, a dozen clearing houses, compared to the US, very slim and very streamlined infrastructure. So that needs to be consolidated so that people have a better idea where liquidity is and easier to execute big trades. That's one thing. The other thing they're working on is making listing of companies easier so that you remove the bureaucracy, lots of paperwork, and give companies a chance to go to the stock market, maybe even a little bit earlier and get into that raising money. And then overall, I would say and that's probably the biggest issue, you need to change the sentiment. You need to have the broader public have a feeling that the stock market is not a casino, that it's a good thing to invest for retirement, to create wealth, that there are good opportunities in Europe and not just in the US. You need to change that sentiment within the C-suite of corporations, that they feel Europe is a good place to list a company. We can grow it here. We have valuation. We have support. And that's something that needs changing. We're working on it. Is it too little, too late? Time will tell. But the gap to the US market is pretty big, and it will take some time to close it, not to speak about being on par with them ever.
Yeah, yes, with an aspiration
sounds a bit depressing,
maybe for the decades. It does a little, JP, but look, European stocks are at record highs, so let's see if they can change that dynamic. Jan Patrick Barnett, a fantastic breakdown of today's big take, which I really encourage you to read, of course, on the Bloomberg terminal and on Bloomberg.com. Now, corporate leaders in Germany say there's an urgent need for the next government to turn the country around. It ties into the big take, of course, and get Europe's largest economy growing again. The CEOs of Commerzbank, RWE and Bilfinger spoke to me at a roundtable event in Frankfurt yesterday. Let's get a sense of what they had to say.
There's hope that if we have a stable government after the election, that we will quickly see a shift in sentiment.
I've never experienced that the sense of urgency is that high. So there is really the pressure to change. So I'm optimistic that it's going to be addressed.
We think actually in the next few years, German industry will perform better based on having that pressure at the moment. But the short-term view is not positive.
We are unfortunately a country of savers and not investors, and we need to change that.
I would not see it as a threat. I mean, it's probably a start of a negotiation. So be prepared, and we have seen what happens with Canada and Mexico. They were prepared to counteract, and then you start the negotiations.
Markus Kräber, Bettina Orlopp and Thomas Scholz speaking to me yesterday in Frankfurt. Staying on Germany right now, Porsche has warned that it will take an €800 million hit this year as it revamps its lineup. The sports car maker is pulling back EVs, saying demand has been underwhelming. Instead, it's adding more combustion engine models and plug-in hybrids. But that means its already disappointing profit margins will be at the lower end of its forecast. Back to the US, where Treasury Secretary Scott Bessent has defended President Trump's new tariffs on China, saying they're only designed to ensure fair trade. Bessent dismissed concerns the levies will be inflationary for the US, telling Bloomberg that China will pay the higher price.
China is the most unbalanced economy in the history of the world, and they are in a deep recession right now. They're experiencing deflation, and they're trying to export their way out of that. And we can't allow that. We want fair trade, and part of that is taking a strong position on the currency and the terms of trade.
But what about the inflation concerns that are stemming from the tariffs and tariff threats?
Look, I'm not sure that where this narrative that tariffs for the country putting on the tariffs is inflationary, that we could have a small one-time price adjustment, that as we saw in Trump 1.0, that the deregulation and the other policies, we stayed right around the Fed's target level. So I'm unconcerned about that. I think especially that China now, given all their excess capacity, will, no matter the level of the tariffs, will end up eating quite a bit.
There's a lot of uncertainty around tariffs. We see them threatened or signaled, and then they're taken back. It appears as if this administration might be unfriendly to businesses. Is that right?
I think it's just the opposite. I think this is the most pro-business administration in history. And everything we are doing is going to increase the after-tax return on capital. And as a result, working Americans will have very high real wage growth. That what we've seen over the past 4 years is the government and government-adjacent sectors providing the employment growth. And why have we experienced this affordability crisis? First, there was a massive spending met by increased regulation, which caused inflation. And then government and government-adjacent jobs do not cause real wage growth because they move up at CPI. So, I think that we are going to not only be business friendly, but very, very friendly for working Americans.
US Treasury Secretary Scott Bessent speaking to Bloomberg's Saleha Mohsin. Now, coming up, medical tech startup Robotti raises $28 million to develop its neurosurgical microbots. We're going to talk brain surgery with the company's co-founder. That is next. This is Bloomberg. Welcome back. Happy Friday. Just taking a pulse check right now of the HS Tech Index over in Hong Kong, which is closing in on a bull market, adding around 45% in terms of the upside that's come through since September, up 1.5% in the session. And Deutsche Bank's analysts saying that the innovation around DeepSeek and the innovation around EVs in China is underappreciated. Investors internationally will need to get exposure to that story. That is the analysis coming through from Deutsche Bank and that analysts. And that note is spinning around social media circles in China. So that's a pulse check of the tech story over in China, listed, of course, in Hong Kong. So from the software of DeepSeek and the hardware of EVs in China to the hardware developments in Europe, because the medical technology startup Robotti says it's raised $28 million in its latest funding round. It's based in Paris. The company makes neurosurgical microbots the size of a grain of rice. You can see them on the screen, which it says will transform how brains are treated. Its backers include Plural, Cherry Ventures and Kindred Ventures. Joining me now, very pleased to say, from Paris is the co-founder and COO, Joanna Cartocci. Joanna, thanks so much for the time. Just talk us through what this hardware and what these robots can potentially do and what the go-to-market strategy is for the business.
Yes. Hi, Tom. Thanks for having me. So Robote is developing a neurosurgical microrobot to diagnose, treat, and monitor the brain. So today, brain intervention is quite invasive, and so to be able to change the way we minimally invasively dialogue with the brain, to diagnose, treat, and monitor by attaching different extensions to the microrobot is our main goal. So today we're in preclinical stages, and the first application that we are going for is tumor advanced biopsy to be able to understand what's going on locally in the brain. And the beauty of a microrobot is it can move non-linearly through the brain tissue, not in the blood, to address different pathological areas. And so we're starting with tumor biopsy, and then afterwards we're going to deliver the treatment right exactly where it needs to go in the brain.
Okay, so what is the time frame around that? You start with a biopsy. What's the time frame, and what are the regulatory hurdles that you need? Are regulators open to this idea of robots crawling around in our brains?
Well, regulators are very familiar with the limitations of current standards of surgical tools, and so they are very welcoming. We've had multiple conversations with the FDA, early conversations with European regulators also, and there's real appetite for change in this space. There are 1 billion people affected by brain disease. That's 1 in 8 of us. So stakes are very high, and today very little works in the brain. It's not like other organs where, access isn't a real problem. Here, you can't just take an extra slice. If you do that, you might be taking away the patient's ability to speak, to walk, to recognize their loved ones. So precision is a very, very key element, and microrobots will be able to do just that. Of course, we're working with them, with regulators, both in the US and Europe. Closely.
Okay, and when do you expect patients could benefit from this?
Yeah, so we see our first application, so tumor biopsy in the ORs by 2028, and then drug delivery by 2030.
Okay, so drug delivery is another function of these robots, potentially, in the years to come.
Absolutely.
Joanna, talk to us about the importance of the US market. Is the US market your primary market at this point?
Yes, it definitely is. Europe comes with some more regulatory constraints for the category of devices that we're developing, so a class 3 device. And generally, even as a market, the US is a lot larger. It's a more important market in terms of volume. Today, 10% of surgeries, I'd say even higher, around 15% of surgeries are robotically assisted in the US, where it's 3% in the rest of the world. So we have some catching up to do in Europe in terms of adoption of innovative devices. So we'll definitely start from the US, but keep in mind that we do want to be able to treat European patients as well, and we're building a global company. The stakes, as I was saying, are very high, and we were born in Europe, and we want to be able to bring this technology back to European patients too.
Is Europe conducive to that, Joanna? You talk about the importance of the US market, the lead they have in automating some of these surgeries versus Europe. We've discussed at length the challenges around raising long-term capital in Europe, the challenges around listing.
गाइस लग रहा है क्रूड ऑयल म्यूट हो गया बिल्कुल, कुछ मोमेंटम ही नहीं हो रहा। देखो इसमें अगर एक वैसे तो वॉल्यूम मुझे लग रहा है गायब ही हो गया बिल्कुल। एक ट्रेड यहाँ पर बाइंग का प्लान करना है तो कर लो। वैसे तो वॉल्यूम दिख रहा है अपने मूविंग एवरेज के भी नीचे जाने की कोशिश कर रहा है। यहाँ पर एक बाइंग का प्लान कर लो, ठीक है। क्रूड ऑयल में वॉल्यूम आएगा नहीं आएगा इसका मैं कह नहीं सकता, बट कैंडल को देख के तो बिल्कुल नहीं लग रहा वॉल्यूम। फॉरेक्स में है थोड़ा बहुत, MCX में 0 ही जैसा हो गया। कि क्रूड में एक बाइंग का प्लान कर सकते हैं, बाकी तो वॉल्यूम है ही नहीं, तो कुछ खास मैं इसमें कहूँगा नहीं अब। वॉल्यूम का ही है, थोड़ा सा अटक जैसा गया मार्केट। फेड की मॉनेटरी पॉलिसी का भी कुछ पता नहीं है कब तक आएगी। थोड़ा सा रिस्क रिवॉर्ड इतना अच्छा बन नहीं रहा है यहाँ पे, बट यही बनेगा ट्रेड। इतना एसएल तो रखना ही पड़ेगा एटलीस्ट। $15 पॉइंट का एसएल तो रखना ही पड़ेगा। ठीक है, ये एक ट्रेड बन रहा है इसमें, नथिंग एल्स। बाकी नेचुरल गैस में कुछ नहीं है, वो वही एफईजी पे ही रुका हुआ है। ऊपर आएगा, ऊपर एक रेजिस्टेंस है, नीचे सपोर्ट है। एफईजी पर ही फंस गया पूरा। तो 22 पॉइंट का समथिंग कुछ बनेगा। सोलह पॉइंट का कर दो, 1:3 बन जाएगा। टेस्ला एंड एनवीडिया 15 मिनट में एनी ट्रेड लेवल नहीं बनाए उसमें. नो लेवल्स इन टेस्ला एंड एनवीडिया, सो देयर इज नो ट्रेड. जैसे गिरा मैंने बाई किया एंड सेट 20 पॉइंट एस एल हिट हो गया. इस ऐसे मेरे साथ 5 बार हुआ है. 100 पिप्स का लॉस हो गया. फाइनली लास्ट एंट्री वाज 21,600 विद 20 एसएल था. वो चल रहा है, प्रॉफिट में हूँ. कॉस्ट टू कॉस्ट रख दिया है 21,600. देख लेते हैं एक बार. फिलहाल देखोगे तो ये कल के सपोर्ट पर ही पड़ा हुआ है प्राइस. कल पूरा ही साइड में चला गया था इस जोन पे. आज अभी अर्ली मॉर्निंग ओपन हुआ है, उसके बाद थोड़ी वॉलेटिलिटी में है नीचे. कल का सपोर्ट है, अभी वीक हो जाना चाहिए अगर हायर हाई नहीं बनता है तो. इसमें आप प्रॉफिट बुक कर लो अगर बाइंग में हो तो. अगर ये गलती से वापस नीचे आया ना, प्राइस एक्शन अच्छा नहीं है फिर. ये बन गया तो अगर बड़ा एफईजी है यहाँ पे. निकलना पड़ेगा एफईजी के ऊपर 21,800, तभी ज़्यादा पॉजिटिव होगा, नहीं तो रिजेक्शन मिलने के चांसेस हैं. केस भी साइडवेज ही हो गया उसी एफईजी पे. या तो ऊपर ही जाए या फिर नीचे आ जाए थोड़ा सा. दोनों ही नहीं हो रहे. यहाँ पर एक ट्रेड और बनता है तो नेचुरल गैस में भी ना. लेट्स सी. क्योंकि बाइंग में भी अभी तक निकले नहीं है बायर यहाँ से कम्प्लीटली. ये कैंडल थोड़ा सा अगर एक हाई बना के आ जाए 297 का, फिर नीचे क्लोज हो, तब एक सेलिंग का प्लान देखा जाएगा इसमें, अगर बनता है इस तरह का फॉर्मेशन इन 15 मिनट टाइम फ्रेम. कल दिल्ली इलेक्शन के रिजल्ट्स आएंगे. डोंट फॉरगेट टू ज्वाइन टुमारो मॉर्निंग लाइव सेशन, इलेक्शन अपडेट. देखेंगे किस तरह से कौन सी पार्टी इस बार जीतती है दिल्ली में, न्यू दिल्ली असेंबली इलेक्शन. करते रहो guys. Don't forget to like this stream. जिन लोगों ने like नहीं किया इस stream को अभी तक.
As a result of tariffs, and there's some areas where we think there's some challenges. So let me start by saying that about half of our business we manufacture ourselves in our manufacturing footprint. The largest part of our U.S. business is manufactured in the United States, and we believe that if tariffs go into effect on those categories where we have competitively advantaged, we are already starting to talk to retailers about shifting promotions, shifting shelf space to some of our U.S. Manufactured product categories, and we think that's a tailwind for us. At the same time, we have some business that we are sourcing from outside the U.S. where we have potential tariff headwinds. Particularly on China, we've been working over the last several years to reduce our exposure to China manufacturing. Several years ago, about 35% of our business was imported from China to the U.S. That, as of today, is down to about 15%. And we expect that 15% of imports from China to the U.S. to be at 10% by the end of this year. Likewise, from Mexico, we think imports from Mexico represent about 5% of our cost of goods sold base. But we think we've got optionality in our supply chain and through productivity and pricing initiatives to largely offset that impact. So we think we've got opportunity in some of our businesses for tailwinds and some of our businesses for headwinds. It's too hard to predict at this moment what the net of that is. And so relative to the guidance that we shared this morning, we said that we did not guess where U.S. trade policy was going to land. We provided guidance without assuming any positive or negative from tariffs.
What does that tell us then about the timing just in terms of getting back to that top line growth?
So what we've said is this year our guidance for core sales growth is -2% to +1% for 2025. And we expect in the first half of the year to be down low single digits. We expect in the back half of 2025 for the company to return to core sales growth. Importantly, we've returned our most profitable segment, which is our learning and development segment, already to core sales growth during 2024. We've returned our international business in total, which is about 40% of our business, to core sales growth, and we expect those two businesses to continue. Our home and commercial segment, which is our second largest segment from a profit standpoint, we expect to return to core sales growth in the back half of this year. And then the outdoor and rec segment, which is our smallest segment, we expect to return to core sales growth in 2026.
All right, Chris Peterson, we always appreciate you taking the time. Thanks so much for joining us here, CEO of Newell Brands.
Thank you.
Keep right here on Yahoo Finance. Much more of your market action ahead. You're watching Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks lower after consumer sentiment data falls to its lowest level since November 2023. Amazon shares lower after issuing softer than expected guidance, saying it expects a, quote, unusually large unfavorable impact from foreign exchange rates. Company also announcing a massive $100 billion CapEx spend for 2025. And Pinterest shares, they're surging after the company reported its first ever billion-dollar quarter. Several analysts boosting their price targets on the stock. Jefferies citing artificial intelligence as the next catalyst for Pinterest. Elf Beauty shares tumbling. That's after cutting its net sales and profit forecasts. The company expects weak demand in the broad beauty category for the start of the year. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the session.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, the tools, the tips, and the tricks that you need to grow your money. Hey, on today's show, the January jobs report that came out this morning. We'll analyze which sectors have hired and what it means for job seekers out there. And upscaling the workforce will bring you the tips and tricks to gain new skills and build wealth. Plus, we break down some of the economics of the Super Bowl, from snack prices at home and at-home spending and viewership expectations there. You don't want to miss any of it. We've got it fully covered here for you. The U.S., though, added fewer jobs than expected in January, 143,000 jobs added. Meanwhile, unemployment ticked lower unexpectedly to 4%. That's a good thing. And wage growth higher to 4.1%. So let's just break this all down and synthesize it. What does it all mean for the job seekers out there? And for that, we've got Julia Pollack, who is the chief economist at ZipRecruiter. Julia, great to have you back on the program with us. Just want to get your read-through from today's jobs print.
So the big takeaway is that the labor market tightened. Unemployment at 4% is good news for job seekers. It's usually the sort of magical threshold below which participation increases because employers are under pressure and they have to increase wages and improve benefits and improve working conditions.
And so among the sectors where we did see the most job gains versus those that actually retracted a little bit, is there anything from your seat that either is different from the data that you're seeing at ZipRecruiter or runs in line with it?
No, this report very much runs in line with what we're seeing, which is that job gains are very uneven. The key driver of job growth is the healthcare sector. Other sectors have shown very spotty growth. We now know after the revisions in this report that the tech sector has been losing jobs for over a year. Professional and business services, very weak. The production sector in a total snowy freeze, a meltdown. Nothing's happening there under the weight of very high interest rates. And so if you're struggling to find a job, it's not you. It's that we have a very strange, uneven labor market right now. And if you really want to get work, you may have to pivot and go into healthcare.
That's so interesting. And one of the things that's become known recently is these ghost jobs, as they've been called, listings with no intention of being filled. How are you kind of looking through where that could have larger impacts, more long-term perhaps, on the labor force participation?
So most jobs that are posted and that are highlighted on ZipRecruiter are real because employers are paying real money to advertise those jobs. That said, the word that we hear a lot right now from employers is uncertainty. They're being very cautious, very conservative. They're posting jobs and then they're pulling back and then they're interviewing 20 candidates and then they're thinking about it a little bit longer. So this is a cool market in which there aren't as many doors open to job seekers as is usually the case.
Are there risks right now to the job market, and where are you seeing that pop up? Because we've seen everything from corporations either pulling back on some of the positions that were open or saying, hey, we can't do and matriculate internships even. And so it sounds like for the lower end of the younger generation cohorts that are looking for that entry point, that things could be a little harder at this juncture.
Well, very much in a period called the Great Stay, where firing and hiring are both unusually low. So if you have a job that you love, you're in a great position. You can likely keep it. There's unprecedented job security for those with jobs. But if you're looking to make a switch, if you're unhappy in your job and you want a new one, or if you're a new graduate, this is a tough time. Employers are being very conservative and cautious, and they're not really taking a bet, taking a risk on newcomers.
What does the Great Stay and the implications there mean for job growth more broadly as it pertains to future employment situation prints?
So, that top line employment number, the overall number of payrolls, has been growing at a pretty strong rate and fast enough for the unemployment rate to fall. The funny thing is that we seem to be at a different kind of equilibrium from what's normal in the U.S. Usually we have a very dynamic economy where lots of jobs are being created and lots of jobs are being destroyed at the same time. We almost have shifted to a European-style equilibrium where no one's moving and everyone's staying put. And that may be good for some businesses. They have more predictable staffing. They're not being blindsided by people not showing up on Monday morning and saying, to-do, we've found a better job. That's good for them. It's reducing turnover costs. But maybe it's also sapping our innovation and dynamism a little bit too.
So what would your tips be for those who are looking for jobs, looking to get into a new role in this environment?
Well, there's some good news. So in all of the surveys of employers that have come out recently, including ours at ZipRecruiter, employers overwhelmingly expect to add more workers in the next 6 months than they did in the prior 6 months. And so some doors may be opening. If you're a very entrepreneurial job seeker, now may be the time to start finding those hiring managers and reaching out to them and pitching yourself. It's also a time to set up good job search habits. Make sure that you sign up for email alerts so that you know when an appropriate opportunity is posted and you apply for it right away. Being one of the first applicants really, really improves your chances.
Julia Pollack, great to see you. Thanks so much for joining us again.
Thanks, Brad.
Let's take a look at some of the market action 90 minutes into the trading day. Stocks lower to end the week following a mixed January jobs report. Joining me now, we've got James Reagan, who is the D.A. Davidson Director of Wealth Management Research. You're expecting a meaningful pullback. How can investors prepare for that?
Well, I think we expect some volatility just due to some of the overall fears that are out there on tariffs and how economic growth might progress throughout the year. So we're still constructive on the markets over the course of the year, though. So how we prepare for the expected volatility is just to remain diversified across the sectors. I would say one of the bright spots of the year so far, where the indexes have been higher, are that we're seeing a broadening of the equity participation. So even when the tech sector isn't really contributing, we're still seeing the S&P 500 higher, and we think you can find some opportunities in sectors that are beyond just the technology area. So we're focusing on looking at earnings are so important with high valuation. So sectors that are delivering good earnings and still have reasonable valuations based on the growth rates.
What would the red flags or the warning signs to that pullback, that meaningful pullback that you're talking about, look like?
Well, I think to us the big risk, and we don't see it forming now, but I mean what we'll be watching for this year is that we do have elevated valuations, especially on a PE basis in the U.S. market. So if we see some erosion in the earnings expectations going forward, where companies become more cautious, that double-digit, 13-14% growth expected this year could be meaningfully lower. That would be the big risk. So that's what we're kind of keeping an eye on as the year progresses. And frankly, it's that's not really materializing at the moment. The fourth quarter earnings season has been better than expected, and I think that's giving some more confidence as we look ahead at 2025.
Are there sectors right now that look like better safe haven plays or better even quality plays right now versus others?
Well, I mean, so as I said before, we are looking at the earnings, we're looking at the growth rate. The four sectors that look attractive to us on a PE relative to the growth rate are still technology, communication services, but then also financials and healthcare. So you get a little bit of balance there. The financials would be tied more to economic growth this year and where interest rates go, whereas healthcare may be a little more contrarian in here. year, good earnings expected, and a reasonable valuation because it kind of lagged the market in 2024.
You know, as we've been hearing from some of the big tech companies who have been the kind of bellwether more largely for not just the AI trade, but also how confident investors can be given the outlooks that if these companies feel comfortable spending, then perhaps that means the rest of the market will also see some of that permeation as well across the board. Is that playing out to the same extent that we expected coming into this earnings season? And what would you be watching for there?
Yeah, I think I think that's an important point. If you just go back a couple weeks ago now, when we had the DeepSeek news out of China, there was a lot of fear, going into earnings of what the big cap tech companies would say about their capital spending. For the most part, those companies have all reported now. Capital spending has not only not been cut, but I would say it's been raised for 2025. So the capital spending picture to support the tech investment looks pretty good. Although when you look at the economic data for the fourth quarter, we saw business investment overall weaker than expected. So I think what we've seen is that some of the money that's going into AI is going away from other enterprise spending out there. So the money's just kind of being reallocated. But there's still, there's big spending going on in the AI space and the data center. And, that I think we did definitely get some confirmation of that over the last 2 weeks as those large companies have reported earnings. Coming
into this week, we had 36% of S&P 500 companies that had reported earnings. And of course, now that we've gotten through the majority of the Mag 7 names, the larger question is, okay, what grade do we feel comfortable giving this earnings season, even well acknowledging that we still have perhaps the biggest bellwether in NVIDIA yet to hear from them at the end of February?
Right. So depending on the grade, that's a good way of looking at it. I would say that the earnings have been kind of a B or maybe a B plus so far. The results have been good. The guidance has been a little more tepid, perhaps. But I think I looked at the FactSet data this morning. I think the earnings estimate now for the blended estimate for who's reported plus what's still to come is close to 16%. And you have had 6 of the Mag 7 reported already. And I was just looking at that. They've contributed about 6 points to that. So you still have 10% earnings growth away from the Mag 7. I guess you could call it the Mag 493. And so I would say that that's been a little bit better than expected. And so it ends 2024 on a high note for earnings. Very aggressive estimates for 2025 as earnings growth is estimated to accelerate from 2024. But I think it gives us a little more confidence that we can at least do double-digit percentage earnings growth in 25. And I think the market is becoming a little bit more comfortable with that after this week's batch of earnings.
James, thanks so much for taking the time here with us today. Really appreciate the insights.
Thanks, Brad. Have a good day.
You too. Time now for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. Joining me now, we've got Market Domination co-host Julie Hyman. First up here, Julie, we got to talk about the brand of the swoosh, formerly Blue Ribbon Sports many, many decades ago. Nike getting downgraded by Citi from buy to neutral. Analysts cited the ongoing headwinds for the athletic apparel company's long-awaited turnaround, including continuing sales pressure, margin headwinds, and the potential escalation of tariff talk between the U.S. and China. And taking a look at shares, they're down right now by about 2%. Citi woke up and chose violence this
Yes, they did. And the shares are actually almost at a 5-year low going back to March of 2020. As you know, there has been a lot of enthusiasm and hope pinned on new CEO Elliott Hill. And Paulo Juez and the team over at Citi saying, your hopes might be misplaced for now. That perhaps after meeting with management, they are not as encouraged about the turnaround, and that there still are a lot of obstacles in place for that turnaround. Among other things, they talk about competition from smaller brands like Hoka that are still coming up. They talk about basically there's inventory problems in the various channels, right? The company trying to rebuild its relationship still with department stores and other wholesale channels, even as they maintain their direct-to-consumer business as well. Yes, there's the tariff wild cards as well. So there's a lot to contend with.
Yeah, absolutely. I mean, it was really striking here, especially how they were calling out the reliance continually on Air Force One, on Dunks, Air Jordan ones as well here, which, of course, for a lot of people, they're looking for newness right now within the shoe category. That's something that we hear brought up often among the analysts. So that'll be interesting to see how the companies respond to that as well. Let's stay in the shoe category.
Let's do it.
Our next trending ticker, Skechers' annual sales and profit forecast, they fell short of expectations. The shoemaker warned of the impact of tariffs on the company's fourth quarter earnings call. Skechers CFO John Vandemore said that the recently announced incremental U.S. tariff on goods from China has impacted our visibility. The company's fourth quarter sales decline in China despite solid growth across the U.S. and Europe here for Skechers.
Yeah, what's interesting to me with Skechers is it's not just the potential for a tariff effect, it's the currency effect now. We've already seen a strengthening dollar, and so that has meant a currency hit to Skechers numbers. And it's one that Vandemore also said could be 15 to 20 cents for the full year. That's part of the reason that we are seeing that forecast that's disappointing. So even if the tariffs are not being implemented, they're having an effect on that dollar sentiment. So a very indirect effect then on Skechers numbers. So kind of interesting. He does talk about that uncertainty related to tariffs, certainly, but I thought the currency thing was really interesting as well, and it's something that a lot of the analysts were talking about. On the flip side, our friend Jay Soul over at UBS, he still likes the stock. He said in a note, a solid opportunity to buy a growth stock. That's the way that he framed it here. And he's looking at some of the numbers, trying to look through the currency effects, and says at base that they still like the company. They said, we believe underlying demand for the products remain robust, and that the company's sales, margin, and earnings will grow much faster than the market expects. So there is still a defender, even as the shares fall by 10%. That one just stood out to me, I guess, amidst many other analysts who are not terribly, happy about that.
A defender, among detractors that are out there and present in the market. You got to imagine that Skechers is just sitting there and saying, wait a minute, what gives? Everybody's going towards the chunky sole shoes now with Hoka. We originally had the chunky sole shoes out there, so we'll see. We'll see if they're able to kind of bounce back.
Do you have any Skechers?
No, I do not. No, I don't have too many chunky sole shoes either, so.
We are a chunky sole shoe. That's really hard to say. A chunky sole shoe household.
I practice in the mirror.
But my husband has many Hokas.
Yeah?
All about the Hokas.
Interesting. Okay.
Yeah.
All right, we got to do a roundup. We'll do a newsroom roundup. Julie, thanks so much.
Shoe survey.
Yes.
Chunky sole shoe survey.
That makes it even harder. Thanks so much. Coming up, the spring selling season just around the corner here. We've got the tips for home buyers looking to take advantage. That's next on Well.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Mortgage rates ticking lower for a third straight week, but still holding near 7% according to the most recent data from Freddie Mac. This, as new data from Redfin shows 17% of homeowners with mortgages have an interest rate of at least 6%, marking the highest share in nearly a decade. Joining me now, we've got Mike Aubrey, who is the Mike Aubrey Group Executive Vice President. Great to have you here with us, Mike. So how are you looking at mortgage rates right now?
You know, I think that the hangover that came after the rates that we saw during the pandemic in the 2.5% to 3% range that we have been seeing since then has started to evaporate a little bit. I think that buyers are starting to see that these rates aren't going away. And if they want to buy a house, they're probably going to have to succumb to what the market's offering right now.
And so with that in mind, how is that kind of impacting the calculus for new versus existing home, as new home buyers are also trying to figure out, okay, where are they going to get the best deal to perhaps even on the new home side offset some of their mortgage rate exposure?
You know, I think that one of the things that we saw during the pandemic, and certainly with the advent of remote work, is that there were places that got really, really big, like Austin, Houston, New Orleans, Tampa. And I think that those spaces right now, as we are starting to see a compression of remote work, are starting to drop in terms of their pricing. So I think that for people who can live there and want to buy there, I think that they're going to see better deals in terms of price points. But some of the stronger bastions in the United States, like New York, Washington, D.C., San Jose, Boston, they continue to appreciate, and I think they're going to continue to appreciate as we go throughout the year. The reality is that, I think the president has said that he would like to see mortgage rates go down, but I think that it has finally occurred to him that that's not going to happen by trying to put pressure on the Fed and changing the federal funds rate.
Yeah, 3% was what he wanted to get it back down to. That's what he campaigned on. And, as we think about the policies now that are going to have to be taken in front of Congress, puts to paper, are there any policies that would bring home prices down?
Well, and maybe I'm being optimistic here, but I think one of the things that might help bring prices down is if we can get rates down. There has been some discussion about creation of a sovereign wealth fund. Now, what that looks like, I don't know that anybody really knows what that looks like, but say that they created a sovereign wealth fund and they started to purchase things like 10-year treasuries, as an example, which there is a linear connection between where the yield on the 10-year treasury is and where mortgage rates are. The same is true that if they created a sovereign wealth fund and they started to buy, say, mortgage-backed securities out of that sovereign wealth fund, they also could create lower rates, which I think in turn would create a stronger housing market.
It's interesting. Okay, and so as you have home buyers who are trying to even go out this weekend perhaps, and they've got their list, they've checked it twice, they've looked through all the specs, where are you seeing that they're finding perhaps the best averages in mortgage rates too? Because this is an average that we were talking about in the 30 and the 15 year. Where are the hot spots where the averages are, the mortgage rates might be below average, or even on the other side above average?
Listen, this is sort of a tough to swallow pill, but I think that looking at adjustable rate mortgages is not a bad place to look right now. Again, using an arm not to buy more house than you can afford, but rather to decrease your exposure to rates. I think that there are some good arms out there right now, specifically 7/1 arms that are non-jumbo money, that I think that you can get well below what market value is.
Mike, just lastly, while we have you here, what are your tips for those who are going out and home buying or home shopping this weekend?
So remember, about a third of houses that were bought last year were bought in cash. To that end, if you are not a cash buyer, then don't get pre-underwritten, but rather get pre-underwritten rather than getting pre-qualified. That means go to a lender, get documented, send everything in that you have so you have a better chance to compete with people who are cash. Remember, inventory remains low. Give yourself a good shot. Basically, hire yourself a broker that does a lot of business in the area so you have an opportunity to see houses that are in private placement that aren't yet on MLS. And the last thing that I would tell you is, this is a contact sport. I think that if you see something that you like, don't be tepid in your actions. Go for it.
Mike, thanks so much for taking the time. Really appreciate it.
Thank you, Brad.
Certainly. The U.S. labor market added 143,000 jobs in January, fewer than analysts were expecting. Several industries saw little change in employment from December. The construction sector added just 4,000 jobs during the month. Joining me now with a closer look, senior reporter Danny Romero. Hey, Danny.
Brad, could the construction hiring slowed down in January? Like you said, in the latest government data, the construction industry added 4,000 jobs in January. And if we compare that to December's level, where the construction sector added 13,000 jobs. Remember, the construction industry is divided into two sections. We have non-residential construction and residential construction jobs. Now, in the latest report, the residential construction sector actually lost 200 jobs in January, and that's because of the high interest rate environment and also the pullback in housing starts. And so some economists are expecting that there will continue to be a pullback in residential construction jobs in the next few quarters, but this could be a benefit for non-residential construction jobs. If we take a look, the average hourly wages for construction workers is up 4.1% on a yearly basis, and contractors are expecting to beef up their staffing levels in the first half of this year. So that's good news for some contract workers that are looking for jobs. Brad?
Danny, thanks so much. Really appreciate it. Coming up, don't let money destroy your relationship. We have an expert breaking down how to harmoniously combine finances. That's next on Wealth.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Let's get a quick check of the markets here as we're taking a look at the major averages here at the top of our markets board. You've got the Dow Jones Industrial Average fractionally lower. We did see positive territory to start off today's session. There was some hyper waffling at play as the major averages were trying to decide how to digest this morning's monthly jobs report. You're seeing the NASDAQ down by 1% right now, and the S&P 500, that's lower by 0.6% at this juncture. Let's see a little further under the hood what's at play with some of the sector activity, and for that we'll load up the 11 S&P 500 sectors here on the board. As of right now, consumer discretionary, that is pulling up the caboose. It's down by about 1.3%. Energy, though, that's up 0.3%, so that's holding on to some gains here on the day, fractionally as it may be. We do have more laggards than gainers right now. Let's take a look at the NASDAQ 100 as well. Who needed that paper? Taking a look at the mega cap tech stocks right now, you're seeing some deep red for Amazon after its earnings report. They're going to be spending over $100 billion in CapEx towards some of their AI ambitions. Those shares are down by about 4%. Google, Alphabet, that's also down by about 3.25% as of right now. Well, getting back to the big story that we're tracking here on the day. Interest rates are expected to come down this year, even if it's slower than investors were hoping. And the Fed lowers rates. As they do that, savings rates, they shrink too. So if you're looking to lock in a good savings rate right now, CDs may be a good option. Joining me now is our very own Casey Bond. Casey, can you tell us what states have the highest CD rate right now?
Yeah, so our team did some digging to identify the best CD rates in each state from both banks and credit unions. We found that the highest rate available today is in Texas from the Abilene Teachers Federal Credit Union. They're offering a really impressive 7.5%. Other states that made our top 5 include California, Illinois, Ohio, and Iowa. And banks and credit unions in those states are offering rates about 5 to 6%. So really, really impressive.
And so how does someone choose the right CD for their financial goals?
Sure. Well, the interest rate is obviously very important, but it's definitely not the only thing you should consider. One of the unique things about a CD is that it helps you lock in a rate for a certain period of time. But in exchange for that fixed rate, you also have to agree to keep your money on deposit for the entire term. Otherwise, you face an early withdrawal penalty. So choosing a CD with a term length that fits your savings timeline is very important. You also want to look at minimum deposit requirements. Some banks might require a higher amount of money be deposited in order to open an account. And also consider what type of financial institution fits your banking needs. Credit unions are great, but you do have to qualify to join, whereas local banks are open to anybody in the area. And I also encourage savers to look at online banks who often have really good rates, low fees, and you can open the account from anywhere.
Casey, thanks so much for taking the time. Appreciate it.
Thank you.
According to a survey from Credit Karma, a third of Gen Z and millennials, a quarter of Gen Xers, and over 10% of baby boomers have ended a relationship over financial issues. And with Valentine's Day just a week away, we want to make sure your relationship doesn't fall into this category. Susan Hirschman, who's the Director of Wealth Management for Schwab Wealth Advisory, joins me now. Great to have you here. Help us save some relationships, Susan. You recommend 3 steps for every couple planning to combine finances, addressing your difference, assessing your current situation, and making a plan. Let's start with the differences. Why is it important to note those?
Yes, I love talking about this topic. So thank you for having me, because it is so important. It's the first thing you have to understand from the differences. It starts on the emotion. So who are you? What is your money persona? So questions I think people should ask each other are things like, what was the money vibe in your home growing up? Was it positive? Was it negative? And why? I say money. What does that word actually mean to you? Why? I say the word debt. What does that mean to you? Why? And then finally, do you feel confident? Do you feel competent when it comes to investing and finances? So first, we want to lay the foundation down and truly understand where are each of us coming from. So once we understand the emotional aspects, behind it, then we can go and start talking about the different financial aspects and try and understand what I own, what I owe, how I think about saving versus spending, and going from there.
So how do you assess your current financial situation?
Yeah, it's very easy. It's just saying, what do I owe? What do I own? What's coming in? What's going out? So really just think about a balance sheet. So what are your assets, less your liabilities, and your cash flow? What is coming in? What is going out? And then see how they mesh up with each other, and really look at the way you spend, because that will give you a lot of insight into how you should separate, if at all, if you're both working, your money.
You know, as we're thinking about these 3 tips, of course, making an effective plan is a massive portion of this. How do you make an effective plan that really builds upon the previous step that we were just talking about and then shifts into activation and execution mode?
Yeah, so the number one thing when you're developing a plan is really knowing what you want to accomplish. And I always say, it's so, especially when you're in your 20s, your 30s, you know, it's hard to figure out what you want when you're 70 years old. But what you're trying to save for is flexibility. And so think about, what is it that you want to accomplish in 2 years? What do I want to accomplish in 5 years? What do I want to accomplish 10 years and going forward? So for example, in 2 years, we want to pay off our debt. Okay, great. We'll put a plan together to do that. In 5 years, we want to purchase a home. All right, what do we need to do to accomplish that? We both want to retire at age 50. Okay, what do we need to do that? So it's really looking at what you have, what you want to accomplish, and then developing a plan to best accomplish that.
Okay, so this is going to be a conversation that might startle or rattle some couples, but we're going to ask it. How do you know if you need a prenup?
Yeah, and a prenup is, for historically, prenups have been done when people come to a marriage with a family business or a large inheritance or a family home, things that they want to make sure that they keep separate. But now more and more people are looking at prenups as more from a positive sign and saying, okay, this will give us structure and clarity as to how are we going to handle our finances. And it's the what if, right? And for women especially, I think it's so important, especially if you're going to step out of the workforce, right? For a bit to have
News when you want it with Bloomberg News Now. I'm Nathan Hager. Markets are taking a turn for a number of reasons, including the University of Michigan's latest survey of the consumer shows feelings about the economy are now at a 7-month low. Joanne Shu is director of Michigan's consumer surveys. She says people are worried about inflation.
Over the last couple of months, a lot of consumers felt like you needed to buy durables now to avoid price increases in the future because of economic policy like tariffs. However, with tariffs on imminent, the ones on China already implemented, people are kind of getting concerned that it's already too late to avoid those high prices for durables.
UMich Consumer Surveys Director Joanne Shu says inflation expectations over the next year are now up to 4.3%, a full percentage point higher than just last month. Then there's the latest read on the job market. The Labor Department says the economy added 143,000 jobs last month. That was less than expected. Other revisions showed an average of 166,000 jobs added per month last year. That was down from 186,000. White House National Economic Council Director Kevin Hassett says the Biden administration's labor market wasn't as strong as it looked.
Why is it that we keep seeing sort of positive jobs numbers, and then when we look back a year later, it's way worse than we thought?
National Economic Council Director Kevin Hassett also told Bloomberg Surveillance President Trump's threat of 25% tariffs on Canada and Mexico wasn't a trade war. In his words, it's a drug war. Meantime, Reuters is reporting that the president told Republicans yesterday that he plans to announce reciprocal tariffs as early as today. That's according to a post from a Reuters reporter on X. It doesn't name its sources and doesn't specify which countries may be targeted, but the uncertainty has stocks moving lower now. The S&P 500 is down 0.2%. The Dow Jones Industrial Average is down 0.5%, and the Nasdaq Composite is lower by 1.1%. The 10-year Treasury yield is up about 5 basis points to 4.48%. Israeli Prime Minister Benjamin Netanyahu is wrapping up his visit to Washington this week with House Speaker Mike Johnson on Capitol Hill.
Today we discussed the special partnership that we have between these two countries, and I thank Prime Minister Netanyahu for his unrelenting commitment to making the region and the world a safer place amid really extraordinary challenges.
And Prime Minister Netanyahu said the U.S.-Israel alliance has never been stronger thanks to President Trump.
And under his leadership, the critical decisions that show his commitment and the American people's commitment to Israel have come to the fore instantly.
Prime Minister Netanyahu praised the president for releasing weapons withheld under the Biden administration and for authorizing sanctions against the International Criminal Court, which has issued arrest warrants against Netanyahu. Today, President Trump meets with Japanese Prime Minister Shigeru Ishiba, and Bloomberg's Kaylee Lyons reports there'll be a lot on that agenda.
Some of it does have to do with countering other players in the region, specifically China, as well as North Korea. Japan may want to bring up concerns around the Taiwan Strait as well. But a lot of this could be economic as we consider Japan's trade surplus with the U.S., the distaste that the president does have for what he views as unfair trade balances with the U.S. and other countries. So trade could come up. And then, of course, U.S. steel as well, given that Nippon Steel deal was blocked under the Biden administration.
Bloomberg's Kaylee Lyons in Washington, and the two leaders are set to hold a joint news conference from the White House. That's set for around 1 p.m. Washington time. We'll have live coverage on Bloomberg Radio, Bloomberg Television, and the Bloomberg Podcast's YouTube page. Another winter storm's headed for the Northeast just in time for Super Bowl weekend. Bloomberg meteorologist Rob Carolyn is tracking that.
It'll have its greatest impact from New York City on up into New England. The D.C. area looking at a little bit of sleet and freezing rain and some snow tomorrow during the day. It'll change over to rain. However, late in the day, snow develops in New York City. It'll develop by mid-evening in the Boston area. Both New York and Boston looking at least 3 to 5 inches of snowfall. That's why winter storm watches are in effect for Saturday night and on into the first part of Sunday for both Boston and New York City. I'm Rob Carolyn, Bloomberg Radio.
Thanks, Rob. A plane with 10 people on board's gone missing during bad weather yesterday in rural Alaska. Rescue crews are scouring the ground today for any sign of the Bering Air flight from Unalakleet to Nome, Alaska. If the worst is confirmed, it would be the third deadly air disaster in the U.S. in just 2 weeks. Next week, President Trump says he will sign an executive order to end the Biden administration's push for paper straws. The president announced that in a Truth Social post with the words, quote, "Bring back plastic." That's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
There are two kinds of people in the world. People who think about climate change.
To upskill
and
take advantage of these opportunities too.
Yeah, so what we're seeing with AI being on the rise, cybersecurity is on the rise in tandem, right? People, legacy companies are afraid that AI is going to go crazy. It's going to be this Terminator situation. So, they're seeing a lot of careers in cybersecurity, AI certifications with AWS, Azure, CompTIA has been something that has been really prominent, because what the world is trying to do is really find ways to really get more people upskilled. And then with this kind of debate on the value of college and being fast tracking that, people are moving more to trying to get more certified quicker at a much less cost.
Which industries or even kind of job functions or role types are you seeing the largest opportunities for employers to make sure that their workforce is getting upskilled, and then also for employees to recognize that, hey, this is a position that could be at risk of being, disrupted by AI, and I need to be able to work in tandem with it, or be able to skill into a new area as well?
Yeah, I think that what you're saying, that AI has new developments all the time, but what you're seeing that JDs are starting to change, where instead of where employers are actually putting their JDs requiring you to learn to know skills like Cursor, ChatGPT, different AI agents, right? For designers to know different tools that can create and use generative AI tools to create more content. So what you're seeing is that the JDs, the job descriptions are changing, where you're now starting to see one marketing person can maybe do the role of 4 with with using certain tools. So you're seeing is that, companies are starting to maybe hire less people. And then there's also this VC mandate where everyone's trying to get to this holy grail of how can you get to 30 million, 40 million in revenue with 15 employees or 20 employees with supplementing that with agents. So I think that people will have the same jobs, but I think people will be able to be more productive. One role will be able to have the productivity of 4. Work will be, people will get more done with less. So I think that's what's happening. Like the JDs are changing, and there's a requirement and prerequisite that you know skills. So I just recommend that people make sure they're learning these AI tools as a part of that, and really convincing the employer, hey, you know what, by hiring me, I can actually reduce your costs and be more productive, rather than saying they need to change that job. Right?
And so where does Path fit within all of that?
Right. So Path, we're an AI-powered platform that uses AI to make getting professional certifications, particularly in IT, software engineering, and healthcare more affordable, right? We're seeing this movement where AI is being, it's taking people's jobs, but also to get a lot of professional certifications, like for example, CompTIA security costs hundreds of dollars to just take the test, right? And a lot of people don't pass on their first time. So what Path does is use a generative AI to give users unlimited practice, adapt to their weaknesses on these exams, but also use predictive scoring. So we can actually tell you whether you're going to pass these exams or not. And we do the same thing for NCLEX. We even do college admissions exams like GMAT, MCAT, LSAT, GRE, even ACT, ACT. These things are causing, a lot of people affects their ability to get scholarships and ultimately have their ability to get jobs. And a lot of underserved communities, they're not passing these exams on the first try, right? And what happens is they're not getting to these jobs, or they just shy away from the career. Like, I don't have $800 just to mess up on that. So what we're really trying to do is, rather than leveraging AI to focus on this concept of taking people's jobs, we're using generative AI to really help people get certified for the jobs of the future.
We got to give people some leadership lessons here, because you yourself have been a successful entrepreneur multiple times over now, and most notably people may know you from Scali, which went through the Shark Tank realm. You built up a business. You were probably one of the most successful, I would say, ventures that made it through that show, and then had an exit with Sally Mae as well. And now you're the CEO of Path. I wonder, what leadership lessons would you impart upon the next generation of aspiring entrepreneurs, business executives?
One, I think that in this age of AI, create apps that make a huge impact, right? I think AI has given being able to deploy a lot of products at scale for a much lower cost. So it's lowering the cost of it needs to start a company. I think the amount of money that I've had to use to start Path was infinitely less than what I'd used to start Scali, because of the fact that so many AI tools have made marketing so much more expensive, developers are more expensive. It makes sometimes outsourcing even more efficient, because these AI tools make the fidelity of the work of different engineers. And you see that with Google and other companies, right? So I think they're really making sure that we're really creating solutions on the impact, because I think so many people, we AI to book your travel, AI to get credit card points, AI to do this. But I really think, especially for underserved entrepreneurs and people of color, really start creating products that really help. I think the second thing is that being adaptive and resilient. We have a new administration that a lot is going on, and things are changing. In addition to, we have this new technology that's advancing every single day, right? So I think that entrepreneurs being able to build a team that's keeping an eye on that, and being able to adapt and be resilient, and make sure that you're lowering your costs, being profitable, making sure that you're not overhiring for a role that you might even need tomorrow,
right?
And doing that. And then the last thing I would say is really just really expanding opportunity, right? Like thinking about working with your current team instead of being a founder and a leader and saying, okay, I'm going to focus on how do I get rid of as many people as possible. One, you should make sure, don't hire people, really make sure you be thoughtful in terms of who you hire when you may not need them in a few months. But two, really make sure that instead of having those conversations with your team members and saying, hey, I love your role, you're a great team member, I think if you use these tools, I think if we adjust our role in this age of AI to do that, you can be more productive. Yeah. You have a long-term role here, and you can be a part of this team and be a part of this new era where, we can be more profitable, be more efficient, and still build a big company.
Chris, thanks so much for taking the time here in studio with us today. Really appreciate it. It's Chris Gray, CEO of Path.
Thank you.
Coming up, as we head into the weekend, we're breaking down the economics of the Super Bowl. We've got much more on wealth after the break. Stay tuned.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free child alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free child alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free child alerts to the rescue, so you cancel on time from Yahoo Mail.
The Super Bowl is just days away, and we're taking a look at what the economics tell us to expect when the Chiefs and the Eagles hit the field. Michael Swanson, Wells Fargo Agri-Food Institute's chief agricultural economist, joins me now. And you took a look at food prices and found that it is roughly flat from a year ago, but that doesn't tell the whole story. So what foods are more expensive than in 2024?
Well, yes, absolutely. The two big hitters right out of the gate are chicken wings and avocados. Those are fan favorites. And what we discovered was that the strong economy has pushed demand up faster on those two than supply can respond to it. So we're seeing kind of a really bump from those two. But they're fan favorites. I don't think anybody can step away from them for this buffet.
And so what foods are, on the other side, less expensive than they were a year ago?
Well, we're seeing some of the competition, for example, around frozen pizzas, always a fan favorite, easy to put it in there. And then shrimp. Shrimp's down. Most of the shrimp in the United States comes from overseas, India, Vietnam, Thailand, some of those areas. And they're a little bit overstocked, and they have to move it. And so shrimp's down. So maybe some ceviche, maybe some shrimp tacos. Those are always winners as well.
Wow, okay. How are GLP-1 drugs actually impacting how people snack while watching the game?
You know, that tidal wave is just starting. You know, we expect people to be healthier eaters as they start to take the GLP-1s. And good news for them. Some of the vegetables are down. Broccoli, cauliflower, things like that. Put them on the tray. You might find some people snacking them more this year than last year.
And so there was record high viewership for the game last year. How do you think that will impact food spending as we're looking at what is a rematch, and if ticket prices for the get-in costs right now are any indicator, there could be maybe less viewers than last year? Dare I say?
Well, you know, it's interesting. You never know about that until we get the final numbers.
Yeah.
But now it's received wisdom in the food industry that Super Bowls are now the number 2 largest spend for an event, right behind Thanksgiving. So we really see a lot of people really don't care too much about the final score, really appreciate the company and the food that's out there on the table.
No, that's a great point. It's the company you keep in a game like this. Okay, so, you know, as we're thinking about where these viewership trends have kind of moved year over year, is this expected to just continue to retain the title of the kind of chief gathering, sports gathering event? And how does that flow through to the food sales going forward in the future?
You know, it's a good question. You know, trees don't grow to the sky is the old saying, right? There's a limit to everything. And the NFL has been just a master class in getting attention, you know, social media and all that. But it can't keep growing the same way because pretty much have perfect penetration. So, I think that the food spending will kind of follow along with that. You know, it's the two kind of go hand in hand. So I would expect to see that food spending growth around the Super Bowl, kind of slower growth on a go-forward basis. It's been amazing, but you can't go to the sky.
All right, it's really interesting. We've been having a lot of food talk over the course of this week, and we will see both in stadium how much people are spending on food, and for a lot of those who are not in New Orleans, how we will be spending to entertain friends and family. Michael, thanks so much for taking the time.
Absolutely. Have a great week.
Certainly. Let's do a final check of the markets. Everyone taking a look at the major averages. We are lower across the board, fractionally down for the Dow and the S&P 500. The NASDAQ is lower by 1.25% roughly. As we're taking a look at these declines here, worth noting that we've got quite a few hours left on the clock here for today's trading session here. That's it for Wealth, everyone. I'm Brad Smith. Thank you for watching. You can stay tuned for Market Domination with Julie Hyman and Josh Lipton. That comes up at 3 p.m. Eastern Time. They will count you down to and through the market close. Go Birds.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks lower following a spike in inflation expectations and a Reuters report that President Trump may announce reciprocal tariffs as early as today. Uber shares rising after billionaire hedge fund manager Bill Ackman wrote in a post on X that his firm now owns over 30 million shares of the company. Ackman, who is a day one investor in Uber, says that he began increasing his stake in early January at what he called a, quote, massive discount. Nike shares lower after Citi downgraded the stock to neutral from buy following a meeting with its new CEO, Elliott Hill. The analyst saying that uncertainty around tariffs could potentially weigh on sales and margins. And Alibaba shares higher after an executive said that reports that it plans to invest in DeepSeek are untrue. That's according to a Chinese media outlet, The Paper. Rumors swirled earlier today that Alibaba was set to take a $1 billion stake in the AI startup. And that's your Yahoo Finance Market Minute.
Welcome to Capital Gains, Yahoo Finance's unique look at how U.S. government policy could impact your bottom line. I'm your host, Madison Mills. This week, it's all about tariffs on hold at the moment for Canada and Mexico, but negotiations still ongoing. President Trump did place a 10% tariff on all imported goods coming from China, which retaliated with their own set of tariffs. Is this the beginning of a trade war, and how could these tariffs impact your finances? We will unpack all that and more with Asia Society Policy Institute Vice President Wendy Cutler. But before we get into it, let me introduce my co-stars, Rick Newman and Ben Werschkel. Hello, Rick and Ben.
Hey. Hey there.
Hi, guys. So, Ben, let's get to it. What's on your note cards this week?
For sure. Yeah, we're going to do tariffs. We're going to do a lot of the show today. We're going to go to it, Wendy, but I'm going to start on tariffs as well. And the way I thought of starting was sort of three ways this week shows how different Trump 2.0 is from those. So here's my three ways on my note card. Trump is different. The world is different, and most importantly, we are different. So those are sort of a lot of ways that things are different here.
Ben, did you put that all on one note card?
I see. It's not my first rodeo. I put it on two because they bleed.
Oh,
through.
very
So
efficient.
okay,
Yeah.
This has all been planned. This is my whole morning was to plan that move out.
Good budgeting
but
skills.
quickly on those three, Trump is different because we really have a kind of ready, fire, aim approach to tariffs here. We're seeing it's different kinds of tariffs. These are blanket tariffs. He goes on them big. These China ones are big, and this is kind of a different sort of set of tariffs than even he did in his first term, which were focused on specific duties. And there's a focus on blanket duties across all trading partners. His pick for trade representative confirmed this week as well that that's going to be studied, and that's potentially on the docket. China and the rest of the world is different as well, and this is an important element here too because they've had years to plan for their retaliations. They were, as sort of rapid as Trump was in 1.0, the countries were trying to figure out ways to respond. They've been really thinking about this hard, and we saw a lot of really kind of novel approaches to response here that I think will change the back and forth here. China's talking about linking tariffs to Google and NVIDIA and probes they have in there. Canada's going specifically after things like Florida orange juice and Tennessee whiskey. Obviously, lawmakers in those states are going to really care and they're going to call the White House. And then Mexico's doing a bunch of threats as well. One thing I picked up in my conversations this week was a concept of carousel tariffs, which is tariffs that kind of go on different goods on different months. So obviously, if you're an importer, you really care about that.
Jesus.
And then the last one, I'll toss it to you, Rick, because you wrote about this really nicely, is that we're different. That American consumers are really focused on prices. Inflation wasn't the top of mind 4 or 6 years ago, but it really is now. So any changes we see here in prices are going to be really noted on by Americans, which the White House will be watching for certain.
Ben, I think weren't tariffs on your note cards last week? And
yeah,
the
they're on my
week
note
before
card
that,
every week. It's the same.
I mean, don't we have anything else to talk about?
Not going away.
I guess we don't. I mean, is this what this is what we've been talking about all week on Yahoo Finance, right? That's a good breakdown, Ben. I would add a couple other things. First of all, what's different this time is Trump is doing this much sooner in his term, and he's also blinking much sooner in his term. So, and this gets to the question that I've been probing recently, which is which of these tariffs are actually going to stick, and which of them are just negotiating ploys that Trump is probably going to get something for his trouble, and then maybe he's not going to be talking about tariffs. So here's the handicapping I've seen so far: the tariffs on China are probably here to stay. So that was a 10% tariff on, I think, basically all imports from China. That's about, call it, let's say, $450 billion worth of stuff per year. The threatened and then withdrawn 25% tariffs on imports from Canada and Mexico, maybe not. Maybe those are not actually going to go into effect, and there are some reasons to think not. First of all, that would be a lot more pain for U.S. consumers than 10% tariffs on Chinese imports. That's a lot of food from Mexico. Just as Americans are trying to get over food inflation, it would create chaos in the automotive industry with the supply chain and things like that. And Trump has signaled that he wants something for those for that tariff threat. It's fentanyl assistance and it's immigration assistance. So we've got other tariffs coming down the road. Just quickly, this universal baseline tariff, which might be 5% or 10% on all imported goods, or most of them anyway, that is probably going to be a keeper. And one of the reasons for that is Trump needs new sources of revenue to finance his tax cuts coming later this year. So that's the analysis I've been seeing. Ben, I have a feeling tariffs are going to be on your note card next week, maybe the week after that. I mean, I think we all wish we had something else to talk about, but here we are, the tariff geeks, for the time being.
Yeah, they certainly keep coming up. And as you guys know, I'm primarily focused on financial markets and the reaction we're seeing from investors. And it's been fascinating to hear from Treasury Secretary Scott Bessent this week talking about the importance of keeping the 10-year Treasury yield low. Guys, interrupt me if I get a little too wonky here. I'm trusting you to keep me honest.
This is the home of wonks.
Make me sound normal. Make me sound relatable to the kids out there listening. I'm going to try to break this down in a way that's digestible. So basically, the takeaway here is that the Trump administration wants interest rates to be low. That's not necessarily surprising when you've got a real estate mogul in the White House, right? He wants mortgage rates low. So how are they going to do it? One anticipated idea was to try and control the Federal Reserve. That's what Trump talked about on the campaign trail. But now he has since rolled that back. It is very important to democracies to have an independent central bank. Now we have Treasury Secretary Scott Bessent saying they can control interest rates through the yield on the 10-year note specifically. What's challenging there is that the market will price in higher yields if the market thinks that inflation is going to be higher for longer. Guess what the market thinks is going to be inflationary?
Yeah,
tariffs.
that's right.
So that is pushing up yields. We didn't see that right after Scott Bessent made these comments about the 10-year yield going lower, but around the entire world, not just in the U.S., we've seen inflation expectations ticking up, in part due to the reaction to these potential tariff policies. So it's going to be interesting to see how Bessent and Trump work together, along with Howard Lutnick and the rest of the administration, to try and strategize to prevent their policies from lifting 10-year Treasury yields and therefore interest rates.
Right. So I think that is actually somewhat encouraging because the interest rate that matters to almost everybody is not the short-term rates that the Fed sets, which mainly just affect short-term bank deposits. It is the 10-year Treasury, which basically is the benchmark for all consumer and business interest rates, mortgage rates, car loans, business loans. And Trump himself actually said, after the Federal Reserve recently said we're not going to change interest rates in January. Trump actually said, to my surprise, and I would bet yours too, Ben, he said. Later, he said, that actually seemed like the right thing to do. And I was like, wait a minute, seemed like the right thing to do. And I was like, wait a minute, this guy hates Jay Powell. We always thought he was going to try to fire Jay Powell. And here he is giving Jay Powell a break. Now, to flip this around, the president doesn't get to control long-term interest rates. The market decides. And right now, as you pointed out, Maddie, the markets don't like tariffs and they don't like Trump's deportation plans because, if anything, those would push prices up, not down. And that affects interest rates by pushing them up a little bit more. But, this is different from what we heard from Donald Trump the first time around, when he was always going after Jay Powell when interest rates were not low enough.
Yeah, that's the part of this that I was curious about, Maddie, if there's any market to this, because what I can't parse out here is how much of this is a sense that he can do anything, that Bessent can do anything on the 10-year, versus just a sign that he's going to lay off Powell and is going to sort of leave the Fed alone, at least for the time being, him and Trump. Do you get any sense from the kind of early market reaction to that, which side of that the investors are focused on, or is it both?
Well, it's been interesting because we know that there's this idea of a shadow Fed chair that's already been in place, but and not to get too wonky here, but there's been this question mark about whether or not we're going to see additional Treasury issuance from Scott Bessent under his tenure. This is something that Janet Yellen got a lot of pushback for, and so it would be interesting if they went about their attempts to keep the 10-year yield low through that same method. I think what's been interesting more broadly, though, to your question, is that we haven't necessarily seen investors pricing in the potential impact of tariffs as much as I would have thought that they would. And we've especially seen this playing out in the currency market. If you take a look at the change that we've seen in the peso and the Canadian loonie and even in the yuan, they haven't repriced the impact of tariffs as much as you might think, given the degree of those potential policy changes.
Let's dig into that for a second, because before Trump took office, I wrote one of our preview stories for what markets were expecting with regard to tariffs. And there was tons of analysis that said, okay, we're aware of what Trump has threatened. We don't think it's going to be nearly as bad as what he has threatened. And guess what? Markets so far have been right about that. So just a couple examples. Trump, while campaigning, said he was interested in a 60% tariff on Chinese imports. And what we've got now is 10%. And Trump has basically stopped talking about a 60% tariff. And markets anticipated that it wouldn't be as worse as Trump said. And Trump threatened with a date certain to impose these tariffs on Canada and Mexico, and then broke that off within, just hours before that deadline was. Now, at any moment, this could get worse, but I think Trump has indicated that he has a red line for tariffs. I mean, when the day that before the Canada and Mexico tariffs were supposed to go into effect, what did the markets go down about a 1.5%? Or
it wasn't much.
2 points.
It's not like we saw a sell off.
There was a sell off, but it wasn't a huge one.
Or correction.
And then Trump,
right.
Suddenly had a deal to avert the tariffs. So
yeah.
We do know he is sensitive to what happens in the stock market, and he may have showed his hand there a little bit.
Right. Well, it's going to be interesting to continue to monitor whether or not we need to. I keep asking guests, do we need to take Trump seriously or literally on tariffs? And so I will continue to ask those questions. We are going to take a quick break here at Capital Gains. We're going to be right back with Wendy Cutler and more Capital Gains right after this.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome back to Capital Gains. We are now joined by Asia Society Policy Institute Vice President Wendy Cutler, and we're continuing our conversation on tariffs. Wendy, great to have you on. Thanks for making the time. I just want to start on where do you see this relationship and tit for tat over tariffs, specifically with China, heading? Obviously, we rely so much on China for a lot of the goods that we're constantly overbuying here in the U.S. Are we still going to be getting things shipped to us within 24 hours from China in the next 5 years? What is that going to look like?
Well, first, I think China was very measured in its response to the Trump 10% tariffs. It increased tariffs on certain products, but not our most politically sensitive products. It also announced an anti-monopoly investigation against Google, as well as it announced it's going to withhold some critical minerals. But in total, the package is pretty measured, but it does send a signal that China's had a lot of time to prepare for this, as said in the earlier segment, and it is signaling that it is going to take a menu approach towards retaliation against the United States. It's not going to be all tariffs. They're going to be combining other measures that will hurt us over time. But clearly in their response, I think they were signaling they do not want an escalation of this trade war. And I don't think it's out of the question that at some point we may be at a negotiating table with China trying to negotiate a phase 2 trade agreement.
Wendy, do you see this more as just in the broader picture, let's say a few years from now, are we just sort of resetting the terms of trade with China? Because there has been this argument about whether we should just sort of fiddle around the margins with the way we do trade with China or decouple from China. In other words, really dramatically change our trade relationship and buy a lot less stuff from China. So where do you see this going?
Well, look, right now we trade about $600 billion worth of goods with China. And so to try to unwind that anytime soon is going to be impossible. But I'm not convinced that that's the strategy. I think it's more strategic decoupling in products that are important for either economic security reasons or medical products, kind of what we call like essential products. And products like that, we don't want to be dependent on China. So we will make efforts to decouple and to work more with like-minded countries to build alternative supply chains. But with respect to many other products that go back and forth, I would expect that they will continue, albeit maybe with tariffs in place.
I mean, dare I suggest that what you just described is really just kind of a continuation of Joe Biden's policy toward China? It doesn't sound that dramatically different.
Look, it's too early to judge. When Biden went forward with tariffs towards the end of his administration, he was very selective and only increased tariffs on maybe 20 products. Trump is taking this universal take no prisoner approach when he to date, when imposing tariffs. Whether this changes over time, we'll see. So again, I don't want to make any predictions, but I think both presidents are confronted with a China that is not trading fairly, that is dumping its excess industrial capacity all around the world, and is a state-led economy that doesn't really play by the international trading rules.
Wendy, you mentioned the possibility of phase 2 talks coming down the pipe. Curious kind of how you see the events this week leading that. Is a way to view what's going on this week a prelude to negotiations there? And does sort of what we've seen with these 10% duties make those talks more or less likely in your mind?
Yeah, so, in noting how Trump has been talking about China the past few weeks, clearly he's taken a more conciliatory tone, really directing a lot of his ire and retribution towards Canada and Mexico, our neighbors. And I think during, the early days of Trump's announcement of these tariffs, I think China was laying low and Beijing liked the attention being elsewhere. So again, I think that attention will move to China, but I also believe that Trump likes to do what others tell him can't be done. And he loved that phase 1 trade agreement, albeit it wasn't implemented entirely. And I think the Trump administration is going to squeeze China to fully implement that agreement. But again, I don't think it's out of the question that we may find a negotiating route with China, something that Biden wasn't really interested in. He didn't believe we could achieve a meaningful agreement with China.
And Wendy, looking at the U.S.-China relationship from a markets perspective, one of the things that's really shaken markets over the last few weeks is this rolling out of DeepSeek and the AI that China was able to produce for so much cheaper than companies like OpenAI have been able to produce AI here in the United States. And I wonder what that example tells you just about this pattern of China being able to produce more for less, and how, if at all, the U.S. can kind of survive a decoupling with China without risking inflation, both in the terms of technology we may be importing from China and also, of course, goods and other services.
Well, it's just like after COVID, it was a wake-up call for us when we started seeing all these electric vehicles that China was making, which are now flooding the world. And, the Chinese automaker is soon to be the number one global automaker. So I think we're going to continue to see kind of, these big technology, new product announcements like DeepSeek by China. And I think it's a wake-up call to the United States that we can't just be directing our policies towards hitting China or closing our market. We really need to be focusing on how we are going to be more competitive in the world going forward in all of these technologies. And frankly, learn from China as well, because clearly they're making some important technological innovations.
So, Wendy, we're talking about Donald Trump's trade agenda here. I want to sort of back this out and ask a broader question, which is, who knows if Trump is right about any of this? The basic question is, do we have a problem with trade or not? I mean, is Trump fixing trying to address a real problem, or is it a made-up problem? And, there has been a lot of research at this point about the so-called China shock, the effect it has had on jobs here in the United States, decline of some parts of manufacturing. But manufacturing also is a relatively small part of, what's mainly a service economy. So what is the problem here? Is there even a problem?
Yeah, I think there is a problem. I'm not convinced that Trump is trying to address it the correct way. But, we have a China that's in the huge player in the international trading system. Its trade surplus this year neared $1 trillion. So there is great imbalances, not only with the United States, but all over the world. And interestingly enough, we're seeing many countries beyond the U.S., Europe, and Canada putting restrictions in against Chinese imports. There is a real concern globally that China, without any brakes, is just going to keep flooding the market, and industries in our countries can't survive and can't compete because the Chinese companies are subsidized and get unprecedented and long-term financial assistance. So they operate under completely different rules. So yes, I do think there is a problem here. The question is, what's the best way to address it? For me, I think that working with our allies and partners to address the China challenges is critical. So out of the box, going after our two neighbors who have been, good partners on the trade front, largely. There are things to address with them for sure, is something that maybe wasn't, I would just disagree with that move.
Mm-hmm. One other element, Wendy, of your writing that I've noticed in terms of the relationship with China is the word discipline from the White House. The kind of whether Trump can sort of have the discipline to kind of keep up on this and unwind so many of these issues that you laid out. I take your point about the Canada and Mexico being sort of a distraction, but what's your sense of sort of Trump's discipline towards China at this point? Is it something he's going to see through, or is it going to be kind of a back and forth that may not get at the underlying issues?
Yeah, so we all know, Trump's style can be very impulsive, very chaotic, and some say that's all deliberate. But let's remember, China is in for the long game, so they know what they're doing, and they have a strategy, they have a vision, which largely is to become the most competitive country in key technological sectors and other important sectors to the economy. And so it's important that, we also develop a strategy and a vision, know where we're going, and not just take short-term measures one week and then the next week do something completely different. So I think discipline is needed, particularly when dealing with a country like China.
Thank you so much, Wendy. We really appreciate it. We are out of time, but really appreciate you joining us again, Wendy. And that is going to be it for Capital Gains. But thank you to Wendy, Rick, and Ben, my co-hosts, for being here. And thank you all for joining us. Make sure to like and subscribe to Capital Gains wherever you get your podcasts. Until then, we'll see you next on Yahoo Finance.
Welcome to Living Not So Fabulously. We're David and John Naughton Schneider. Let's talk about money.
We all have something money related that we want to hide. Things are not always fabulous, nor as easy as they might seem, and that's okay. For us, dropping the debt was half the challenge. The rest was staying debt-free and building the life we wanted.
We're here to help the LGBTQ+ community and our allies do the same. Our podcast brings you these stories.
Without shame, without judgment. Living Not So Fabulously from Yahoo Finance drops on your favorite platform every Wednesday at 12 p.m. Eastern Time.
Join us so we all can live a little more fabulously.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Warrior Money, the show devoted to supporting our brother and sister veterans in business. I'm Patrick Murphy.
And I'm Dan Coons.
In just a few minutes, we'll be talking to Samuel P. Royer about affordable mortgage rates and his efforts to pass the HELPER Act. But first, Under Armour earnings have us thinking about the battle of the brands between Under Armour and Nike. Dan, you noticed we were at the Army-Navy game. It was Navy, who unfortunately won the Army-Navy game, who was outfitted by Under Armour. Army, fitted by Nike, by the way, started by an Army veteran, Phil Knight, U.S. Army. What'd you think?
Yeah, both jerseys were fly. Let's be honest with you. They were both awesome, and I every year look forward to the swag that I get to. I'll never wear Navy anything, but I do love it.
All right, well, let's get to our guest because he knows all about the warrior class. But today we're joined by Marine veteran and Chief Production Officer at Saloon Home Loans and one of the advocates behind the HELPER Act, which would help make mortgages more affordable for America's everyday heroes. Please welcome Warrior Money, Samuel P. Royer. Samuel, welcome to Warrior Money. Sam, we start out every show by doing bluff right off the jump. So bottom line up front, when you look at basically the transition of troops, when they want to basically access affordable housing, what are some of the biggest hurdles they have to get through?
Well, I think just some of the biggest hurdles, especially being a Marine veteran, leaving the service, you have to have that employment set up. So, one of the things, even within that 12-month period when somebody's getting out, to make sure their employment set is a huge thing. And, a lot of the different aspects that individuals are overcoming is just, that would be the main one I would see. And just making sure that our warriors, our Marines, our sailors, our soldiers are just set up for success is just teaching them about credit, early on. So.
Yeah, and you mentioned, when you said, hey, well, listen, I was making $1,200 in the Marine Corps and I was going to make $1,300 on the outside. But, these troops, they don't realize that you don't get the tax-free BAH, the basic allowance for housing, that you're paying usually higher taxes when you leave. So I appreciate you being a subject matter expert on that and really working through it, because we do have 200,000 of our brothers and veterans that leave active service that become veterans every single year. So we have to make sure we empower them with the right information.
Yeah, for sure. 100%.
Yeah. So we talk a lot about the skills and transitions. And one of the things that we don't talk about is the transition from government provided housing on installations and posts into private housing. So can you talk a little bit about the hurdles that current veterans are facing in finding a housing in today's housing market?
Well, I just think that the cost of housing in itself, when you're on base, you're not worried about how much does that house cost, because you're just getting placed there, be it the enlisted section, the officer section, or whatnot. Now, I'm a little bit south of Jacksonville, Florida, even though I am from Bethlehem, Pennsylvania. Patrick.
Oh, there you go. PA.
But, I'm actually flying up there tomorrow. But being, a little bit south of Jacksonville, obviously NAS Jax, Mayport's right there. And you just go off a base and housing has exponentially, gone up. So the affordability factor is something that a lot of these military members, as much as they're trying to stay within their BH area, sometimes just the rate hikes or where rates are now and the housing costs, it's less affordable. So it's something they really have to budget for.
Yeah, we often talk about, a lot of our guests, we talk about finding purpose post-military service, and then a lot of that just so happens to translate into helping brother and sister veterans do great things. So you're really interested in the HELPER Act. Can you tell us a little bit more what the HELPER Act is?
Well, I'm actually the gentleman that came up with the idea of the HELPER Act, and I've been fortunate enough to work with Congressman John Rutherford, Bonnie Watson-Coleman from New Jersey, and these individuals, Senator Rubio, who now I think is Secretary of State. I didn't see if he got confirmed.
Yeah, he did.
And then John Ossoff from Georgia. These individual leaders have chosen to take on the challenge of getting the same type of VA home loan benefits that all of us have for those individuals that serve in our community. So as an example, I never served in a combat zone. I'm very proud to be a Marine, but it's something that a lot of my best friends are cops, Allentown, Bethlehem, down here in Daytona Beach, Flagler County, Florida. These individuals are serving tirelessly in their communities, and they didn't get in those jobs to become millionaires. They got in their jobs just like we did in the military to serve our country. They got into it to serve their communities. And Senator Rubio, prior to him being Secretary of State, he really said it best. He said, when affordability in the community that you serve is unattainable, it's something that we have to fight for. And that's what the HELPER Act is. So I came up with the concept of HELPER,
homes for every local protector, educator, and responder. And since about 2021, 2 Congresses ago, we've been fighting the fight to try and get this bill passed to make it more affordable for those individuals in our communities.
I love that. And just briefly, how does it actually address the problems that you've seen for that community of people?
So it takes the best of what a VA home loan does, and it kind of carbon copies it under an FHA loan. So if you serve as at least 4 years in law enforcement, firefighting, teaching, and EMT or paramedic, what would happen is you would go to any FHA lender that's an FHA lender in the country, and as long as you had that criteria and you're a first-time home buyer, you can buy a house where instead of putting the 3.5% down that FHA requires, you would have to put 0 down. You also would have a cheaper monthly payment because there's not a monthly mortgage insurance, just like a VA home loan. So it really does help kind of combat the biggest hurdles people are having right now in down payment and monthly payment.
Yeah, it's really a shame. Like we do see. So I lived in Nashville, Tennessee for a while. You live in any of these major metropolitan areas, and you really do. It's really hard for people that serve the local community to also live in the communities when they're being priced out of the areas that they need to be. So like, where does it, like, first of all, like, where did you find your passion for that problem? Like, how did you identify that?
Just because doing mortgages 28 years and sitting across from people where you have to tell them they can't afford a house. As an example, I had a teacher in St. Johns County, which is basically St. Augustine, Florida. She was actually putting $60,000 down. She had no debt, and she actually had a very high credit score. But she couldn't afford a house in actually the county south, Flagler County, where I live, because of her debt ratio. And that's because she didn't make enough to actually qualify for the mortgage payment. I just had a firefighter where his dad had a cosign, and this young man did not have a lot of debt. He actually had a couple bucks to put down, but he couldn't afford a house. And so I just found it upon myself. Some people say I'm crazy, but I found a man in Congressman Rutherford. He's 42 years law enforcement, 3 terms as sheriff of Jacksonville, Florida. And this man just has a heart to serve. And we just started fighting the fight, knocking on doors, and have a massive grassroots effort. In fact, my lead lobbyist in Washington, is Charlie Dent's former chief of staff, George McElwee, so of the reserve component. So, we just we've been hooking and jabbing with the best of them. And at this point, we need all the voices out there to talk about this because affordability is just killing our community leaders.
Yeah, I don't think the answer, and I think we can speak for ourselves, is just to give people the money. I don't think that solves the systematic problem that we're talking about. So it really is.
Can I jump in with something on that one? Because
I would love for you to. Yeah, please go ahead.
And I'm going to call you Congressman, Captain. I'm not sure what to call you.
Call me Dan.
But here's the thing, Congressman. You can say everybody talks about subsidies, right? The crazy part about the Helper Act, just like with a VA and an FHA loan, this is not a subsidy-based program. We are not asking the federal government, hey, can you throw a bunch of money aside so that we actually can sit there and give people money so they can afford a house? FHA is an insurance program. And what it does, it basically says that lender, go lend money, and we're going to ensure that if for some reason they go into foreclosure, there's an issue, you can come to us and we're going to give you money from the insurance fund. Well, that insurance fund is called the MMIF fund, the Mutual Mortgage Insurance Fund. That fund right now, Congressman, if I came to you while you were serving in Congress and I said, sir, we would like to do something, and that fund is 500% overfunded. So the fact is, we're probably not going to liquidate it anytime soon, especially with people that keep their jobs. Right. So the 2006 crisis, guys, happened because of a lot of fraud. A lot of employment problems where people lied about their employment. Well, we're talking about cops, teachers, firefighters, EMTs, and paramedics. We just had a pandemic. We've had economic downturn. But the fact of the matter is, these individuals are the ones that keep their jobs through those hard times. And the first thing they're most likely to pay is their mortgage. So at the end of the day, this is a non-subsidy. We're not asking taxpayers to fund this. In fact, the premiums that go in from FHA all go into that fund. And with that fund having so much money in it, this really is a risk the federal government doesn't have to really worry about, the taxpayer doesn't have to worry about, And a congressman or senator can feel very good about going to their constituents to say, hey guys, we're getting this benefit for you because we care about your service first. And second, we care about the tax dollar. So we're not going to spend it, but we're going to help people.
That's right. We're going to leverage that backstop that the federal government could do to allow the folks that we call in the warrior class to access to use leverage to go get that first home. And whether you're a cop or firefighter, if you wear the cloth of our country, you've earned that right. So we love the Helper Act. We're going to help amplify it. But we're going to be right back with you, Samuel. So bear with us. We're going to go for a break. We'll be right back.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
All right, welcome back to Where Money. We're here with Samuel P. Royer. Samuel, we just left off talking about the Helper Act and how we have to help those folks like cops, firefighters, educators, first responders, and the military, folks that frankly shower after work than before work, and how that they can access the Helper Act to get their first home and use that for leverage to start a new life and have the economic success. Why are you so passionate about this, and what triggered it?
Mine was I gave up my Marine Corps career way too early. I always had that calling to serve. And honestly, some of my best friends are Daytona cops, Allentown cops, and others, and teachers. I mean, I went to high school with Dwayne "The Rock" Johnson, and actually I ran into him at the Daytona 500. And the funny thing about Dwayne is that our football coach, who was a teacher, changed his life to the point that he actually was on Oprah, pretty much had a tear in his eye when he talked about it, how a teacher changed the trajectory of his life, right? And that same football coach who was a teacher was very crucial in my life as well. So teachers, you know, they're unfortunately, like you look, I forgot where it was, but something just happened where a teacher died, right? Firefighters. I don't know if you guys ever put on that gear, but I went in a firefighter competition. I was fortunate enough they asked me to do it. Man, the claustrophobia kicked in, and it was not something that I would want to do on a daily basis. And at the end of the day, police officers, obviously, they're there to protect and serve. They used to be called peace officers. And the fact is that our society has just changed. So I just had a big calling on my heart to trying to find an affordable option for them. And being that I have the benefit, we have the benefit of a VA home loan, I kind of knew the back workings. And then I just found a leader in Congressman Rutherford, Senator Ossoff, and more to go challenge and fight the fight.
Yeah, well, Samuel, tell us the origin story of why you became a Marine. I mean, you could have been on America's varsity team like Dan and I in the Army, but Army stands for aren't ready to be Marine yet. You joined the Marine Corps, which is muscles are required, intelligence not essential. We like to have a good time here, but honestly, what made you join the Marine Corps? How old were you? Did you join when you were up in Pennsylvania or when you were down in Florida?
I'm from Pennsylvania. I left there when I was 17, and I was in boot camp and turned 18 in boot camp. I just was that kid that was never going to go to college and do anything crazy. My cousin was a Marine, and I remember calling my dad. My dad worked at Lincoln Tech in Allentown, was a teacher, and I just called him. I said, Dad, I think I'm going to go in the Marines. He goes, that's a good idea. And that was it. And actually, weirdly enough, my best friends are still the recruiters that put me in the Marine Corps, 30 some years later. And I served under General Mattis. I talked to him not too recently. It's one of those things that I've been fortunate enough. Paul McHale, you probably remember that name.
Of course, yeah, Congressman. Yeah.
Yep. So he was somebody that I was close to his staff. I've got to meet some of the greatest leaders in the world, and seeing those men in their service to our country also inspired me. And to be honest with you, General Mattis really hit me hard when I talked to him, because I did give up my Marine Corps career too early. I was too immature. And I'll never forget, he said, Corporal Royer, he said, there's this thing called Google. And he said, before I called you, I looked you up. And he said, what I can tell you is this. I see that you're serving, and you don't have to wear a uniform to continue to serve. And I mean, I was a 40-some-year-old man with tears coming down my eyes. I still have his letter of recommendation on my wall over here when I was, a young, 20-year-old kid. But so it's just something that I felt we needed to do. And, it's been an honor, to be honest with you, the last 4 years. My organization, Capital Mortgage Services and other organizations that back me up. But now it's up to guys like you to spread the word, because we do have some people that aren't really in favor. And they're very staunch Republicans that don't believe in federal help for people, but we have to change your mind.
Yeah. So what can we do to help to support? What can our audience do? What can we do broadly to help? I know advocacy is great, but who needs to get a phone call? That's the question.
Yeah, really. I'm trying to get with President Trump. I have some sheriffs that are reaching out, and hopefully going to get a meeting with him, and hopefully it'll go top down. Obviously, I talked to General Mattis when he was my regimental commander as a colonel, so I think I like the top down theory a lot. But we've tried everything. Pat Toomey, the first Congress, the 117th Congress, unfortunately blocked the bill, or didn't block the bill. He didn't even allow it to come to Senate banking, even though we had so much bipartisan support. This last Congress, unfortunately, Tim Scott did not allow it to go through the NDAA, which it would have passed the Senate. And then we had Patrick McHenry on the other side. Now we have Tim Scott, chair of Senate banking. And then we have Congressman French Hill, or Chairman Hill from Little Rock, Arkansas. Those two men are both very aware of this bill to change their minds as to why this should be an affordable option for those that serve, even though they love those that serve. It's up to all your audience and everybody in America to let them know why this is an important facet. And if President Trump happens to tell them, I'm sure the pendulum, I believe is the thing, will swing differently. But all the support we can get. I mean, we had over 600 guys, 600 national, statewide, local organizations. We had 145 congressional leaders, and I believe we ended up with 31 or 32 senators on the bill, bipartisan. You don't get that in America much anymore. And we had it. And unfortunately, people just don't want to listen. So
It's kind of there's a poetry, a beautifulness in the fact that you joined when you're 17, you turn 18 in basic training. You admittedly said you left too early, and now you're at the highest levels of government trying to continue your service in the way that you're trying to do it. There's some beautiful poetry somewhere in there. We'll have to figure that out.
Well, something like this too. If President Trump heard this, I can't believe he won't see 3 military members sitting here talking. And the fact is, we're fighting for cops, teachers, and firefighters. I mean, some people have asked us, is military members against this? Will this take away from the VA? This had nothing to do with the VA. And at the end of the day, if a cop is a military member, they're most likely going to use their VA, because if they have a service connected, they don't have to pay a funding fee. Where the Helper Act, there's still a mortgage insurance, but it's paid one time up front. That's it. So if President Trump saw this, I can't imagine he wouldn't get behind this. But it takes a lot to get to him. And then on the other side is that really just all the organizations we have. I mean, we all can joke about Navy, Army, Marines and stuff, right? So you joke about the Army, Navy, right? They're like opposite ends. Well, we have a letter that literally went to the leaders in the Senate and the Congress last year, which, Congressman, that's kind of, when you're sending a letter to leadership, it should be pretty impactful. We had the FOP, Fraternal Order of Police, and the International Association of Firefighters. Kind of like the Army Navy. Those guys always seem to butt heads, right? But we had a joint letter with both their logos on top that clearly went to all leadership saying, we're firefighters, we're cops. We believe in this bill. But again, it comes down to politics.
Yeah, and I think for the viewers out there, it's if they're there, you just ping your congressman, congresswoman, senator, and say, hey, what's up? I just read about this Helper Act. I saw this Weird Money podcast. Are you a co-sponsor? And then obviously, give them information from your website, et cetera. Where can people find your website and more information about this?
So the official website, because there's a lot of different people that are kind of playing off this, but the official website is www.passthehelperact.org. Now, the site that is currently up is the old bill, the 118th Congress. What we're understanding, we still have a lot of work to do, but most likely the new bill will be introduced sometime around March. So at that point, we'll have the website up more up to date for the 119th Congress. But for right now, any information somebody needs, they can go to that website, they can see it. My company, SaluteHomeLoans.com, they can go there and there's some videos. I actually have a video on there that's kind of like a recap of the last 4 years to talk, and it's only 2 minutes long, but it talks about where we were and where we're going in 2025. So pretty much those places, or they can reach out to me. Look, if somebody out there in your world sets up a Zoom call with a congressman, a senator, I would love to jump on. And look, I don't take the credit.
Yeah.
This is not the Sam Royer bill. This is the Helper Act, and it's for cops, teachers, and firefighters. Because at the end of the day, for me, even though I'm the visionary of the bill, I will be 18 rows back. There will be 18 rows of congressmen and senators, and I might see my hair standing up, and that's about all you're going to see.
Yeah.
That's the credit I get.
And Sanders, I want to foot stomp this because I think it's important. We covered it earlier, but this is a bill that doesn't really cost taxpayer money. This is a bill just leveraging their good credit, their good name, their good profession, that they have a 9-to-5. They are on the job for our communities, our community heroes. And the backstop is, okay, if something bad happens, that's the backstop if they don't get through. But it's not throwing a ton of money at them. It's just saying, hey, we're going to, you back us, we're going to back you, we got your back. And that's what the Helper Act's all about.
It's the federal government just doing exactly what they do for veterans in a way.
Yep.
And all the premiums it's already massively funded. So, that's the thing, to be honest with you, Congressman, we've had nobody that has really hit us with anything of substance to say why this is bad. Nobody has given us clear data. And if anything, we've given everybody clear data. I had one congressman that I met with personally where their local state down payment assistance would cost $300 more a month versus the Helper Act.
Yep.
And I'm like, here it's pretty clear as day. But again, that individual was a Republican that was very staunch. And I'm a registered Republican. But they were like, we just don't like government to have this type of influence. Some people don't like FHA, and FHA's been around since 1934.
Yeah, but
And it
it's
was
just giving them, but it's just giving them options. Hey, listen, we end the thing on our Warrior Q&A. We got one question.
We got
for
one
you.
question. What's some money advice that you know now that you wish you knew when you're younger?
Save. Yeah, save.
Save.
Don't spend it on stupid stuff.
Compound interest is key. Compound interest, it's
got it.
magic. And also, it's with your health, too. You work out now, you're banking that workouts.
Yeah.
So when you're older, you don't want to start until you're 50, 60 years old.
And honestly, invest in things you believe in.
Yeah. Yep. Something that you're passionate. But hey, Samuel, you are a definition of a Marine, that you are still living a purpose-driven life. We salute you. We appreciate you joining us. But listen, that's our show. Listen, subscribe, and review Warrior Money on Apple Podcasts, Spotify, or anywhere else you get your podcasts, or find us at Yahoo Finance. I'm Patrick Murphy.
And I'm Dan Coons. We'll see you next week.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Now let's make some money and get a lot smarter.
I've done Yahoo Finance forever. This is a spectacular spot.
Welcome to Stocks in Translation. I'm your host, Jared Blickery.
Hello, world. I'm Ross Mack.
Hi, I'm Bob Powell, and welcome to Decoding Retirement. Welcome to Living Not So Fabulously.
Welcome to Trader Talk, the podcast that dishes out the market straight up.
Welcome to Capital Gains. I'm your host, Madison Mills.
From Wall Street to Main Street to the C-suite, we are your daily lifeline, because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to the Opening Bid Podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is a podcast that will make you a better investor and a smarter leader. And we're always talking really hardcore here about stocks and leadership. I want to do something a little more fun. I think it will tie in all of these things and maybe stimulate other areas of your investing brain. I want to bring in Aaron and Andre Eanes, founders of A&A Management Group. Good to see you guys. Travis Kelce, like you guys manage him? What is it like? And how did you meet Travis? And just take me through how this all started for you.
Yeah, I mean, I'll let you kind of, go how we met, but, it's never a dull moment. I mean, I think we get to learn a lot. I mean, I would say when you're working in sports, especially we started the business 13 years ago, you don't obviously imagine how far things can come because growing up in Ohio, you just are dealing with a lot of, I would say, different things, right? There wasn't a sports management company that I could kind of emulate. There wasn't a lot of, I would say, information out there about what sports management was. So we kind of got a good idea of the business through IMG, which was started in, Ohio, and then music. I mean, I think music, you saw the Music Manager and how musicians had to really monetize everything that they did. And at that time, that was when 30 for 30 Broke kind of came out. And you saw that athletes that didn't have a coordinated team, athletes that got into bad investments, athletes that I would say got bad advice, really, ultimately went from amassing an extreme amount of wealth to going broke. And I think that was one of the impetuses and one of the things that made us want to start the company. And then from there, you got to basically figure out who wants to work with you and pitch people. You got to skills. Yeah,
do a real business.
That's true. And I think I was a sports management major and entrepreneurship minor, and being able to build kind of what the business model was in college, I think was extremely helpful because when I look back at that business plan, we're kind of, I would say, where we thought we would be. I would say from a business perspective and where we thought the landscape would look like. And I think that's with. I think social media has helped a lot of that, and just natural trends in the industry have helped. But I think being able to have that time when you didn't know anything, and you could just, I would say, use some class time to build out what a business model possibly could look like, I think really helped us to where we're at today.
Both of you are going up against really these really large talent management companies. How are you guys have been winning? What is your secret sauce to going up against these companies?
Yeah, I think I'll jump in and add because it's really the relationships. I know when we grew up in Cleveland, Ohio, I played AAU basketball, and that's when we originally kind of met Trav, but it was in passing. Honestly, it wasn't really like a deep friendship, but I ended up going to the University of Cincinnati. He ended up going to the University of Cincinnati. I remember, back then you would get on Facebook and find out who was from the city that you were in that was coming to the school.
So we're old now. Basically.
Yeah, right. Yeah. So I remember sending him a message like, hey, you're from Cleveland. I'm from Cleveland. I know you're from AAU. I'm down here and whatnot. And he ended up being roommates with one of my good friends, and we kind of hit it off that way. But in college, I started an event management business, and I would throw all the events and make sure his teammates and him were good getting in the door, and anything he kind of needed from a business standpoint, he would ask me about parties and stuff like that. So that's how we got close. And then when, Aaron had the idea of we should go deep on the sports management business side, we kind of walked in that, and we grew up in a good time, right? Social media had just popped. It wasn't really managers out there. It was more, agents handled kind of everything. That was the narrative. And then one of my good friends and mentors represented a lot of entertainers at the time, and he would tell me how he was managing them from an entertainment standpoint, not even thinking about sports. So I think we've just been able to be exposed to a lot of different things that weren't the same in the sports space that we would kind of be able to bring it full circle now.
And I think to answer, to piggyback off that a little bit, like Andre said, I think the relationship is the key. I think that with all of our clients, it's the key because, we're not their on-field or on-court agents. And so by having that relationship and being able to have honest conversations with them, being able to have that back and forth, just like in any good partnership, I think it allows us to kind of do what we've been able to do, because then you're not worried about second guessing each other. You're not worried about, are they going to get mad that I'm telling them the truth? You're worried about, okay, what are we trying to accomplish? What are your goals? What are your aspirations? And then really being able to kind of go out into the market and figure out that, and then come back with what we think the best solutions are. And then just be able to put options in front of our clients to be able to make sure that they are accomplishing what they want to accomplish, but then also we're bringing in good people, good advisors, good insights to really make sure that when they make a decision, they're able to make the best decision.
How difficult it is to have the conversation of money with talent. They have a large sum of money, have many things coming at them. They want to live a certain way, given the hard work that they've put in. I mean, how tough are those conversations? And what are you telling them right now?
So I'll start. So my career is in finance. I worked in banking first, and then I moved over to private wealth management. So I kind of gotten my education on like how to do that day-to-day wealth management, financial planning. Mm-hmm. So I wouldn't say it's easy, but it's kind of been easy, you know, because it's more of we're a voice. We've always been a voice. We always put our clients in a position to make the right decisions, whether it's helping them with their financial advisors, their accountants, their lawyers, and kind of just giving them the plan and the strategy. I think giving the information up front so they kind of already are like understanding like this is what's going to happen over these next 12, 18, 5 years, I think helps a lot.
What mistakes do you, not necessarily your clients, but what mistakes do you see, I guess, athletes still making? Like we see all these stories. If you mentioned 30 for 30 broke, and we see online this person earned $50 million a year and now they're living on the street somewhere. Like,
I mean, I think it's a twofold, right? When you think about the lottery winner, mm-hmm. right, and like you hear those statistics, and you think about, you know, I would say new founders that, you know, before our time, obviously, like, you know, got rich quick off of IPOs. I mean, I think with anybody that has a lot of money coming in at a very short amount of time or a very quick amount of time, it's just understanding what do I do. Yeah. And I think, you know, the challenge I would say sometimes in sports is, and probably not even just sports, is how do I find the right advisor, right? And I think if you're having an advisor or having people around you that are advising you on something that have never been there, I think that's, you know, part of the problem. And I think from our standpoint, we've always kind of looked at it from a standpoint of, if we don't know something, we need to go out and find the best people that do and that have experience working with the types of people that we think we have as clients, mm-hmm. right? So whether it's the JP Morgan private banks, whether it's the Goldmans, whether it's the B of A's, you know, we really try to align our clients with the best people across everything that we do, because then it just helps us get better information. Mm-hmm. But then as time goes on, the clients, because they're in these meetings, they're sitting down, you know, reading the prospectuses, and they're getting a true overview of what's going on. And they have, you know, some people that are, and Andre, myself, and our whole team that aren't directly tied to their asset management. So you're able just to get another voice that can represent them in the room before it even gets to them. And I think, you know, that's why you're obviously athletes today are making way more money than they made in the past. But I think you're starting to see, because of the reporting on how athletes go broke, because of, you know, athletes seeing other athletes have success, whether it's the Magic Johnsons, the LeBron James, you name it.
If they've created an empire.
Yeah, like they're starting to like say, okay, how did they do that? And like, how do I do that? Right? And I think, you know, at the end of the day, the more athletes, and I would say just probably anybody, can get advisors that, you know, have their best interest, and I think you ultimately won't see the outcome that you saw in the past.
Within the client, your roster, like how are they investing right now? We've had a tremendous run in the stock market. You know, I was goofing at the top of the show. Everybody talks about NVIDIA and all these tech stocks. Like, how are they putting their wealth into action today?
Yeah, a lot of our clients, they work with financial advisors, you know, and they're investing in stock. They have their portfolio strategies based on the needs and the things that they want, because everyone's different. I think that's where the big key for me is. I kind of sit in the middle and help them navigate it the right way versus, as Aaron said, taking the advice of an advisor that may not necessarily know the day-to-days, the marketing deals that they're bringing in, the business deals that they're doing outside of, you know, playing their sport. But on the private side, I mean, you know, they're kind of doing things that they care about and that they're passionate about. I think we've made decisions on some things that were with bigger firms, you know, that know what they're doing and done this a million times, but we've also been able to invest in small startups that ended up becoming big things. And I think for us, our focus is, what type of opportunities can we get our clients in that they can bring value to the table? And it's not just money. You know, it's networking, it's building relationships, it's marketing, it's branding, it's things like that. And I think that's where we've had success on our side. We're helping them to get into those types of opportunities, but then finding the sponsors that know what they're doing, that have done it before, that built business before, and created things, you know, instead of, you know, a random startup that we've never heard of, finding those companies that have the moat. You know?
How do you know, how is it hard for these athletes to say no, you know, to, let's say, a company, they want to come with a big check, but it may not be right and doesn't work with their brand. And they have a lot of these probably coming at them, right?
Yeah, I mean, I think you're seeing less and less. I would say, if we back up a little bit, sports in the past was kind of dominated by, especially like the shoe deals, right? That would be the first big deal an athlete would get: football, basketball, first round draft pick. And because of that, the shoe companies were very big in developing the brand of the athlete. I would say as time has gone on, you see that shoe companies now work more with influencers, artists, creators, and things of that nature. And I think you're seeing that also translate to athletes. And so athletes now have to build their own brand. But the opportunities with that is when they build their own brand, they can then start to have an idea of what brands align with my audience, what brands align with my values, what brand aligns with me. And yes, in the beginning, if a brand's coming in and offering a big check, which they're doing less and less of, it's hard for I would say an athlete on their first contract to not do a deal. And it also is good for them to just start understanding what it is to do deals. But as they get to their second contract and they have the money, they're not so necessarily as worried about the money. They're worried about, do they like the product? Do they like the brand? Do they align with my values? And I think when you see that happening, now there's a lot more opportunities for creative deal structures and creative ways to really leverage not only what the brands do, but then also at the same time the athlete as well. And I think, to your investing point, you're able to see if you see the rise of the athlete as the investor, right? And I think they're able to Andre's point, be able to get into great deals because of the access they have, but then also because of the opportunities they can bring on the marketing side and on the network side and on subsequent fundraising rounds, right? And I think that's where we're seeing a lot of opportunity. As well with, I would say, more and more brands that are not traditionally in the sports marketing landscape wanting to get into the sports marketing landscape.
All right, hang with us, guys. We're going to go off for a quick break. We'll be right back on Opening Bid.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
how sports or athletes are investing. Really interesting stuff here. So, like, do you have on a spreadsheet like Travis's enterprise value? Like, how do you value the Travis Kelce brand?
That's a good, yeah.
Great question. You have like an input for Taylor Swift, input for commercials, and then input because he's probably going to the Hall of Fame. Like, what does it look like?
No, I mean, I think, because of social media, and there's a lot of tools out there now that you can start understanding the value of the audience, right? And then at the same time, you can also look at, how a brand values media attention, right? So you're able to evaluate, what's the media value a client brings, what's the social value a client brings per post and stuff of that nature. And you're able to kind of make a value around that. And then obviously you just look at like an athlete's time, right? So part of it's going to be like, hey, what amount of money is it going to take for you to get out of bed, right? And then from there, once you determine that, you're able to kind of take out some of the other things and say, all right, here's the value that it's going to cost. And then ultimately you just have a conversation with the brand, right? Because if the brands align with the value and the brands align with where the client wants to go, it's an easier deal to get into versus if the brands don't align with the clients.
Sure. What does Travis want to do in terms of how does he know it's a good deal for him? I mean, Matt, he's arrived at a point where he doesn't have to say yes to everything, right?
Well, he doesn't say yes to a lot of things. I mean, he says no primarily, which is also a benefit, right? And so it's really going to come down to what are the values of the brand, right? Especially now, everything that he does gets media attention. So if he doesn't align with the values of the brand, if he doesn't align with the people involved in the brand, if he doesn't align with the message they're trying to say and the audiences they're trying to reach, he's just not going to do it. I think from there, I would say that's the biggest thing. It does align with that.
He's very good at knowing if he's comfortable. He'll take a meeting with someone. We'll do all the back end due diligence. He'll sit down. If he just doesn't feel right about it, he won't do it. So we can sit here and say the brand's value versus this versus that, but really it just comes down to what he feels comfortable with and what he's interested in doing, honestly. And we kind of stick to that, and it's been successful.
What is his brand, if you had to define it?
I would say optimism.
Yeah.
It's good.
We're still figuring it out.
Yeah.
It's constantly evolving, constantly changing.
But I think if you think about, someone who wasn't, he played tight end for 1 year before he got drafted, right? He played for 2 years total, right? And so, if you go look at, what his rankings were and go look at what the commentary was around his game, no one expected him to get to where he's at today, let alone get to a second contract, a third contract, be the first ballot Hall of Famer. And I think because of how he was raised, I think because of also just his mentality of, being optimistic, being competitive, being, just really